Earnings. First one is Bharti Airtel. It has reported a strong quarter and has come earnings in line with estimates. Revenue is up 8%. Average revenue per user has increased more than 10% sequentially. IGL, it was a mixed Q2. It has reported beat on volumes, but margin has missed estimates. Margin has come in at 14.5%. Volume has come at 9 MSC MD. For Federal Bank, it was a steady set of earnings and is up 15%. Margin holds above 3.15%. Suzlon, revenue has risen 48%. Margin was down 180 bips. And order book is at an all-time high of 5.1 gigawatt. For J-Kumar Infra, it was a steady Q2. Revenue is up 17%. Margin is flat at 14.6%. JSW Infra, it has reported healthy volume growth and which has supported revenue. Revenue is up 18% and margin has risen almost 1400 bips year on year. For Kalpataru Projects, it has reported a healthy Q2. Order book has risen 29% and margin has increased 70 bips. Tata Technology, it has seen modest dollar revenue growth of 1.6% sequentially and margin holds above the levels of 18%. Spandana Spurti, sharp deterioration in asset quality. Gross NPA and net NPA have nearly doubled sequentially and it has reported loss against profit in the same quarter last year and sequentially as well. KFin Technology, earnings were better than estimates. Revenue is up 18% and EBITDA has risen 27% sequentially. Last one is Tata Power. On the back of news, it has acquired 40% stake in Kodlochu Hydropower for amount of rupees more than 800 crore. These are the stocks that might be in focus today.
All right. Thank you so much for that list, Sudarshan. But a lot of action in the FNO space as well. Mangalam is joining in now. Good morning, Mangalam.
Good morning. Around the festive season, things seem optimistic and there is some glimmer of hope, especially given yesterday's up move that we saw in the market, some recovery that we saw. And the recovery was led by some of these risk-on names as well. You had, the Brent cabs, the small cabs, the PSUs doing extremely well. Was that just a bounce or is this, something which is a little more formidable? It's something that we'll come to know only over the next few trading sessions. But the Nifty Bank, good results coming in from ICICI Bank, that led the index higher by about 1% itself. Two positive data trends that I'm looking at. One, the FII selling that we're talking about, over 1 lakh crore in the previous month, is now starting to abate a little bit. Is this again just a blip or is this the trend? Something we'll watch out for. A few days ago, the average selling was 5,600 crores. Yesterday, it fell to about 3,200 crores. The second part, we've been talking about how the FIs have been shorting in index futures. For the last 4 trading sessions, they've actually added their long positions and they've covered some short positions as well. Yesterday was no different. 2,700 crore worth buying in index futures and they've covered around 22,000 short contracts, added about 14,000 long contracts as well. And if you look at it over the last 4 trading sessions, the FII net long, which was at 33%, has now slowly inched higher all the way up to 40%. And net contracts, which were negative 1.7 lakh, have now moved to sub 1 lakh contracts itself. So that's telling you that maybe some bit of optimism at lower levels is what the street is seeing. Where do we go from here? 24,500 is an important psychological mark for the Nifty to watch out for. But at the lower level, we are seeing some support coming in at 24,200 to 24,150. Why do I say that? Because the 24,300 put writers and the 24,400 put writers are fairly active. Yesterday's low of the Nifty of 23,150 thereabouts is something which will be crucial to watch. On the way up for both the Nifty and the Nifty Bank is the 100-day moving average and the 20-day moving average, which we need to conquer. So that's something we'll watch out for the Nifty Bank today. And then thereafter for the Nifty as well, 24,615 is the 100-day moving average and 24,900 is the 20-day moving average. Until these levels are crossed formidably, difficult to say whether, the up move is just a bounce or whether it is something structural. A bunch of stocks in focus. PNB has entered FNO ban. We have Aarti Industries, Bandhan Bank and NMDC, all of them which are out of FNO ban in the expiry week.
All right, that's all the action from the FNO space. This is our Power Prep segment. Thank you so much, guys, for joining in with those details. Let's now get you some updates from the primary markets. Food delivery aggregator and quick commerce service provider Swiggy India's IPO will hit the street on the 6th of November and will remain open for subscription till the 8th of November. The issue will consist of a fresh issue of equity shares worth 4,499 crore rupees, and shareholders will be able to get will also get selling 17.5 crore shares in the IPO. Okay, a small programming note as we slip into a break as we prepare to ring in the festivities this Diwali. Tune into CNBC-TV18 at 2:30 p.m. today to hear out the biggest of market voices giving their tips on how you can make your portfolio prosper this Diwali.
मैं कह सकता हूं कि हमारी पार्टनरशिप में क्लैरिटी है और इसका भविष्य उज्जवल है। जर्मन भाषा में कहूं तो alles klar, alles gut, बहुत बहुत धन्यवाद दाके शॉन।
Germany has become India's most important trading partner in the European Union, and I'm determined to further strengthen and build on this link and cooperation. I have with me, as members of my delegation, a high-level business delegation that has seized the opportunity to engage bilaterally with India, its industry and business. Especially in times like these, it is of the utmost importance that India is an anchor of stability in South Asia. The international rules-based order, which has come under massive pressure as a consequence of Russia's attack on Ukraine. Russia's war of aggression against Ukraine affects Germany and India in many ways. No one can close his or her eyes to the conflict and the impact it has on us. Therefore, I approve that India supports a lasting and just peace, and I am pleased about your readiness to make use of the reliable relations that you have developed to all parties to contribute to a political solution of the conflict.
Welcome back. You're watching Power Breakfast on CNBC-TV18. Telecom major Bharti Airtel reported a strong second quarter earnings in line with the estimates. Reema Tendulkar is joining in to give detailed rundown of the earnings fine print and the analysis as well. Reema, good morning.
Hi, good morning. So Airtel has reported a strong quarter in line with estimates, and it's largely driven by the tariff hikes announced by the India mobile business. Profit, though, has seen a decline of about 13.5% to 3,600 crore, but that is due to an exceptional loss. There was a forex loss due to the currency devaluation in Africa, but operationally, good numbers. So the company has reported a consolidated revenue growth of 7.7% ahead of estimates of 6%, and this is driven by a 10+% revenue growth. This is all quarter on quarter in the India mobile revenue growth, which I said again is driven by the near 15-16% tariff hike undertaken by Airtel in early July. Now, this drove up the ARPUs, the average revenue per user, also going up by 10.5% to 233 rupees. The overall subscriber base did decline by 2.9 million subscribers on a quarter-on-quarter basis. But again, it appears the low-end ARPU subscribers were the ones who probably left the network on account of the tariff hike. The 4G subscribers did see an increase. And also, if you compare Bharti Airtel with Reliance Jio, Bharti Airtel's operational performance in revenues, in margins, ARPU increase, the loss in subscriber is a little superior to what Reliance Jio has also announced. And there's also a leadership transition. Gopal Vittal will now be grooming the current CEO as the new CEO as he takes on additional responsibilities. Back to you.
Okay, all right. All right, Reema, thank you so much for joining in. So that's Bharti Airtel. With that, let's move on. On the sidelines of the World Bank's annual IMF meetings, my colleague Malika Jain caught up with Ajay Seth, who's the Secretary of Department of Economic Affairs, and they discussed a wide range of issues, one of them being generating enough opportunities for people in India, including job creation and other focus areas. Listen into what he thinks the government of India should focus on.
A job gets created when the investment happens in the economy. Of course, there has to be right skilling.
Sure.
And at the moment, World Bank and Asian Development Bank are working very closely with Government of India to put together the scheme which Finance Minister announced in the July budget, a major skilling program in partnership with the states and the industry. And both these banks are working with the Ministry of Skill Development in India to put together a good program based on their global experience and, of course, what is needed by Indian economy. So jobs get created through the investment into the economy. And which are the investment areas possible? One, of course, is on the connectivity side, on infrastructure side, on climate mitigation coming through the energy transition, which is a global public good as well. So these are the areas where discussed it, and also discussion happened around that how the private capital can be mobilized through leveraging banks' financing.
Sure. And so for private capital mobilization, were any particular sectors identified, or that would also be at a macro level? And then
No, I mentioned it like about
infrastructure.
Infrastructure, and within infrastructure in particular about connectivity, and India has invested very significant amount in the last 7-8 years in terms of its road infrastructure, ports, airports, railways. These are the potential areas to attract private capital to supplement or to complement what the government systems are doing. In addition to connectivity, then comes the entire energy piece. The way India has been investing into renewable energy, the transmission lines, that is the second set of areas which were identified. Then, of course, there are other areas like urban infrastructure, which is a more complex sector, but that is also on the table.
And you can catch this very interesting conversation all day today only on CNBC-TV18. And with that, we'll slip into a break. When we come back, we'll talk about all the cues from the commodities market. Stay tuned for that.
I accept your nomination.
We're going to win Arizona. We're going to defeat Kamala Harris.
It's the election verdict the world is watching. Will Donald Trump reclaim the White House and become the oldest president to be sworn in?
How will this US election impact global trade and inflation?
Will Kamala Harris make history, becoming the first woman president of the United States of America?
How will the next US president deal with geopolitical volatility? What next for the India-US relationship, the most defining partnership of the 21st century? Watch CNBC TV18 for the best newsmakers and the sharpest analysis.
We bring you all the action live right here on CNBC TV18.
CNBC TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success.
Welcome back. You're still tuned into Power Breakfast. Let's talk about some updates on the India-China LAC agreement. Disengagement process between Indian and Chinese forces in the Depsang Plains and Demchok sectors of eastern Ladakh is underway, and its completion is expected soon. The Indian Army aims to conclude the process by today, following which coordinated patrolling will resume in the area. The Indian side has been striving to restore the situation to the status quo before April 2020, when Chinese military aggression triggered a prolonged standoff along the LAC. China's foreign ministry confirmed that frontline troops from both sides are working in accordance with recently reached agreements. This comes after both countries announced that an agreement had been reached, bringing an end to the over 4-year military standoff. Okay, with that, let's move on. Let's get in Manisha Gupta. She's joining in with all the updates from the commodity space. Good morning, Manisha. What are the commodities you're focusing on today?
Thank you. Morning, and a very happy Dhanteras to you. I'm absolutely looking at gold and silver prices right now because even as we are looking at Israel-Iran restraint on strikes on facilities, and even as you're looking at Treasury and the US dollar index gain, even with that, the gold and silver prices really are at an all-time high that you would have seen any Dhanteras or Diwali. So the support clearly comes in from uncertainties from the US presidential elections, ongoing geopolitical tensions, and the global central buying as well. So when you look at this week as well, until now, we are doing quite well when it comes to gold and silver. What is not doing so well clearly has been the crude oil prices. After a 6% decline overnight and the biggest one-day loss in 2 years, we are looking at 0.5% increase right now, and that is because there are statements from US that they are planning to purchase nearly 3 million barrels of crude oil for their strategic petroleum reserve. In any case, after a 6% of a decline yesterday, there is some opportunity buying that we're looking at right now. But more importantly, there's a lot of economic data coming in on this week. You have the US GDP numbers, inflation data, payroll numbers, all of that comes in this week. So ahead of that, there is a bit of a choppiness that we see here.
All right. Thank you so much, Manisha, for joining us with those details, and happy Dhanteras to you as well. With that, let's move on now. In some tragic news, over 150 people were injured in a fireworks accident during a temple festival near Nileswaram on Monday. It is suspected that the accident occurred when a fireworks storage facility near the temple caught fire. In a similar incident, a massive fire broke out at a firecracker store in Hyderabad's busy Ramkot area last evening. According to the police, the intense blaze resulted in minor injuries to a woman, and at least 8 cars parked nearby were gutted. The police confirmed that the firecracker store was illegally established without any license. Okay, all right. On that note, we'll do one thing. We'll take your leave on this edition of Power Breakfast, but do stay tuned. Bazaar Morning Call comes up next.
As India's longest-running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros, and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
For next 6 months, the semi-urban and rural to have a better, stronger demand. We feel that there will be further improvement in our credit cost. We always have guided around 2. We should be able to maintain the current level or a little below that. And if you look at our gross take 3, that also has been coming down, both gross and net, from 5.39 to 5.32. There is a scope for further improvement, and we'll definitely work on it.
India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call, Tuesday morning, and it is the occasion of Dhanteras. So here's wishing all of you, your families, your loved ones, a very happy Dhanteras from all of us here on the Bazaar's team. We're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Nigel and Surbi. Guys, hi, good morning. Happy Dhanteras.
Good morning. Good morning and happy Dhanteras to you, Prashant, to you, Nigel, as well, and all our viewers. We are wishing you the best of health and wealth. May it be a very positive, prosperous and a season filled with lots of hope. So Diwali festivities officially begin today.
Well, and I know who's going to be buying something new today, Surbi.
Considering where gold prices have headed, I don't think so. But yeah, we'll see what we can do.
A bit higher, so higher still. It's, yesterday we got the first semblance of a bit of a pullback. And I think that was good to see. I'll start with where we left off yesterday in terms of things you need to know. US markets, they drifted higher. And I'm using the word drifted because it was a bit of a drift overall. S&P ended about a quarter higher. NASDAQ was up about 0.25%. The Russell, which is the broader small cap index in the US, that was up about 1.5%. So, you've got a bit of a lift coming through from overnight markets. So there are lots of things lined up. But immediately, right in front of what the market is focused on, it's big tech earnings. The Magnificent Seven, 5 out of 7 companies report this week. And of course, you've got the US presidential elections next week. 5th of November is going to be the elections. The 10-year yield has gone up 4 basis points again last night. So 4.28. Dollar index is kind of flattish. Came off a little bit, but not very much. 104.29 or so. Oil prices, it's not new news you're waking up to. When we were trading yesterday in the last hour, oil prices were down about 6%, and we come back with these kind of cuts. So about 72, not very much in terms of change, incremental change on the oil price. So the Nifty, just to sort of tie in the levels, has got a positive daily close. So it's the first basic step after a drawdown that you need to achieve for any kind of hope to come back, that maybe we are starting to get a little bit of a fight back. So you got that yesterday. Now you got to take it across through hourly and daily averages. So you can look at hourly averages or you could look at daily averages. You can look at the 40 hourly exponential moving average, which we've been putting out, or the 10-day moving average, the sort of closest moving average, which stands at 24,624, is the first level that the market needs to, the Nifty needs to take out to confirm up move, to confirm upsides. Nifty Bank, it hit the 20-day moving average yesterday and then sold off from the intraday highs. And you need a close above that 20-day, which is 51,568 as of yesterday's close. And only then you'll see, or rather open the possibility of a bigger up move. On the downsides, I mean, the recent lows are all there, and we're well aware of it. So, you're looking at slightly upside kind of levels. I just want to say one thing. Over the next 1 week, 10 days, I mean, it's really a November to remember because you've got, all these earnings, big tech earnings lined up. Then you've got the jobs data this Friday. Then you've got the US presidential elections on the 5th of November, which is next week. The China NPC kicks off from the 4th to the 8th. And then you've got the November FOMC, which is on the 7th of November. So you've got all these big events which the market needs to navigate. And I think through all of it, will we see a kind of in any case, we're not expecting a straight line kind of recovery or anything of that sort if we do see any recovery at all. But the fact is, these are large events with implications to be able to move markets around the world. So keep that in mind if you're trading. It's likely to be volatile, and the market is likely to be whipped around here and there based on what comes out of each of these events. And each of these are unique and are big because we don't know what is going to happen. It's all very close. The November FOMC, for example, elections are close. So I think it's got the potential to move markets. In any case, I'll leave you with, just 3 things and why I think, the market is pricing in a Trump victory. Polls and betting averages, etc. But just look at what markets have done. 3 things. Dollar is up 4% in the last few weeks, right? I mean, USD exceptionalism in that sense. The 10-year yield is up 60 basis points in the last 1 month. And you've got US equities which have outperformed ex-US peers by about 6% this month so far. These are large numbers, and I think the market is going in with maybe pricing in a Trump victory. So, going into the 5th of November, it's possible that as the market really starts to focus and narrow down, some of these get unwound tactically in the very near term because you're kind of priced to perfection with some of these trades. So it's going to be interesting next few trading sessions, but also most likely volatile. Surabhi.
Oh, well, absolutely. I mean, it's all eyes on the November 5th election outcome, right? And I want to add one more to the so-called Trump trades. I mean, look at what Bitcoin is doing, right? Yesterday, Bitcoin topped 70,000. It's done that in the past this year as well, but not in a meaningful way. So let's see if this bounce can actually last or not. But again, it's an extension of the fact that I think, Mr. Trump is seen as more pro-Bitcoin. There is Kamala Harris. She's also made, overtures and statements, in specific to sort of cater to specific constituencies, saying that perhaps they need to look at crypto in a bigger way. And Trump obviously is seen as a much more bigger support for cryptocurrencies, and that's really helped Bitcoin. So that's one. Now talking about our neighborhood. Now Asia has mostly taken on that positive handover from Wall Street. Most markets are tracking gains, including Japan. There's some sort of selling in mainland China. Hong Kong is okay. And so you actually have the Singapore market. That's the only one that's a bit of an odd one out. Otherwise, Asia's got a fair amount of green on it. Now, in Japan, a couple of numbers to track. The jobless rate came in for September, that is, and it's lower than expectations. The rise is about 2.4%. The estimates were 2.5%. The last month was also 2.5%. That's good news. But the bigger story in Japan is the weakness in the yen. Consistent weakness coming through, and the yen continues to hover at levels for, about 3-month lows versus the dollar. And for the month of October put together, the yen has lost about 6.5% versus the greenback. And that is largely seen as supporting, a lot of the export-facing stocks and companies in Japan. And the Japanese market, the rally has pretty much resumed despite the hung verdict that was delivered in the weekend election. Anyway, for us, there was good news, some green back on the screen as the festive season kicked off. Finally, the Nifty halting its relentless downslide after 5 consecutive days of fall. Yesterday was a buying day. FIs are still net sellers, and we've been debating this point, and Prashant was talking about it yesterday as well, right? But we still have about 3,500 crores of selling coming on a daily basis. Domestic buying was actually a little more limited, so it's telling you that, and especially the mid-cap movement yesterday, so it's telling you that perhaps a lot of the HNIs and the retail are coming back to the market because it was not just mutual fund buying that was offsetting the FII selling yesterday. Results now, and we're actually looking quite okay, at least some of the bigger ones that I tracked overnight. Bharti Airtel, solid showing, because look at that ARPU go. Now the ARPU number has reached 233. That's a 10.5% increase on ARPU, looking very, very good. And this is as the tariff hikes have been very well digested by the market. So it's going to give a lot of the Bharti bulls a lot of hope. Some of the lenders, PNB, no asset quality stress or issues, very marginal rise in slippages, largely steady. GNP actually has improved a little bit quarter on quarter. If you look at Federal Bank, then actually very good numbers. And this is what some of the analysts were telling us yesterday. If you heard Digant Haria on the show yesterday, he was saying, watch out for good numbers from Federal Bank. And that's exactly what's been delivered. Because in this kind of an environment, the asset quality is pristine and steady. No major rise in slippages, no major rise in the gross NPA level as well. Look at, some more names. IGL, we'll talk about this as we go forward. There's a bit of a miss at the EBITDA line, but the top line's okay. And IOC, let's see if there's any follow through, because the numbers came in during market hours, but OMCs have been a bit of a howler. So we'll watch out for that. Just ending with today's tally, it's an interesting day for earnings as well. A couple of Adani Group stocks report and Adani Enterprises Sports. There's Maruti, Marico, Cipla and Canara Bank. Maruti will be interesting. We know what's happening with the auto space and the lackluster start that we've had to the festive season. So let's see how the Maruti numbers look. But yeah, plenty to keep us busy as well.
Well, that's right. And overnight, if you're looking at the Qs, there are 3 big indicators, right? Brent crude prices, the dollar index, as well as the 10-year yield. And overnight, what's good is crude oil prices are well behaved. So that's come down by close to around 5%, which is the tailwind for a lot of listed companies, and it's a macro tailwind as well. So I like that, and that's something that will hold us in good stead. So that's important. Next up, what are the top cues of the day? Yesterday was a good session, actually. We came off the high point of the day, but yet it'll go down as a good session. The bulls will be hoping for some follow-through. They want to see another good session and head closer to around the resistance mark of around 24,550. We'll have the Nifty Financial Services Index that will also play out the expiry. And you've got 2 big companies, economy-facing companies that come out with their numbers. So not just their numbers, but their commentary is going to be very, very important. The double M's, that's Maruti as well as Marico. I'm going to keep an eye out on both these two. What did the FIs do yesterday? Now, we talked about the FIs being net short, and that's actually a blessing disguise. This is why, because yesterday there was a short covering bounce that took place. Big amount of shorts did cover up. Longs added close to around 14,000 contracts. The swing factor is close to around 35,000 contracts if you put this together. And just pull up the chart. In a matter of a few sessions, the FIs, from being net short by close to 1.7 lakh contracts, those short positions have close to have halved. Now we're down to around 95,000 net short contracts. There are still shorts in the system, but there has been some short covering on, and majority of it has been in the last couple of days or so. Let's move to the options data then. And this is the positioning actually before we get to the options data. You'll have the clients, well, they were net long, but they've reduced their long positions a little bit by close to around 25,000 contracts, though they continue to remain net long at 2.2 lakh contracts. Moving to the options data, 24,000 put, that was fairly active in trade yesterday. That's the reference point on the downside. And on the upside, the 24,500 call, well, that was active with the premium at around 50 rupees. So you punch that in, you'll see that 24,550 mark. That's the near-term resistance that we're looking at, and that's going to be the important mark. So you're in a broad band. 600-point band is what we're looking at. The high that we saw yesterday, that becomes important as well. And then you're looking at the 100 EMA. So that's the resistance zone that you're looking at. But in the near term, the bulls will fancy their chances that the 23,950 odd mark is holding out. Yesterday, the good news was the Nifty Bank. It showed signs of coming to life. It went past the 20 DMA, but it couldn't close out there. So that's the resistance mark you're looking at the upside. And the recent low becomes a reference point as well. So yesterday was good. You'll want to follow through a session today, and you'll want the Nifty to close closer to around the 24,550 odd mark. So let's get straight to the action.
All right, Nigel, thank you very much for that. So that's the setup as we see it. Jeffrey Dennis is independent emerging markets commentator. He joins us now. Jeffrey, good to have you with us here. Thank you for your time. Is the market priming itself for a Trump win? Look at dollar, look at yields, look at the US outperformance, equity outperformance. What's your sense?
Yes, I think it is. I think it's moved definitely in the last 2 to 3 weeks as the polls have moved slightly in favor of Trump towards a Trump trade and towards the Trump trade. And I think markets tend to be all or nothing, in or out. And although the election is clearly still very, very close, although perhaps leaning now towards Trump, especially in those 7 swing states, the market's all in on the Trump trade, and you're seeing this in so many ways. As you've said already, a stronger dollar, higher bond yield, which have moved up very sharply recently. Equities, not quite sure where they go from this. And also, I think at the margin, a little bit more uncertainty as to how much the Fed is going to cut interest rates over the period until the end of 2025. So I think, the Trump trade or President Trump's victory now is getting close to being priced in. Maybe not fully priced in, but getting close there.
Hi, Mr. Dennis. Good to have you on. And by the way, festive greetings to you from us here in India. So, I guess a lot then kind of hinges on the November 5 outcome. And then what if? It doesn't go according to market positioning? Could that then, really halt the big move, the big rally that we're seeing in equities and, this move in yields that we've seen over the last couple of weeks?
I suspect if in the end Kamala Harris is elected president, I think the equities will probably rally more because equities have been very, very uncertain and volatile recently. The key thing to get to the factors behind the Trump trade, so to speak, is that Trump's fiscal plans are extremely expansionary. They're going to push up, according to independent analysis, the debt to GDP ratio of the US to around 135% by 2035. The Kamala Harris fiscal plans are expansionary, but nothing like as expansionary as the Trump plans. And what that therefore means, in my opinion, in the event that Kamala Harris wins this election, I think there'll be some unwinding of the things that have gone on recently. The dollar will pull a little bit lower. Yields might correct, might pull back. And that, I think, in the face also of perhaps, maybe a little bit greater optimism about the Fed being able to cut again, because the Fed doesn't want to see yields go too high. The Fed does not want to see the budget blown out of the water, which is what President Trump is suggesting with his proposal. So Kamala Harris' victory, I think, would bring a would bring sizable interest rate cuts between now and the end of 2025 back on the table. So I suspect the market at the margin, if Harris were to win, would probably do better in the first few days than if Trump were to win.
All right. Hi, Jeffrey. Good morning and good to see you. What about your approach to emerging markets? I recall in the past when we chatted, I think you were leaning more towards India in comparison to China and Brazil in comparison to Mexico. How are you approaching those markets now, particularly since the Chinese markets, from bombed out levels, they have bounced back?
Yes. Well, I actually think, and I've been writing about this the last week or so, I don't think this is a great environment currently for emerging markets overall. We've got a stronger dollar, which is typically negative for EM. You've got sharply higher bond yields. Those together, plus you've got a little bit of uncertainty about how much the Fed cuts from here. I think they do cut next week, but nonetheless, there's a bit of uncertainty about what goes on beyond that. What that does is really make it hard, I think, for emerging market central banks to reduce interest rates as quickly as they might otherwise do, because it's going to put currencies under pressure. So I think the general environment here for EM is not that great at the moment until we get more clarity from the US election and from where these key variables are going to go. I mean, you're seeing that out there at the moment. EM is drifting lower. And EM has been driven all year by three markets, by Taiwan, by China now, recently, of course, and by India. Now, as I've said on this program before, my big worry about China is I still think it's going to be extremely difficult for the Chinese government to do enough, particularly on the fiscal side, to really solve the major problems the Chinese economy's got, which is low consumer confidence, low consumer spending, and of course the property sector malaise. And so, although I know India's had a tough few weeks here, I still think at the margin, given that these are not great conditions for emerging markets overall, I think India is a better bet, especially with this big collapse in oil prices recently, than is China. Just quickly, Brazil versus Mexico. I think the domestic situation in Mexico is very poor because of the political changes that have gone on and the challenge to the constitution. Mexico should be doing really well because of all the nearshoring that's going to go on under both presidents in the event that you get more production in Mexico going into the US. Brazil, I think, has great scope eventually, as long as the dollar doesn't go too high, to reduce interest rates.
Right.
And so I still Brazil to Mexico at the margin.
All right, Jeffrey, we'll leave it there. Thank you very much for joining us. Appreciate you being here with that commentary. Thanks indeed. So that's Jeffrey Dennis with the perspective on global markets. Let me quickly tell you the corporate interactions which are lined up here on the program. 8:40, you'll hear from the management of Suzlon as we discuss their second quarter numbers. A bit of a miss on EBITDA. Revenues, though, have come in better. We have the Mahindra Holidays management join us on the quarterly numbers. 9:20, Krishna Sangvi of Manulife Investment Management will be our market master of the day. 9:30, you'll hear from the management of Tata Technologies. Atul Kumar Goyal, MD and CEO of Punjab National Bank, will be speaking with us at 9:40. And we'll also have the MD and CEO of LIC Housing Finance join in a little after that. Poly Medicure, the medical equipment company, Mr. Tribhuvan Adhikari will be with us to talk about the second quarter numbers as well. Well, at 10:15, you'll hear from the management of Federal Bank on their second quarter numbers. So a lot of corporate commentary you'll hear between now and the next 2 hours.
Well, a lot of stocks as well as what we're tracking for you. So we slip into that break, we come back, we'll go full tilt on the top 10 stocks that we're looking at. Let's run you through the list, though. We're looking at Bharti Airtel, Bharti Hexacom, Federal Bank, Kifin Tech. 4 of them will be reacting to positive news flow, while we have JSW Infra, Suzlon, Tata Tech, LIC Housing Finance, Indian Oil, and IGL. All of them will be reacting to negative news flow. Slip into that break, come back. We'll get into further detail on all of these numbers.
Today with a message of hope for all Americans. With your vote in this election, I will end inflation. I will stop the invasion of criminals coming into our country, and I will bring back the American dream. We need the American dream to come back home. This will be America's new golden age. It's going to happen quickly, too, very quickly. Every problem facing us can be solved, but now the fate of our nation is in your hands. Next Tuesday, you have to stand up and you have to tell Kamala Harris that you've done a terrible job, that crooked Joe Biden has done a terrible job. You've destroyed our country. We're not going to take it anymore. Kamala, you're fired. Get out, get out. You're fired. And I'm announcing a new policy today that I will support a tax credit for family caregivers who take care of a parent or a loved one. It's a
Welcome back. So the setup is more or less positive, and we're expecting that some of the green on Asia is going to rub off on our screens as well as we kickstart trade. But it's all about individual stocks and really what we can do. That's the implied open, 20 points higher. But let's talk about the individual stocks. And our team is standing by with the CNBC-TV18 list of top stocks to watch this morning. Guys, good to have you on. We'll start with Bharti Airtel, of course. Rima, numbers looking good?
Yeah, so operationally, it's a strong quarter in line with street expectations and driven by the tariff hike undertaken in early July. But at the bottom line, there is a miss because of an exceptional loss due to currency devaluation in Africa. So on the top line, the companies reported a consolidated revenue growth of 7.7% quarter on quarter, ahead of street expectations. And this is driven by a 10% increase in the India mobile business. ARPUs too for the company have gone up by more than 10%. And if you compare Bharti Airtel and Reliance Jio operationally on most of the parameters, whether it's an ARPU growth or the kind of decline we've seen in subscriber, the performance is slightly better than Reliance Jio. Bharti Hexacom too reported their numbers, and again, it's a good quarter driven by tariff hikes, revenue growth of nearly 10% quarter on quarter. EBITDA margins have expanded to approximately 50%. There is an ARPU jump of 11%. Profits, though, appear to be, reported profits are down because in the prior quarter, we had an exceptional gain, and therefore the bottom line is distorted. But operationally, both Bharti and Bharti Hexacom have reported strong numbers.
Okay, all right. Thanks a lot for that, Rima. Well, let's hop across to Vivek. He's here to tell us about a couple of numbers. JSW Infra and Suzlon. Vivek, those numbers a little bit of a miss?
Good morning. That's right. Both numbers slightly disappointing, slightly underwhelming, to what the street was factoring in. When you're talking about JSW Infra, we'll look at that one first. So very good volume growth. Remember, a lot of inorganic acquisitions. So that has led to strong volume growth on a year-on-year basis. So in fact, when you're talking about the cargo volumes up almost 16% on a year-on-year basis. But what has actually, slightly underwhelmed the street is the fact that it's actually the group cargo volumes that have been slightly sluggish, but the third-party volumes this time around have kicked in. Now, when you talk about the numbers themselves, revenues higher by 18% on a year-on-year basis, EBITDA up 48%, margins quite strong, 67.5% versus 53.8%, profitability higher by 46%. In the conference call, the management toned down its volume guidance by sticking to the lower end of the volume guidance band. Earlier, they had a band of 10 to 12%. Now they're sticking to 10%. And when you're talking about the third-party, volume share mix, it's jumped up to almost 46% versus 36% on a year-on-year basis. So that's a key positive as far as JSW Infra is concerned. Now, when you're talking about Suzlon, very important, what's actually happened is that margins have significantly contracted both sequentially as well as on a year-on-year basis. Very strong top-line performance. So when you're talking about the revenues higher by 47.5%, EBITDA up 30.8% on a year-on-year basis. EBITDA margins, when you're talking about the reported EBITDA margin, 14.1% versus 15.9% on a year-on-year basis and 18.4% on a sequential basis. What impacted the EBITDA? Cost relating to ESOP expenses, SAP implementation, a corporate office lease, and we'll have the management a little later on, and we'll have to get some clarity in terms of what will be the sustainable or the EBITDA margin trajectory going forward. But order book very strong at almost 5.1 gigawatt, also getting in an order from NTPC this time around.
All right. Vivek, thank you very much for that. And you'll hear from the Suzlon management in a bit from now. Financials were, of course, all the focus yesterday, and they are today as well. Federal and LIC housing. Let's go across to Abhishek. Abhishek, good morning.
Good morning, Prashant. So happy Dhanteras to you and our viewers as well. Federal Bank, they reported a good quarter. The net interest margin has come under pressure. It is at 17-quarter low of 3.12% versus 3.16% YOY. But take a look at operational strength that you are seeing in the asset quality vis-a-vis peers who are seeing deterioration in asset quality. So gross NPA ratio is perhaps at a 9 or 10-year low of 2.09% versus 2.11% in the previous quarter. Slippages have remained stable on a sequential basis, and the annualized slippage ratio is at 15-quarter low of 0.75% versus 0.77% in the previous quarter. And operationally, if you take a look, the operating profits, they have grown by 18.2% YOY, which is the best in last 5 quarters. With reference to the P&L, NI is slightly below our poll. However, the PAT is 6 to 7% ahead of our poll. LIC Housing Finance operational weakness continued over here. Disbursements were pretty strong, growing at more than 27% on a sequential basis. However, the AUM growth continued to remain in single digit on a YOY basis for now 7 quarters in a row. So AUM growth is just 6% YOY. Net interest margin continued to decline. 2.71% is perhaps at a 7-quarter low. Their asset quality improved. Gross NPA ratio inched down to 3.06% versus 3.29% in the previous quarter. Operationally, if you take a look, the operating profit declined both YOY and quarter-on-quarter as well. Provisions declined, which actually led to PAT beating the numbers. So NII, if you take a look, 1974 crores versus estimate of 2085 crore by Investec. PAT came in at 1331 crore, while Investec estimated at 1335 crore. Back to you.
Okay, Abhishek, thanks very much for those numbers. Let's look at Tata Technologies. Management sounding really cautious in terms of the commentary. Back to Rima for this. Rima, what do you make of it?
Well, it's a modest quarter. The company's reported a revenue growth of 1.6% in dollar terms. Constant currency revenue growth is 0.8%. Margins are steady at 18.2%. A little bit of a drop in the company's profits. But in the conference call, the company did talk about that they continue to see delay in decision making. US elections is throwing up some uncertainty. There's challenges with European OEMs, competition with Chinese OEMs in the EV space. That said, the order book and the pipeline continues to remain very healthy. Back to you.
All right. Well, that stock could pull back today. Irony that on the day of listing, it went to 1,300 rupees and now it's below the 1,000 rupee odd mark. So we'll keep an eye out on that one. But let's hop across to Sonal. She's here to tell us about IOC and IGL, and I believe both those two numbers are disappointing. Sonal, take it away.
Well, IOC is very disappointing, much lower than what the poll was suggesting. It was because of higher inventory losses, because of LPG subsidy, which the company did not receive, so they had to make an adjustment. Revenues were down 10%, EBITDA down 56%, margins halved on a quarter-on-quarter basis, profits in 180 crore rupees. But again, here there's an adjustment for reversal of provision created towards VAT input credit. If we strip off that, it would have been a loss for IOC this time. Refining throughput came in lower than estimates. GRMs at $1.6 per barrel, lower than estimates again. And the petchem segment reported a loss this time versus a profit last quarter. So it's an all-round miss for IOC. For CLSA has cut the EPS estimates by 6 to 20%, and Citi has cut the target price to 190 rupees a share after this number. For IGL, it was a mixed set. Volumes were at record highs, but margins came in much lower than estimates. Revenues were up 5%, but EBITDA declined 8%. Margins lower than 200 basis points, and profits were up 7.5%. Volumes at 9 SCMD is the highest that the company has seen on a quarterly basis. EBITDA per SCM, however, lower than the poll of 7.3 per SCM. Morgan Stanley says that the volume growth this time around was heartening. It is the highest ever that the company has seen. That implies that the impact from bus conversion to EVs is behind. There could be some red because of margin pressures, but there could be some green after that initial downtake we'll see on the stock.
Okay, all right. Thanks very much, Sonal, for that. Let's talk about K Fintech, which came out with numbers as well. Vamakshi is here with details. Vamakshi, morning.
Well, good morning, Prashant. A good set of numbers coming in from KFinTech. When we look at the revenues, they saw an uptick of 18% sequentially. This has come in nearly 6% higher as compared to what the street was expecting. All segments contributed to the growth in revenue, barring the global business services, in which the revenue dipped by 14%. EBITDA margin too expanded by 300 odd basis points sequentially to 45.11%. It has also come in much higher than what the street was penciling in. Again, out here, most of the segments have seen an expansion in their margins. Net profit saw an uptick of almost 31% sequentially, and this has come in much higher than what the street was expecting. Operational metrics also look quite strong for the company. Average AUM stood at 21.4 lakh crores. This is an uptick of 12.4% that we're seeing sequentially. This is more or less in line with what the industry grew at. Their share of overall AUM also rose by around 10 basis points sequentially. This is the 6th consecutive quarter wherein they've seen a rise. Share of equity average AUM was, however, flat at 33.4%. Additionally, the company also announced that the board has approved the terms of a JV agreement with CAMS for MF Central. So overall, a good set of numbers coming in from KFinTech. The stock is expected to open higher today.
Okay, got that. Vamakshi, thank you very much for that. So let's quickly recap our list of stocks to watch today. Fair amount of green coming through. So the ones that have positive news flow include Bharti Airtel, Bharti Hexacom, Federal Bank and KFinTech. The ones that have negative sentiment and earnings cues around them include JSW Infra, Suzlon, Tata Technologies, LIC Housing Finance, Indian Oil and IGL. Okay, so that's our stock list for the day. Let's figure out what the commodity cues are like as well. Manisha Gupta is joining in. Manisha, happy Dhanteras. Gold has been shining through the year, not just today. But really, what's top of mind for you?
Well, gold absolutely does, Surbi, because this Dhanteras is looking at gold at an all-time highs. We're looking at 80,000 rupees at 10 grams if you were to step out and buy gold today. You know, usually around Dhanteras and Diwali, people buy 20 to 22 tons of gold. So while perhaps the quantum could go down, but the billing will not because the prices have gained so much higher. But we are looking at stronger gains continuing in the day today as well because of the uncertainty from U.S. presidential elections. The markets also are awaiting the third quarter GDP numbers, the non-farm payroll data comes in this week as well. So this is a data-heavy week in that sense as well. And even as the dollar index is trading on a firm note, we have seen gold continue to hold around that 27.50 mark, which is just about $10 to $15 away from its all-time highs. But the other commodity to watch out clearly would be the crude oil prices. 6% of decline in the overnight markets, which has been the biggest one-day loss in 2 years. But we have seen a bit of a gain coming in right now into the markets, and this is after U.S. has suggested that they are going to purchase 3 million barrels of crude oil for their strategic petroleum reserve. Also, a bit of a decline in the dollar index seems to be supportive. And in any case, a 6% decline yesterday has led to some opportunity buying into the markets right now.
All right, Manisha, thanks a lot for that. And as always, I go according to your advice. So 1 gram of gold is what I'll be buying, Manisha. As you've told me over the last many years, I think 13 years, 13 grams because of Manisha. Thanks a lot for joining in, Manisha. Well, on that note, though, we'll slip in a short break. Up next, we'll connect with Abneesh Agarwal of Prabhudas Leeladhar. He'll help us with some fundamental talk.
Recognize, right? They add so much to our country and are never spoken of, ever, but they're going to be spoken of now. Thank you all very much. The United States is now an occupied country, but it will soon be an occupied country no longer. Not going to be happening. Not going to be happening. November 5th, 2024, 9 days from now, will be Liberation Day in America. It's going to be Liberation Day. On day one, I will launch the largest deportation program in American history to get the criminals out.
we are getting very good resolution. On the top of it is KSK Mahanadi, where we are expecting recovery of more than 100% recovery of principal amount we are expecting, because the Swiss challenge process is on, and we are the rates that the bids that have come, it is indicating that our recovery is going to be more than 100%. Second case is that of Sinnar plant at Nasik. There also the initial bids have come, and the H1 bid is quite good. And third project is Hiranmaye project. There also the Swiss challenge process has just been completed.
Welcome back to Bazaar Morning Call. Well, as promised, we have Amnish Agarwal, Head of Research at Prabhudas Lilladher, who joins us. Hi, Amnish. Thanks a lot for joining in. Well, let's talk about Tata Technologies, if you're tracking that one. You know, on the day of listing, it went up, I think, 140% odd, went to around 1,300 rupees. And those that got allotted, they would be happy to sell on that day because the numbers actually are disappointing and the stock has come down. I think it's sub 1,000 rupees. Your view on this counter?
Yeah. Hi, Nigel. If you look at Tata Technologies, then many of these ER&D companies past 2-3 quarters have been very tepid. Now, the way the entire, for example, they drive a bit of sales, say, from Moto and some of the other ER&D segment, I think the outlook at this point of time is not looking that bright. If you look at the entire space, it is not only Tata Technologies, but some of the other stocks in the segment, they have also seen a correction. So I think in the near to medium term, the outlook for these companies remains to be slightly on the tepid side.
All right. So you would not look to get in even on a dip because you believe that fundamentally things aren't looking that good?
I think it might take a little bit of time for these companies to see some revival because the demand in Europe and some of the US markets has to revive for these companies to start again showing very good numbers.
All right. Let's talk about the stock that should open up in the green, Bharti Airtel. Actually, those numbers look quite good. You know, if you compare it with its peers as well, and even on in comparison to what the poll threw up. Your view on this counter?
You see, Bharti is actually gaining because of the tariff hikes which have happened first in the prepaid and then in the postpaid during the last quarter. So I think not only this quarter, for the I think coming 1 or 2 quarters, the base seems, I would say, benign due to this very factor. Although subscriber numbers they are going down, but I think if the overall ARPU continues to move up, I think Bharti has got you can say many legs to move. Performance will continue to be quite good even in the coming few quarters.
Amnish, hi. Morning. It's been a really interesting quarter for financials, right? Banks and NBFCs, because it's so different depending on which lender you're with. Look at Federal today. I mean, they've actually managed to keep asset quality so steady when others are struggling. PNB's also seen a reduction in gross NPA levels. I think their credit cost guidance for the full year has also come down. So what are you sticking with and what are you avoiding? I mean, some names would help here because it's very granular, especially in the whole tier 2 category.
You see, what has happened in financial is two things. First of all, the unsecured book about which there were doubts earlier. So that is the risk in that they are coming to the fore. And second is the MFI book. So whichever company is having more exposure to these two, they have been on the, I would say, they have been suffering. So if you say leave the top 2-3 banks, for example, IndusInd Bank, the numbers got hammered. IDFC Bank also suffered. So I think this now the MFI issue, I think it is going to take, say, some time to settle down, although a lot might have come into the stock price of many of these companies. Now, I think some of these companies, for example, yesterday Bob's results were good, even Federal Bank numbers are good. So I think it is going to be very, very bank and case specific. But having said that, it depends upon the way you look at it. Some of the bank has done very well. The company has in the past traded at 1.8 to 2 times book also. So there is some scope in the stock to move up unless until you can say they also show some, you can say, negative numbers in the coming quarters. But having said that, I don't rule out some bottom fishing also happening in some of the counters which have seen sharp cuts in the last, say, week or so. So, but I think incrementally there would be some caution at least for the, you can say, 1 or 2 quarters.
All right. Abneesh, I request you to stay with us. We're going to go to the management of Suzlon and come back to you. That's the first management on the show. The company reported a strong top-line performance, actually, but margins were a little bit lower. The mix, in fact, seems to have changed a little bit. To understand what went on in the past quarter and more importantly, execution for the second half of the year, Mr. Himanshu Modi, the CFO of the company, joins us. Hi, Himanshu. Good morning, and thanks a lot for joining in as always. When I'm looking at the deliverables in the first half of the year, you've delivered roughly around 530 megawatt. That's an approximate number. For the year, I think most on the street were working with 1.5 gigawatt odd. My question to you is, how much of your year's deliverables have you done in the first half of the year? And I believe the second half of the year will be much heavier. So how much is due?
So, hi, good morning to you all. Again, if you look at our trends in H1, typically we've always done close to about 35% of deliveries, and H2 accounts for the balance 65%. So by that token, if you look at it, we are inching close to anywhere between 1.3 to 1.5 gigawatts for the annual delivery plan.
Mathematically, it should be 1.5 to 1.6.
Yeah, well, I wish it works. It's 35%, but yeah, we are obviously working towards the best targets possible.
Got it. Okay. All right. So that's on the execution front. What about margins? It seems to be a couple of one-offs like the ESOP cost and a couple of other costs that hurt in the past quarter, and that's why margins did compress. But what's the margin guidance for the year? I think earlier when we were chatting, I think you were talking about around 16-17% margin, 17 to 18% margins. That would mean second half of the year will have to be far better. Do you hold on to that guidance for the year, 17 to 18% on an average for the year?
Let me rectify that. You need to look at our segmental performances because the company has two large segments, as you're aware. One is the WT manufacturing division, and the other is the services division. When you look at the consolidated margin, the consolidated EBITDA margins are bound to reduce in terms of percentage terms as the WTG business increases in size in the overall segment, because that's a single-digit margin business for us, as compared to the services business, which is close to about 40%. The guidance that we'd spoken earlier on the 17 to 18% that you're talking about is with regards to the gross margin or the contribution margin for the WTG business standalone basis, which this quarter has been about 21.8%. So we maintain that it'll be in the late teens, early 20s gross margin on the WTG business. But if you look at the consolidated EBITDA margin for both segments put together, then naturally, because of the WTG increasing its share in the overall pie, the console margins on the EBITDA level are bound to reduce.
So what should it be? What should it be then? You've given us the breakup. As you said, O&M is higher margin business, WTG is lower, WTG's share is going up. So what should we work with? Give and take everything on a blended EBITDA margin, what should it be?
So I think, our WTG business will be high single digits in terms of EBITDA margins, and the OMS business will be close to about 40%, as is always the case. So I would say, early teens in terms of operating margins at a console level is what one should be looking at.
Morning, Prashant here. Sorry, on EBITDA, could you just repeat that, please? What's the guidance, EBITDA margin?
So I don't want to give any guidance, Prashant, but again, I'm saying that, on the WTG business, we've always had high single-digit margins in terms of EBITDA level and 40% at the OMS level. So if you look at it on a blended basis, it'll be in the low teens in terms of EBITDA margin at a console EBITDA level.
Okay. What about order book, Himanshu? What is the accretion you've seen? What is the outstanding order book at? And could you give us a sense of where that will move up to or in H2, by the end of H2?
So we're currently at about 5.1 gigawatts. Of course, we secured the largest wind order in the country in Q2 from NTPC. That was close to about little less than 1.2 gigawatts. We have a very active pipeline, and I know whenever we've met, we've always said that this is the highest ever order book that the company's had on a quarter-on-quarter basis. And I think, we'll continue to say that for a few quarters because the order pipeline is quite active, available with us. So whilst I can't put a precise number on where we will be at the end of the year, but rest assured, I think there is a very large pipeline available for the company. And the current 5.1 gigawatt, the execution timeline for that is close to about 2 years.
Just some sense on, the kind of bid pipeline that you will be sort of adding to by the end of the year, and also some idea of, the competitive intensity. What's really happening in auctions? How are prices moving? And, what can we expect in terms of adding to the order book? If you could give us some rough estimates.
So, as I said, very difficult for me to put a number on what we'll be adding to the order book. But if you look at the industry in terms of, bids or C&I customers, order pipeline available out there, it is, 10 gigawatts plus. So, whilst there is some competitive intensity, but I think there is room for all of us to play in that market because, all of us put together as OEMs will need to be able to deliver upon that demand that's coming from all our consumers, from our customers.
Okay. Just a word on Renom as well. We spoke about it on the last call when the acquisition happened. So how is that progressing along, and by when does, everything get integrated and start reflecting in the numbers?
So for the Q2, it started reflecting. We started consolidating for about 25 days of Q2. You'll see is reflected in our Q2 numbers. So of course, Q3 of this year would be a full quarterly consolidation of Renom, and we'll continue to operate it as a separate subsidiary, separate management, focusing on growing the multi-brand O&M segment. So whilst realize whatever synergies at the back end, but there is no intention of integrating the management as yet.
Just a quick question, Himanshu, on the blended margin. Since FY26, the WTG segment could contribute even more. You hold on to early teens, or is there a risk that it goes into high single digits, the blended margins?
So very difficult for me to give any FY26 guidance. But as I said, it all depends. It's a function of how much deliveries we're able to do in FY25 and FY26. Because what you need to realize is the O&M business will, of course, grow, gradually at a pace, or as and when we keep adding it to our kitty. But the WTG business will, of course, definitely grow more rapidly than the O&M business would.
All right, Himanshu, we'll leave it there. Thank you very much for your time. Appreciate it here on CNBC-TV18, and good luck. We'll speak again. We'll take a happy Dhanteras and season's greetings from all of us here to everyone at Suzlon. Thank you. We'll take a break. Mitesh and Sudarshan are with us with some technical trading ideas that's coming up. Stay with us.
The bids that we have received is quite encouraging.
I've known Michelle for years, and she is an inspiration. I know everybody here knows this. She is a truth teller, and she motivates us to get to work, especially when the stakes are high, because as she reminds us, as my mother taught me, don't just sit around and complain about injustice. And we will win because together, and this is about all of us, we are fighting for America's future.
There are good reasons why so many women and physicians are horrified by what's happened since Donald Trump's justices overturned Roe v. Wade. We're seeing women scrambling across state lines to get the care.
Welcome back. So let's go across to our technical experts and get a sense on how trade could play out today and how could you be looking at your bets. We have Sudarshan Sakhani as well as Mitesh Thakkar joining in for that. Gentlemen, good morning and season's greetings to you. Happy Dhanteras, and we wish it's a prosperous and joyous Diwali for all of you. Let's start by understanding what the setup is like and whether yesterday's pullback, whether that can extend today or not. Mitesh, how are you reading the charts?
Good morning, Sulvi. Wish you and the entire CNBC family a very happy Dhanteras. Yesterday, rather day before yesterday, I was talking about possibly, the markets kind of sustaining 24,315, bouncing back, but then we saw a new low. And yesterday we were at the trend line support area. So we did get a bounce back as I was, bullish yesterday as well. I think the bounce back will be choppy, but as long as we are not breaking this level of 24, 100 odd zone, give and take a few points, I think good chance that this bounce back will, with some volatility play out and head towards 24, 700, 750 zones. I think that's the level, which I'm looking at. Unless until we see the Nifty start breaking below 24,100. So in that sense, I've advised people to exit short positions, take some long positions with a stop below 24,100, and hopefully this bounce back should play out. So I'm still optimistic, though today I have a mix of buy and sell calls.
Got it. Okay, all right. Good morning, gentlemen, and happy Dhanteras to both of you as well as your families as well. So Darshan, let's come across to you. How are you feeling this morning in terms of market action? What's the trade going to be?
Yeah, good morning. And I'm wishing everyone, all viewers, prosperous Dhanteras and hoping that Goddess Lakshmi will smile on everyone. Well, the markets have done their bit on Friday when they rallied from lows, and yesterday when we had a very handsome rally. I suggested going long yesterday. Today is not that day. For short-term traders, we have to understand that markets go through cycles. We've had a 1.5 day upswing, so the chances are that we will see choppy market action today. Now, it is possible to look for a dip and buy, but it won't be a very good quality trade. So the best trade is to step aside from the Nifty. The Bank Nifty continues to give an opportunity to go long. So focus on the Bank Nifty or on individual stocks and take profits on the Nifty if you have long positions and wait for tomorrow.
Okay. All right. Gentlemen, good morning. Thanks very much. Happy Dhanteras to both of you. Mitesh, what would your trades be?
Morning, Prashant. Wishing you a happy Dhanteras as well. On the stock side, I have a buy on Aarti Industries. The stock is corrected from 700 plus levels to around 500. Now is giving first signs of a reversal. So this bounce back could see the stock head towards 525, 528 zone. And here I would recommend buying with the stop at 503. A buy on ICICI Bank, which has been a buy a couple of days back as well. So now can be bought afresh with a stop below 1280 for targets of 1320. And two conditional sells. Bharti Airtel, if it starts trading below 1655, that's where the short-term averages converge. So below that, sell with a stop at 1671 for targets of 1620. And similarly, Torrent Pharma, sell on a break of 3300, keep a stop at 3360, look for targets of 3170.
Okay, that's pretty interesting on Bharti, considering the news flow is positive, results are good. Let's see, important levels to then keep in mind. Mitesh, thank you for that. Sudarshan, what about your stock calls?
Well, it's mainly on the long side. So I'll start with the one only short position I have. Havells is an intraday short. The stock has been having a cascading decline or a waterfall decline for whatever reasons. Consider going short with a stop above 1700. NMDC is a buying opportunity, small sideways move, perhaps a breakout is imminent. Buy with a stop under 210. Wipro, which is coming out after so many years of doing nothing, has come in my buy list once earlier. Again, it's a buying opportunity with a stop under 545. And finally, overall realty from the realty space, realty itself has been going through a deep correction in the last few days. But overall realty is showing signs of life. Consider buying with a stop under 1900.
Okay, all right. Thanks very much for that, Mitesh and Sudarshan. Those are individual trades coming up. Well, 7% growth is very much doable in the current fiscal, says the DEA Secretary Ajay Sheth in an exclusive conversation with CNBC-TV18. He adds that he expects the second quarter to look up with very strong growth in the third and the fourth quarters. However, some states have shown slower capex, but the government is still confident of achieving its target. Listen in.
Certainly. These are the estimates, and not just that RBI has estimated. Even if you look at what the IMF latest estimates are, they're also of the order of about 7% for the current financial year. So these are very much doable numbers, and one should not go by the first quarter number, which came at 6.7%.
Sure.
There are reasons behind it why those numbers were 6.7%, But we see that a very strong growth to come in the third quarter as well as in the fourth quarter. And of course, second quarter numbers will also be expect by 30th November. We'll have those numbers another month's time. And we do expect that overall year growth should be of the order of about 7%.
And so the government has so far stuck to its borrowing aim. Would you continue to be the same through the financial year?
See, the overall borrowings, certainly there will not be any additional borrowings. But we did realize that the short term we were, compared with the previous year, we were having more cash balances at the beginning of the year than what we had estimated. Keeping that in mind, that short term borrowings, we have consciously moderated to some extent. But as far as net borrowings are concerned, that will remain the numbers what was put into the budget.
And so the government has announced a buyback program yet again. What has been the response to that program?
Response has been good. In fact, when we ran that program, or rather on our request, RBI ran that program 3 months back. At that point of time, response was not good. But in this month, there were two installments it was done. And somewhere of the order of about 50,000 crore has been the buyback. But what is the intent of that buyback? Intent of that buyback is to smoothen the repayment profile.
Right.
And as you will be aware that during the pandemic year, the borrowings had to be increased significantly, and those were of varied duration, some 5 years, 3 years, and even 7 years. So when more and more borrowings of that period come in a single year for repayment, that is not very smooth operation.
Right.
So it is for the purpose of smoothening the repayment profile. That's why this buyback is.
Well, and you can catch this very interesting conversation all day today on CNBC-TV18. Slip into a snappy break. Come back. We'll get you the pre-open rates. We'll also get chatting with the management of Mahindra Holidays and Resorts. Stay with us.
So please, do not hand our fates over to the likes of Trump, who knows nothing about us. Vote for him is a vote against us, against our health, against our worth. Let me warn you, your rage does not exist in a vacuum. If we don't get this election right, your wife, your daughter, your mother, we as women will become collateral damage to your rage.
आज सुबह हमें जर्मनी के एशिया पैसिफिक बिजनेस जगत
Welcome back. Well, let's focus on the cement space then. And Amnish is still with us. Amnish, what's your view on the cement stocks? You know, all of them have reported numbers, barring the Adani cement companies, that's both ACC and Ambuja. The other numbers actually were disappointing, but all of those stocks are higher in comparison to what they were at the time of earnings reaction. Your view on this space? Are you factoring in a much better second half of the year?
Yeah, Nigel, actually there are two reasons to it. One being the pricing was not there, and as such, 2Q is a relatively lean quarter, and we had prolonged rains this time around. Now, I think all these things were already factored into the stock price and estimates as people were expecting weak set of numbers. And I believe that there are a lot of hopes that 3Q will see reversal in the demand as well as some, you can say, restoration of pricing power. So that is what cement industry is banking upon. And that is why I think despite numbers not being good for large majority of companies, the stocks have not reacted. So I think 3Q will be the key factor to watch out for, that if the demand post-monsoon is good, plus there is some, you can say, bit of aid from pricing, I think the stock should be able to sustain the current price.
Got it. What about Zomato? You know, now we're getting guidelines with regard to Swiggy. That issue is likely to open up very soon. What's your view of the stock? It was looking like it was going towards the 300 rupee mark. Then it pulled back a little bit. but it clearly has a longer runway and profitability is coming back into the fore as well.
This is Zomato numbers are pretty good. Now, if you look at food delivery, that is a more or less, I would say, stabilized business, and the bigger delta is coming from your Blinkit business, and there are a lot of hopes from the ticketing business as well. Now, I think one of the reasons why the stock reacted is their plans to raise $1 billion. Okay, because that will, you can say, bring some paper to market, and you can say some sort of a dilution is going to happen. But otherwise, I think there is no change or deterioration in fundamental, and I think markets have also weakened if you look at, say, last 10, 15 days. So I think on the lower levels, actually, this Zomato looks to be an interesting stock to look at.
Okay, all right. Thanks a lot for joining in, Amnish, and wishing you a good day and happy Dhanteras to you, your team, and your entire family.
Thank you, Nigel. The same to you.
Well, let's move on then, and let's move on to our next management on the show. That's Mahindra Holidays. Well, the numbers were a little bit disappointing, actually, in the past quarter. Softish, but as we know, the industry itself has got a lot of tailwinds to go with it. So let's get a couple of details going with regard to the past quarter's numbers. We have with us Mr. Manoj Bhatt, the MD and the CEO of the company. Hi, Manoj. Good morning. First of all, happy Dhanteras to you, your team, your entire family as well, and hoping for a cracker in the second half of the year. Well, let's get a couple of details going then. Could you tell us, what was the occupancy in the past quarter? If you could help us out with that in the first half of the year, and what's the target for the year? And also, what was the quarterly membership addition run rate in the past quarter?
First of all, good morning, Nigel, and happy Dhanteras to you too. So thank you for having me on the show. So quickly, I think I'll just give a quick update on the past quarter. You asked about occupancy.
I think we lost the line there with Mr. Bhatt. We should just be able to have him back with us. So yeah, I mean, those are...
He's back.
I think Mr. Bhatt is back with us. Mr. Bhatt, go on.
Can you hear me?
Yes, we can. Please.
All right. So I was saying that occupancy is 77.5%, which is roughly in line with where it was last year, same quarter. And overall, I think room addition has happened. So overall, room nights have gone up. The other thing is, in terms of member additions, I think member additions were about 3,500, 3,583 to be precise this quarter. And overall is 3.02 lakh members this at the end of September. So we're doing pretty well in terms of our own plans. The highlights really for me are, inventory addition. We added about 219 keys this quarter. We added about 3 new resorts, destinations. Also, from my perspective, if you look at the average sales value, what we call as AUR, that's at 5.05 lakhs, which is about 28% up compared to the same quarter last year. So a lot of positives, I think, focus on premiumization, making sure that our members are finding holidays. And I think overall, it seems like we are on track for a good second half also.
Mr. Bhatt, is there at the margin, good morning, Prashant here, the dominant sort of narrative or the talk has been maybe a cyclical soft patch. Are you seeing any of that? I mean, if you ask over the last couple of years, where did all the wealth generation which has happened gone? It's gone into real estate, it's gone into a couple of other sectors, and it's gone to a lot of holidays. Are you seeing any of it? Any indication in terms of bookings or new member additions that tells you that maybe we are entering a bit of a softish patch?
So I think, first of all, I think our model is a bit different. So we are a member-based model. So clearly our occupancies, even in, as I see October and looking into this quarter, I don't see any impact in terms of number of people holidaying. Secondly, from an industry perspective, if you look at the numbers, I think occupancy is still up compared to last year, and the ADRs are still up compared to last year. So from that perspective, we are not seeing any signs of a slowdown in terms of people spending on holidays, people traveling. And that's something which, in fact, we were doing a consumer survey. And what came out clearly is that combining weekends, combining short holidays and long holidays, I think there's a lot of people holidaying 20 to 30 days a year, which is very, very positive overall for the industry.
It's not showing up in new member additions as well, Mr. Bhatt?
So new member additions, can you hear me?
Yeah, please.
Yeah, so new member additions, as I had mentioned last quarter also, I think we are looking at the right product market kind of mix for our products.
So you don't see any slowdown in the rate of addition, basically.
Yeah, so I think it is slower than last year, but that's more because of our internal choices we are making in terms of channels, but not really from a demand perspective.
Can you, Mr. Bhatt, hi morning, can you elaborate on that? Because, I mean, when we see the number optically, new members have fallen. I mean, the fall is 27% year on year. So one would quickly jump to assume that this is because there's lesser demand, but you're saying it's not that. So what is the issue?
So as I mentioned last quarter also, we embarked on a journey of looking at what channels to use from a overall product perspective. So for example, we have actually stopped going to some tier 3, tier 4 cities. We have eliminated certain channels in terms of looking at what is the optimum kind of profitability mix which we would need. So those are some of the changes which are impacting. We have actually taken out the 3 and 4 year product. We have replaced it with a 5-year product. So all of those combination of those things is causing the overall member additions to be lower. And that's directionally what we have said, that this year we are going to focus on premiumization. And that's where you see it coming up in AUR, which is up 28% year on year. So if you look at the total value, it's down about 6%. If you look at volume, it's down 27%. And if you look at value per sale, it is up 28%.
So, but by when do you get to the run rate that you've sort of laid out in the past, which is 5,000 members getting added on a quarterly basis? Given the strategic shift that you just described, are you still in tune with that target?
So I think that's something we are evaluating. I think we are coming up with a new strategy in terms of what is the right optimum number of members. So I think for this year, I think we have, as I said, focusing more on value and not really on volume. I think as we go down the next quarter or two, I think we'll come back with what is the plans for the way forward in terms of member additions.
Can you quantify this premiumization that you're talking about? Currently, as a percentage of your mix, what is it? As you're saying, it's increasing. So in value terms, you do better and it'll offset some part of this lower addition that we're seeing. So what is it? I mean, what was it? What is it? Where is it headed?
So currently, our average unit realization, or AUR as we call it, is 5.04 lakhs, which is up 28%. Compared to last year same quarter. So that's the end result of all the activities we have done in terms of changing the mix towards longer tenure products, looking at more premium products to be sold into the same markets.
Manoj, as a percentage of the total mix, what is it? I mean, premium customers as a percentage, which is helping you reach this 5.04. So is it 50%, 60%, 70%? What is it?
So we measure it by tenure. Longer tenure products are 63% today.
63%.
Yeah.
And it was earlier, how much was it? And where is it headed?
I think it is. It was up about 2%. So compared to the same quarter last year. So the increase is not so much material, but I think what we have done in terms of, looking at markets, looking at giving consumer offers, all of that, a mix of activities we have changed. That's what's causing the premiumization.
Okay, all right. Thanks a lot, Manoj, for joining in. You're sounding quite optimistic about business. I'll tell you what, I have a family of 4 and we're always looking for holidays. And, so that's any long weekend, we try to rush out there. So I guess that's a change that we've seen in the last couple of years. Wishing you a good day ahead. Well, before we get to the market opening, Prashant has hopped across to the big ball to tell us about an interesting data point. Prashant, take it away.
I mean, it's just sort of dates, nothing else. But I think the dates are also important. And, it's going to be a November to remember, no less, because you got really large events lined up over the next 10 days or so, which I think will dominate markets and what they do. There is, of course, the earnings season here, which is underway, but these are large sort of macro-ish overlays for the market to deal with. Let's actually put the data up. This is what I'm talking about. You've got the US jobs data, which comes through on the 1st of November, right? This is the last jobs data before the election, and voters will have an idea about how the US economy is doing. And of course, it's the last jobs data before the Fed decision as well. Already lots of debate about whether the US economy is slowing as needed or it is not. I mean, some estimates say that US GDP is growing at about 3.5%, tracking 3.5% annual growth, an economy that size. So I think that's the first number. Then you get into the China NPC, National People's Congress, where the dates just came 2 days back. The firm dates came 2 days back. And there is lots of talk that they've kept these dates between 4th and 8th deliberately. The reason is US election day, which is 5th of November. Now, typically by that night, the night of 5th of November, who's actually going to be in the White House is largely clear, unless and until it's a contested election. People demand recounts and it goes into a bit of a loopy loop. So the talk really is that depending on who comes, say for example, if it is Trump, who we know by late evening on the 5th of November is going to be in the White House for the next 4 years, the Chinese want the flexibility in the NPC, via the NPC, to announce a much larger stimulus. Because if it is Trump in the White House, I mean, he's a tariff guy. And the country that he wants to tariff most is really China. So, they want the flexibility to be able to react to who's there in the White House on the 5th of November, sort of assuming that we know clearly who is the winner. So there is the China NPC and US election day, which actually are sort of coinciding. Then, of course, we get into the Fed decision, which is on the 7th of November. Remember, the bar for not doing anything. The first hike was a large one, 50 basis points. But after that, we've seen bond yields since that date, which have moved up about 50, 60 odd basis points. So what is the bond market saying? Is the bond market saying that, well, you don't need rate cuts at this stage? Was that the first and the deepest and the largest that we've seen? Will we get a 25 as the markets are penciling in? Those are going to be important as well. And that's the reason why this entire setup makes it, as I called it, a November to remember. Back to you.
Listening to you, Prashant, I also realized November 5 is, of course, when the US election gets done. Yeah. It's also Guy Fawkes Day, by the way, for those who know Great Britain's history. Commemoration of, that foiled plot where Guy Fawkes, who's a big character, was trying to blow up the House of Lords in the Parliament and kill King James I. I remember because I went to a British school for a bit. So yeah, 5th of November.
November.
November
5th is Ekta Batra's birthday.
Oh, that too. So it's a big day then.
I've been here long enough.
All right. So with the calendar firmly in place, let's get back to the here and now. And in the pre-open, we've got very, very flat cues coming in. Sensex Nifty absolutely flat, not doing much. But the Bank Nifty could continue its good show from yesterday, its forward march from yesterday. Let's go back to our technical experts. Mitesh and Sudarshan are back with us. Sudarshan, so what's the call? 910?
Well, consider buying Uber or Reality with a stop under 1900.
Okay, and Mitesh, which stock will you go with?
I think I'll choose Aarti Industries after a long decline. It's reversing. So buy here with the stop at 503 for targets of around 527.30 on the upside.
Okay, got it, gentlemen. Thanks very much. By the way, just putting it on the radar out there, watch out for NTPC as well today. The stock in the pre-open is up about 1.5%, 2%. SEBI has given the green light to the renewables IPO, so it moves one step forward. And obviously, that's something that the market has been excited about. Let's quickly go ahead and talk to Abhishek about Federal Bank, which came out with a good set of numbers. Abhishek.
Well, Federal Bank came out with good set of numbers. Overall, it was a good quarter for them. Net interest margin has come a bit under pressure. 4 basis point decline over there. So hence, it has come in at 17 quarter low of 3.12% versus 3.16% in the previous quarter. However, asset quality is one of the best that you are seeing in last 9 or 10 years. So gross NP ratio, as per my sheet, is at 37 quarter low of 2.09% versus 2.1% in the previous quarter. Slippages have remained steady. Slippages have been at 434 crore versus 424 crore in the previous quarter. So annualized slippage ratio is at 15 quarter low of 0.75% versus 0.77% in the previous quarter. One of the lowest slippage ratio amongst our banks. So operating profit growth of 18.2% YOY is perhaps one of the best that you are seeing in last 5 quarters. The NI was slightly below our poll. However, the PAT has been above our poll. Back to you.
Okay. All right, Abhishek, got it. So Federal Bank definitely on our radar. As will be the Bharti twins, Bharti Airtel and Hexacom. Both will be reacting to earnings. Let's go back to Rima for a quick wrap-up. Rima.
Thanks so much for that. So both Bharti Airtel and Hexacom have reported a strong quarter, and this is driven by the tariff hikes undertaken in early July. So operationally, the numbers are bang in line with street expectations and very strong. So first, starting with Bharti Airtel, the company reported a consolidated revenue growth of 7.7% on a quarter-on-quarter basis, driven by a 10% jump in the India mobile business, which is about 60% of the company's top line. Margins too expanded, but profits have come under pressure on account of an exceptional loss. Also comparing Bharti Airtel with Reliance Jio, Vodafone Idea is yet to report their numbers. You would see that Bharti Airtel's performance on ARPUs, which went up by 10.5%, and even the subscriber loss is limited to 2.9 million subscribers on a quarter-on-quarter basis, less than Reliance Jio. And also what you can infer from the subscriber loss is that it appears to be more of the low-end ARPU customers who may have opted out of the Airtel network because the 4G subscriber base for Bharti Airtel went up. Excuse me. Bharti Hexacom too reported a good set of numbers, revenue growth of about 10% quarter-on-quarter, 20% on a year-on-year basis. Margins are now at 49.9%. Again, ARPUs for the company jumped up to levels of 228, 11.5% increase. Here again, profits are down sequentially because in Q1, that's the prior quarter, there was an exceptional gain. Back to you.
Okay, all right, got that. So we'll keep those stocks on the radar as well. Rima, thanks very much. Okay, just about a minute to go before we start getting the rates. In the pre-open, just to recap, some of the gainers include a few pharma names as well, actually. Sun Pharma and Dr. Reddy's are up and about. There's NTPC, like I mentioned, and ICICI Bank. These are some of the early movers on the green side.
And Infosys has gone ex-dividend. That's the reason why it's lower.
Okay.
So important to note that as well. But plenty of movers in the broader markets. We have a few stocks that are reacting to numbers as well. So, Prashant, let's get straight to the action.
Well, it's absolutely flat for now, and that's how the indices will start, and then we'll look at some of the specific stocks and what's happening. So, what do you have? 24,370 on the Nifty. Bank Nifty is starting about 1/3% higher. The Sensex is flattish. The mid-cap index is up 0.5% higher. So, you got the broader market, which I think are outperforming what the Nifty and the banks are doing at this stage. So on your screen, so it's a very, very quiet day. 2:1 is the advances are outnumbering declines, but this is just straight first 30 seconds of market open. The Nifty heat map should appear and come into view, and that will give you a sense. It's more down than up. And we've got 35 odd names, more than 35 names, which are starting the day lower. And you got a minority, which is in the green. So 36 points lower is what you have. Yesterday, of course, was nice because across the board, all indices, you had a 1% rebound after about an 8-9% sell-off from the all-time highs. Nifty, mid-cap, small-cap, everything saw 1%. Nice, neat kind of a move. So we're starting about 40 points lower. Surabhi.
We have another results casualty, and we had Abhishek calling this out earlier. So today's BFSI result casualty is Spandana Spurti. Stock is down 10%. So let's just put that one on the board before we start talking about the large cap moves. We can get Spandana Spurti on the screen, down 10%. Again, asset quality issues really scaring and spooking the market. Anyway, back to the larger names. NTPC, like I said, is the best performing stock on the Nifty with excitement around the renewables IPO. SEBI's given its approval. ICICI Bank is continuing to attract buyers, 1% higher. There's a Coal India, that's up about 1% as well. Dr. Reddy's and we have BEL, some positive gains coming through over there. SBI. So basically, the market seems to be rallying behind banks where the asset quality issues are not that significant. On the downside, Infosys, as Nigel pointed out, it's gone ex-dividend today. There's actually selling on Bharti Airtel, despite good performance. Perhaps the stock's already done its move. 1.5% down on Bharti Airtel, as we can see it right now. Some more selling on Reliance. That's the big one that's keeping a lid on the gains today. And then you have a whole host of consumer stocks. I mean, auto as well as regular FMCG names like Lever are on the downside. In auto, I can see Hero Moto, Bajaj Auto, Tata Motors. Plenty of selling going on over here. M&M is down 1.5%. Bharti Airtel is now down 1.5%. So yeah, it's a quick 70 points down move.
Well, that's right. And quite a few stocks actually are moving around. Should be from the broader markets. Gillette, I think, is flying away. That stock is up close to around 6%, I think, the last time I checked. And the volume's fairly decent for this counter. Gillette is the stock that I'm talking about. Genesis is another one that came out with their set of numbers. And those numbers look quite good. Operational performance was steady. Top line, big growth is what we saw out there. So that stock as well should come off you. Gillette is now up more than 10%. So both these two names doing quite well. Syrma yesterday put on some weight. The management sounded very optimistic when they joined us on the show. And today it's up another 4%. So good going on that one. DCX Systems, they won an order. So that stock, in fact, has moved up as well. I think it's up 5%. It's in that 5% band. It's seen a sharp correction from the recent peak. But DCX has moved up. A few more result reactions. JSW Infra, IGL, both of them, those numbers actually appear a little bit tepid. But both those two stocks, JSW Infra is the one we're talking about, JSW Infra as well as IGL, both of them have opened up higher. So it appears bulk of those weak numbers were already in the price, and that's why these stocks are surging 4 to 4.5% in trade. Suzlon on the street is taking into cognizance that the second half of the year will be much better, and that's why, in fact, that stock as well is holding in the green. What's not doing well? Take a look at Senco. The stock is down close to 12% as we speak. Big downtick is what we're seeing out there. Idea Forge is another stock that's down 8.5% now. So big selling is what we're seeing out there. Plenty of excitement ahead of that IPO, but that one's getting clobbered. And IFB Industries, the second day running, their stock is down more than 10% in the initial take. So there are quite a few big accidents actually from the broader markets. IFB, Senco, Spandana Spurti, Idea Forge, all of them getting clobbered in trade.
I mean, they've got some large moves, and we'll sort of focus on more as we go along. But you've got about a 1/3% cut coming through, about a 50-55 odd point lower start. Krishna Sanghvi is with us. He's Chief Investment Officer Equities at Mahindra Manulife Investment Management. Krishna, good to have you with us here as always in the studios. Happy Dhanteras from all of us here. Appreciate it. So just your own take and analysis of this, of the earnings season so far, and tied in with what we're seeing in Q3, starting October, and whether what you're seeing and picking up from analysts and people you speak with, is there a bit of a slowdown underway? What's your sense?
So let's look at results, into three buckets. One is the BFSI as a aggregate, one is commodity space, which is metals, oil and gas, cement, and the third is the all other industry, which are essentially the consumers industry of those first two. I think BFSI is doing pretty good. You look at aggregate numbers, they're still leading the show. Consumer industries across is also doing well. The earning challenge on a aggregate is being driven by the issues on the commodity space, which had a bad quarter. So I think overall, yeah, we are more or less in that mid-single digit kind of earning growth, which is partly expected. But yeah, for some of these companies, the individual companies might have been a bit weaker than expected. But aggregate number is pretty much in that, mid-single digit kind of growth profile. And let's face it, we still yet to see at least 50% of companies, to report in the next 2-3 weeks. So might get a better picture there.
What about Q3 this quarter? Is it turning out to be slower? I mean, it's just assessments from the ground, but a lot of heavy lifting has to be done in Q3 for H2, and then for the full year to come up to a more respectable number. Yeah, and that has not been happening. Is the pet peeve for many.
Yeah, so I think the early season indication from the festive season has not been as good as what was expected. Partly is a challenge of expectations being good, and partly, absolute number are still acceptable, still good. But yeah, heavy lifting to maintain the FY25 earning growth rate clearly falls on H2. We might see a little bit of a, earning downgrade post the result season, and hopefully that should not be as bad. But clearly, currently the views are slightly different on the earnings season, for Q3, and there's a macro challenge, on this. Some of these consumption related things which we see. Is it an issue where for almost every category there are quite a few new entrants in the market? So the existing set of companies are possibly, not able to gain as much because somebody else is gaining market share. So if this hypothesis is right, the underlying consumption is not as bad. But there are some companies in unlisted space which are possibly gaining, or some other competitor which is listed, but as a new initiative they're doing. So that's one way to look at it, and then overall consumption doesn't look good, and that's where you take the macro reconciliation, saying that if India is still going to grow at 7% real GDP kind of range, then it's not that bad, maybe it impacts some industries, some existing players in a more meaningful way, but aggregate picture for the economy is not so bad.
And I guess on consumption, we've been discussing this with lots of analysts as well, right, guys? I mean, if you're taking a fancy holiday, you're buying gold jewelry, and you also bought a car last year. At some place, you have to cut corners, right? I mean, there's education, inflation, etc. And I think Avnish made that point as well, that there is a lot of urban inflation that perhaps doesn't get tracked exactly in that CPI number that we look at.
It's not 5, 6, 7%.
It's definitely not 5, 6, 7%. So if you're spending, I mean, you can't be spending 10 places at the same time. You will cut back somewhere. And I think maybe that's what's beginning to show up in consumer demands. But Krishna, having said what you just said, I mean, the earnings discussion that we just had, I'm just trying to think, what is it that will take this market back to 26,000 plus, 27,000 plus? Either you have to have a very strong earnings revival in the second half, which is not what you just described, which is not what we're discussing, or you have to have that money train, that wall of liquidity hitting the market again, which is where we are, discussing this whole FPI situation, going out, and who knows whether they come back in. There's no point trying to second guess that, but do share your views there. But I'm just trying to understand whether this market, what can take it back to new all-time highs, or whether now investors have to get used to the idea of just being in a bit of a listless, range-bound market with low returns for the next 6 months.
Yeah, sure. So, as you said clearly, who knows is the best answer, right? So what can happen? Let's put it this way. We got maybe one sharp month of very negative outflows on FII's front, which is perhaps maybe highest in the last history of whatever we can remember. So to that extent, if you adjust for that, the kind of drawdowns in the markets are not as severe, because you got nearly $11-12 billion worth of outflow in a single month. So to that extent, the drawdowns are far more acceptable, is one way to look at it. Yeah, come from the expectation side. Let's look at what drives markets, right? So one is the economy, which we just broadly discussed. 7% is honestly not too bad. Even 6.87 range is acceptable. Second is earnings, mid-single digit, more or less reflecting little bit slowdown, but if you sectorally dissect, some sectors are still doing good, some are weak, so again it edges out. Third is the expectation game, because if you are expecting much higher earning, that's why partly the disappointments comes in. And that's where the challenge, the second part of expectation challenge is the investor return profile. We've got a fantastic last 18 months odd period where almost any and every stock would have given you very meaningful return profile, maybe multipliers, multi-baggers happened. So to that extent, yes, some sort of a moderating the expectations of a low return, maybe no return kind of profile for some months is part of them. That's where, your long-term averaging, long-term compounding of economy and earnings and markets play out. If you look at last 15, 20 years, you got what, 13% odd earning growth, maybe 14% odd market growth.
Is that what you're expecting?
Yeah.
That we will be in a no return or a low return market for the next couple of months? Is that a assessment, a view that you have right now?
Who knows is the best answer, because if you don't have this $11 billion worth of outflow in last, for whatever results we've seen in this last 3 weeks, but it was not accompanied by a $10, $11 billion, $12 billion outflow, then also who knows, what would have been the market reaction, because honestly, the demand supply side of markets also matters. Where you discuss demand supply and economy, but even from a market side, that matters.
Hi, Krishna. Good to have you in the studio today. I recall the last time we chatted, you were a little bit cautious on the broader markets. You were saying it's getting a little too fast, too furious. And also, I think you mentioned that the railways and defense space, a lot of the good news was in the price. And from there, both those two sectors have seen a bit of a correction. But you were positive on FMCG. And I think consumer staples is something that you liked. How are you approaching things right now? And what do you make of, the sound bites that are coming in there, the earnings as well?
Yeah. Sure. So I think consumption as a space, maybe consumer staples and aggregate other consumer space. I think let's look at 3-4 broad picture. One picture is there a market share loss because some new players are entering? And to that extent, it's not really bad for the consumption as a space. Maybe some stocks might be impacted. Second bigger trend in India is, we're moving far more into a digital formal world where efficiency gains are playing out across companies. So what really happens is that when efficiency gains are playing, your working capital cycle goes for a reduction. So your end customer sales remaining same, which is, consumption does not change, but the primary sales start impacting because the channel inventory needs to come down. So that can be one way to analyze, a little bit of a slowdown at the primary sales level did not really hurt the consumption. And the third part really is, again, a little bit more macro to analyze is that what we're seeing in India is, reasonably good, again, efficiency, productivity gains on the macro of fiscal deficit improving, post GST implementation, post, entire digital integration of income tax, etc. We've seen tax compliance going up. So while government finances are improving, very fact we discussing tax compliance going up means somebody somewhere who was not paying tax is now being forced to pay. And to an extent, no, unpaid tax of past was a consumption power for those set of people. And now that they're paying tax, perhaps, that consumption power is, impacting their, incremental behavior. And, sometime back, we just, you just mentioned, right, that if somebody has spent on a luxury last year or a high-end discretionary product last year, he or she is not likely to repeat very next year. So to an extent, some of these products, very fact they are 3-5 year, replacement cycle products. You may not buy it all over again. So it is a combination, I think, on all these fronts, which possibly says, okay, consumption is possibly weak from a market perspective, but underlying consumption is still acceptable.
Just want to put up a few names which are moving. Waaree Energy is up, is the biggest volume-led gainer right now. It's up 3.5%. So 24.19 on Waaree coming through. Federal Bank is up 6.5%. So 197 there. Piramal Pharma has got about a 5% pop, 258. And Sirma, we had the management with us yesterday, and Sirma saw a very large move yesterday. It's another 8% higher this morning. JSW Infrastructure is another 3.5% mover, so almost 300 rupees. There's Capacide Infra, which is up 11%, 383 on Capacide. Home First is up about 5.5%, 1161 on Home First. So there is Sharda Cropchem, which is up 4.5%. Kirloskar Brothers is up about 4%, all decent volumes. Viatech Vabag is back up about 4% or so, and so on and so forth. Look at KPIT Tech. KPIT Tech is down about 3.5%. Numbers, of course, were slightly disappointing for KPIT Tech. And in a way, the company that we're going to be speaking with in just a bit, Tata Tech, in largely the same space. Tata Tech is not moving, but Tata Tech has been since it IPO'd, it's been a underperformer. So it never really saw the big gains that names like Tata Tech, etc., or Cyient, etc., saw. But that one is also down about 3% at this stage. Krishna, any thoughts on names like? My question is about Waaree, but since we can't talk about stocks, but companies in the renewable new energy space, right, where you've got China, which is a very large player. Tariffs play a meaningful role in terms of protecting competitive positioning. How should investors view these things? Because those could, while the focus is on promoting the domestic industry, but we've seen with solar glass, for example, a few quarters back, a company was impacted quite severely when tariffs were not put back on like they were expected to. So it's dependent on tax rates and those kind of things as well. How would you look at these businesses?
Again, a macro trend, we see an increasing trend of companies or sectors, where some sort of tariff barrier, some sort of import protection is, playing a role in determining the profitability. That's true, especially when the competitor is China as a, underlying. Similar in the renewable energy space, yes. Definitely, these tariffs are creating some sort of a support system on earnings. But if you step back and look at a slightly longer picture, clearly the amount of demand India is expecting for ourselves on the solar power capacity creation, plus the way world is moving into energy transition, combination says that aggregate demand is in place. Yes, clearly the price protection or the tariff barrier does give a superlative profit performance for some companies at some point of time. But we also have to be watchful of what those companies are doing with those profits. If they are investing into some sort of a backward integration to get into better technology angle, possibly those, end benefits are going to be far better for them. But clearly, the renewable space is interesting, and tariffs are possibly a way right now which determines profitability for too many players across industries.
By the way, just looking at some of the calls that came in on Bharti Airtel as well, the stock is down about 2.5% despite putting on a really solid show with a 10.5% improvement in ARPU. The ARPU number now for Bharti Airtel is tracking at 233, which is significantly higher than Jio. Jio is just under the 200 mark. But the stock is cooling off. Let's pull up a one-year chart on Bharti. One, of course, could be market positioning, and then there's so much of FPI selling, and this is one of the key index stocks that could be weighing. And then this explains it. The chart kind of explains the trajectory because you've had so much of a huge move already. And the trigger now needs to be the next round of tariff hikes. Can they do one more? That's really going to be the talking point. So you have some calls. UBS's target price is 1595, which is lower than where we are. Citi is very optimistic. They have a buy 1950. That is where they are. So some calls on Bharti coming in. The other stock of the morning, really, on the positive side in terms of perhaps the best result reaction that we're getting is, yes, Gillette, as Nigel has been indicating. We'll talk about Gillette as well. But the one that right now we have on our radar is going to be Federal Bank. Nigel will tell you more about the shaving. But right now we have Abhishek joining in on Federal Bank because, again, in a sea of worries about asset quality, Federal Bank has been just pristine. It stood its ground. And, you know, the market is really rewarding it for that. So, Abhishek, let's go over the numbers again.
Well, to begin with, it was Shyam Srinivasan's last quarter and first quarter of the new management as well. They have reported a steady set of numbers. The net interest margin has declined by 4 basis points sequentially, but that's in line with what peers have been reporting as well. 3.12% net interest margin over 3.16% in the previous quarter. The asset quality is one of the best that you are seeing in last 9 or 10 years. Gross NPA ratio is at 37 quarter low of about 2.09% versus 2.11% sequentially. Slippages have remained stable, so they have been able to improve their annualized slippage ratio, which has come in at 15 quarter low of 0.75% versus 0.77% in the previous quarter. One of the lowest slippage ratio that you are seeing in this quarter amongst large and mid-sized banks. So operating profit growth of 18.2% YOY is perhaps one of the best that you are seeing in last 5 quarters. Sequential growth is about 4.3% in operating profit. They missed our poll on NII by just about ₹10 crore. However, they beat our poll with respect to PAT by 6 to 7%. Back to you.
All right. Abhishek, thank you very much for that. So that's Federal Bank, and you'll hear from the management of Federal Bank at 10:15 later on the program. Krishna, thank you very much for joining us here in our studios. Appreciate it very much. Thank you. Thanks very much. We'll take a quick commercial break here. You'll hear from the management of Tata Technologies in a bit. We'll also have the management of Punjab National Bank join in on the other side. Stay tuned.
करने का अवसर मिला। मेरे तीसरे कार्यकाल की पहली आईजीसी मीटिंग अभी कुछ देर पहले संपन्न हुई है। अभी हम सीईओ फोरम की बैठक से आ रहे हैं। इसी समय जर्मन नौसेना की शिप गोवा में पोर्ट कॉल कर रही है। रक्षा और सुरक्षा क्षेत्रों में बढ़ता सहयोग हमारे गहरे आपसी विश्वास का प्रतीक है। क्लासिफाइड इंफॉर्मेशन के एक्सचेंज पर बनी सहमति इस दिशा में एक नया कदम है। आज संपन्न की गई म्यूचुअल लीगल असिस्टेंस ट्रीटी से आतंकवाद और अलगाववादी तत्वों से निपटने में हमारे साझा प्रयास सशक्त होंगे। यूक्रेन और पश्चिम
Welcome back. So as promised, let's straight away get the conversation going with the management of Tata Technologies. The company came out with a modest revenue performance for the second quarter. Margins were steady. The question is whether the immediate future is looking a little more challenging, because there was some commentary to that effect in the conference call that took place. Let's pull up a one-year chart on Tata Tech as well. I mean, since the listing, the stock's actually down about 20-23%, maybe reflecting some of these wider concerns on the automotive side. Just to recap, quarter on quarter, the revenue improvement is 1.6%. The EBITDA margin is steady at 18.2%. We have with us, I think, the management now joining in. Mr. Warren Kevin Harris of Tata Technologies is with us. Mr. Harris, thanks for joining in. So let's start with that very cautious commentary where you're talking about delay in decision making. You're attributing it to a lot of factors, the US election being one. But I want to start by focusing on what the OEMs are saying. A lot of auto OEMs in Europe have already cut their guidance. They're sounding extremely bleak on the immediate sales forecast. What's happening?
Yeah, I think we've seen somewhat of a tapering of electric vehicle demand, both in the US and in the European Union. I think that the drivers for the tapering are somewhat different. I think the US is primarily driven by the uncertainty in and around the election. I think the choice for the electorate represent relatively polarized positions as far as the incentives for electric vehicles. And I think most of the OEMs are really waiting for clarity before decisions are made there. I think in the European Union, I think the challenge and the competition from China specifically is something that is prompting some of our customers to pause. But in both of these situations, we expect clarity to present itself as we move towards the end of the year. So the headwinds that I referenced in the earnings call are something that we expect to be relatively tactical. And despite the market conditions, I also signaled that I expect H2 to be better than H1, which reinforces our confidence around the momentum that we have with the business.
But, I take your point on US election uncertainties and what policy will mean for EVs. But more specifically on Europe and all the guidance cuts that we've seen over here, is there a real threat of EV demand tapering off? And could this be more structural in nature rather than just a one-quarter phenomena?
I really don't think so. I think if you look at the guidance that is being provided, 1 in 5 cars come 2030 is expected to be electrified in the European Union and the United States. In China, we're expecting more than 50% of vehicles to be electrified. So I think the long-term direction for the market is relatively defined. But I think in Europe, I think the OEMs are looking for some form of regulatory protection. And again, in the US, I think we're just looking for clarity in terms of what the new administration will adopt in terms of policy.
All right, Kevin, good to see you. Prashant here, but it's a short conversation. Thank you very much for joining us, and really appreciate it, and hope that things are better going forward. Speak with you soon again. PNB is the next management joining us on the phone. Asset quality witnessed an improvement, but margins came in softish. Atul Kumar Goyal is MD and CEO at the bank. He's joining us now. Mr. Goyal, good morning. Thank you for your time. Happy Dhanteras to you, sir, to your team, from everyone of us here at CNBC-TV18. Fabulous performance, Mr. Goyal, especially on slippages, incremental slippages, recoveries, credit costs. What's happening? I mean, it looks like a lot of the financials are going one way and you're going the other. It's almost as if you're operating in a different market. Tell us, what's the backdrop and what's the background to this?
Yeah, very good morning, Prashantji, and happy Dhanteras to you and all your viewers also. So you are very much right. If you see the quarter by quarter, not only for this quarter, every quarter performance of the PNB has increased to manifold in all the parameters, whether it is a NII, whether it is a operating profit, whether it is a net profit, but focus is on the recovery. Focus in the recovery. Every quarter slippage is being reduced and recovery is increasing. So now we have reached such a situation that a recovery is at least 2 times of the slippage also. This is the reason our credit cost, which used to be around 0.32 in the first quarter, has reduced to only 8 basis points. And we are further revising our guidance. Last time we have told that 50 basis points will be the whole of the year. Now we are further revising 25 to 30 basis points because aging requirement has reduced drastically. 97% is the PCR.
Right. Mr. Goyal, can this continue is the question. Or will, the system, a little bit of stress, especially in specific segments, catch up with PNB as well? I mean, you are one of the largest banks out there with exposure to pretty much all segments.
Prasanji, definitely it will remain there. There is a 2 point. First is the fresh slippage, because I will give one data, which is the data of the last 51 months, how the new underwriting is doing. The more than 9 trillion we have sanctioned, 8.20 trillion we have disbursed, and outstanding 6.19 trillion, which is 60% of my total book. And this is hardly 2,300 plus is the gross NPA, which is 0.29%. This is on the underwriting part. Slippage will not be very less. The another thing, the recovery also. Recovery as on date is 93,000 crore TW book is available, and 47,000 is the gross NPA. So 1.40 trillion, it is a gold mine for the Punjab National Bank as far as the recovery is concerned. So this will definitely remain continuing.
Okay, good morning, Mr. Goel. So just to finish that point, what are your recovery targets for the full year?
Full year, Madam Lata, good morning, is 18,000 crore rupees. And if you see, 4,800 for the second quarter, 3,200, so 8,000 we have already recovered. So we are confident we will be in a position to recover 18,000 crore rupees, which was the target for the whole of the year.
Okay. Now let me come to another point about PNB, which has rankled me for many years. I'm not just holding it against you. You look at your deposits. It is 14.5 trillion rupees and your advances is 10.2 trillion. ICICI is a little less than you, 14 trillion in terms of deposits, but advances is 12.7, good 2 trillion rupees more. Let me take another public sector bank which is very close to you. 13.6 trillion Bank of Baroda's deposits. But the loans they have given is 11.4. You know, you have not given about 0.4 trillion of loans which you can give. What I mean is that you have a lot more headroom to give loans. Why is PNB so much lower in advances?
A little bit I agree with you. If you see the growth in the deposit, we have given the guide 12.80%, and focus on the retail side, RAM side, retail, agri and the MSME. If you see retail, there is an increase of around 14%. Even in the home segment, there is an increase of around 19%. And vehicle may it is 25%. So madam, what I want to say to you, because if you see 2 years back, the quarterly increment business only 11,000 crore rupees. Now if you see, we have reached such a situation, more than 80,000, 85,000 crore rupees, we are total increase in the business. So whatever you are saying, there will be a further increase in the advances in times to come.
Okay. No, this is a historical issue with PNB. I always notice that you are the third largest bank when it comes to deposits. But when it comes to advances, you go 5th or 6th in the rank, which is a bit of a quandary that you are not lending as much as you can. The other question I had is with, your SMA2 has gone up. So should we, not much, but it has gone up compared to the previous quarter. So should we expect that you may see an increase in bad loans, in slippages?
No. Two things I will give, madam. First is the SMA number. If you see the 5 crore and above, it is SMA2 is hardly only 2,125. So whatever you are saying, right. SMA2 little bit has increased. It was 12,000 crore rupees in the last quarter. It is 13,000 crore rupees. So this is only 1 or 2 accounts. Otherwise, there is no stress in the books of the Punjab National Bank.
Okay. What's the percentage of unsecured loans you all give? And is there any sense of stress there?
No stress. Only 27,000 crore rupees plus is the retail unsecured loan. Maybe the corporate, there is no issue, 27,000 crore rupees. And at the time of the launching this product, out of which 1,000 crore for the credit card, 4,000 for the education, 4,500 pension, there is no issue, we are recovering. 18,000 crore hardly for the personal loan. So at the time of, we have estimated 2%. So it is within that limit only. So no issue for the Punjab National Bank as far as unsecured retail lending is concerned.
Okay. What about the cost of funds? Your domestic NIM has come down a bit, not a great deal, but from 3.11, your net interest margin has come down to 2.99, so a 12 basis point fall. Will you say the cost of deposits has peaked? Can we expect you to go above the 3%, go closer to the 3.2% mark by the year end?
Actually, in my opinion, definitely deposit rate has reached to the peak. But as far as our guidance for the NIM is concerned, so last quarter, even in the beginning of the year also, we have given the guidance 2.9 to 3. And we will maintain that. But absolute number, if you see the net interest income is increasing quarter by quarter. So that is not a challenge for us, because the reason is you see the assets quality, which type of loan we are giving. So there is a lot of competition for the AAA and AA rated account, because they are having the other avenues. They can raise the fund from the market by bond at a very cheaper rate as compared to the rate of interest being charged by the bank. This is the reason.
लेकिन आपको एक बड़ा एडवांटेज है ना, यू डोंट हैव टू पे अ लॉट ऑफ मनी फॉर डिपॉजिट्स बिकॉज यू हैव अ लॉट ऑफ डिपॉजिट्स. आपको रेज करने ही नहीं पड़ेंगे. सो यू नो इट इज इजियर फॉर यू टू इंक्रीज योर मार्जिन्स बिकॉज यू कैन कंट्रोल द कॉस्ट ऑफ रॉ मटेरियल. यू हैव प्लेंटी ऑफ रॉ मटेरियल. यू आर ओवरफ्लोइंग विद मनी.
We are giving more through the CASA also. We are giving more through the CASA. We are having 10,000 branches, 20 crore customers. We are providing tab to each and every branch. Yeah.
Okay, so your guidance is for a 3.1% for the end of the year?
Yeah, 2.9 to 3. 2.9 to 3, but absolute number. Okay. But absolute number, that is the income will increase quarter by quarter.
Okay. Now, in a quarter, maybe this quarter or maybe next quarter, Reserve Bank will tell us what is the provisioning you have to make for infrastructure, which is, going towards 5% for new loans. And even for some historical loans, you may have to provide more. How will it change your balance sheet?
It will not have the much impact, because 60,000 crore rupees is the project book, out of which 20,000 is under implementation. If we will take 5%, so there will be impact of only 1,000 crore rupees, and the time will be available for making this provision. So considering the strength of the balance sheet, I do not find there will be any challenge for making any additional provision for the Punjab National Bank.
Okay. And LDR तो असर ही नहीं होगा आपके ऊपर ना, because your loan deposit ratio is, I think, what, 140%? Yeah. Is it 140?
Yeah, that is very good. Yeah.
Okay. So you won't have to invest more in government securities, even if the new LDR rules come.
Yeah.
All right. Many congratulations, Mr. Goel. Thank you very much indeed for joining us.
Thank you very much.
Interesting conversation, Lada. Thank you very much for joining us. And Goelji, appreciate you coming on and talking to us here on CNBC-TV18.
Thank you very much.
Thanks very much, and happy Dhanteras and festive greetings to you and your team. Appreciate it. I think markets are down. I mean, look at the market go, right? I mean, 140 points down. We're at about 24,196. So we've taken a bit of a dive here, and not fully, but almost fully, 3/4 of the way, giving back the 1% pop that we saw yesterday. But I think we have the LIC Housing Management with us, guys.
All right. Well, let's get straight to that then. LIC Housing Finance, that's the next management on the show. The net profit rose, the asset quality improved as well. To help us out with what went on in the past quarter, the way ahead, Mr. Adhikari, the MD and CEO of LIC Housing Finance, joins us on the show. Hi, sir. Good morning, and thanks a lot for joining in. Let's get a couple of numbers out of the way. What kind of an AUM growth are you looking at for the year? And also, if you could help us out with the NIMs. Past quarter, I think it was around 2.7%, but yields came down a little bit, though the cost of borrowing as well did soften a little bit. Mr. Adhikari? Okay, all right. I think we have that line that's frozen actually, but we'll just get back to that. The last quarter, the NIMs actually came down on a year-on-year basis as well. It was down from around 3% to around 2.7% odd. Though the AUM for the past quarter was up close to around 6% on a year-on-year basis and close to around 2.5% on a quarter-to-quarter basis. We'll try to get Mr. Adhikari back. But for the time being, as Prashant mentioned, well, the markets are calling for attention. Down 120 points. The good news, though, is that the Nifty Bank, that's trying to make its way to around the 20 DMA, which comes in at around the 51,580 odd mark. So that's holding one end up. But otherwise, the breadth of the market as well, that started off with close to around 1,800 stocks advancing, that's come down to around 1,200 stocks or thereabouts.
Just a few specific names I want to take you through. So this is new in the mix. I mean, not in the morning when we looked at markets and stocks. Sterling Wilson Solar is down 2.5%. It's got decent sized volumes. HDFC AMC should come up on your screen. It's around 3% right now. There's KSB. I think this KSB pumps 5.5%, 6% cut. Very large volumes for this point in the day. Doesn't usually show up with this much traded volume. Poonawalla FinCorp had a it made the day's low sharply lower yesterday and then spent the rest of the day recovering. But Poonawalla is down 3.5%, 4% as well. If you can have the intraday up, they'll tell you. Cipla is down 2%, 1461. So these are all kind of newish names. Bandhan by close yesterday was up was up 10-11%. That is giving back about 2% or so right now. The others, I think we took a look at Bharti, IOC, Ferso, Senco, KPIT. These are all, of course, down anything between 2 and 7.5%. Guys,
just some more names on the green side. Sirma is looking really amazing. I mean, Sirma, we caught up with the earnings in the management yesterday. Look at the move, 9.5% right now as they continue to sound fairly optimistic. There's Piramal Pharma, 5.5% on the upside. And the reaction on IGL is worth noting. IGL came out with sluggish margins and operating performance. But hey, I mean, look at the collapse in the stock. With the whole sort of worries around lower gas allocation, APM gas allocation, the stock has just completely, been decimated in the last 2-3 weeks. So therefore, there's a bit of a, let's buy at lower levels. That kind of a thought process that seems to be going on.
Just to name a few more stocks from the broader markets, Capacite is up 10%. Gillette, which normally doesn't have very high volumes, that's up another 10%. You have Supriya Life, the stock, I recall, it listed with a lot of fanfare and then it halved from the top. Now it's pulling back. That one as well is up close to around 5% in today's session. Well, let's get Mitesh Thakkar back with us. Mitesh, we're down 110 points. We're holding at around the 24,200 odd mark. What's the way ahead from here on? Would you look to buy into this dip? Or do you believe that we're going to test the earlier lows?
So, Nigel, I think, on the index, I haven't bought a fresh. I'm actually hoping that from these levels, we'll see a reversal. And the pivot point for today for me is about 24,170, and we've got it to a low of 24,190. So I think if that holds, there's a good chance of a reversal. But once the half-an-hour charts reverse, maybe you would want to place a long trade. But on the stock side, I'm trading with mixed bias. Both long and short positions have been taken. So, I have one buy and one sell right now. On the stock side, Voltas can be taken as a negative or a sell side kind of a call. Keep a stop at about 1755 here. Look for a target of roughly around 1680 on the downside. And on the buying side is Piramal Enterprises or PEL, which I would recommend buying with a stop just below days low. So around 1062, 63 can be taken as a stop. And a target of 11, 10, 20 can be looked at on the upside.
Mitesh, so just checking again, what are the next levels on Federal Bank that you're looking at?
So I think two results. I think, Bharti and Federal, I think Bharti is clearly turned negative. Federal Bank had the highest closing at 203, which was way back in July 24. But I think that, the stock is showing this time a pattern which could see the stock, which could see the price get past these levels of 203, 204. And once it does that, good chance that we are looking at 220. So very, very positive on Federal Bank.
And, congratulations. Good call on Bharti. Mitesh, have to give it to you, absolutely. Because, at that point in time, we were looking at the numbers. But now it's also become clear there's a slight negative development in terms of Mr. Gopal Vittal. There's a bit of a management transition that's going to take place. But anyway, for now, let's go back and get that conversation going with the management of LIC Housing Finance. We have Tribhuvan Adhikari, MD and CEO of the firm, now joining in. The performance seemed fairly okay, Mr. Adhikari. Let's start by getting your sense on growth going ahead. Your disbursements have been really strong in the second quarter. The AUM growth is about 6% year on year. How are you likely to end the year? What's the full year AUM growth that you're envisaging right now?
Well, the full year AUM growth, as we had guided in the beginning of the year, that we were aiming for, because we have a huge base, we are aiming for a double-digit growth. And we stick by that. So growth by the end of the year should be double digits. Of course, low double digits, not high double digits. And as far as the business environment goes, we've done well, 27% growth sequentially from quarter one to quarter two. So doing okay. And I expect quarter three and quarter four traditionally are good business months for all of us as well as the industry. So going forward, we expect a good growth in business and meeting our guidelines for the AUM targets.
Mr. Adhikari, your disbursement is growing very strongly, but AUM is not growing as much. Why would there be so much of a discrepancy? I know disbursals are on a smaller base and AUM is a large base, but it's, at half the rate. Is there something we should take away from this?
No, nothing major. Of course, a bit of the downfall in the portfolio is due to the normal course of business. EMI is getting paid. Yes, there are some prepayments, part and full prepayments also there. And usual, yes, it's a competitive market. So pressure on BTs also. So that's why it's probably the high business growth is not being reflected in a high AUM growth.
Okay, and NIMS under pressure, as Nigel was asking you just before we lost your line. It is under pressure. In year-on-year terms, of course, big pressure, but even quarter-on-quarter, there is pressure. Will it mount? Do you think you go below 2.7?
No, I don't think we'll go below 2.7. Beginning of the year, we had guided for 2.7 to 2.9. 2.73 is where we are right now. Sequentially, our reduction in incremental borrowings have come down slightly. So I think this is the bottom where we have hit, and going forward in Q3 and Q4, you can expect improvement in the NIMs.
Mr. Adhikari, when you gave that guidance, low double-digit growth for the book for this year, are you factoring in any contribution from PM Awas? Just trying to understand, I mean, to what extent are you involved with that scheme, and how do you find the latest version of it?
Yes, we are involved in the scheme. Being the biggest HFC, we expect to be largely into the scheme. And in the past, we have done pretty well. EMAY, the earlier versions, we've almost disbursed about 46,000 crores. So when the scheme gets launched and gets up and running, I believe we'll get a good share of that. Yes, that double-digit growth was not completely factored into the EMAY. But yes, some amount of affordable was surely factored in, because we do affordable otherwise also.
Yeah, because that's why I was a little surprised that you're only saying low double digits if you're also sort of taking into account the added boost from PMAY. So then if we put it all together, then would 15% growth be a realistic assumption for this year?
Well, I'd say 12 to 15.
Okay. All right, Mr. Adhikari, we will leave it on that note for this morning. Then thank you very much for joining in and giving us some sense on the business. That's LIC Housing Finance. Back to the market, 127 points down. So yeah, 24,200 is in question on the Nifty.
Okay. All right. Well, I think on that note, I think we need to take a snappy break, come back, and we'll continue to focus on markets. We'll have the management of Poly Medicure as well that'll be joining in.
संघर्ष हम दोनों के लिए चिंता के विषय है। भारत का हमेशा मत रहा है कि युद्ध से समस्याओं का समाधान नहीं हो सकता और शांति की बहाली के लिए भारत हर संभव योगदान देने के लिए तैयार है। एक्सेलेंसी, आपकी भारत यात्रा से हमारी पार्टनरशिप को नई गति, ऊर्जा और उत्साह मिला है। मैं कह सकता हूं कि हमारी पार्टनरशिप में क्लैरिटी है और इसका भविष्य उज्जवल है। जर्मन भाषा में कहूं तो आलेस क्लार, आलेस गुड। बहुत बहुत धन्यवाद।
Germany has become India's most important trading partner in the European Union, and I'm determined to further strengthen and build on this link and cooperation. I have with me, as members of my delegation, a high-level business delegation that has seized the opportunity to engage bilaterally with India's industry and business. Especially in times like these, it is of the utmost importance that India is an anchor of stability in South Asia. The international rules-based order which has come under massive pressure as a consequence of Russia's attack on Ukraine. Russia's war of aggression against Ukraine affects Germany and India in many ways. No one can close his or her eyes to the conflict and the impact it has on us. Therefore, I approve that India supports a lasting and just peace.
Welcome back. Well, let's get straight to Mr. Himanshu Baid, the Managing Director of Polymedicare, who joins us on the show. Hi, Mr. Baid. Good morning. First of all, happy Dhanteras to you, your family, and the entire team at Polymedicare as well.
Thank you, Nigel. Everyone.
Let's get to a couple of numbers then. You've reported your half-yearly numbers. And earlier, you were guiding for around 20 to 24% revenue growth with margin improvement of 100 to 150 basis points. Any changes out there?
No, I think if you see the growth pattern, I think we have already done a 23% growth over last year, and we are right on the target. And in terms of margin also, I think we have seen 100 pips over improvement already. If you compare to last year's growth, there is already 150 pips improvement already, which has happened in the margins. So we are absolutely right on track, Nigel.
Okay, all right. Since we are talking about various segments on the top line itself, I think rental business, that was something I think you did 90 crores and you were saying that this year there'll be a big growth out there. So could you tell us the target of that? I think 150 crores is what we were briefly talking about. Cardiology as well, I think you were looking at launching some part of this year towards the end of the year. So could you tell us for FY26, what kind of a revenue contribution will come in, rental and cardiology as well?
So for FY25, we're already seeing a growth of around 50% in the renal business. And hopefully we can continue a similar growth rate in the next year also, because now products being fully regulated, there is a little bit of, stoppage and imports from China. So I think that, which was kind of disturbing the market at that point of time. Now things are kind of settling down a bit. So we're pretty hopeful that we'll grow again even next year around 50%. And on the cardiology side, we have just entered the interventional cardiology business, so which has few catheters right now, which we have entered with. And later on, as time progresses, we will enter into new devices in the same segment. And probably we'll also end up, entering into the stents market.
FY26, what kind of a number could you do? Because I think in the next
we haven't
4 to
planned,
5 years, 4 to 5 years, I think, Mr. Baid, you were talking about 300 crores. So that's
yeah,
why I
so
just
4 to
want
5
to know
years
how
definitely. 4 to 5 years, definitely we are looking at that number, because that is the market we are looking at. And once we get more clinical approvals and regulatory approvals for the cardiology products, then the market will have more clarity on that business. But definitely that's the plan going over for next 4 or 5 years. Neither.
Okay. Himanshu, hi, morning. How much is exports as a percentage of your overall business revenues?
So export is still 70% right now. We are still at 70% in the first 6 months of the financial year, and domestics around 30%.
Okay, and you'd want to sort of flip that, I'm assuming, right? Eventually, as a long-term strategy?
Not really, not for the moment, because the export opportunities are pretty big right now. When you look at the China Plus One, and we are very deep now in the European market, and now also entering into the US market. So both these markets offer a high potential. When you look at the global markets, almost 35% of the revenue of medtech comes from US, and around 20% odd over comes from European markets. So 50 to 60% is in these two big markets. So I think we have to be there to be on the top of the board.
So Europe was about one third of your revenues, right? And US was just starting for you. I mean, how much are revenues from US now?
So US, I think this year we would end between 2.5 and 3 million for the moment. It is just a start point. But Europe is doing very well. So still over 1/3 revenue is coming from Europe, right?
You got an election in the US, and the big talking point is tariffs going up. Would that be a problem? If they were to go up, I don't know what...
It is a positive for us, because there are tariffs going up from China, basically. So that is something which is already happening as we speak, and already some tariffs have been announced on Chinese products. So I think it will be more positive for us, because
what about if tariffs go up out of India? I mean, Mr. Trump has said it's going to be matching tariffs. You have 20%. Well, here you go. 20% for you as well, if you want to sell in the US. So,
India, the tariffs are very low for medical devices, only 7.5% tariff, 7.5 to 10%. So I think it's not going to impact much. Even if they have a reciprocal tariff, then the tariff is only 7.5 to 10%.
Okay, all right. And talking about the US business, I think for this year is going to be small, right? It's around $2 million, which you see it gradually scaling up.
Yeah.
2 million for this year, right?
Yeah, 2 to 3 million.
And how do you see this number ramping up?
So I think, Nigel, we've already given a guidance that in 3-4 years, we should look at $15 to $20 million. And I think we're waiting for more approvals to come out, for US FDA approvals. As and when these approvals come out, we'll start ramping up the capacities and the business out there.
All right, Mr. Baid, we're going to thank you for that. But the next time around, we're going to quiz you a little bit more on the inorganic opportunities. You raised 1,000 crores, 250 crores was for inorganic. So as you do that, we request you to come back on the channel in the next month or the next quarter and discuss that with us. Thanks a lot for joining in. Wishing you a good festive season ahead.
Thank you. Thank you, everyone. Thank you.
Well, let's take a bit of a break then from the equity markets, because Manisha Gupta, who's the star of the day, is Dhanteras. She's joining to tell us what's going on in the commodity markets. Manisha, take it away.
Thank you for that, Nigel. Well, I'm going to talk about gold and silver because this is the all-time high in sense of gold and silver that you are going to be looking at this Dhanteras. So while the international markets have seen a bit of a profit taking, but not too far away from its all-time highs, we have seen gold hit an all-time high of $2,758 an ounce. For the Indian markets, the prices have been at 80,000 rupees per 10 grams, and that's exactly what the price you would be looking at if you were stepping out to buy physical gold today. The 24 carats, that is, add 3% GST to that and some making charges then. So the prices are going to be higher than that 80,000 rupees 10 grams as well. Silver in the international markets is trading at a 12-year highs, but for the Indian markets, it has been a 1 lakh rupees a kg, which is an all-time highs yet again for the Indian markets there. Well, the prices are trading firm, even as we have seen some risk aversion happen there. Well, remember the Israel-Iran the conflict has taken a bit of a backseat because even as Israel has reiterated, it hasn't done that on oil facilities and nuclear facilities in Iran. And Iran also has not reiterated in a very big way. So at this point in time, it seems a bit of an easing off there. The second thing really is about the treasury yields, which are trading at a 3-month highs. The dollar index, by the way, is headed for the best monthly gain since April 2022. All of these factors would lead to profit taking in precious metals otherwise, but we have seen crude and other metals decline, but not gold and silver even in the markets right now. That is because you have support coming in from the uncertainty in the US presidential elections. It also is about the ongoing geopolitical tensions. And the third thing is the global central bank buying, which has been very strong in gold at record highs in the last 2 years. The institutional investor buying in gold and silver also has been on the stronger side. Never has gold and silver being talked about by institutional markets and also by financial advisors. But this year you have seen that happen as well. I want to take you through some numbers really on what gold prices have been on Dhanteras in last many years. So as you can see, 2019 was at around less than 40,000, and then we've been dabbling between 45 and 55,000 for the last 3 or 4 years. If you look at the Dhanteras prices last year, they were trading at 60,000 per 10 grams, which is 80,000 per 10 grams in this year. So that has been a 20,000 per 10 grams of a jump up that we've seen in case of gold prices. I also want to show you on what silver is done in sense of imports. India does import 5,000 to 8,000 tons of silver every year. The COVID years were not so great, but in 2022, we saw record imports coming in. And because of those record imports, the next year was slightly on a weaker side. But this year, until the month of October, we've done almost 7,000 tons of silver import as well, with an expectation that you could be looking at record highs this time yet again. A final plate should come in on your screens to tell you on how much gold and silver does India buy during Dhanteras and Diwali. 20 to 25 tons of gold and 500 to 800 tons of silver is bought during this week. So those numbers is something that we will tally after Diwali is done. But this is the kind of sales India could be looking at.
All right. Manisha, thank you very much for that. So gold, silver, absolutely some of the best investments have turned out to be some of the best investments over the last couple of years, especially. Well, as CNBC-TV18 celebrates 25 years of excellence, we invite you to the most anticipated event of the year, the CNBC-TV18 Global Leadership Summit, bringing together visionary policymakers like Finance Minister Nirmala Sitharaman, RBI Governor Shaktikanta Das, industry leaders like HSBC India Sitendra Dave, Kotak Mahindra Bank Uday Kotak, and trailblazing startup founders. This is where the roadmap for India's next 25 years growth and global leadership will be charted. You don't want to miss this.
for next 6 months, the semi-urban and rural to have a better, stronger demand. We feel that there will be further improvement in our credit cost. We always have guided around 2. We should be able to maintain the current level or a little below that. And if you look at our gross stage 3, that also has been coming down, both gross and net, from 5.39 to 5.32. There is a scope for further improvement, and we'll definitely work on it.
Welcome back. We continue with our earnings analysis, and we now discuss towards the end of Bazaar the best of the results that have come from the banking arena. Federal Bank reported a good set of Q2 numbers. Asset quality improved or hardly showed any cracks. And this has come along with growth because advances have grown by 19.45%. Joining us now is Venkatraman Venkateshwaran, the Group President and CFO of Federal Bank. Mr. Venkateshwaran, thank you very much for joining us. Well, first up, you'll have managed a very good advances growth. Can you give us some idea as to where the loans went? What was the percentage that went to unsecured loans? Because you don't seem to have any trouble because of that.
Yeah, hi, Lata, good morning, and thank you for having me on the show. To your question on where we have grown on the advances, it's been a broad-based growth like we've seen in the past across business segments, both wholesale and retail. And specifically, if you see by product, the business banking, gold loan, commercial banking, these are the segments which have seen and continue to see a better rate of growth as compared to the rest of the book. On unsecured, we still operate at less than 5% of our advances are on unsecured. Though the base is small, that's why you see the growth rate 40, 50, in fact, some of them even 70% growth. That's purely because the base of the unsecured is quite low. Retail unsecured is still 4.6% of the overall advances. So advances growth is, the engine is chugging along quite well, and all businesses are doing quite well.
Okay, what's your expectation? What was your cost of funds? And do you think that it can still inch? I want some guidance on your margins.
Yeah, on margins, Lata, of course, it's driven by both the yield on assets as well as the cost of funds. Now, if you're seeing term deposit costs have been firm, continues to be firm and will continue to be firm in the near term, given the fact that many banks are chasing retail customers. Having said that, what we have done in Q2 is to reduce some of the high-cost deposits, bulk deposits, and that's why the deposit growth appears a tad less than what we normally do. But having said that, that will be corrected in this quarter. The good part is we are growing our CASA quite well. You would have seen that our CASA grew almost about 4% quarter on quarter. And this is on the back of a good Q1 as well. So the focus on CASA is helping us maintain the cost of funds. On the NIMs, one thing which I should clarify is the reported NIMS is 3.12. But as you know, in the July quarter, we had to make the change of penal interest to penal charges. So on a like-for-like basis, our NIMS has actually improved from 3.16 to 3.19. But given the fact that penal interest has moved to the charges fee line, the reported NIMS is down. So in terms of guidance for NIMS, we'll continue to operate around the same levels, Lata.
Okay, so what is the guidance on margins therefore?
It will be around the same levels.
Okay.
It also depends on when the rate cut comes through, because that will have a short-term immediate impact, given that 50% of the book is repo linked.
Okay, yeah, but at the moment looks, okay, food inflation is still running high and we may land up with a 6% headline in for the month of October as well. But without the rate cut, you would be around the same level, 3.1
Yeah, we
levels.
should actually probably, maybe 1 or 2 basis points even better as we continue to drive productivity, and we should see around it plus or minus 1 or 2 bits.
Okay, what is the expectation in terms of the impact on P&L and balance sheet if the new LDR rules come? Because I think in the latest quarter, you all raised less deposits and more CDs.
But what the outcome we have to see, there are several measures which were taken. One is the tenor of the changing in tenor, the type of deposits, callable versus non-callable, and in terms of retail deposits versus bulk. Several steps were taken in terms of improving the LCR, and that is already translated into a better LCR for Q2 as compared to Q1. Our average LCR for Q2 was 115, vis-a-vis 112 in Q1. And we will continue to grow that, make sure that the mix is maintained and get our LCR levels improved over the next, in H2. So even if the new LCR guidelines come in the same form as the draft is, we should be ready to operate at the levels which has been set out by our risk management committee.
So what will the LDR be in case there is the new rules come in? What will be the loan deposit ratio you will gun for, and will it have an impact on margins?
So we are looking at, even if the new rules come in the same form as it is, we are trying to be in around the 110 to 115. That's the range we want to be in. And all efforts are on to make sure that we continue to grow the right deposits, CASA especially. And you would have also seen that our NRSA has started growing quite well after last year's dip. So last 2 quarters, we have seen the NRSA coming back quite nicely with some of the initiatives which we have taken in the GCC market, adding more RMs and a few other relationships. So it is going to translate to better liability growth, which will help us improve our LCRs.
Will there be any impact if the new project finance provisioning rules come? How much of your book is project finance?
No, that one, we had clarified that earlier in one of the interactions. We wouldn't have a major impact because of that, Lata.
Okay. And what is the growth you are guiding for?
The growth guidance, in the beginning of the year, we were around 18-20%. At this stage, we are looking at around high teens, close to around 18% on the growth.
So slightly lowered your,
slightly lower,
probably a couple of percentage points.
Yeah, we are mindful of the headwinds, the operating environment, and we want to calibrate. Because one thing which we follow, which you know quite well, our philosophy of maintaining pristine credit quality, asset quality, and keeping credit cost at certain levels, that won't be compromised.
Okay. Well, I was hoping that KVS Manian will also join us for the interview, but I'm going to toss this question to you anyway. What has changed between Shyam Srinivasan and KVS Manian? What may be the new growth strategy? What may be the tweaks?
Yeah, good question. See, for this Q2, of course, Shyam was there till 22nd of September. So pretty much, he was there for the entire quarter. Yes. And so the results are, I would say a reflection of what has been done. But more important, it's not the person. I think it's the continuity of the bank's operating rhythm. It's just that the baton has changed from Shyam to KVS. And Mr. Manian has been in this role for a little over a month as MD CEO, and he's taking time to meet people. He's doing his listening tours across the country, meeting people across levels, trying to understand how things are working. I'm sure he will have his own thoughts in his mind. But the good thing is, every year in Q4 we have a strategy refresh with the board. So it fits in quite well with his, it'll take 2 months to understand how we operate. And then we are having our internal discussions. Post that, I'm sure Manian will come and spell out the next phase of growth for Fintra.
Okay, so at the moment, no tweaks have been announced.
Nothing at this stage. Nothing at this stage. And, of course, we have a very strong team across all levels. And thanks to that, the performance continues.
Okay, Mr. Venkataraman, pleasure speaking with you, and many congratulations. The stock markets have given you a 7% thumbs up, so that speaks for itself. I don't have to, add any adjectives. One must say, to the credit of Shyam Srinivasan, as you pointed out, he was there till September 22nd. His last quarter has been a blazing quarter, and the markets are attesting to that. Thank you very much for joining us.
Thank you, and wish you all a happy Diwali, Lata. Thank you.
Likewise, wish you and your team as well a very happy Diwali. At the moment, Dhanteras is not being celebrated except for counters like Federal Bank. It is a bit of a red on the screen. It's not gotten redder. That's the important part. In fact, I've seen a little bit of recovery, as you can see, post 10 a.m. in the markets, but still down about 0.5% on the big indexes, mid caps as well, about a third of a percent lower. Bank Nifty is trailing well at this point in time, and of course very ably supported by ICICI Bank and HDFC Bank. If those two are in the green, then Bank Nifty doesn't have much to bother. A small programming a note before I sign off on Bazaar. As we prepare to ring in the festivities this Diwali, tune in to our channel CNBC-TV18 at 2:30 p.m. today to hear out the biggest of market voices giving their tips on how you can make your portfolio prosper this Samvat.
I accept your nomination.
We're going to win Arizona. We're going to defeat Kamala Harris.
It's the election verdict the world is watching. Will Donald Trump reclaim the White House and become the oldest president to be sworn in?
How will this US election impact global trade and inflation?
Will Kamala Harris make history, becoming the first woman president of the United States of America?
How will the next US president deal with geopolitical volatility? What next for the India-US relationship, the most defining partnership of the 21st century? What's CNBC-TV18 for the best newsmakers and the sharpest analysis?
We bring you all the action live right here on CNBC-TV18.
I'm here today with a message of hope for all Americans. With your vote in this election, I will end inflation. I will stop the invasion of criminals coming into our country, and I will bring back the American dream. We need the American dream to come back home. This will be America's new golden age. It's going to happen quickly, too, very quickly. Every problem facing us can be solved, but now the fate of our nation is in your hands. Next Tuesday, you have to stand up and you have to tell Kamala Harris that you've done a terrible job, that crooked Joe Biden has done a terrible job. You've destroyed our country. We're not going to take it anymore. Kamala, you're fired. Get out, get out. You're fired. And I'm announcing a new policy today that I will support a tax credit for family caregivers who take care of a parent or a loved one. It's about time that they were recognized, right? They add so much to our country and are never spoken of, ever, 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 but they're going to be spoken of now.
Bharti Airtel slips more than 2% despite reporting a strong second quarter set as the street remains concerned over the leadership transition plan at the company.
On the other hand, we have IGL that climbs close to 4% following its second quarter numbers. The company reports a beat on volume even as margins miss estimates. Morgan Stanley also issues a bullish call on the stock.
Pharmaceutical company Cipla slides 3%. It's among the top Nifty losers today ahead of its results. A CNBC-TV18 poll sees the revenue for the company growing 5%.
Federal Bank rallies more than 6% on the back of a good showing in the past quarter as gross NPAs hit a 37-quarter low. Brokerages UBS and Citi also issue bullish calls on the stock. The management tells CNBC-TV18 that they will be able to maintain their NIMs at current levels going ahead.
Gillette too rallies nearly 9% on the back of a strong set of second quarter numbers led by distribution expansion, higher traction in the female grooming range and better demand for high-end products, double-digit revenue growth, higher EBITDA growth and the net profit growth.
Hello and welcome to Chartbusters. I'm Nigel. With me is Mangalam. The headline index is down 130 points, but around 20 minutes or so ago, we were down 170 points. In that context, we've pulled back close to around 30 points, 40 points from the low point of the day. The Nifty Bank, that's the one that's putting in a bit of a fight. It's holding at around the 51,500 odd mark, so that's pretty good news. And the breadth of the market, as we speak, pretty much even Stevens. Though the mid-cap index is down, you have equal number of stocks that are advancing as well as declining. It's going to be an interesting trading session, Mangalam.
Very interesting trading session, Nigel, because, you know, you mentioned the low of the morning from where we've seen a 40-point rally. Today's low on the Nifty is 24,158. It's pretty much similar to yesterday's low of 24,139. So if we can hold on to our lows, then can we see a bit of an up move in, in the second half of trade? The festive season cheer is here, a lot of events. And at the same time, we do have the Nifty Bank, which is outperforming as well, and the financial services expiry. That plays out in the second half.
All right. Well, let's get straight then to the first management on the show, Stovecraft. The stock actually has seen a lot of selling from yesterday, post the numbers that did come in. And today as well, it's down close to around 7.5%. The numbers are pretty okay, but the depreciation actually has gone up, which seems to have weighed on the profitability. To understand what's the way ahead, we're joined by Mr. Rajinder Gandhi, the MD of the company. Hi, Mr. Gandhi. Good morning and thanks a lot for joining in on the show. Well, earlier you were talking about double-digit revenue growth. Could you give us a number? What is the range of the revenue growth for the year? Point number one. And you also said gross margin should hold at around 38% with EBITDA margins at 11%. You have done that as of the halfway mark. Do you hold on to this guidance?
Good morning. As mentioned before, we continue to commit to hold the 38% gross margin and improve on our EBITDA, which we are currently at 11%.
Right. And what about the revenues? Because I remember the last time you said that you are expecting high teens growth in FY25 for the revenue. First half, you've done high single digit, 8%. With the festive season, second half typically stronger. Is high teens still on the card, or it comes down to double digit or maybe, low teens?
We are witnessing good demand in the festive season, and we will hope that the current quarter also will continue at the level of the last quarter or better. We believe it can be better.
But high teens is still on. Mr. Gandhi, we want to understand that. Will you still revenue growth be in high teens? And I just want to quiz you, the festive season will play out in quarter 3 numbers, right? Or did some of it play it at the end of quarter 2?
While it did had an impact in the quarter 2, but the real play down for the festive season is happening in the quarter 3. And on the revenue growth, we believe that we will be able to deliver high teens. Better than the mid-teens.
All right, you will be able to deliver high teens, better than high teens in this year, led by the second half. Just wanted to understand one on your market share as well. Where does it stand right now? Because if we compare, over the last few years, your revenue market share has increased because the others have either stayed stagnant or players like Butterfly, Gandhimati, etc. have seen a reduction in their SKUs. So where does your revenue market share stand at right now, and what's your target here?
Every product category that we are in, we are getting towards leadership, and also definitely we are acquiring market share. It is because of the positioning that we are addressing and our Make in India, Make in Stokecraft objective, which is leading to better supply chain and also a better cost to the consumer. Obviously, we are continuing to give better products in terms of quality to our consumers. All this is leading to higher market share.
Okay, so you're saying that you're outgrowing the market, right?
Yes, definitely.
Okay, for the past quarter, the reason I think profitability has taken a bit of a knock is because your depreciation cost actually has come in much higher than what we have seen either on a year-on-year basis or on a quarter-to-quarter basis. Could you explain this to us, and will it stay at these elevated levels? I'll tell you what, because from a shared market perspective, a lot of people look at the net profit, and that hasn't grown only because of this. So tell us.
It's only a matter of the lease accounting. Some of our assets and our retail stores, it goes to the lease accounting. And in a way, it is a positive because in the short term, of course, you'll see higher charges towards the depreciation and interest cost because of the lease accounting. But in the long run, this pains better. For the short term, of course, it is painful. But as our PBT numbers grow, this will slowly become insignificant because at the moment, these numbers are relatively large compared to our PBT numbers.
What about margins? You said 11%. 11% is doable, but a large part of the margin expansion also came in from localized production. Now you are at 92% of your overall sales as local production. So what's the headroom for margin from here? Because, from 70% to 92% is where all the juice came in. From here on, what can your margins sustainably be, say, in the next 2 to 3 years?
As we are moving towards more and more of manufactured products, our margins will improve. So you have seen the transition happening and the improvement in margin, but it will improve from here.
Okay. How much will it improve? I mean, it's 11.7%. Right. Please go ahead.
Aspirationally, we would want to be a little more higher than the 11%. We've always been in the recent times telling that we will protect the 11%, but the business is designed for a little higher than this. So,
how much higher? We are trying to understand that. You said aspirationally you're going to do higher, so just 13, 14, 15.
The range can be between 11 to 14 as we go.
14. Okay, we'll hold you at that number, because that's what the street is tracking. I guess operating. Yes, sir. Go ahead.
It may not happen yesterday, but that is the journey that we are traveling.
No. Indeed, that's what, so in the past, there has been a disappointment on this front, but you're seeming confident, and you had told us the last time around, as operating leverage plays out, that's what gives you a spurt to margins, and it appears, at least as of now, you're growing faster than the industry. So I guess that's what you're playing on, 11 to 14%. If you could tell us also the export opportunity, how big can it be for a company like yours?
Yeah, it is growing faster. We have been developing based on the requirement of our customer. We have developed a range of products. We'll start seeing revenues coming from the fourth quarter. We are also building some few lines for new customers based on their, the discussions that we had. So we believe the overall growth rate from exports in the next 4 to 8 quarters will be much larger than the company's growth rate.
How much does it account for right now? And with fourth quarter, how much did it start? Because you've begun to supply to Walmart. We just wanted to know if you're talking to some other clients, etc. as well. As a proportion of your sales, how much can exports be over the next 4 to 8 quarters?
We are currently at the 12%. We will move to 16-17% in the next 8 quarters. And apart from Walmart, also we are talking to some large customers. At this point of time, it will not be correct to disclose, but very soon we'll come with this discussion.
All right. Thank you so much for joining in, Mr. Gandhi, reiterating your high teens revenue growth target for this year, 11% margin target. But aspirationally, you would want your margins to go up from 11 to 14%. And at the same time, looking at exports to increase from 12% to 16% as you're in talks with other players than Walmart as well. Wish you a very happy festive season. Currently, the stock, however, in line with the market at the low point of trade. Take a short break. Come back. On the other side, we'll get you more on the markets. But actually, just before we go into that short break, also hear out an idea of profit coming in from our colleagues at Money Control Pro, Bharat Jinani. Listen to the stock that he's been tracking closely. Come back, and then we get the management of Indegene. Suhas Prabhu, the CFO of the company, joins in.
Today's ideas will be Juniper Hotels Limited. Juniper Hotels is a unique partnership between two renowned names in the hospitality industry, Saraf Group and Hyatt Hotels Corporation. The company benefits from the hotel development expertise of the Saraf Group and hotel management expertise of Hyatt Corporation. The company currently has a portfolio of 7 hotels spread across key cities in India with a room count of 1,900 keys. The company has highlighted aggressive room addition plans and aims to add about 1,250 keys over the next few years. About 550 keys will be added by the organic route and about 700 keys will be added by inorganic route. The company has witnessed a significant improvement in the balance sheet post the IPO in February 2024 and has witnessed a significant reduction in the debt. The company is also expected to generate healthy operating cash flow, and we expect the company to generate 500 crores of operating cash flows over the next 2 years. We expect improvement in the margins as well as the return ratios, given the favorable demand-supply dynamics of the hotel industry and expected increase in the occupancies. At the current market price, the stock is trading at an EV by beta of 16 times FY26 projections. The stock is now available below its IPO offer price in February 2024. The current stock levels are attractive, and hence we recommend investors to add the stock in. Thank you.
The United States is now an occupied country, but it will soon be an occupied country no longer. Not going to be happening. Not going to be happening. November 5th, 2024, 9 days from now, will be Liberation Day in America. It's going to be Liberation Day. On day one, I will launch the largest deportation program in American history to get the criminals out.
We are getting very good resolution. On the top of it is KSK Mahanadi, where we are expecting recovery of more than 100% recovery of principal amount we are expecting, because the Swiss challenge process is on, and we are the rates that the bids that have come, it is indicating that our recovery is going to be more than 100%. Second case is that of Sinnar plant at Nasik. There also the initial bids have come, and the H1 bid is quite good. And third project is Hiranmaye project. There also the Swiss challenge process has just been completed, and the bids that we have received is quite encouraging.
I've known Michelle for years, and she is an inspiration. I know everybody here knows this. She is a truth teller, and she motivates us to get to work, especially when the stakes are high, because as
Welcome back. You're watching us here on Chartbusters. We have with us the management of Indegene reported a muted set of second quarter numbers where revenue growth remains soft and margins as well contracted, as a result of which the stock now down 6% as we speak. Suhas Prabhu, the CFO of the company, joins us to review the quarter gone by. Thanks a lot, Mr. Prabhu, for joining in. You know, when you came to the street with an IPO, your 3-year CAGR, at least in the enterprise business, was close to around 55%, the enterprise commercial solutions. This quarter and the last couple of quarters, they've been soft. FY24, your revenue growth was just around 12%. Now as well, you know, year-on-year revenue growth has just been around 8%. So wanted to understand what exactly is causing this softness in revenue, and what's the target for this year as far as top line and margins are concerned?
Thanks. Firstly, good morning, and thanks for having me on your channel once again. Coming to the current quarter performance, and more specifically the enterprise business. Actually, the enterprise commercial and enterprise medical business at Indegene, which is about 85% of our overall revenue, has grown sequentially at 3.6% from quarter one to quarter two. While the overall revenue growth was 1.5%, the strong growth in the enterprise business has been partially offset by a bit of a decline in the other two segments, which is the consulting part of the other segment and the omni-channel activation. Given at the current scale, these two segments have a little higher proportion of project businesses, which some of which have come to a close, and the offtake of the new projects have not fully offset the conclusion of the projects that came to a close. But I would like to highlight again that the enterprise commercial and enterprise medical businesses, which together are 85%, continue to see a strong growth, 3.6% quarter on quarter. More specifically, enterprise medical was north of 4%, while enterprise commercial was 3% growth. We believe that this bodes well for the future. The proportion of revenues from the larger customers higher in these segments, and are also more recurring kind of businesses.
Good morning, Suhas. Happy Dhanteras to you as well as your entire team. You've given us some color on the business, but let's get two basic numbers out of the way. First half of the year, you've grown by 10%, right? Your margins as well have improved to around 18, close to around 19%. For the year, should we expect double-digit growth? If yes, could you quantify it? And what is the margin outlook? Do you see that number head to around 20%? Let's get these two numbers out of the way.
Yes. So while we are not giving any forecast and forward-looking guidance, the way things are panning out from a growth perspective as well, right? We believe that H2 should be stronger than H1 coming out of.
Okay.
In the quarter one earnings, we had mentioned that a couple of our customers, we were seeing certain headwinds coming out of their internal issues, restructuring and the like. As we speak today, we believe the revenues from these two customers, which are part of our top 5, have stabilized. In the current quarter, actually, our top 5 customers have grown by 2.5% or thereabouts quarter on quarter. And second thing is that the new logos that we added have started yielding revenues. As you can see, our number of active customers have grown from 63 to 68 over the last 2 quarters. The number of $1 million customers have grown to 37 in this quarter. So overall, I would say we are seeing stabilizing and growing revenues with our top 5 customers, while we continue to add new customers as we grow into the future. And I would say this is assuring for us heading into H2.
All right, 2-part question for that itself. One is that if you could give us a sense of how many customers did you add in the previous quarter? What are you likely to add over the next few quarters on a quarterly run rate? And in what buckets are you looking at adding these customers? 1 million, then there are 10 to 20 million plus thereafter as well. And secondly, your acquisition, Trilogy, that you acquired in 2024, obviously that is playing out as well. So how's the growth and scale up of that business along with the operational efficiency there?
Yes. So firstly, let me address the customer segment. As you rightly pointed out, we're looking at growing the $1 million customers, which have been steadily growing, continuing that pace. Many of our active customers, the 68 customers that we have over the next few quarters, should become $1 million plus customers for us. And this number of 37 going into the 40s and heading towards 50 over the next couple of years. While we do that, having more $1 million customers, we see some of the $1 million customers moving into the 10 million plus and so on. One of the key things that I would also like to highlight is our largest customer, which was $42 million in annual revenues in the last fiscal year, has continued to grow. And we believe in the coming 2-3 cycles, we should see this customer breaching the 50 million mark. And therefore, we continue to grow across the spectrum, adding more customers, as well as growing our existing customers into the next range of revenues. The second question on Trilogy, while Trilogy has been integrated into our enterprise medical business, and the joint go-to-market has already started playing out, some of the benefits that you can see would reflect in the higher growth rate in our enterprise medical business. Having said that, the regulatory and clinical writing part of our enterprise medical business is where Trilogy has been integrated into. And today we have better credentials, better access for larger global deals, covering especially key markets in Europe, which is where Trilogy has a strong presence, complementing our existing presence in North America, combined with offshoring ability coming out of India, as well as nearshoring ability in multiple markets that we have already established.
Perfect. All right, Suhas, a little short on time, but we appreciate you joining in and detailing those numbers and the path ahead as well for the company. Thanks a lot for joining in.
Thanks again for having me.
Quick check on the markets, by the way. When we were getting that interview going, we have the markets that have actually moved to the low point of the day, and Tata Motors has come in for a sharp knock. So just pull up the intraday chart out there. The stock was down 2%. Now it's down close to around 5.5%. So a lot of selling has creeped into Tata Motors. IndusInd Bank, that's the other one. Now it's below that low that we saw post its earnings as well. So that has taken a very, very sharp knock. And BPCL is another stock that's taken a bit of a hit in the last few minutes. So that explains why we're at the low point of the day. But let's get into the short break. As we do that, a small programming note as we slip into that break. As we prepare to ring in the festivities this Diwali, tune into CNBC-TV18 at 2:30 p.m. today to hear out the biggest of the market voices, giving their tips on how you can make your portfolio prosper this Diwali.
I accept your nomination.
We're going to win Arizona. We're going to defeat Kamala Harris.
It's the election verdict the world is watching. Will Donald Trump reclaim the White House and become the oldest president to be sworn in?
How will this US election impact global trade and inflation?
Will Kamala Harris make history, becoming the first woman president of the United States of America?
How will the next US president deal with geopolitical volatility? What next for the India-US relationship, the most defining partnership of the 21st century? Watch CNBC TV18 for the best newsmakers and the sharpest analysis.
We bring you all the action live right here on CNBC TV18.
Us, as my mother taught me, don't just sit around and complain about injustice. And we will win because together, and this is about all of us, we are fighting for America's future.
There are good reasons why so many women and physicians are horrified by what's happened since Donald Trump's justices overturned Roe v. Wade. We're seeing women scrambling across state lines to get the care they need. So please, do not hand our fates over to the likes of Trump, who knows nothing about us. Vote for him is a vote against us, against our health, against our worth. Let me warn you, your rage does not exist in a vacuum. If we don't get this election right, your wife, your daughter, your mother, we as women will become collateral damage to your rage.
आज सुबह हमें जर्मनी के एशिया पैसिफिक बिजनेस जगत की कॉन्फ्रेंस को संबोधित करने का अवसर मिला। मेरे तीसरे कार्यकाल की पहली आईजीसी मीटिंग अभी कुछ देर पहले संपन्न हुई है। अभी हम सीईओ फोरम की बैठक से आ रहे हैं। इसी समय जर्मन नौसेना की शिप गोवा में पोर्ट कॉल कर रही है। रक्षा और सुरक्षा क्षेत्रों में बढ़ता सहयोग हमारे गहरे आपसी विश्वास का प्रतीक है। क्लासिफाइड इंफॉर्मेशन के एक्सचेंज पर बनी सहमति इस दिशा में एक नया कदम है। आज संपन्न की गई म्यूचुअल लीगल असिस्टेंस ट्रीटी से आतंकवाद और अलगाववादी तत्वों से निपटने में हमारे साझा प्रयास सशक्त होंगे। यूक्रेन और पश्चिम एशिया में चल रहे संघर्ष हम दोनों के लिए चिंता के विषय है। भारत का हमेशा मत रहा है कि युद्ध से समस्याओं का समाधान नहीं हो सकता और शांति की बहाली के लिए भारत हर संभव योगदान देने के लिए तैयार है। एक्सेलेंसी, आपकी भारत यात्रा से हमारी पार्टनरशिप को नई गति, ऊर्जा
Well, the sell-off intensifies the market. Now the mid-cap index is down 0.8%. When we started the show, we had 1,200 stocks declining. That number has climbed up to close to around 1,500, with the stocks advancing down to around 800 as well. So at the low point for a lot of these indices, we'll keep an eye out on where they progress as we move on towards the end of trade as well. But as we talk about that, here's a programming note. We wrap up on Chartbusters. CNBC TV18 celebrates 25 years of excellence. We invite you to the most anticipated event of the year. It's the CNBC TV18 Global Leadership Summit. Brings together visionary policymakers. We have the Finance Minister, Nirmala Sitharaman, the RBI Governor, Shaktikanta Das, industry leaders like HSBC India's Hitendra Dave, Kotak Mahindra Bank's Uday Kotak, and trailblazing startup founders. This is where the roadmap for the next 25 years of growth for India and global leadership will be charted. You don't want to miss this.
मैं कह सकता हूं कि हमारी पार्टनरशिप में क्लैरिटी है और इसका भविष्य उज्जवल है। जर्मन भाषा में कहूं तो आलेस क्लार, आलेस गुड। बहुत-बहुत धन्यवाद। Danke schön.
Germany has become India's most important trading partner in the European Union, and I'm determined to further strengthen and build on this link and cooperation. I have with me, as members of my delegation, a high-level business delegation that has seized the opportunity to engage bilaterally with India, its industry and business. Especially in times like these, it is of the utmost importance that India is an anchor of stability in South Asia. The international rules-based order, which has come under massive pressure as a consequence of Russia's attack on Ukraine. Russia's war of aggression against Ukraine affects Germany and India in many ways. No one can close his or her eyes to the conflict and the impact it has on us. Therefore, I approve that India supports a lasting and just peace, and I am pleased about your readiness to make use of the reliable relations that you have developed to all parties to contribute to a political solution of the conflict.
Good morning. Welcome to Trading Hour. It just doesn't feel festive. It feels so festive outside in the office in the way you're feeling. But when you look at the markets right now, it's just not the picture you imagine, right? In the morning, you woke up, you had positive global cues. We had a bit of a gap up opening. And now as we speak, 150 points gone on the Nifty. The Sensex is down close to about 450 points. Banks are holding up. But again, not by a whole lot. They've come off too and just up close to about 0.3%. And the advanced decline ratio is firmly in favor of the number of stocks which are weak. So we've got about a 1:2 in terms of the advanced decline ratio. Hi.
Hey, Reema. And you know, yesterday when there was this rally, maybe the expectation somewhere was till Diwali that could continue because of the festive feels. But yesterday there's a big profit booking again that we are seeing. And the mid-cap index, it is at the day's low. In just last couple of minutes, we have seen that the advanced decline ratio has worsened in favor of the declines, and it is down around 500 points. Bank Nifty is lending support again. So a lot of banking results which are coming through, and we do have very stock-specific moves today. The Nifty Bank is up 0.4%. It's the PSU Banking Index which is lending support yet again. So a lot that is happening in the broader markets as well, and we'll keep discussing that, and we'll talk about result reviews and result reactions as well. For now, if we talk about the top gainers, it's the Nifty CPSE Index which is up around 0.4%. But on the flip side, we have the Nifty Pharma Index, which is down around 2%. The Nifty Auto Index is down 2% as well. And it is followed by the Consumption and Metals Index. So let's start the show by focusing on some earnings as well. And we'll talk about a lot of numbers. The first one that we are talking about is Spandana Spurti. It's under pressure after reporting its Q2 numbers. Abhishek is here to tell us more.
Well, microfinance pain has come in for Spandana Spurti and they have reported a net loss after a long time. So AUM growth is down by 10% on a sequential basis. The NII is down as 5% on a sequential basis. Operating profits have declined 9.3% YOY and about 19% sequentially. Look at their provisions that spiked up to 492 crore versus 86.5 crore in the same quarter last year and about 200 odd crores in the previous quarter. So quarter on quarter, there is a almost 2.5 rise in the provisions as well. Asset quality deteriorated massively. Gross NPA, net NPA in absolute value are more than 60% up on a sequential basis. Gross NPA ratio is at 4.86% versus 2.6% in the previous quarter. And the return ratios, that is ROA and ROE, have turned massively negative this time around. ROA of -7% and ROE of -23.1%. Back to you.
Okay, thank you very much for that. Let's move on and talk about Welspun now. The company reported a healthy revenue growth of about 15%, but the margins were a bit muted. The home textile business has recorded strong growth. So to talk more about the second quarter earnings, we have with us Dipali Goenka, the CEO and MD of the company. Dipali, thank you very much for joining in, and season's greetings to you. You look absolutely fantastic. So let's talk about the numbers and the way forward and how demand is shaping up. So you've clocked in a healthy growth of about 15%. Can this run rate continue in Q3, Q4? What's the visibility that you have? And is there scope to revise your guidance?
So let me give you a perspective, first of all. I think this quarter actually recorded one of the highest ever top lines we've ever done, around 2,936 crores, which has been up 15.5% year on year. Yes, our EBITDAs were a little soft comparatively. However, in absolute terms, we have still shown a growth in that number as well. But so when you talk about the numbers, we continue to maintain the growth of around 10 to 12% annually and an EBITDA of around 15.5%. And that's going to be what we'll continue to target and focus on. This year, actually, this quarter has been a very interesting one for us because I think the Red Sea and the geopolitical issues played their little part here. Because, let us also say that the Q4 of our retailers and Q3 of ours actually is the holiday season. So we were time bound. So we had to get all the inventories that we could possibly get for containers and ships. I had to also make inventory and keep it in the warehouse. So, our working capital was also a little stretched this time, and we had to hold on inventory because we were completely time bound for our dispatches as well. Looking at India, I think India is at a sweet spot, completely an integral part of the supply chain and strategy for a lot of our global partners. So yes, one of the stable democracies. So I hold India as the bright spot for all of us.
Okay, Ms. Goenka, so India is the bright spot. Let's talk about North America because that's a big market for you, right? We've gotten some mixed commentary coming in while Walmart increased or raised their targets for FY25. Home Depot said that maybe consumers are pulling back in terms of consumption and their spending as well. What are the demand trends currently that you're seeing in that market?
So, it's a mixed report that you will see coming in. And if I talk about the Q3 numbers or Q4 numbers for our retailers for the holiday season, they are actually targeting around 3.4% of growth. We saw the Fed rate cuts happening in September. That actually cooled off the inflation. It's going to be a mixed one. Let me be also very, very clear. However, for us as India, it is an opportunity. While the sales could be the way it is, but we still see a 3.4% growth in the consumer spending that comes in owing to on the back of the the holiday season. So yes, that's where it is. So let's see how it pans out, but we are pretty cautiously optimistic on that.
Dipali, the branded business has done very well for you. It's about 15% of your revenues, and in Q2 it went up by 45%. What would be the revenue contribution? Sorry. What will be the revenue contribution of branded going forward, say by the end of 2 years? What are the margins that you enjoy on branded? And what led to, even talking about margins, you acknowledged margins were muted. What were the key reasons for that?
So let me come back. Let me first start with the margins being muted. And I actually, as I touched on it earlier, I said that because owing to the Red Sea and the geopolitical issues and because of the holiday season right around the corner, we had to hold on inventories at our warehouses. We had to look at the inventory availability for our ships and containers was not there. So we really were struggling with that. And hence that got impacted, Now, let me come to our branded business, as you spoke about. We actually call it our emerging businesses. Overall, actually, it contributed around it grew 22%. It contributed around 33% of our top line. And of course, our branded business, that is, our licensed brands, they definitely are healthy in the terms of margins. But a domestic consumer business, which is our India brand, Spaces and Wellspun, it grew around 10%. We feel this could be a great opportunity. Our Wellspun brand grew at around 20% this time, and Spaces continue to overperform in the modern trade. So definitely for us as Wellspun, while we talk about a B2B, which will continue to take the market share, not only in America, but UK and Europe and rest of the world, but India is a story where you see a big consumption story. I mean, these 2 quarters is not the way of looking at India's story. Let's look at the next 2 years, and we are very positive about that. And we are looking at maintaining that growth there.
That, of course, is also something that we are tracking, because even in India, consumption growth in festive season hasn't been as good as we've seen in the last couple of years. Ms. Goenka, flooring is around 8% of your business. It's not that big a part, but it has grown well in last couple of years. But this time around, it's just a 3% growth. What's the outlook? What is the second half growth that you're expecting? And will margins stay around that 8 to 9% mark here?
So flooring, you're absolutely right, had grown and has been a little soft this quarter. Again, in these flooring shipments that we give, we actually ship out. They basically are DDP or CIF, and as a result, the impact comes on our customers. So they have actually postponed their shipments for the next quarter, while we continue to grow our businesses in the terms of, reaching out to marquee clients, OEMs in America, and, Australia and New Zealand. But also, let me tell you, our flooring business in India has seen a 28% jump. And it'll have a double-digit growth here too. So overarchingly, we feel pretty positive about our flooring business. It is only, and I always feel that let's look at the strategy. The strategy remains intact. Our goal towards achieving, the growth absolutely remains intact. And the India story on flooring, because let me also, that we have the most modern plants in this part of the world. And it is also getting indigenized to 80%. So we feel very positive about it.
Okay. All right, Ms. Goenka, thank you so much for joining in today, and festive greetings to you and everyone at Wellspun Living. That's the word coming in from the company. They maintain their revenue growth guidance and the margin band that they had spoken about earlier as well. We'll slip into a break. Up next, we'll discuss the second quarter earnings of LG Balakrishnan Bros with B. Vijay Kumar, the chairman and managing director of the company. Stay tuned for that.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards.
Welcome back. Let's talk commodities now. Manisha is joining in and she's focusing in on Bitcoin. Manisha, why is that?
Well, that is because we've seen very strong gains in the overnight market, and Bitcoin, with where it's trading right now, very close to 71,000, is just 3% away from its all-time highs of around 73,700 that it hit in March in previous year. But the gains have been very strong. One, there's a lot of short covering happening. Second, there's a lot of inflows when you look at Bitcoin ETFs as well in the global markets. When you look at the last 12 months or so, many of these cryptocurrencies actually have done quite well. In the US markets, depending on who comes, they have been in favor of cryptocurrencies. We've seen positive cues come in from Europe as well, and that clearly has been supportive, the rally in many of these cryptocurrencies there. So when you look at the last 1 year, Bitcoin prices have gained up by more than 105%. There's been a 160% jump in sense of Binance, and the best of gains clearly coming in for the platform Solana, which is gained up by 400%. Ether, which is the second largest when it comes to market capital within cryptocurrencies, also has jumped up by 45%. So very strong gains coming in across cryptocurrencies in the last 1 year as well. When you look at the inflows itself into the market, well, it has been 47,000 Bitcoin in 2 weeks is what we've sensed in sense of ETFs there. The upcoming US elections is going to be quite important, as I said, and that would tell you on whether or not and what kind of regulations do we see coming in for this one. But October as a month has always been positive. When you look at the last 20 years, out of that, 17 years have given you positive returns in the month of October for Bitcoin there. For this year as well, we've seen nearly 10% of gains already happen in the month of October, but as you can see, it has been very, very strong months there. 2023 in sense of October was 28% of gains. So as you can see, it has been very strong always every year for the month of October that you see gains coming in, and that's exactly what we are witnessing right now as well.
Okay, so deja vu, that's what we are witnessing. Thank you so much, Manisha. You know, I thought you'll talk about gold, but Bitcoin has its own story today. But thanks a lot for joining us with all those details. That's about the commodity space and the moves in the Bitcoin market. But Gillette is the other stock on our radar. It's surging in trade after reporting its Q2 numbers. Mangalam is here with the details and the internals. Mangalam.
Well, you know, the last many quarters, the company has been on a steady expansion of their portfolio, premiumization, increasing their distribution. It's now beginning to show in results, even if the trends suggest that people are preferring beards more than a clean-shaved look. So you have 17% revenue growth that has come by on Gillette. Benign steel prices have actually aided their gross margins along with premiumization. The EBITDA has jumped 38%, and as a result of which the net profit has actually seen a surge of 43%. Remember, the EBITDA margin expansion from 20% to close to 24.5% has actually been diluted by their oral care business. Grooming business, which includes you know, the razors, etc., saw 23% revenue growth. There the EBIT growth was 67%, near 850 basis points margin expansion out there. On the oral care side, there was a near 600 basis points margin dilution. So that's why, you know, it was diluted. The core business, the grooming business, has done extremely well, led by increasing distribution, female grooming range, and increased traction in premium products as well. Remember, last month itself, the company had held an analyst meet, and they said that they've increased their distribution by 1.5 times over the last 3 years. Margins have improved by both cost savings and premiumization. Male grooming, which is a 33 billion rupee category, is growing fairly well, and they've had the highest ever market share that they've had in their business itself. On the female grooming part, you know, Venus has doubled sales in the last 5 years and now contributes double digits to the company's grooming sales. So that's another important growth driver coming in. And they expect mid-single digit growth in oral care to continue, led by some of the lower end electronic toothbrushes, etc., that they're launching. So oral care is something more of a second half story, but grooming is doing extremely well, largely because of the drivers that they've put in place over the last many quarters.
Thank you very much for that. But let's get back to more earnings. And we've got a management waiting by LG Balakrishnan. That's the company on our radar. They've seen a profit growth of 4%, while the top line has seen an increase of 8%. B. Vijay Kumar, Chairman, Managing Director of LG Balakrishnan, is with us on the show now. Thank you very much, sir, for joining in, and season's greetings to you. In the first half of the year, your revenues have increased approximately about 8%, 1,230 crore for H1. Now, your target for the full year is 2,500 crore. Are you on track, or do you think the second half could be better than first half and you will be able to exceed your FY25 top line guidance of 10%?
My Diwali greetings to all of you and to the viewers. Yeah, we expect the next quarter to be even better.
Okay. And what about Q4? Do you have any visibility for Q4 and for the full year, FY25? What could you end the year with, sir, in terms of revenues?
We are targeting what we originally targeted. We will reach 2,500 crores.
Okay. So just wanted to understand how the demand is currently. When you say second half will be better than first half, or quarter 3 will be better than quarter 2, how much better is the demand both in your export and domestic markets? How much is export as a percentage of revenues currently?
The export is stagnant. It will continue to be stagnant. We have a lot of headwinds in export. That's because of shipping, premium shipping, and a lot of difficulties in the shipping part of it, plus the time schedules. So we will continue the export at the same level. It will still be at about 10% of our turnover.
Yes. So are we seeing a decline in export growth because of all the reasons that you mentioned? Are you seeing delay in shipments, delay in orders as well?
Some customers are delaying their orders. They would like to buy within their own countries. Yes, there is a lot of headwind, but we have some good customers and we think we will be able to maintain the same turnover.
So the problem with export is logistical issues and also some demand softness, correct?
Demand softness is because they would like to have some kind of a dependable sourcing instead of depending on successful shipping and stuff.
Got it. Okay. Sir, margins have dropped in the current quarter to sub 17%. In the past, you've spoken at 17% as being the anchor on the margin front. What led to the margin drop in Q2? And do you think by the end of the year, on an average, you could get back to 17% margins?
Yeah, we will maintain that 17%. We were actually at 19%. We are now at 17%.
So this year, you will do margins of 17% for FY25?
Yes.
Okay. So, you do have new facilities which are coming in, and you had indicated that it will do revenues of around 100 to 125 crore rupees by the end of this fiscal. First, is this guidance on track? Second, what is the current capacity utilization that you're looking at?
I didn't get your last part.
The new facility, sir, has it already started? What is the capacity utilization there? And this year, will you do revenues of 100 to 125 crores from there?
Yes, we hope to do that. We will do about 100 crores, if not 125. We've already done about 12 crores, which is included in our turnover from both the steel unit as well as the industrial chain unit. So yes, we will reach that 125.
And the peak revenues from this facility, how much would that be, sir?
Ma'am, that depends upon our investment in the next year. We may slow it down because of conditions. As I said in my last interview, Europe is very sticky. So it depends upon how successful we are in breaking the market in Europe, which means then the turnover will increase.
Okay. So you get about 80% of your revenues from the domestic two-wheelers. And, analysts point out that, the company's revenues could be vulnerable due to impending electrification of vehicles, although the penetration is not very high right now. But, I think your presence in EV is slightly lower. So can you tell us what your EV plans are?
We have plans to get into the electronics side of the business. So it's going to be a slow entry into it. We are hesitantly looking at some possibilities. You know that we have invested into a company which is into electronics. So over a period of time, I can answer maybe a few quarters later about how successful we are in that line.
Okay. All right, we take your point, sir. Thank you so much for joining in today and speaking with us about your Q2 numbers and the outlook going forward. And festive greetings to everyone at the company as well. With that, we will do one thing. We'll slip into a break, but a small programming note as we do that. As we prepare to ring in the festivities this Diwali, tune into CNBC-TV18 at 2:30 p.m. today to hear out the biggest of market voices giving their tips on how you can make your portfolio prosper this Diwali.
It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC-TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC-TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros, and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
For next 6 months, the semi-urban and rural to have a better, stronger demand. We feel that there will be further improvement in our credit cost. We always have guided.
Welcome back. Trying to get towards that 24,200, but still down close to about 150 points. Mitesh is now with us for a quick tech check on the markets. Mitesh, not quite the day that morning that we anticipated, but how would you trade the Nifty now or the Nifty Bank, where you are seeing some resilience, and your top calls?
See, it is the Bank Nifty which somehow managed to hold on to things, but Nifty is slightly on the shaky ground. I'm actually thankful that the Bank Nifty is keeping the Nifty above this 24,170, 150 mark. If that breaks, then we'll take some short positions. But for the time being, trading with a mixed bias. City Union Bank is something which I've recommended earlier as well. If somebody doesn't have it, even now it's a buy. Keep a stop at 171. Look for targets of 182, 183 to begin with. And Cipla, I think after a kind of a pullback yesterday, is tapering off again. So sell here with a stop at 1475 for targets of 1410.
Okay, all right. Cipla also in focus on the back of numbers that the company will report today. Thank you so much, Mitesh, for joining in. So that's a technical check on the markets. Now we'll slip into a break, but when we come back, we'll discuss Indian Bank's Q2 performance with the company's MD and CEO, Mr. S.L. Jain. Stay tuned for that.
I accept your nomination.
We're going to win Arizona. We're going to defeat Kamala Harris.
It's the election verdict the world is watching. Will Donald Trump reclaim the White House and become the oldest president to be sworn in?
How will this US election impact global trade and inflation?
Will Kamala Harris make history, becoming the first woman president of the United States of America?
How will the next US president deal with geopolitical volatility? What next for the India-US relationship, the most defining partnership of the 21st century? What's CNBC-TV18 for the best newsmakers and the sharpest analysis?
We bring you all the action live right here on CNBC-TV18.
We should be able to maintain the current level or a little below that. And if you look at our gross take 3, that also has been coming down, both gross and net, from 5.39 to 5.32. There is a scope for further improvement, and we'll definitely work on it.
Invest.
Welcome back. You're still tuned into Trading Hour. Indian Bank reported a strong set of second quarter numbers. It reported an improvement in the asset quality, while the net interest margins came in under some pressure on a quarter-on-quarter and on a YOY basis. To discuss the company's quarter two performance, we have with us Mr. S.L. Jain, the MD and CEO of Indian Bank, joining in now. The stock is up 3% at the day's high in a weak market. Mr. Jain, good morning. Thank you so much for joining in. Well, it's a strong set, but if we talk about the NIMs, they've come in under a bit of pressure, 5 basis points down on a sequential basis. Can you explain what happened here, and do you stick to your net interest margin guidance of 3.5% that you had given earlier? What's the outlook on cost of funds as well?
So good morning. Happy Dhanteras. You see our net interest margin has come down from 3.44 to 3.39. And you know, because of the RBI guideline, the penal interest has been booked as a penal charges. The impact of that is 6 bips. So if you add a 6 bips, it is 3.45. So we, in the beginning of the year, we said that we will be having a margin of 3.41%, and we are stick to that margin. We will be having better than this. If you see the quarter on quarter, the cost of deposit has increased by 8 bips. But bank could be able to maintain the yield on advance also by 8 bips. So we are protecting our margin. And one more reason is that we are growing in a RAM segment, which is giving good margin and at the same time maintaining CASA above 40%.
Okay, so maintaining a NIM guidance of 3.4% for the full year. Mr. Jain, morning and season's greetings to you. Can we talk a bit about your slippages? Because your slippages have come down sharply on a quarter-on-quarter basis. What led to that? What could be the guidance on slippages for Q3 and Q4? Will it be similar, or could you continue to moderate? And therefore, what could the slippage ratio be? Can it come down to levels of 1.25%, and your guidance on recovery too?
Slippage was 1.06%, 1,357. Yes. And slippage has come agri side 680 crore and then the MSME. The slippage increases when your collection efficiency is down. You see my collection efficiency, we are maintaining it 95%. So collection efficiency is continuously same. So going forward, naturally the slippage will come down. And you see on a quarter-on-quarter basis, it has come down from 1,900 crore to 1,300 crore. And one more point here is the recovery. At the beginning of the year, we said that our recovery will be between 7,000 to 7,500 crore. Internally, we decided that we have a 2,000 crore of a recovery per quarter. We are having a recovery of per quarter 2,000 crores. So in a half year, you see we are close to 3,958.60 crores. And you see our trend also. This is a bank continuously performing. Continuously our recovery is more than the slippage. Last year, you see, prior to that also you see, and quarter on quarter you see. And because of that, our gross NPA has come down, net NPA has come down, PCR has improved.
Okay. So slippages were nearly 4,000 crore in the first half of the year, approximately. So for the full year, can you do 8,000 crore?
No, slippage in the first half is...
Sorry, I mean recovery.
Recovery, we said 7,000 to 7,500. Generally, we do better than what we guide.
Okay. And the slippage ratio, will that be between 1 to 1.25% this year then, sir?
Yeah, it should be. It should be in the range of around 1%.
All right. You know, your fee income was robust. Can you explain what was the reason for that? And is it something that you can sustain in the second half as well?
The fee income has grown by 11%, and fee income has grown by because of the transaction charges, because of even the PSLC income has increased for the bank, which is around 8 or 9%. All our other incomes are increasing, digital transactions incomes are increasing. So you see the bank continuously 10-11% growth we are having.
Okay. You've given a guidance of 11 to 13% for advances and 8 to 10% for deposits, right?
Right.
So this 11 to 13% advances, can you provide some color from where it's coming?
We said 11 to 13% and we have grown by 12%. If you see our growth, we have grown 14% in RAM. Retail, we have grown by 15%. Agri, we have grown by 16%. MSME, we grown by 8%, but standard MSME, we have grown by 12%. You see the MSME NPA has come down. Likewise, in corporate also, we grown by 9%, but the standard corporate, we are growing by 11%. So all segments, we are growing in double digit. Even in the retail housing loan, we are growing 14%. Auto loan, we are growing 51%. Jewel loan, we are growing 21-22%. So bank is growing in all segments. And that is why we are confident of achieving 11 to 13% of a credit growth.
Okay. All right, Mr. Jain, thank you so much for joining in today and giving us your take on what happened in Q2 and most importantly, what the outlook is going forward. The stock is higher in trade today and we would like to wish you and the entire team of Indian Bank a very happy Diwali. With that, we'll do one thing. We'll slip into a break. But as we do that, CNBC-TV18 celebrates 25 years of excellence. We invite you to the most anticipated event of the year, the CNBC-TV18 Global Leadership Summit, bringing together visionary policy makers like Finance Minister Nirmala Sitharaman, RBI Governor Shaktikanta Das, industry leaders like HSBC India's Hitendra Dave, Kotak Mahindra Bank's Uday Kotak, and trailblazing startup founders. This is where the roadmap for India's next 25 years of growth and global leadership will be charted. You do not want to miss this.
Here today with a message of hope for all Americans. With your vote in this election, I will end inflation. I will stop the invasion of criminals coming into our country, and I will bring back the American dream. We need the American dream to come back home. This will be America's new golden age. Going to happen quickly, too, very quickly. Every problem facing us can be solved, but now the fate of our nation is in your hands. Next Tuesday, you have to stand up and you have to tell Kamala Harris that you've done a terrible job, that crooked Joe Biden has done a terrible job. You've destroyed our country. We're not going to take it anymore. Kamala, you're fired. Get out, get out. You're fired. And I'm announcing a new policy today that I will support a tax credit for family caregivers who take care of a parent or a loved one. It's about time that they were recognized, right? They add so much to our country and are never spoken of, ever, 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 but they're going to be spoken of now. Thank you all very much. The United States is now an occupied country, but it will soon be an occupied country no longer. Not going to be happening. Not going to be happening. November 5th, 2024, 9 days from now, will be Liberation Day in America. It's going to be Liberation Day. On day one, I will launch the largest deportation program in American history to get the criminals out.
Welcome back. Bharti Airtel is a stock which is subdued in trade. That's down more than about 2.25%. And the key reason is, despite strong numbers, operationally a good quarter, there is a leadership transition which is announced. Now, the current CEO is Gopal Vittal, and he's going to take on a higher responsibility. He's been appointed as the vice chairman, and the current COO, Shashwat, will become the CEO. But there is a one-year transition from the time that, Gopal Vittal, who is the current CEO, hands over the reins. So Shashwat will be the CEO effective January of 2026. But since the company's done so well under Gopal Vittal, clearly there is some skepticism on how the new leadership will be able to take on this growth leadership mantle that the company has shown in the telecom sector. But moving on now to the sidelines of the World Bank's annual IMF meetings, my colleague Malvika Jain caught up with Ajay Seth, who's the Secretary of the Department of Economic Affairs, and they discussed a wide range of issues, one of them being generating enough opportunities for the people of India, including job creation and other focus areas. Listen in to what he thinks the government of India should focus on.
A job gets created when the investment happens in the economy. Of course, there has to be right skilling.
Sure.
And at the moment, World Bank and Asian Development Bank are working very closely with Government of India to put together the scheme which Finance Minister announced in the July budget, a major skilling program in partnership with the states and the industry. And both these banks are working with the Ministry of Skill Development in India to put together a good program based on their global experience and, of course, what is needed by Indian economy. So jobs get created through the investment into the economy. And which are the investment areas possible? One, of course, is on the connectivity side, on infrastructure side, on climate mitigation coming through the energy transition, which is a global public good as well. So these are the areas where discussed it, and also discussion happened around that how the private capital can be mobilized through leveraging banks' financing.
Sure. And so for private capital mobilization, were any particular sectors identified, or that would also be at a macro level? And then
no, I mentioned it like about
infrastructure.
Infrastructure, and within infrastructure in particular about connectivity. And India has invested very significant amount in the last 7-8 years in terms of its road infrastructure, ports, airports, railways. These are the potential areas to attract private capital to supplement or to complement what the government systems are doing. In addition to connectivity, then comes the entire energy piece. The way India has been investing to renewable energy, the transmission lines, that is a second set of areas which were identified. Then, of course, there are other areas like urban infrastructure, which is a more complex sector, but that is also on the table.
And you can catch this very interesting conversation all day today only on CNBC-TV18.
We are getting very good resolution. On the top of it is KSK Mahanadi, where we are expecting recovery of more than 100% recovery of principal amount we are expecting, because the Swiss challenge process is on, and we are the rates that the bids that have come, it is indicating that our recovery is going to be more than 100%. Second case is that of Sinnar plant at Nasik. There also the initial bids have come, and the H1 bid is quite good. And third project is Hiranmaye project. There also the Swiss challenge process has just been completed, and the bids that we have received is quite encouraging.
I've known Michelle for years, and she is an inspiration. I know everybody here knows this. She is a truth teller, and she motivates us to get to work, especially when the stakes are high, because as she reminds us, as my mother taught me, don't just sit around and complain about injustice. And we will win because together, and this is about all of us, we are fighting for America's future.
There are good reasons why so many women and physicians are horrified by what's happened since Donald Trump's justices overturned Roe v. Wade. We're seeing women scrambling across state lines to get the care they need. So please, do not hand our fates over to the likes of Trump, who knows nothing about us. Vote for him is a vote against us, against our health, against our worth. Let me warn you, your rage.
Welcome back. We've climbed now above the 24,200. So at least between 11 and 12, we've seen the Nifty pick up by close to about 40 points. We were down 150 and now we're down 100 points. But autos remains the top sectoral loser, down 2%. And Maruti Suzuki will be reporting its earnings today. Then joins in with the key expectations. Then.
So the shares of Maruti Suzuki had hit record high after reporting its first quarter of earnings. And since then, the stock is down almost 20%. And for Q2, we are expecting a subdued set of earnings. Revenue is seen flat, operating profit is likely to fall 2%, and margin may hold the levels about 12%, but may see a minor fall. And this subdued expectation is on the back of no major growth in volumes. In Q2, volumes were flat year-on-year, while on a sequential basis, volumes were up 4%. So the question is why the volumes have been under pressure in the recent past. First, demand has been below expectations. And even the concerns regarding demand has been raised by a few companies post Q2 earnings like TVS Motor and Bajaj Auto. Second is raw material costs have seen a sharp rise in the last 2 to 3 months. And last reason, there has been lack of major launches by Maruti in the last 2 to 3 months. And on the back of these, we see a muted set of earnings. But more than the numbers, what would be in the focus is the commentary by the company post earnings. And we would like to hear on the festive demand. Second is update on inventory levels, as there have been reports making round of high inventory levels in the sector by all the companies, and last with the launch pipeline. So on the back of these reasons, we are expecting a muted set of earnings from Maruti.
All right. Thank you so much, Sudarshan, for joining in with what to expect from Maruti. But the other stock in focus will be Cipla. That will also report Q2 numbers today. Winnie is here to get us the key expectations. Even that stock is under pressure. Winnie, what are we expecting?
Yes, so there is a couple of news flows while we're watching out for the numbers. First, let me take you to that in terms of what is the expectation. A 5% growth in terms of revenue, muted growth there. Margins expected to be flattish, 26%, and last year also at the same level of 26%. Profit, 11% growth. This time, India business, that's expected to see a high single-digit growth, expected to come in at around somewhere 3,000 crores, while US sales, that is expected at $235 million. So keep an eye out on that. That accounts for around 28% of the total sales revenue contribution for Cipla. So sequentially, when you look at it, US sales may be a bit muted because of certain issues that were there on lanreotide drug sale, and that was because of inventory stocking that we saw in Q1 FY25. South Africa sales also expected to see a flattish growth, around muted growth of around 7% is what we could say. While management has given a commentary last time of around a 24.5 to 25% in terms of the margins, EBITDA margins. So we'll keep an eye out on that commentary and outlook going forward. Let's also watch out for market share gains in licensing opportunity from the company and progress pipeline for inhalation and assets in the US generic market share. How is that shaping up is key to focus on. Now, like I said, there's another news flow that we're watching out for is that lanreotide, which is a drug which was made by Cipla. Now, we have understood that Ipsen has confirmed Sun Pharma launching lanreotide in June 2025, and lanreotide is an important drug coming in for Cipla. That is why Cipla is under pressure today as well, because now there's competition that is coming in the US markets. And for Cipla, I think around the contribution that came in from this was $120 to $130 million for revenue in terms of US sales. So competition increasing is also going to be a key focus area. We'll try getting some commentary from that as well.
Okay, thank you very much for that. By the way, Sirma SGS Tech is clearly the star over the last 2 days. In 2 days, the stock has added on close to about 25-30%. And Vari Energies, the listing of yesterday, closed up with a gain of 55%. And today it's added on another 5%. Come off a bit from the highs, but still going strong on day 2. But Federal Bank has also clocked in a very good quarter. Gross NPAs have hit a 37-quarter low. Abhishek joins in with the details.
Well, it's a good quarter for Federal Bank, especially with respect to the fact that their asset quality has been pristine and one of the best that you are seeing with respect to slippage ratio at 15-quarter low and asset quality, that is gross NPA ratio at 37-quarter low. So to begin with, net interest margin has declined by 4 basis points sequentially on account of penal interest that they have been charged. So it has come in at 17-quarter low of 3.12% versus 3.16% in the previous quarter. Gross NPA ratio is at 37-quarter low of 2.09% versus 2.11% in the previous quarter. The annualized slippage ratio is one of the best in the banking sector at just 0.75%, which is a 15-quarter low. So if you take a look, their operating profit growth of 18.2% YOY is perhaps one of the best that you are seeing in last 5 quarters. With reference to the PNL to ARPOL, the NII was slightly below ARPOL. However, the PAT is 6 to 7% ahead of ARPOL. In terms of brokerages, they remain bullish. Citi has a buy recommendation. UBS has a buy recommendation. Again, Nomura also has a buy recommendation. Target price ranging from 230 to 250 per share. Back to you.
Thank you very much for that. As we pointed out, the Nifty has cut some of its losses. So now we're down 100 points. At the start of the show, we were down 150 points. Some of these life insurance companies like HDFC Life and SBI Life, they're batting for the bulls and the recovery continues there. So both these stocks are up close to about 1.5%. HDFC Life has moved to the highest point of the day. IndusInd Bank, it's been a rough week for, last week was a rough one for IndusInd Bank. But today it's trying to recover. So it's a stock which has come off nearly 2.5% from the day's low, even as it deals with a 1.5% cut. Well, IndusInd Bank is the one we were referring to. Well, with that, it's a wrap on Trading Hour. Thank you for watching. Halftime Report is up next.
In a vacuum. If we don't get this election right, your wife, your daughter, your mother, we as women will become collateral damage to your rage.
आज सुबह हमें जर्मनी के एशिया पैसिफिक बिजनेस जगत की कॉन्फ्रेंस को संबोधित करने का अवसर मिला। मेरे तीसरे कार्यकाल की पहली आईजीसी मीटिंग अभी कुछ देर पहले संपन्न हुई है। अभी हम सीईओ फोरम की बैठक से आ रहे हैं। इसी समय जर्मन नौसेना की शिप गोवा में पोर्ट कॉल कर रही है। रक्षा और सुरक्षा क्षेत्रों में बढ़ता सहयोग हमारे गहरे आपसी विश्वास का प्रतीक है। क्लासिफाइड इंफॉर्मेशन के एक्सचेंज पर बनी सहमति इस दिशा में एक नया कदम है। आज संपन्न की गई म्यूचुअल लीगल असिस्टेंस ट्रीटी से आतंकवाद और अलगाववादी तत्वों से निपटने में हमारे साझा प्रयास सशक्त होंगे। यूक्रेन और पश्चिम एशिया में चल रहे संघर्ष हम दोनों के लिए चिंता के विषय है। भारत का हमेशा मत रहा है कि युद्ध से समस्याओं का समाधान नहीं हो सकता और शांति की बहाली के लिए भारत हर संभव योगदान देने के लिए तैयार है। एक्सेलेंसी, आपकी भारत यात्रा से हमारी पार्टनरशिप को नई गति, ऊर्जा और उत्साह मिला है। मैं कह सकता हूं कि हमारी पार्टनरशिप में क्लैरिटी है और इसका भविष्य उज्जवल है। जर्मन भाषा में कहूं तो आलेस क्लार, आलेस गुड। बहुत बहुत धन्यवाद। दाके शॉन।
Germany has become India's most important trading partner in the European Union, and I'm determined to further strengthen and build on this link and cooperation. I have with me, as members of my delegation, a high-level business delegation that has seized the opportunity to engage bilaterally with India, its industry and business. Especially in times like these, it is of the utmost importance that India is an anchor of stability in South Asia. The international rules-based order, which has come under massive pressure as a consequence of Russia's attack on Ukraine. Russia's war of aggression against Ukraine affects Germany and India in many ways. No one can close his or her eyes to the conflict and the impact it has on us. Therefore, I approve that India supports a lasting and just peace, and I am pleased about your readiness to make use.
Stocks dipped with declines outnumbering advances but are off the lows of the day. Auto, IT and healthcare are the big drags, even as financials and capital goods eke out some gains.
The elevation of CEO Gopal Vittal to Vice Chairman and transitioning CEO designate Shashwat Sharma to the leadership role weighs on the Bharti Airtel stock, even as it posts strong revenue growth on higher tariffs.
The JSW Group has inked an MOU with Korea's POSCO to set up a 5 million ton integrated steel plant and explore collaborations on battery materials and renewable energies.
Federal Bank perks up after slippages dip to a 15-quarter low and asset quality improves. Business momentum too remains strong, but deposit growth lags.
And the Secretary to the Department of Economic Affairs tells CNBC-TV18 in an exclusive interview that 7% growth in FY25 is very doable, with strong growth expected in the second half of the year. He also rules out any additional government borrowing this fiscal.
It's an extremely interesting day of trade that we have for you. You're watching us here on Halftime Report. I'm Mangla Malu. With me, Hormaz Fatakia. The Nifty down about 100 points, but from the lows, we've seen a near 100-point recovery as well. And the low of today coincides fairly well with yesterday's low. What's leading the market up, which is Nifty Bank. Yesterday as well, we did see the Nifty Bank do extremely better. Right now as well, if you look at it over the last few minutes or so, the Nifty Bank's climbed to the high point, the higher end of today's trading range. So let's see where that goes. Very close to its 50-day moving average and the 100-day moving average. So we'll keep an eye out on those technical levels too. And the good part is the broader markets. You know, if you look at the mid-cap end of things, you have the mid-cap index, which had been fairly volatile. Currently, again, is trying to make a bit of an attempt at recovery. And that coinciding with the crisscross lines that come up for you, we did see a lot more stocks decline than the number of stocks which were advancing earlier. And now those lines seem to have come closer once again. Can they intersect and move higher? The second half of trade will be extremely crucial to track. We do have a bunch of stocks which are doing extremely well, Hormaz as well. Gillette is one of them, reported good numbers. What is it that the company is doing? You know, despite there being a macro trend of beards and not many people shaving, they've increased their distribution. They've increased their end of, premium products. And they said, why just address the male part of the population? Also look at the female part of the population. So Venus, one of their female grooming products, doing extremely well. So just to quickly run you through the numbers, we have, Gillette revenues grew by about 17% at a time when every other consumer company is complaining of a bit of slowdown. Their EBITDA, lower steel prices helped them as well, was up around 38%, and that led to a 43% price growth. The grooming business, out there, a 23% revenue growth came by, and we had the EBIT grew 67%, telling you that the margins jumped from about 18% all the way up to 24% itself. It was distribution expansion, female grooming range, which did well, and increased traction to high products, which did extremely well for Gillette this time around. So let's see whether this outperformance sustains or not, because the company in its analyst meet had clearly said that the reach and their coverage has increased by 1.5 times in the last 3 years. They have embarked upon a cost savings and premiumization spree, and male grooming, which is a $33 billion rupee category, is growing in mid-single digits, but they have their highest ever market share out there. And female razors has doubled in sales over the last 5 years and now contributes double-digit to their grooming sales as well.
Well, best quarter an investor can get, gender agnostic as well. Very strong earnings from Gillette, and it's showing up in the stock price as well, 8%.
For people like us, the volume growth will always be there. Both of us and a lot of them in our profession, we have no option but to be the Gillette people.
Exactly, we have to be there. But yes, indeed. But then on the flip side, there are certain stocks that are not doing so well after earnings. Spandana Spurti is one of them, and that is after the earnings reaction, a very sharp deterioration in asset quality, a jump in the provisions as well on a sequential basis. The stock is down 17% and a significant shave off in today's trading session. Remember, the stock was down almost 20% a month before yesterday's earnings announcement as well. So that now is adding on to that. So moving on, then some other earnings reactions. Sun Pharma, the first management on the show, had reported an inline quarter. Margins were aided by the global specialty sales and lower R&D. In fact, Vinny Motiwala caught up with CS Muralidharan, the group CFO, and began by asking him about the strong performance in the US market. Take a listen.
So our overall growth in the US we have seen in the current quarter has been good. The growth has been fueled with our specialty key products like Ilumya, Odomzo, Winlevi, Cequa, and all have contributed very well in the current quarter. And we continue to focus on strong execution, which has led to the overall scale of our specialty business over the years.
Okay, Muralidharan, if you could just talk to us about what is the growth ex Revlimid also?
We do not want to give any specific guidance for any product or product segment as such, excluding Revlimid.
Okay, so but overall the growth for Revlimid was strong this time. How could we be saying the performance was? Because I believe the last quarter wasn't as exciting in terms of Revlimid growth is what we're understanding. So any indication on that?
So we have already said in the earnings call yesterday that the sales of Revlimid in the US for Q2 was large as compared to Q1 of FY25. And the sale of the generic lenalidomide tends to be episodic and fluctuates between quarters.
Okay. What about, in a press release, you're highlighting about leveraging the cash position that you have in your books. One, what does it mean? And does that mean that you want to focus a bit more in terms of the specialty business? Is that how we should be looking at it?
Yeah, we will continue to focus on our core therapy areas for business development, example like skin, eye, and skin cancer. Overall, our net cash position at the end of H1 was approximately $2.6 billion, which gives us a position to undertake appropriate transactions.
Okay, but in terms of specialty business specifically, that accounts around, I believe, 10% of your profits right now. Do you see this reaching the 30% mark in the next 3 to 5 years? How will this also drive your margins, if you could give us an indication? Because specialty business obviously has better margins.
Yeah, see, net profit growth has been led by a sales growth as well as margin improvements. Our overall sales growth was broad-based, with most of our key geographies performing well, but India and US in particular. And the margin improvement is a result of our product mix leading to better gross margins.
Okay, but so specialty business, how do we see that moving and the margins going forward also, if the focus continues to be on specialty?
So just to reiterate, the global specialty sales for the current quarter was $286 million with growth of 19.2% year on year, which accounted for 18% of consolidated revenues. For the first half of the year, the global specialty business was $552 million, growth of 17% year on year. And all our key products in specialty portfolio are doing well, and we expect them to perform well in the coming quarters.
Okay, so this growth of 19% is something that is sustainable, and we will see further improvement and focus on this one. Okay, sir, but I want to know in terms of the research and development expenses and the spending. Obviously, you spoke about it in your con call that you have lowered the spending guidance to 7 to 8% for FY25 from previous 8 to 10%. One, does that mean the second half of the year we'll see an increased terms of spending? How does that work? And also in terms of, will we see a significant pickup in terms of clinical trials that had seen a delay also?
Yeah, see, some of our clinical trials for specific issues have been pushed ahead, which we have mentioned that they will be starting in later part of the current fiscal. And as a result, we have guided the revised guidance of 7 to 8% of sales for the full year as our R&D spend, which definitely indirectly means that in the second half we'll be spending much higher than the first half.
Okay, and just, when you talk about the company's research and development spend, right, when you look on the absolute term basis, it is a good amount that you look at it from the company's point of view, around 3,000 crores, versus peers who cannot be spending so much. So does that amount on absolute basis continue to be the strong going forward?
No, we have always mentioned that we'll continue to build our global specialty product portfolio, and we will not shy away from any compelling investments to make the portfolio very stronger.
Okay. And what about the outlook, especially coming in for the emerging market side as well as the rest of the world? And would the focus markets now come in? Which are the focus markets from the emerging market front?
See, there are certain 4 to 5 large markets out of the basket of complete emerging markets, namely Romania, Russia, Brazil, etc. And as such, we maintain our revenue growth guidance, which is high single digit given for the year.
Okay. And Illumina, you mentioned that, you're seeing good growth there, good growth trends. Could you just give us a bit more highlight in terms of expected launches there, and plus an update in terms of the phase 3 trial for the new indication, which was for the psoriatic arthritis drug? Any update on that front?
So for the psoriatic arthritis, we expect the top line data by end of 25.
Okay. And what about anything else in terms of Illumina side, any specific trend that you're seeing there? And do you expect it to be strong going forward?
No, we expect the specialty portfolio to continue to perform well, comprising of not only Illumina, Odomzo, Winlevi, Cequa, all have traction well, and we expect them to perform well in the coming quarters as such.
Okay, I just want to highlight in terms of Winlevi also, how is the growth here, and what are we seeing in terms of an improvement in terms of your prescriptions on that front? Are you seeing a sequential improvement there?
Winlevi continues to perform well, and it meets our expectations.
Meets your expectations, and if you could just highlight what was the expectation that you're keeping for the Winlevi?
So we have consciously worked towards improving the realization per prescription, and it is working well.
Okay, so you are seeing an improvement in terms of realization per prescription, because that was the change in strategy. So yes, that is something that you're watching out for. And just lastly, if you could just give me a highlight in terms of the Leqselvi litigation that is going on. Any update on that front, or what are we watching out for? Because if there's a delay, then I believe December 26 is what we're watching out for in terms of the launch here.
So as the matter is currently sub judice, we will be unable to comment any further on this litigation.
The management of Sun Pharma there in conversation with Vinny. The stock currently trading at the lowest point of the day, 2% lower at 1865. Take a short break. Corporate conversations continue on the other side. The management of Arvind Smart Spaces joins us on the other side with Managing Director and CEO Kamal Singhal.
Relations that you have developed to all parties to contribute to a political solution of the conflict.
Welcome back. You're watching us here on Halftime Report. The Nifty Bank now surging as we speak, up around 500 points at the high point of trade. And we also have strong numbers coming in from AMI Organics. The chemical space has been in focus, a 43% revenue growth, and that reflecting all the way under the bottom line where, you know, there has been a positive profit as against loss in the same time last quarter. The EBITDA has almost doubled, and the street is rewarding that. A big surge is what we've seen in the stock price, up 11% as soon as those numbers hit the wires. Margins at 20%, 40 versus 14.4%, and net profit of 37 crores versus a loss of 19 crores at the same time last quarter. 43% jump in the revenue, resulting in the EBITDA doubling as well. But speaking about numbers itself, another good set that came in was from Arvind Smart Spaces. Good bookings growth. However, we did see the collections fall year on year in the second quarter. Let's, get to the management. We have Kamal Singhal, who's the Managing Director and CEO, joining in. Thanks a lot, Mr. Singhal, for joining in. Wish you and your team a very happy festive season ahead. On the bookings front, first half, you've done nearly 666 crores. You were looking to launch around 23 to 2,500 crore worth inventory in the remainder of this year. When you said to us very recently when you joined, what's the guidance of bookings for this year? Will you be able to do the 30% growth that you're targeting in the second half this year?
Yeah, very good. Good afternoon, and wish you very happy Diwali to you all as well. As we said, we are very hopeful that as we talked last time, a growth of over 30%, 30-35% should be achievable, and we are on track to do that. First half has been great. This quarter has been great. We've had a very healthy growth of 26% in bookings for this quarter and 32% for this half already. And we are hoping that the rest of the year will go the same way and we'll be able to touch this 30-35% growth target for the year as a whole.
Mr. Singhal, good afternoon. Festive greetings to you. You've mentioned that you're targeting around 23 to 2,500 crore, right, worth of inventory launches this year. What has been the number in the first half, and what would you be expecting to surpass the target that you have given in the second half based on the first half number?
So we have launched around 900 crores worth of inventory in the first half, and we are hoping that in total we should be able to launch 2,500 to 3,000 crores of inventory. And that's where we are as of now. We should be able to achieve the target that we set for ourselves in the beginning of the year and the way we talked last time on this.
All right. What about, debt? You said that you can comfortably raise about 300 to 400 crore of debt. You do have about 800 crore of free cash flow from operations. I just wanted to know, are you looking at any sort of fundraise in the very near future by either debt or equity?
Yeah, sure. I mean, debt for sure we can raise. The balance sheet gives us a lot of headroom. As of now, we sit on a surplus of around 200 crores in the balance sheet. And obviously, even keeping the debt equity ratio at a very conservative levels, to raise 300-400 crores should not be a problem. And that's what we want to do in the remaining part of this year. All in all, right now, the company is in the process of investing around 1,200 crores in near future, in next couple of quarters. And debt obviously to the tune of 300 to 400 crores is part of that. And the rest will obviously come from platform and internal accruals, which are otherwise very healthy. Last 2 quarters, we have generated more than 200 crores already. And that's how this also is an important component. So all in all, 1,000 to 1,200 crores, including 400 crores, 300 crores of debt, is something that we are targeting for this year.
What's the launch pipeline looking like, Mr. Singhal, for the rest of the year? You mentioned that you're confident of, from 900 crores, you're confident of going to 2,500, 3,000 crores for the rest of the year, which means around about 1,500 to 2,000 crores worth of projects in the second half. What's the launch pipeline looking like? And how much of your unrecognized revenue will also be recognized in the second half? If you could share a number on that.
So all in all, I can give you a sense of what is the total unrecognized value of sale, which is already there, not recognized in the books of account. That's more than 2,500 crores now, but that's the total number. And this gets recognized over a period of time, maybe in next 3 to 4 years. Apart from that, the fresh sales will continue to happen in the balance part of the year. As we said, last year we did 1,100 crores of total sales. This year we are targeting 35% growth over that. We have recognized part of that already in the year, 340 crores to be more precise. So all in all, we should be able to meet the targets on launches, which are 2,500 to 3,000 crores in total for the year.
And how much of your unrecognized revenue will you recognize this year? If that graphic comes up for you this year, you have close to around 2,500 crore worth unrecognized revenue as well. How much do you intend to recognize in the next couple of quarters?
So that will be a difficult call to make. I mean, the accounting standard basically makes it contingent on how much of the project or how many of the projects get finally completed. So that's a little difficult to predict at this point in time. But this will be as per what we have been expecting, which is a growth of over 30 to 40% that we've been showing in the past as well. But difficult to predict the books of account. Booking side is more predictable, which is what we said last year. It was 1,100 crores, and we should see a 30-35% growth over this 1,100 crores for the year as a whole this year as well.
What would be the mix in the upcoming launches, Mr. Singhal? Would it be catering more towards luxury or towards the mid segment? Where is the demand coming in right now as you speak?
So broadly, the demand is coming from upper mid and luxury. Ahmedabad is doing great for us. We've had one of our most successful launches a couple of months back. This is by far our biggest launch. We sold more than 600 crores of inventory at the time of launch. As of end of this quarter. So it remains upper mid and luxury market, broadly speaking. Affordable, we are not very significantly present in that space. But for us, upper mid is doing the best in that sense.
All right. And any further investments under the HDFC platform too? Will you be entering into some more partnerships?
Yeah, I mean, the platform still remains underutilized. As I said, 1,000 to 1,200 crores is the total investment plan next couple of quarters. And 1/3 of that should be coming from the platform. And the other 2 quarters should be coming from internal accruals and the debt that we just talked about.
Very quickly, Mr. Singhal, one final question. Is there any particular geography that you are targeting for further land acquisitions? The last time you spoke, you mentioned there might be some purchases in Bengaluru. Has that materialized?
Yeah, Bangalore, we just announced one very large, very nice project at ITPL Road near Whitefield. So Bangalore, one more high-rise has been signed after we signed one at Bannerghatta Road. Bangalore obviously is one of our prime markets. It's our second home, and hence we'll continue to consolidate in that market. We should be able to kind of acquire 2 or 3 more projects within this year in Bangalore. And Ahmedabad obviously is our home market. Besides Ahmedabad and Bangalore, obviously we are targeting MMR as well. And by the end of this year, we should see some action happening on that front as well.
All right, take that point. Wish you good luck for the remainder of this year. And once again, a very happy festive season. Thanks a lot for joining in. At the bottom of your screen, you have numbers coming in from Symphony. There's a smidge of an up move on the stock, 1.5%, because of the revenue growth, which has come in at around 14.5%. The net profit, which is a 60% jump over the same time last year, which is trying to figure out if there is any exceptional out here or not. Seems like none so far, because there has been a big jump in the EBITDA as well. And now the stock is building on to those gains, now moving towards the higher end of the trading range so far. A part of it could be other income related, because other income has come in at around 20 crores. This compares with 11 crores. There has been, the EBITDA should come up for you on your screens as well. The other income has jumped from 11 crores to 20 crores. So that's caused a bit of a 10 crore jump in the net profit. EBITDA is up 56%. So operationally as well, it's not a problem. The other income has only boosted the net profit further. So that's a good set coming in from Symphony on a favorable base as well. So we have 14.5% revenue growth. Along with that, we have a 50% EBITDA growth and the net profit jumping 60% further, boosted by other income. And that explains why the stock now has moved to the higher end of today's trading range. We get more details on that and take a short break. But as we do that, let's tell you something about programming note as well. We prepare to ring in the festivities this Diwali. Tune into CNBC-TV18 at 2:30 p.m. today to hear out the biggest market voices giving their tips on how you can make your portfolio prosper and a cracker this Diwali.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBC-TV18.com. CNBC TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 20...
Welcome back. You're watching us here on Halftime Report. Even as the market's doing market things, what's interesting are some of the internals which point towards maybe a bit of a bounce once again. Why do I say that? Because the Nifty is recovered smartly from the lows of today. And today's low itself is extremely crucial, because if you look at the Nifty over the last 2 trading sessions, yesterday we broke a 5-day losing streak, and the low yesterday on the Nifty was 24,135. The low today, from which we bounced nearly 100 points, a little more than that, the Nifty's low today was 24,140. So that's a bit of a positive, and that's something we'll manage, the lows holding on. And the second part, from a technical standpoint, the Nifty Bank is outperforming. It's crossed the 100-day moving average. It's crossed the 20-day moving average. The 50-day moving average is something it's very close to, 51,784. So we'll keep an eye out on whether that is crossed by or not. And it's not just the intraday move, it's the closing that matters when it comes to these technical levels too. Because for the Nifty, these levels are a lot higher. In the closing, we'll have the financial services expiry play out, and that will also have a bit of an overlap on the Nifty Bank. So we'll keep an eye out on that. 24,400 call and 24,200 put, extremely active. We have the index somewhere closer to 24,300 itself right now. For the Nifty, we have the 24,200 put, which is fairly active, telling you that today's low is an important support. These put writers are hoping for 24,150 thereabouts to hold on. But on the way up, around that 24,500 mark, 24,400, 24,500 mark, there is some supply expected, and that's visible in the kind of call writing that we're seeing at the 24,300 level itself for a premium of 122 rupees. Apart from the index, just keep an eye on a bunch of stocks. This is expiry week. Bandhan Bank and BHEL may enter F&O ban. Bandhan Bank, of course, down 4% today. And alongside that, we have Dixon, which has been in the F&O ban for the last couple of trading sessions, may perhaps exit F&O ban, and that explains why the stock has also seen a bit of a recovery from the lows.
Keep an eye out on all of these names. The Nifty also staging a recovery from the lows of the day. Keep an eye out on the markets. Time for a short break. On the other side, Srikanth Nadella, the CEO of KFin Technologies, joins us to discuss the second quarter and the road ahead. Stay tuned.
We invite you to be a part of our future. CNBC-TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros, and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18, weeknights at 7 p.m.
For next 6 months, the semi-urban and rural to have a better, stronger demand. We feel that there will be further improvement in our credit cost. We always have guided around 2. We should be able to maintain the current level or a little below that. And if you look at our gross take 3, that also has been coming down, both gross and net, from 5.39 to 5.32. There is a scope for further improvement, and we'll definitely work on it.
Welcome back. KFin Technologies is the next management after reporting a good second quarter, beat across the board, margins expanded as well. The board also approved the terms of a joint venture agreement with CAMS for MF Central. Now to discuss this and a lot more, we are being joined by Shrikant Nadella, the CEO at KFin Technologies. Shrikant, good afternoon. Thank you so much for joining in. And I'd first like to start off by asking you about the road ahead as well, because the markets performed well in the second quarter. The third quarter has not begun on a very good note. But considering the fact that 15% of your AUM growth comes from the market, 15% from inflows as well, do you maintain that 18 to 20% revenue growth guidance that you had given earlier?
Very good afternoon, Harmaz, and happy Dhanteras and happy festive season to all. Thank you so much for having me over. Yes, yet another good quarter for us. Bet expectations exceeded our own budget. Way forward, as always, we've been cautious. We maintained a consistent view about the potential to grow our top line anywhere around 18 to 20% and EBITDA margins around 40 to 45% on a CAGR basis. We understand and respect the fact that there can be quarters when it can be as exuberant as the ones we have seen in the past one or two, and we may also have quarters where it may be a little subdued. So, but on a CAGR basis, we believe, we continue to believe that there is strong secular growth fundamentals behind our business, which is not backed only by the mutual funds and ergo related to the securities market, but also a broader set of businesses, including international alternatives, the primary and the secondary market in the form of IPOs, as well as the pensions and the value-added solutions. So broadly, we are confident and comfortable to maintain our position.
All right. So a two-part question thereafter, and festive greetings to you, your family, and your team as well. One is yields. There has been a moderation in yields. That's largely due to telescopic pricing and larger share of passive. So what tools do you have for you to increase your yields going forward? And related to that, margins. Earlier you said that margins will remain in this 40-45% range. Are you consciously looking at margins at around this 45% range itself, or do you at some point look at crossing it beyond that 45% as well?
Good afternoon, Manglam. So the yield, as we all know, is a factor of individually negotiated contracts with each and every asset management company. Telescopic pricing is baked in, which is no different than a volume discounting in the context of a manufacturing scenario, and we are duty bound in order to pass on the benefits in the form of scale and efficiency we derive to our customers in the context of overall growth, and to make mutual funds one of the most competitive product and well-generating asset for the Indian investors. What factors do we have? What levers do we have to ensure that there isn't a big drop? I think more than anything else, it's focusing on a diversification. It is a fact, empirical data points to yield that would come down as the overall assets under management keeps expanding. One thing that we can do, and we've been successfully doing, is winning a lot of new asset management company mandates. As we all know, the yields tend to compress when the AUM expands very, very large and very fast. But obviously, winning a lot of new asset management company mandates would provide a little bit of hedge in terms of the basis points being higher. Second, and more importantly, to focus on the diversified business. We have been, and we are, and we aim to be the first largest global fund administrator from India. Today, we are present in 6 more countries, and in each of those countries, we do not have yield compression. In fact, we have yield expansion, both because we have our commercials are designed in a manner that we actually have yield expansion happening every 3 years. At the same time, we are also rendering more business services than what we render in India. In India, it's largely RTA services, but abroad, we're able to render fund administration services as well. So together, and a significant amount of value-added services in the form of big data, analytics, cloud solutioning, CRM, mobility, so on and so forth. These are the controllable aspects of our business, which are not dependent on the vagaries of the business, of the market, and hence the yield compression.
Now, Shrikant, you have also finalized the terms of your joint venture with CAMS. How does that impact the entire ecosystem overall? And would that now create a level playing field between the two companies?
So the joint venture is actually something that is taking shape now, but the genesis of which predates almost by 2.5 years when we launched the MF Central. So in spirit and in essence, our joint venture was and had been live for almost 2.5 years. Many a mutual fund investor had been successfully using MF Central as a platform of choice, both for getting their transactions processed as well as for service request processed. This is probably the only platform of its kind for any BFSI sector anywhere in the world, where the entire industry has come together on a singular platform to drive ease of doing business. So for us, the joint venture, the formalization of joint venture, however, marks an important step in terms of creating a separate entity. A creation of separate entity has both tactical and strategic outcomes, the tactical ones being more and improvised solutions and services to the investors, distributors, and the fintech system, ecosystem at large. So what you would expect to see is, much closer tie-up and working with the entire fintech industry again to drive the mutual funds as a preferred choice of asset class across the globe. The separate entity would also have independent board, independent management, which effectively means there is going to be a focus to drive the business in its standalone basis, with obviously the support from the two equal shareholders in the form of CAMS and KFIN. So we mark, this is a very important milestone for the industry as well as for this organization.
Take that point. Thank you so much for joining in as always and giving us, your views on the business going forward. Wish you once again happy quarters. You said that some may moderate, some may see exuberation. I hope that there is more happiness in the quarters going ahead than there is moderation, and that's for the entire markets as well, given the sort of soft October that we've seen so far. It was correction which was due, correction that has come by as well. Meanwhile, there's some important news coming at the bottom of your screen. Board has approved the merger of Suzuki Motor Gujarat with Maruti. This is Maruti, the board is meeting for earnings as well. So obviously, we will keep getting decisions from the board as and when they are announced to the exchanges. But you know what? It's 25 years of excellence for CNBC-TV18. And on account of that, we invite you to the most anticipated event of the year, the CNBC-TV18 Global Leadership Summit. We bring together visionary policymakers. We have the Finance Minister Nirmala Sitharaman. That's not all. We have the RBI Governor Shaktikanta Das, industry leaders like HSBC India's Hitendra Dave. We have Narayan Murthy. We have Kotak Mahindra Bank's Uday Kotak and the trailblazing startup founders. All of them coming together to tell you what the roadmap for the next 25 years of growth for India are. We're looking at global leadership and the path that will be charted for that. You don't want to miss this.
I'm here today with a message of hope for all Americans. With your vote in this election, I will end inflation. I will stop the invasion of criminals.
Welcome back. It's a 150-point recovery from the lows of the day for the Nifty, now almost recovering all the losses. And as flashes on your screen, the Afcons Infra IPO has now been fully subscribed. Remember, it is the final day of bidding, so keep an eye out on that as well. But some stocks, Symphony has now taken a nosedive after the initial spurt that had come up after the results were announced. Now the stock is down 5% as we speak, 5.5% now after the lowest point of the day, 1550 now on Symphony. Also pull up Dabur reporting results tomorrow, and that too is trading with losses of close to 3.5%. But where are the gains coming from on the Nifty? It's ICICI Bank that is leading the Nifty Bank higher and subsequently the Nifty as well, and also is State Bank of India, which is also the second best contributor on the index and taking the PSU Bank index higher as well. Top sectoral gainer yesterday, top sectoral gainer today as well. Time for a short break. On the other side, Manisha Gupta joins in with Dilip Gaur of Novel Jewels, the Aditya Birla Group. Stay tuned.
Our country, and I will bring back the American dream. We need the American dream to come back home. This will be America's new golden age. It's going to happen quickly, too, very quickly. Every problem facing us can be solved, but now the fate of our nation is in your hands. Next Tuesday, you have to stand up and you have to tell Kamala Harris that you've done a terrible job, that crooked Joe Biden has done a terrible job. You've destroyed our country. We're not going to take it anymore. Kamala, you're fired. Get out, get out. You're fired. And I'm announcing a new policy today that I will support a tax credit for family caregivers who take care of a parent or a loved one. It's about time that they were recognized, right? They add so much to our country and are never spoken of, ever, but they're going to be spoken of now. Thank you all very much. The United States is now an occupied country, but it will soon be an occupied country no longer. Not going to be happening. Not going to be happening. November 5th, 2024, 9 days from now, will be Liberation Day in America. It's going to be Liberation Day. On day one, I will launch the largest deportation program in American history to get the criminals out.
We are getting very good resolution. On the top of it is KSK Mahanadi, where we are expecting a recovery of more than 100% recovery of principal amount we are expecting, because the Swiss challenge process is on, and we are the rates that the bids that have come, it is indicating that our recovery is going to be more than 100%. Second case is that of Sinnar plant at Nasik. There also the initial bids have come and the H1 bid is quite good. And third project is Hiranmaye project. There also the Swiss challenge process has just been completed.
Welcome back then. On to our special for Dhanteras. Manisha Gupta caught up with Dilip Gaur, the business director of Novel Jewels of the Aditya Birla Group, and spoke to him on their expansion plans, growth and innovation strategies, and how the festive demand is shaping up. Listen in.
I think it feels great to do this, grow at this speed, and I believe we'll be able to maintain this speed going forward. We hope to do maybe 100 stores next year if it goes, all goes well.
By the end of next year?
End of next year, sure.
All right. Mr. Gaur, first things first, and what really has led Aditya Birla into jewelry business? What are the key 3 points that you feel that you can grow within this business, make a mark?
Yeah, I think the reason for us getting into this business is one of the things it has always been on our radar. But the biggest driver has been the formalization of the market. If you remember, this market used to be a very fragmented market. So last 5 years, it has gone up from 20% to almost 35%. And it's moving very fast. So I think the policies have changed. The government's progressive policies have made it easier for companies like us to operate. So I think that's one reason. The second is it's a huge market. It's about 6.7 to a 7 lakh crore market, growing in double digit. So we believe there's a huge growth opportunity. And third is we have been the leaders in the retail. So I think it's a natural progression from fashion to jewelry. And finally, the biggest thing is that trust is a key cornerstone of this industry.
Sure.
And I think when it comes to trust, I think Aditya Birla Group has a very special place in that. So I think we believe it's a win-win combination for all of us.
So what are the investments that you are putting into this business right now? What kind of return growth are you anticipating, and how are you looking at the next 1 year then?
See, it's an evolving landscape. So I think investment will depend upon how we grow and how the market unfolds. But it's our intention to spend up to 5,000 crores in the equity investment. So that's the plan, and the idea is in the fullness of time to go nationally and have about 350 to 400 stores of much larger size than the industry average.
All right. This one I understand is 7,000 square feet. You have a 14,000 square feet as well. Is that the limit, or are you looking at?
Our idea was to have 7,000 to 8,000 square feet average store size, which is about 25 to 30% more than the industry average.
It is.
This being a mall store is 7,000 square feet, which is pretty big. But our high street stores are as big as 12,000 to 10,000 square feet. It will depend upon the kind of market it is and the kind of city we are in. And some stores, are flagship stores, so we'll make them much bigger.
If you look at the market, well, absolutely. From being a not very organized sector, 35 to 36% of the market is now organized. Is that a big plus point that you see? And the second thing really is about on what is going to be your priority for this business. Is it going to be designs, customers, price points? What are you working on?
I think you are right, because that's where the growth will come from. The 65% unorganized market is what will get formalized. So just imagine 65% of 7 lakh crore. That's the kind of growth pie which you all have. So I always say there's enough room for everyone to grow here. There is we don't worry about competition. We worry about what we are going to do, and we are going to do right. And what we have done is we have done a very deep consumer research before we got into this business. About 4,000 consumers we have talked to them, spent time with them, and got very deep insights. And first big insight has been about the design. So I think in our case, the product is the hero. And I think we would like to create a business where design is at the center. And in the evolving landscape, the Indian consumer also is now moving from buying jewelry as an investment to statement. And in that evolution phase, the Indian consumer is looking for better designs, better innovations, so which is what we'll provide.
This store has how many designs?
This store has, we have total about 15,000 designs, of which about 6,000 to 7,000 designs are in this store.
In the store as well.
And on top of that, what we are going to do is every 45 days we'll have new design collections coming. So we'll keep on upgrading design, because design is not a static feature, it keeps a dynamic feature.
It is,
So
everything
that's
changes.
our major proposition, that we will keep on innovating our designs and innovate our offerings to the consumer.
Mr. Gaur, this is your first Diwali, and it comes at a time when the gold prices are trading at an all-time highs. What is your sense getting into this season with prices at these levels?
Yeah, I think, yes, the general belief is that with the gold prices going up, the demand should come down, but I think what I'm finding is festival has a different spirit altogether. And at the end of the day, gold has the beauty that it's an investment and adornment together. So you can look at both ways. If the price is high, it's an investment. If the price is low, it's adornment. So you can look at that. To my mind, I think we expect a very good festive season. The initial signs are very good. And we have done a lot of work to make sure that we do well in the... So we have got two special collections launched for design.
Okay.
What we call One Jyotsna and Lush Gold.
Okay.
So we are giving consumer a very festive-driven collections. We've also built up a very festive specific campaigns. We've got a film made for Diwali, film made for Karwa Chauth. So that kind of, so we are kind of giving customers.
So Indria is one brand that comes under Novel. Are you looking at more brands under Novel going forward?
No, I think our belief is Indria will be a brand which can transcend the entire range. I think
All right.
so it's a very premium brand we are trying to build. Indria, as you know, the word stands for senses.
Yes.
And we believe that Indria will kind of activate all the 5 senses of consumer, and that's how we will entice them. So our whole branding strategy is that it's a very premium branding and it can transcend the entire range. Like I always say, it's like a BMW or a Mercedes. You don't need to have a separate brand.
All right, got that.
Exactly.
So you've talked about 100 stores in total by end of next year.
Yeah.
You've also talked about 300 and 400 going forward as well. So are there any cities that you're looking at? Are you looking at, have you identified all the places?
No, so we have a blueprint done, but I think we'll be a pan-India player. But the business will grow depending upon, in this business, the very important part is, apart from growth, availability of good real estate.
Sure.
So we go where we get the best real estate and best locations. That's what will drive it. So,
Is plan also inclusive of going or stepping out of India at some point in time?
as of now, no. We believe there's enough to do in India. But we never know. In fullness of time, we'll see what to do. But in the next 2 to 3 years, our focus is India. And we believe there's a huge growth opportunity. And we would like to be in the top 3 players in next 5 to 7 years' time.
Also within the store, I've gone around and seen it, and you have gold, and you have polki, and jadao, and diamonds, and antiques, and there's a whole host of collection around here. Is there a special focus on something special, or are you going all out with everything?
No, I think we are designing and creating products for occasions. So we believe a same consumer buys different product at different times. So when there's a wedding in the family, he'll have a different product. When there is a festival, there are different products. So we are creating products for the occasions and not a fixed kind of product. So we are going more by the consumer need. So I say I will give whatever consumer wants.
Canara Bank's numbers were flashing on your screen just a few minutes ago. The net interest income was marginally higher than expectations. The net profit was in line, but the bigger takeaway is the fact that the asset quality has improved on a sequential basis. Both gross and net NPA in percentage terms as well as in absolute terms is also improved compared to the June quarter, showing up in the stock price as well. Marginally higher has recovered from the lows of the day, trading with gains of around 0.5%. With that, it's a wrap on this edition of Halftime Report from Mangalam, me and the team that put this show together. Thank you for watching. Festive greetings to all of y'all. Business Lunch takes the action forward as we await the 4 Nifty earnings.
The bids that we have received is quite encouraging.
I've known Michelle for years, and she is an inspiration. I know everybody here knows this. She is a truth teller, and she motivates us to get to work, especially when the stakes are high, because as she reminds us, as my mother taught me, don't just sit around and complain about injustice. And we will win because together, and this is about all of us, we are fighting for America's future.
There are good reasons why so many women and physicians are horrified by what's happened since Donald Trump's justices overturned Roe v. Wade. We're seeing women scrambling across state lines to get the care they need. So please, do not hand our fates over to the likes of Trump, who knows nothing about us. Vote for him is a vote against us, against our health, against our worth. Let me warn you, your rage does not exist in a vacuum. If we don't get this election right, your wife, your daughter, your mother, we as women will become collateral damage to your rage.
आज सुबह हमें जर्मनी के एशिया पैसिफिक बिजनेस जगत की कॉन्फ्रेंस को संबोधित करने का अवसर मिला। मेरे तीसरे कार्यकाल की पहली आईजीसी मीटिंग अभी कुछ देर पहले संपन्न हुई है। अभी हम सीईओ फोरम की बैठक से आ रहे हैं। इसी समय जर्मन नौसेना की शिप गोवा में पोर्ट कॉल कर रही है। रक्षा और सुरक्षा क्षेत्रों में बढ़ता सहयोग हमारे गहरे आपसी विश्वास का प्रतीक है। क्लासिफाइड इंफॉर्मेशन के एक्सचेंज पर बनी सहमति इस दिशा में एक नया कदम है। आज संपन्न की गई म्यूचुअल लीगल असिस्टेंस ट्रीटी से आतंकवाद और अलगाववादी तत्वों से निपटने में हमारे साझा प्रयास सशक्त होंगे। यूक्रेन और पश्चिम एशिया में चल रहे संघर्ष हम
Stocks dip with the declines outnumbering the advances but are off the day's low. Auto, IT and healthcare are the big drags even as financials and capital goods eke out gain. The elevation of CEO Gopal Vittal to Vice Chairman in transitioning CEO designate is Shashwat Sharma to the leadership role weighs on Bharti Airtel stock even as it posts strong revenue growth on the higher tariffs. JSW Group inks an MOU with Korea's POSCO to set up a 5 million ton integrated steel plant and explore collaboration on battery material and renewable energy. Federal Bank perks up after slippages dip a 15-quarter low and asset quality improves. Business momentum too remains strong but deposit growth lags. The Secretary of Department of Economic Affairs tells CNBC-TV18 in an exclusive interview that 7% growth in FY25 is very doable with strong growth expected in the second half of the year. He also rules out any additional government borrowing this fiscal. Hello, good afternoon. You're watching Business Lunch on CNBC-TV18 and I'm Vinny Motiwala. Firstly, a happy Dhanteras to everyone, but markets quite subdued in trade, not much of an excitement there. Let's look at what the Nifty is doing. It was trading with a negative bias the last time I checked, so yes, keeping an eye out on that. Sensex too was managing to hold on to some bit of a gain, but as of now, Nifty was trading with a negative bias. Let's also look at, the Nifty is recovered from the day's lowest point, but still some bit of a negativeness is what we're seeing. Let's pull up what the Nifty PSU Bank is doing. That's managing to hold on to gains. Second consecutive day that we're seeing the Nifty PSU Bank actually managing to hold on to gains. So yes, a 1.6% uptick right now coming in for the Nifty PSU banks. We've seen a lot of earnings coming in on that front as well. Nifty Auto, that's among the top sectoral losers today. We are watching out for earnings that will come out from Maruti. Important to watch out there. But yes, that's the top sectoral drag that we're seeing coming in today's trade. Other than that, we have the Nifty Pharma that's also under pressure today. It's down almost 1.3% in trade. So let's keep an eye out on Nifty Pharma. A lot of pharma companies reporting their numbers. Yesterday we had Sun Pharma, today we have Cipla, and tomorrow we have Biocon that will be reporting its numbers. We had Aarti Pharma that reported their numbers, not an exciting set that came in from the company. So yes, as of now, Cipla also is under pressure. So yes, all these pharma stocks is something that we are watching out for in trade. But yes, that's how the market setup is looking like. We have Adani Ports that has just reported its numbers. Net profit is up 40%, margin 62% versus 58.4% last year. it is a bit of a subduedness that we're seeing in terms of the stock right now, but we'll get you more details on that. But it's a day of Dhanteras and today, and prices of precious metals are trading at record high. Manisha is joining in with us to talk to us about the shine and glitter that we're expecting this Dhanteras. Manisha, good afternoon.
Afternoon, and thank you so much for that. Well, yes, it's an all-time high of gold and silver prices this Dhanteras to you. Well, remember, people buy on Dhanteras or they start something in you believing that whatever you buy or start this day will multifold, manyfold going forward. And it has been a tradition for many, many years. But this time around, there's a bit of a dent here because you are looking at all-time high prices for gold and silver. In the international markets, we've seen gold prices trade above $27.50 an ounce. In the Indian markets, it's trading at 80,000 rupees at 10 grams on Dhanteras today, perhaps 81,000 as well if you add making charges to that. It's the same case for silver also, 12-year highs in the international markets, but the Indian prices are trading at 1 lakh rupees. Well, last year the prices were trading at around 70,000, so it has been a huge jump up that you've seen come in for silver prices. It has been strong gains across, and that is because we are looking at a lot of buying in the international markets because of the safe haven buying that gold sees. And this is happening even as there is some restraint that we've seen from Israel and Iran. So somewhat of a war premium seems to have gone down. And then apart from that, the treasury yields are trading at a 3-month highs. The dollar index is headed for a best monthly gain since April 2022. Even with all of this, there is no decline or respite that you've seen for gold and silver. In fact, the traders are watching out the geopolitical tensions in the global markets. It is also about global central bank buying and a lot of uncertainty because of the US presidential elections as well. So you want to stay invested in tangible commodities, and what better than gold and silver there. I want to take you through prices on what the prices have been on Dhanteras in last many years. So if I can take you through that, in 2019, we were trading at prices of around 38,000 rupees. And then after 2 or 3 years, we've been trading between that 45 to 55,000 rupees. But it was last year that the prices were trading at 60,000 rupees on Dhanteras. And this time around, as you can see, we are at 80,000. So 20,000 rupees per 10 grams of a price rise in the matter of last 1 year. Also, silver has been rising as well. As I told you, last year was 70,000 rupees. This time is 1 lakh rupees. And this is what we've done in sense of silver imports into the country. It was at record in 2022, fell in the 2023 because we already had imported a lot of silver. And this year, until now, we've done 7,000 tons of imports already. This is a very interesting chart which tells you that on an average, on Diwali Dhanteras week, we buy 20 to 25 tons of silver and 500 to 800 tons of silver as well. So between gold and silver, the markets do anticipate that this number could go higher in this year. One, because the trust in gold and silver is high. Two, there are various ways of buying it. And three, with the kind of returns that you have seen come in for gold and silver, markets believe that the returns could only go higher going forward.
Okay, returns could only go higher. It's already gone higher. But yes, happy Dhanteras to you, Manisha, as well, and surely keeping an eye out on gold and silver. Let's move on. In other news, JSW Group and Korea's POSCO Group have signed an MOU to develop an integrated steel plant in India with initial capacity of 5 million tons per annum. The MOU will explore collaborations on battery materials related to electric vehicles and renewable energy in India. Let's move on to another story that we have, and sources are telling CNBC-TV18 that the SEBI investigation in terms of Axis Max Life deal has asked for 5 clarifications over the term of the deal. Let's go across to Yash, who's standing by to tell us the details on the same as well. Yash?
Well, Vinny, just on Friday, Axis Bank informed the exchanges that they've received a show cause notice from market regulator SEBI, and this show cause notice is related to the Axis entities and Max Life transaction, where Axis entities have altogether acquired about a 19% stake in Max Life Insurance. As far as the deal itself is concerned, it was broken into multiple parts. In the first tranche, Axis entities acquired about 13% stake in Max Life Insurance. That was done at a price of 32 rupees per share, after which the insurance regulator had said that the deal has not happened at a fair market value, and hence Axis Bank as well as Max Financial Services were penalized, and the deal had to be revised for the balance part of the transaction. What we've been given to understand is that SEBI show cause notice has come down with respect to the same discrepancy when it comes to the pricing of the transaction. And as far as the show cause notice from market regulator SEBI is concerned, it primarily is asking 5 important questions to Axis Bank as well as Max Financial Services. The first question is, why was the pricing of Axis Max Life deal so discrepant from the transactions which have happened in Max Life Insurance earlier? The second question is, was the discounted pricing as far as Axis Max Life deal is concerned done to benefit Axis Bank? That's an important question coming from market regulator SEBI. Third one is, how did the discounted price, which was 32 rupees a share for 13% stake, beneficial at all for Max Financial Services? The fourth question is, why should it be assumed that the public shareholders of Max Financial Services did not get the right value out of Axis Max Life deal? And fifth, and the most important concluding question, that was why no action should be taken against Axis Bank Max Financial Services for hurting the interest of public shareholders of Max Financial Services. A rough calculation would suggest that if the deal would have happened at fair market value, that was done later, 113 rupees a share, Axis Bank would have had to shell out about over 2600 crore additional for that 13% stake which it acquired.
Okay, thank you so much for that, Yash. But let's move on. And in news from the aviation space, SpiceJet has said it has cleared the pending TDS dues amounting to around 310 crore rupees up to the second quarter of FY25. And since the 26th of September, the low-cost carrier has cleared over 600 crore rupees in pending dues, including outstanding salaries. GST liabilities and PF contributions as well were a part of this. Okay, let's move on, and moving on to some news and updates coming in from the primary market front. Food delivery aggregator and quick commerce service provider Swiggy India IPO will be hitting the street on the 6th of November and will remain open for subscription till the 8th of November. The issue will consist of a fresh issue of equity shares worth around 4,499 crore rupees, and the shareholders of Swiggy will also be selling up to 17.5 crore shares in the IPO. So interesting one to watch out for in this listed space. Obviously, we do have Zomato there and its competition Swiggy that will be opening up for IPO. Let's move on and talk about the banking space, because that's been in focus, and we did have Canara Bank that reported its numbers just a short while ago. Now, in terms of what is the fine print coming in for this, let's go across to Abhishek, because as of now, the stock is managing to hold on to strong gains, 2.34% gains, Abhishek.
Well, like other PSU banks, Canara Bank has lost market share in terms of business momentum. But like PSU banks that you have been seeing, asset quality, one of the best that you are seeing in last 9 or 10 years for Canara Bank as well. So in terms of business momentum, deposit growth is 9.3% YOY and about 0.9% sequentially. Loan growth is about 10.3% YOY and about 4% sequentially. In terms of P&L momentum, they have reported an NI of 9,315 crore. We are working with a number of 9,312 crore. Their NPA provisions have increased by almost 19.2% sequentially. So annualized credit cost is at 5-quarter high of 1.05% versus 0.9% sequentially. But this is not for fresh slippages, but this is more to do with the write-offs that they have done. So they have made provisions over there. More than 3,000 crore of NPAs have been written off this quarter. So that is why they have made the provisions over there. They have reported a PAT of 4,014 crore. We were working with a number of 4,047 crore. In terms of asset quality, gross NPA ratio and net NPA ratio, they have fallen below 4% and 1% respectively for the first time in last 9 or 10 years. So slippages have declined by 30% on a sequential basis. Annualized slippage ratio is at 0.93 versus 1.37%, which is the lowest in last 15 quarters. So gross NPA and net NPA in absolute value have declined by 6.5% and 16.5%. And on your screen, you can see gross NPA ratio below 4% and net NPA ratio below 1%. Back to you.
Okay, thank you so much for that, Abhishek. Let's keep an eye out on Canara Bank. But on that note, we're going to slip into a very short break, but a small programming note on that front, that as we prepare to ring in the festivities this Diwali, tune into CNBC-TV18 at 2:30 p.m. today to hear out the biggest market voices giving their tips on how you can make your portfolio prosper this Diwali.
चिंता के विषय है। भारत का हमेशा मत रहा है कि युद्ध से समस्याओं का समाधान नहीं हो सकता और शांति की बहाली के लिए भारत हर संभव योगदान देने के लिए तैयार है। एक्सेलेंसी, आपकी भारत यात्रा से हमारी पार्टनरशिप को नई गति, ऊर्जा और उत्साह मिला है। मैं कह सकता हूं कि हमारी पार्टनरशिप में क्लैरिटी है और इसका भविष्य उज्जवल है। जर्मन भाषा में कहूं तो आलेस क्लार, आलेस गुड। बहुत बहुत धन्यवाद।
Germany has become India's most important trading partner in the European Union, and I'm determined to further strengthen and build on this link and cooperation. I have with me, as members of my delegation, a high-level business delegation that has seized the opportunity to engage bilaterally with India, its industry and business. Especially in times like these, it is of the utmost importance that India is an anchor of stability in South Asia. The international rules-based order, which has come under massive pressure as a consequence of Russia's attack on Ukraine. Russia's war of aggression against Ukraine affects Germany and India in many ways. No one can close his or her eyes to the conflict and the impact it has on us. Therefore, I approve that India supports a lasting and just peace, and I am pleased about your readiness to make use of the reliable relations that you have developed to all parties to contribute to a political solution of the conflict.
Welcome back. You're watching Business Lunch on CNBC-TV18. And sources tell CNBC-TV18 that the government is mulling incentives for data centers under the revised policy. And Ashmit is here to give us the details on that. Ashmit?
Well, data clearly is king. In fact, a recent ICRA report suggests that the data center in India, the capacity will grow from 1,000 and will double to 2,000 megawatts as early as FY27. And importantly, highly placed sources within the government tell us is that this journey will not be made by the private sector alone. The government is willing to partner. The government is willing to offer incentives. In fact, that was one of the demands that fell out of the recently concluded India Mobile Congress. The government now considering various forms of incentives that can be allowed to the industry to take this forward. Now, what shape and form it will take has not been finalized. There is a consideration that is still underway. However, there are still some important aspects that we're picking up. Number one, the government is not in favor of granting incentives directly to those setting up of data centers. The government believes that this will skew the incentives in the hands of a few tech as well as real estate players. That is not what the government wants. What the government is in fact thinking is how this incentive can be linked to compute powers that is made available by these data centers to the startup players, to the innovation ecosystem, to the small and medium players. Not just that, this incentive program that the government is working on is also likely to benefit, is also likely to aid in setting up of specialized AI, ML data centers, which again have a higher power demand, which have a higher specification. That is something that the government is very keen on. As to what shape and form this will take, well, keep in mind that the draft data policy was brought out in November of 2020, but that was never implemented. We understand that there is a revised version that is currently in the works. The government is considering how to revamp that draft of November 2020, and that perhaps will give more clarity to the industry going forward in proliferation of data centers.
Thank you so much for that. But let's take a short break for now. And when we return, we get you updates on some tragic incidents in India owing to the firecracker explosions. More on this story on the other side.
to win Arizona. We're going to defeat Kamala Harris.
It's the election verdict the world is watching. Will Donald Trump reclaim the White House and become the oldest president to be sworn in?
How will this US election impact global trade and inflation?
Will Kamala Harris make history, becoming the first woman president of the United States of America?
How will the next US president deal with geopolitical volatility? What next for the India-US relationship, the most defining partnership of the 21st century? What's CNBC-TV18 for the best newsmakers and the sharpest analysis?
We bring you all the action live right here on CNBC-TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for...
Welcome back. You're watching Business Lunch on CNBC TV18, and we do have Maruti that has reported its numbers. We were expecting a subdued quarter. Now, EBITDA has come in at 4,417 crores, and our expectation for EBITDA was at around 4,690 crores. Net profit 3,000 crores versus at the poll of 3,779 crores. So, miss seems like coming in on the net profit front. Revenue better than what we were expecting, 36,962. This is coming at 37,000, so almost in line to slightly better. Keeping an eye out on that one. As of now, 4,417 is what we're watching out for in terms of EBITDA. The stock has taken a bit of a fall. Margins, let's watch out for that as well, because last time the margins were at 12.9%. This time it's 11.9%. A poll was 12.7%. So there is a miss that has come in on the EBITDA margin front. We're seeing the stock also see a bit of a fall coming in. So yes, numbers don't seem to be a bit of a miss, at least, is what we're watching out for in terms of the margin front for the company and even the profitability front of the company. There seems to be a bit of a miss coming in there. Other than that, obviously the expectation was there to watch out for, because we're expecting a subdued quarter. What are the volumes turning out to be? The volumes on a year-on-year basis, that was down by 2%. So keeping an eye out on that. a better mix because it was what we were expecting, what one was expecting this time. But that seems like that has not happened right now. And we're seeing a bit of a miss coming in on the margin front. Actually, a 100 basis point contraction is what we're seeing on the EBITDA margin front for the company. What's also important to watch out for, how is the demand outlook shaping up for FY25 and this festive season? We'd heard some bit of a concerns coming in around festive season. Now, how is that actually going to be shaping in from the company? Will we reach out for some commentary that maybe we could watch out for from the company in terms of that? As of now, our numbers are amiss. The stock is down 2% in trade, and we'll also bring in some bit of a reaction that we're watching out for on what Maruti is expected and how these numbers are being read by. But let's move on, and we also have Prakash Diwan to talk to us about the same in terms of Maruti's numbers. Prakash, good afternoon. First cut, seems like Maruti has missed the estimates of the street, at least, and what we were looking at in terms of CNBC, especially on the margin front. What is your outlook in terms of the numbers? How are you reading it?
So, yeah, I know while this might be a disappointment maybe as compared to the consensus, but personally, my take is that Maruti has gone through a phase of consolidating a lot of its production and operations, but hasn't had any new launches. The last significant launch that they had was the Fronx, which has taken off quite well. But after that, nothing much has happened, especially on the hybrid portfolio. So the conventional product portfolio that they have, realizations, if you see, they've not been able to pass on higher prices or move up the value chain, and that's where the margins would definitely get impacted. And to be honest, there's not much of a restocking on festive season on account of the festive season that usually happens by this quarter, or at least starts getting you some semblance of restocking. So let's see if quarter three goes off well, then there could be a little bit of a pullback. But otherwise, it could consolidate or struggle a bit for the next 6 months in this zone.
Absolutely. Maybe it could struggle a bit because right now the stock is down 4%. Prakash, like you were mentioning, festive season doesn't seem to be too exciting. Is that a concern coming in for other players as well? Or maybe it's just Maruti because of the reduction in terms of launches, or not too many launches there for the company?
So you're right. It is a phenomenon that's driven more by the competitive intensity in segments that Maruti usually has been known to lead. If you see if the market share retention itself has been a challenge for them last couple of years, with the likes of Kia and Mahindra eating into a lot of the market share. And their SUV portfolio also, if you see, hasn't really, as I said earlier, not many launches, not new products. The Chimney has been a little bit of a disappointment in terms of course, it's a different segment. It's not supposed to be mass, but it hasn't been able to, move the needle for them. So it's a competitive intensity related thing. All of them are facing that. Even Hyundai is not been very successful in terms of new launches. So we'll have to wait. Typically, what will happen is Motown is looking at a transition, and there's a little bit of a confusion amongst consumers whether hybrids are better, whether it's pure EVs that are better, or you would still go with the good old IC. So in that process, a lot of decision deferment happens, and that's exactly why the festive season is not kind of taken off very well, as in it's likely to be subdued.
Okay, yeah, festive season surely is subdued. But Prakash, I just want to understand, right, like while we talk about consumers being confused about it, do you think the update on EV timeline model launch, that is also something that maybe could give in some bit more competition to Maruti Suzuki, and that could be some bit of a pressure point for Maruti going forward?
Yeah, I mean, they definitely are much late in the EV value chain. Their reliance on hybrid was far higher, and there's a dependence on Toyota. So, and Toyota is constrained by capacity, of output. So they've really not been able to play a very significant role in that, unlike other markets where hybrids have been far more dominant very quickly. So I think Maruti will have to relook at its strategy, and I'm sure they will be doing that. They would be doing that. What's good about their production is that the Sanand unit is completely operational. There's a lot of export orientation that's built in there, and once they are clear in what segment they want to play a major role in, they'll probably be able to focus on that. But these things take time. I would give them at least 2 quarters for the reset to happen.
Sure. Okay, we have Ashwin Patel also joining in with us from LKP Securities. Ashwin, good afternoon. What are you making also of the first cut in terms of the Maruti numbers? Seems like a miss coming in on that front. How is it with your estimates?
Yes, the numbers have clearly been a miss from our estimates as well as from the margin from the market estimates. The margins have come below estimates at about 11.9%, though the revenues in the top line is quite in line with the estimates. But the clear miss is on the on the margin front. We can say that the passenger vehicle industry is going through a lot of slowdown currently, and that is getting reflected in Maruti's numbers, being the market leader. And market share also is also facing challenges because of other players and overall slowdown, and the EV pack is doing slightly better, and they are quite strong on the hybrid side and the CNG side. So I think that demand is yet to hybrid demand is yet to pick up. CNG is doing good, but overall on the small car segment, that is not performing well, and that is contributing about 39-40% of their total volumes. So a big dent is coming from that front. Also the SUVs, the growth that we had seen last year is slightly getting moderated, so that being one of the major segments for Maruti with their model pipeline and existing models, that is also another challenge for them. So on and on, I would say that it's not a great set of numbers from Maruti this time.
Yeah, not a great set of numbers. And do you think, maybe the subduedness that we're seeing, passenger vehicles facing a bit of a, glitch right now, do you think that would lead to some bit of a downgrade or EPS cuts, at least for Maruti as of now, given that the numbers are not anything exciting?
I think so, because there is some pressure in the urban markets. There is a growth on the rural front, but there is a lot of pressure on the urban markets at this point in time. And if the margin performance, we'll be waiting for the commentary and getting an outlook on the overall industry going forward in the second half and FY26 as well. So based on that as well, I think markets will be revisiting their numbers, and maybe some downgrades is possible.
Okay, some downgrades may be possible. And Ashwin, just a last word. I want to understand that, could we expect similar trends or numbers coming in from other passenger vehicle companies, or maybe Maruti because they have less of these EV options right now?
I think for companies like Tata Motors, we can see some similar kind of trend in the domestic markets. Also, JLR is not doing that, fantastically great. So, for Tata Motors, we can see, and also on the commercial vehicle side, where they are the market leader, there is also, still a negative territory they are into. So, I think for Tata Motors, at least, we may see these kind of numbers. But for Mahindra, maybe we can see slightly better numbers, considering their strong dependence on the UV portfolio, which is still doing better, not as great as it was doing earlier, but still there is a lot of growth over there. So maybe like for Mahindra, and also for on the tractors front, we may see some sort of uptick going forward. Maybe this quarter we may not see, but going forward on good monsoons that we have seen this year. So maybe going forward, Mahindra's numbers in this quarter also, we may see better numbers from them, and going forward they'll be better placed than the other two.
Sure. Thank you so much, Ashwin, as well as Prakash, for joining in with us for a quick take in terms of the Maruti numbers. But let's get in more internals in terms of the Maruti numbers as well. Sudarshan is joining in with us to give us a breakdown. While numbers have been a miss, Sudarshan, what are the internals looking like?
So following the trends of the sector, another company has reported a weak set of earnings. Maruti's Q2 earnings are below estimates. Profit has missed estimates by almost 18%. Revenue has missed estimate by almost 6 to 7%. Just if you talk about the numbers, profit is down 17%, revenue is flat, EBITDA has fallen 8%, margin has come in below 12% after like a few quarters. So overall numbers are below estimates as well as down year-on-year. But now the question is why the numbers have come below estimate. First, low volume. Volume is flat year on year, and there's a minor jump on a sequential basis. Even if you see realizations, it's flat year on year, and on sequential basis, again, it's down. And these numbers have come in below estimate despite seeing a minor improvement in the gross margin. But more importantly, more than these numbers, what management says about the festive demand, that's what people will be wanting to know, because that's the reason that all the auto companies in the last few months, first Bajaj Auto, TVS, last month when they released the numbers, they were talking about the first half of the festive season, where Bajaj Auto had talked about the demand growth was in the range of 1 to 2%. Then after the TVS Motor came out and said that demand has made a minor improvement and it was in the range of 4 to 5%. So now all the eyes would be on Maruti Suzuki. What do they say about the demand? Because that would be the main focus.
Absolutely, that's going to be the main focus in terms of commentary. Thank you so much for that, Sudarshan. But with that, we are absolutely out of time on this edition of Business Lunch, leaving Maruti with a decline of 6% as of now. Thanks so much for tuning in.
At these times on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC-TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC-TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes.
Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me is Vivek Iyer. Well, substantial recovery is what we have seen from the lows, and that's of course courtesy what's happening in the PSU banking space right now. After Canara Bank's numbers, there's been a surge in SBI as well in terms of stock price. Around 136 points from the lows of the day, and the banking index that continues to do well.
Well, as you mentioned in the screen, right on top of you mentions the kind of outperformance the Nifty Bank is seeing. It's up in the green, up almost 1%. And when you're talking about the rest of the indices, they are still trailing in the red, but quite a significant recovery from the day's lowest point. But we have quite a lot packed and on the show. So let's move to the first management. Intellect Design Arena is the first management on the show. Company reported a disappointing set of Q2 numbers. Revenue and EBITDA margin came in lower. We have Arun Jain, the chairman and managing director of Intellect Design Arena, with us. Good afternoon, Mr. Jain. Thank you so much for joining us. Slightly disappointing quarter against what the street was anticipating. You are guiding for a 700 crore quarterly run rate. So could you give us a sense of what is giving you the visibility to go ahead and reiterate this particular quarterly run rate?
Yeah, so thank you for calling me. And we discussed with you earlier, we launched eMAG.ai, the first principle thinking based simplification of banking. So a lot of Europe and America is infested with the fourth generation of technology and legacy technology, which is putting their cost structures much, much higher than the Asian technology cost structures. And that's where the major issues are emerging, and there's a big opportunity for them to replace it. But they cannot replace it. It's so embedded there. So we come out with a first principle thinking called Event Microservices, API, Cloud, Headless, and AI-based platform, which is driving the change. So we are currently working in 10 different large deals in Europe and Americas, because the point is the value of the deal for the company to sustainable. We shifted our focus to Europe substantially in last 18 months. And that has, but the sales cycle time in Europe and America is close to 18 to 24 months. And because we had to cross almost 5 different bridges to win the deal, to get the contracting done. So in this quarter also, we have one contracting done on first week of October, which was not able to be accounted in a whole last quarter. So quarterly numbers are not good, but all of us with these 5 bridges and around 10 deals are in GTB business, which we are contesting for next 6 months, 5 deals in GCB business and 3 deals in AI business. These 18 deals are of multi-million-dollar size, which will giving us a confidence to drive 700 crore run rate maybe 3 quarters away from now.
Got it. So that defines why you are guiding for a 700 crore quarterly run rate in the second half. Mr. Jain, season's greetings to you and everyone at the company. I wanted to also understand you had a target of revenue growth of 15 to 20%, EBITDA margins of 30%. If that is not happening in FY25, do you think FY26 onwards you'll get to that number?
We'll be looking 25 plus in FY26, definitely. So if luck favors us, it can be higher, but 25% is our focus for the next year.
And 26. Margins at 30%?
EBITDA margin of 25% and growth of 15%. Okay. 15 and 20, much better.
Mr. Jain, let's talk about the annuity part of the business. The AMC as well as the SaaS, they contribute close to 40% of your total revenues. You've also mentioned earlier you want to increase it as a part of your total revenue stream. What kind of visibility are you there, and what are the targets you've set for yourself in FY25 and FY26?
I think these numbers will not shift substantially right now. This AMC and ARR runs over the 3-year period. So when you look at 3-year period, they will jump to 5-7%, and those numbers will drive the big change in the 5-year investor perspective or 3-year investor perspective. Year on year, these numbers increase by 1%, 1.5%, 2%. That is the kind of a nature it is. So we were around. These numbers were close to 18% when we started 7-8 years back. Now it comes to 40%. It should be 50% plus in next 3 to 5 years.
Okay. So Mr. Jain,
comes like Oracle today enjoy a lot of benefit of these numbers, which drives the major profitability for them. And these numbers were created during the early phase of 2010 to 2015, which is driving significant profit for Oracle.
Okay. All right, Mr. Jain, thank you so much for joining in today and giving us all those details of what happened in the quarter and most importantly, the outlook going forward. It was a pleasure speaking with you.
Thank you.
Okay, all right. With that, we'll do one thing. We'll slip into a break. But before that, as CNBC-TV18 celebrates 25 years of excellence, we invite you to the most anticipated event of the year, the CNBC-TV18 Global Leadership Summit, bringing together visionary policy makers like Finance Minister Nirmala Sitharaman, RBI Governor Shaktikanta Das, industry leaders like HSBC India's Hitendra Dave, Kotak Mahindra Bank's Uday Kotak, and trailblazing startup founders. This is where the roadmap for India's next 25 years of growth and global leadership will be charted. You do not want to miss this.
The business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
For next 6 months, the semi-urban and rural to have a better, stronger demand. We feel that there will be further improvement in our credit cost. We always have guided around 2. We should be able to maintain the current level or a little below that. And if you look at our gross take 3, that also has been coming down, both gross and net, from 5.39 to 5.32. There is a scope for further improvement and we'll definitely work on it.
Investing.
Welcome back. Still tuned in to Midcap Radar. Supriya Life Sciences, that's the next management on the show. Company reported a strong set of Q2 numbers. EBITDA margins and revenues came in healthy. The growth was also very strong. The stock is high by 7% as we speak. To discuss this and more, we have Saloni Wagh, the MD of Supriya Life Sciences, joining in now. Saloni, good afternoon. Festive greetings to you and everyone at Supriya Life Sciences. It's been a strong set for you this quarter. The revenue growth in first half is 33%. It's been much better than the guidance that you'd given earlier of 22 to 23%. Margins at 39%. Will you be able to do better than your guidance in terms of revenue growth this year? And what is the margin number you're looking at?
So yes, definitely in terms of revenue, we have always said that we are going to grow upwards of 22% year on year. And that's the kind of similar trend I would also like to, give moving forward, that you will see good revenue growth happening in the second half of the year as well. As far as margins are concerned, initially we had given a guidance of 28 to 30%. However, we have done much better than that. But margin quarter on quarter is a pure function of the product mix and the geographic mix. So we expect a slight dilution in the margin in the next 2 quarters. However, I would like to say here that in terms of the absolute EBITDA and absolute PAT, this is going to be our best year so far.
Okay, Saloni, just to reiterate those numbers, H1 revenue growth was 33%. You're saying that at this point of time, you're continuing to maintain your revenue growth guidance of around 22 to 23%. That implies that there could be a slight moderation as far as revenues are concerned in the second half. And EBITDA margin, as far as H1 was concerned, was close to 45%. Second half, where will EBITDA margin come to?
So for H1, the EBITDA margins are actually closer to 40%, not 45%. In the second half of the year, what will happen is we are launching some of our new products in Q3 and Q4. And when you launch a new product, typically they will get traction first in the semi-regulated markets where the margins would not be as high as in the regulated markets. So that's one of the reasons why we are expecting a slight margin dilution. We are expecting for the full year, we would be somewhere between that 32 to 34% for the annualized basis. However, the margin, the EBITDA and the PAT in absolute terms would be the highest, what we have done so far.
Okay, all right. So the margin calculation would suggest that it's lower, but the absolute number would be one of the highest that you've seen in FY25. Saloni, some of the top markets for the company are Europe, Latin America. Can you give us a sense of how exports did this year, this quarter? What was the growth? And we've been talking about Red Sea issues, freight issues. Is that something which is impacting exports for you?
So as a company, we have always focused on exports. If you look at our revenue today also, almost 83% of the total revenue is coming in from exports. If you compare that with the last quarter, it was about 81%. So there also we have seen growth in exports. In this 83%, also over 50% for us is coming from the more regulated markets. Which has been our focus. Definitely Latin American markets have contributed really well for this quarter's number. It has gone up almost from 9% last quarter to almost 19% this quarter, which we have been guiding, in our past commentary as well, that it is picking up, the business is picking up in Brazil and those other markets post the registration. So we expect a similar kind of trend moving forward, that sales will be generated more from the regulated markets. Of course, the Red Sea issue has certain impact on the timelines of the shipments. Here and there, we are seeing a lot of delays in imports as well as our export consignments. The freight costs have gone up slightly, but we continue to do our normal course of business. We don't see it as a major impacting, factor for our revenues or our margin moving forward.
Saloni, quickly, we are running short of time. Coming to the CMO, CDMO space, very recently you had announced that, you had won a contract with a European supplier where you would be the sole API supplier. Give us details of that particular contract, what molecule is this? And secondly, you said you're also in talks with 2 other suppliers. So when can that fructify? The earlier contract, you said you could expect to see revenues of close to 60 crores a year. What will be the size of these contracts?
So for the one which we have already signed, it's with a European company called DSM Firmenich. It's an exclusive supply contract of a vitamin product where we'll be their exclusive suppliers from India. And this will add at least 60 crores at its peak. It will take 2 years for it to reach the peak volume. But from FY27, you can see at least 60 crore revenue addition to our top line. We've already started supply to them because it's a vitamin product. It goes in feed, food, and pharma. So we have already started some supply for the feed and food market. But once the regulatory approvals come in for the pharma, you will see the full impact of the sales from this particular contract. It's a 10-year contract. So we have a good visibility of this. And there is always a potential chance that once this project is done, we'll get more such vitamin products from this company. As far as the other two are concerned, we have already signed the initial agreements with them, and you will see the commercial implications from these contracts coming in the next financial years. All in all, we anticipate the CMO to contribute approximately 20% of the revenue by FY27.
Okay. All right, Saloni, always a pleasure speaking with you. Thank you so much for joining in today and giving us all those insights. So that's the word coming in from Supriya Life Sciences. With that, we'll wrap on this edition of Midcap Radar. As we do that, a small programming note. We prepare to ring in the festivities this Diwali. So tune into CNBC-TV18 at 2:30 p.m. today to hear how the biggest of market voices giving their tips on how you can make your portfolio prosper this festive season.
Today with a message of hope for all Americans. With your vote in this election, I will end inflation. I will stop the invasion of criminals coming into our country, and I will bring back the American dream. We need the American dream to come back home. This will be America's new golden age. Going to happen quickly, too, very quickly. Every problem facing us can be solved, but now the fate of our nation is in your hands. Next Tuesday, you have to stand up and you have to tell Kamala Harris that you've done a terrible job, that crooked Joe Biden has done a terrible job. You've destroyed our country. We're not going to take it anymore. Kamala, you're fired. Get out, get out. You're fired. And I'm announcing a new policy today that I will support a tax credit for family caregivers who take care of a parent or a loved one. It's about time that they were recognized, right? They add so much to our country and are never spoken of, ever, 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 but they're going to be spoken of now. Thank you all very much. The United States is now an occupied country, but it will soon be an occupied country no longer. Not going to be happening. Not going to be happening. November 5th, 2024, 9 days from now, will be Liberation Day in America. It's going to be Liberation Day. On day one, I will launch the largest deportation program in American history to get the criminals out.
we are getting very good resolution. On the top of it is KSK Mahanadi, where we are expecting recovery of more than 100% recovery of principal amount we are expecting, because the Swiss challenge process is on, and we are the rates that the bids that have come, it is indicating that our recovery is going to be more than 100%. Second case is that of Sinnar plant at Nasik. There also the initial bids have come and the H1 bid is quite good. And third project is Hiranmaye project. There also the Swiss challenge process has just been completed, and the bids that we have received is quite encouraging.
Hello and welcome in the Mumbai News Center. I'm Sonal Bhutra and you're watching your stocks. Well, a lot of action in the stock market right now. We've seen a big recovery from the lows on the markets. In fact, Nifty is just at the flat line. We're inching closer to the green mark. It's down just 8 points right now. And Sensex has turned green right now, 5 points higher on the Sensex. So the recovery is something that is important to note. And if we talk about the stocks that are leading to this recovery, a lot has to do with the banking space. For instance, HDFC Bank and ICICI Bank, also Kotak Mahindra Bank, all these three stocks are at the day's high, and they are supporting the Nifty a lot from the lows of the day as well. Bank Nifty is up 1.5%. We did get numbers coming in from Canara Bank, and that propelled SBI to move higher as well. So that stock in focus. That stock, as we speak, is up around 3.5%. So very close to the green mark, and that is something that we'll keep tracking for you, whether we actually get into the green and consolidate, or at least maintain that momentum or not. But for now, it's a lot about earnings. It's a lot about market moves. So let's begin the show by focusing on that one big mover from the Nifty pack, and that's Maruti. The company reported a weak set of Q2 earnings. The stock is down 6% as we speak. Sudarshan is joining us with the details and the analysis. Sudarshan.
So Maruti Suzuki has reported earnings which have come in below estimates, and now stock is the top Nifty losers. Now talking about the numbers, profit has come in at rupees 3,069 crore, impacted by indexation benefit withdrawal and LTCD tax in, but still if you factor in those also, the profit number is below estimates. On the revenue front also, it has come in almost 6% below our estimate. EBITDA has come in at a 3-quarter low, and margin has come in below 12%, and it's a 5-quarter low, and it's impacted by flat realization. So total profit is down 17% year on year. Revenue is up or almost flat. It's up 0.4%. EBITDA is down 8%, and margin has come in at 11.9% versus 12.9%. That is down 100 bips year on year. Now, top line is impacted by the low volumes. If you talk about the volumes, it's down 2% year on year, while it's up 4% sequentially. So it tells you that volume has been low, and that's the reason you would have seen that all the other auto companies also have been talking about the demand trend. Like in the first part of the festive season, Bajaj Auto was talking about like 1 to 2% demand growth. TVS had said that demand has made a minor improvement, but still it's much below expectations. So similarly, tracking those things, Maruti Suzuki has come out with the numbers of Q2, which is looking much below our expectations.
Okay, all right. Thank you so much for making sense of those numbers, Sudarshan, and joining us with that take. So Maruti, the biggest loser on the Nifty. By the way, Nifty has surged even further. It's a 26-point gain that we are seeing there. Sensex is up 105 points. Mid-cap just at the flat line, and it could turn into the green as well. So there you go. It's a big surge that we are seeing from the lows, and that's all courtesy Nifty Bank, which is now up almost 900 points. It's a 1.7% gain on the Nifty Bank. That should come up for you on the screen. Look at that. It's a sharp surge in just last couple of trading seconds. So let's talk about banks then. From the broader markets, Federal Bank reported a good set of Q2 numbers. Asset quality came in stable. Company's net profit rose 11% YOY. Earlier, my colleague Lata spoke to Venkatraman Venkateswaran, the Group President and CEO of the bank, to learn more about the company's Q2 performance. Listen into excerpts from that conversation.
On the NIMS, one thing which I should clarify is the reported NIMS is 3.12.
But as you know, in the July quarter, we had to make the change of penal interest to penal charges. So on a like-for-like basis, our NIMS has actually improved from 3.16 to 3.19. But given the fact that penal interest has moved to the charges fee line, the reported NIMS is down. So in terms of guidance for NIMS, we'll continue to operate around the same levels, Lata.
Okay, so what is the guidance on margins therefore?
It will be around the same levels.
Okay.
It also depends on when the rate cut comes through, because that will have a short-term immediate impact, given that 50% of the book is repo linked.
Okay, yeah, but at the moment looks, okay, food inflation is still running high and we may land up with a 6% headline in for the month of October as well. But without the rate cut, you would be around the same level, 3.1
Yeah,
levels.
we should actually probably, maybe 1 or 2 basis point even better as we continue to drive productivity, and we should see around it plus or minus 1 or 2 bits.
Okay, what is the expectation in terms of the impact on P&L and balance sheet if the new LDR rules come? Because I think in the latest quarter, you all raised less deposits and more CDs.
But what the outcome we have to see, there are several measures which were taken. One is the tenor of the changing in tenor, the type of deposits, callable versus non-callable, and in terms of retail deposits versus bulk. Several steps were taken in terms of improving the LCR, and that is already translated into a better LCR for Q2 as compared to Q1. Our average LCR for Q2 was 115, vis-a-vis 112 in Q1. And we will continue to grow that, make sure that the mix is maintained and get our LCR levels improved over the next, in H2. So even if the new LCR guidelines come in the same form as the draft is, we should be ready to operate at the levels which has been set out by our risk management committee.
So what will the LDR be in case there is the new rules come in? What will be the loan deposit ratio you will gun for, and will it have an impact on margins?
No, we are looking at, even if the new rules come in the same form as it is, we are trying to be in around the 110 to 115. That's the range we want to be in. And all efforts are on to make sure that we continue to grow the right deposits, CASA especially. And you would have also seen that our NRSA has started growing quite well after last year's dip. So last 2 quarters, we have seen the NRSA coming back quite nicely with some of the initiatives which we have taken in the GCC market, adding more RMs and a few other relationships. So it is going to translate to better liability growth, which will help us improve our LCRs.
Will there be any impact if the new project finance provisioning rules come? How much of your book is project finance?
No, that one, we had clarified that earlier in one of the interactions. We wouldn't have a major impact because of that, Lata.
Okay. And what is the growth you are guiding for?
The growth guidance, in the beginning of the year, we were around 18-20%. At this stage, we are looking at around high teens, close to around 18% on the growth.
So slightly lowered your,
slightly lower,
probably
because
a couple of percentage points.
Yeah, we are mindful of the headwinds, the operating environment, and we want to calibrate. Because one thing which we follow, which you know quite well, our philosophy of maintaining pristine credit quality, asset quality, and keeping credit cost at certain levels, that won't be compromised.
Okay, all right. That is about federal banks. The banks doing really well today. In fact, the Nifty Bank is up now 1,000 points. That's almost a 2% gain that we are seeing there. The other pocket which is not doing so well is the auto space. And we got Maruti's numbers recently. Tata Motors is down 4%. Ola Electric is one of them. It has fallen around 2% in trade right now. It's trading near today's low, below the IPO price as well. This is after the company has announced another discount scheme. Parikshit is joining us with all the details. Parikshit, tell us more.
Well, while discounts are usually a phenomenon we see during the festive season, we have been seeing Ola introduce a lot of festive schemes. In fact, just this morning we received another statement from the company that Ola Electric has announced a 72-hour rush offer, and Ola customers can avail discounts of up to 25,000 rupees on the S1 portfolio and also avail additional benefits worth up to 30,000 on the scooters. So if you go on the Ola app right now and check for the season offers, you will see you can also get a favorable rate of interest at 7% on a loan that you take for your Ola scooter through select banks, and you can get exchange benefits of 5,000 rupees as well. It is important to note that Ola's market share has been dwindling since April this year. So, for example, their share was something like 39.2% in July. It came down to 31.3% in August and 28% in September. Currently, the company maintains that their market share is up to 34%. They say that they have consolidated market share, recovered market share in October, but we will have to see whether this is the result of the discounting that they have done in the festive season. We have also seen incumbents like Bajaj Auto, Ather Energy, TVS Motor Company all gaining ground, and this has led to Ola's market share shrinking. At one point in time last year, Ola's market share was almost 50%, but it has been coming down since then, as we have seen the likes of TVS and Bajaj Auto significantly ramping up production capacity and retails of their electric scooters.
Okay, all right. Thank you so much, Parikshit, for joining in with those details. So that's about Ola Electric. Let's now get you an exclusive. 7% growth is very much doable in the current fiscal, says the DA Secchi Ajay Seth. In an exclusive conversation with CNBC-TV18 on the sidelines of the World Bank's annual IMF meetings, he added that he expects Q2 to look up with very strong growth in the third and fourth quarter. Listen in.
Certainly. These are the estimates, and not just that RBI has estimated. Even if you look at what the IMF latest estimates are, they're also of the order of about 7% for the current financial year. So these are very much doable numbers, and one should not go by the first quarter number, which came at 6.7%.
Sure.
There are reasons behind it why those numbers were 6.7%, but we see that a very strong growth to come in the third quarter as well as in the fourth quarter. And of course, second quarter numbers will also be expect by 30th November. We'll have those numbers another month's time, and we do expect that overall year growth should be of the order of about 7%.
And sir, the government has so far stuck to its borrowing aim. Would you continue to be the same through the financial year?
See, the overall borrowings, certainly there will not be any additional borrowings. But we did realize that the short term we were, compared with the previous year, we were having more cash balances at the beginning of the year than what we had estimated. Keeping that in mind, that short-term borrowings, we have consciously moderated to some extent. But as far as net borrowings are concerned, that will remain the numbers what was put into the budget.
And so the government has announced a buyback program yet again. What has been the response to that program?
Response has been good. In fact, when we ran that program, or rather on our request, RBI ran that program 3 months back. At that point of time, response was not good. But in this month, there were two installments it was done. And somewhere of the order of about 50,000 crore has been the buyback. But what is the intent of that buyback? Intent of that buyback is to smoothen the repayment profile.
Right.
And as you will be aware that during the pandemic year, the borrowings had to be increased significantly, and those were of varied duration. Some 5 years, 3 years, and even 7 years. So when more and more borrowings of that period come in a single year for repayment, that is not very smooth operation.
Right.
So it is for the purpose of smoothening the repayment profile. That's why this buyback is.
And you can catch this very interesting conversation all day today only on CNBC-TV18.
I accept your nomination.
We're going to win Arizona. We're going to defeat Kamala Harris.
It's the election verdict the world is watching. Will Donald Trump reclaim the White House and become the oldest president to be sworn in?
How will this US election impact global trade and inflation?
Will Kamala Harris make history, becoming the first woman president of the United States of America?
How will the next US president deal with geopolitical volatility? What next for the India-US relationship, the most defining partnership of the 21st century? What's CNBC-TV18 for the best newsmakers and the sharpest analysis?
We bring you all the action live right here on CNBC-TV18.
I've known Michelle for years, and she is an inspiration. I know everybody here knows this. She is a truth teller, and she motivates us to get to work, especially when the stakes are high, because as she reminds us, as my mother taught me, don't just sit around and complain about injustice. And we will win because together, and this is about all of us, we are fighting for America's future.
There are good reasons why so many women and physicians are horrified by what's happened since Donald Trump's justices overturned Roe v. Wade. We're seeing women scrambling across state lines to get the care they need. So please, do not hand our fates over to the likes of Trump, who knows nothing about us. Vote for him is a vote against us, against our health, against our worth. Let me warn you, your rage does not exist in a vacuum. If we don't get this election right, your wife, your daughter, your mother, we as women will become collateral damage to your rage.
आज सुबह हमें जर्मनी के एशिया पैसिफिक बिजनेस जगत की कॉन्फ्रेंस को संबोधित करने का अवसर मिला। मेरे तीसरे कार्यकाल की पहली आईजीसी मीटिंग अभी कुछ देर पहले संपन्न हुई है। अभी हम सीईओ फोरम की बैठक से आ रहे हैं। इसी समय जर्मन नौसेना की शिप गोवा में पोर्ट
Welcome back. You're still tuned into your stocks. Well, markets have surged a little more. The Nifty is up 80 points right now. Reliance Industries is the one that should come up for you on the screen, and that's the one that is lending support apart from the banks that are moving. So there you go. It is at the day's high. The other names are some of these FMCG names. ITC has moved to the high point of the day. We have Tata Consumer as well, which is doing well. So it's a big surge from the lows. We'll have to see whether this momentum sustains or not. For now, Nifty looking good. It's back into the green, and Bank Nifty is the one which is supporting those moves as well. Let's move on now. I expect the rate of change in consumption growth to slow down, says Manish Chakani, the director at Inam Holdings. In conversation with CNBC-TV18, he also emphasized on the need to focus on creating jobs and regulatory reforms. Listen in.
Now the worry is that with the K-shaped recovery, the top end has gone and bought their bigger homes and their bigger cars and their holidays. What happens to the bottom of
Do you think
pyramid?
that is the problem?
It is a problem.
Which
And,
is,
I mean,
no,
clearly,
it's coming into stock view. The top end is maxed out in that sense.
It is in stock view. I don't think you're going to, once you bought a Mercedes, you're going to come back to the market 5 years later. Right? Once you bought a larger home, you're coming back to the market 20 years later. And the pool of those top-end homes in India is still very tiny. Like I call it Australia, Philippines, and Africa. The Australians are kind of happy and done. The Filipinos in the middle 100 million of India are, I guess, too busy making money in the market right now, whether through FNO or SME and so on. But that delayed gratification, but see, the wealth creation has been so large that 85% of this $5.5 trillion is Indian wealth. And not only on that front, on real estate, values are up. Real estate value easily would be 6-7 trillion in India. Gold value is easily $2 trillion in India. So you add all this together, bank deposits are probably a couple of trillion, if not more. So the domestic wealth creation has been large. So it's not like consumption will fall off a cliff. But the rate of change which one saw, that spring which came after COVID, I think...
And which lasted, all till now. I mean,
it's lasted. And I mean, when you see like someone creating like Trend did the value retail segment and they opened up with Zudio and others have followed. That space, which is the Filipino space, I call, has just expanded dramatically. Or when Zomato tells you I can deliver you something at home for a couple of $100, it just expands the whole market. But it's not indefinite. And that's what I find in India, that we get excited when you get these inflows and the mutual fund portfolios go up. But at certain point you hit a stall speed because you've gone through the Australians and you've gone to the topper end of the Filipinos, and you can't keep drawing a straight line on an Excel sheet and say this will continue forever. So the asset allocation mix in favor of financials is for sure, but this rate of consumption growth is not, I think, so easy.
So then maybe we are in for a bit of an earnings slowdown, right?
We are, clearly. No one's been denying that. I don't think anyone in the market...
But a cyclical kind of slowdown which lasts how long? A year?
So you need a second wave of impulses to come out. And like I said, the first impulse wave has come. The second impulse wave, normally you get either a catalyst by way of an important industry or an important commodity going up, which probably will happen with precious metals, gold, silver and all, and there's a lot of it in India. That gives you another wealth effect and maybe another booster over there. But the government part which is lacking is on jobs, regulatory reform, skilling, which they're trying to do with the apprenticeship thing.
Okay, all right. That's the word coming in from Manish Chokhani. By the way, Cipla's numbers at the bottom of your screen. The revenues have grown by 5.5%, 7,051 crore rupees. That's the number. We were working with a poll of 7,041 crore rupees, so that's largely in line with what the street was working with. Net profit is slightly above estimates, so it has come in at 1,300 crore rupees, and that compares with a poll of 1,250 crore rupees. It will be important to watch out for the EBITDA margins, the India business sales, because that is expected to see sales of around 3,000 crore rupees, and there's an expectation that it was expected to grow at high single digits as well. So the margin number will be important to track. Remember, the stock started on the back foot. It was down around 3.5% when we started the trading session. Now it's recovered from those levels. Margin slightly better than estimates. That's what the street seems to like. 26.7%. This compares with 26% on a YOY basis, and this is higher than what the poll was as well. So we're expecting margins to be flat at 26%, but there has been a 70 basis points improvement coming in for Cipla. Now remember, the management has a guidance of around 24.5 to 25.5% on the margin figure. The EBITDA is mildly better, I would say largely in line with estimates at 1885 crore rupees, which compares with the number of 1822 crore rupees. We'll need more details in terms of what the internals look like. What is the sales breakup as well? Because as I said, the India business is expected to do well. 3,000 crore rupees quarterly sales there, expectation of a growth in high single digit, and US sales are expected to come in at $235 million. So these are some of the internals. The management will be conducting a call and a press conference as well. So we'll get all those details there. But on the initial tick, it looks like it's a better margin performance, and that's why we've seen some recovery on the stock from the lows of the day. We'll keep tracking numbers for you, but for now, we'll take your leave on this edition of the show. Stay tuned for Closing Bell to take you through the last hour of trade.
रक्षा और सुरक्षा क्षेत्रों में बढ़ता सहयोग हमारे गहरे आपसी विश्वास का प्रतीक है। क्लासिफाइड इंफॉर्मेशन के एक्सचेंज पर बनी सहमति इस दिशा में एक नया कदम है। आज संपन्न की गई म्यूचुअल लीगल असिस्टेंस ट्रीटी से आतंकवाद और अलगाववादी तत्वों से निपटने में हमारे साझा प्रयास सशक्त होंगे। यूक्रेन और पश्चिम एशिया में चल रहे संघर्ष हम दोनों के लिए चिंता के विषय है। भारत का हमेशा मत रहा है कि युद्ध से समस्याओं का समाधान नहीं हो सकता और शांति की बहाली के लिए भारत हर संभव योगदान देने के लिए तैयार है। एक्सेलेंसी, आपकी भारत यात्रा से हमारी पार्टनरशिप को नई गति, ऊर्जा और उत्साह मिला है। मैं कह सकता हूं कि हमारी पार्टनरशिप में क्लैरिटी है और इसका भविष्य उज्जवल है। जर्मन भाषा में कहूं तो आलेस क्लार, आलेस गुड। बहुत बहुत धन्यवाद। Danke schön.
Germany has become India's most important trading partner in the European Union, and I'm determined to further strengthen and build on this link and cooperation. I have with me, as members of my delegation, a high-level business delegation that has seized the opportunity to engage bilaterally with India's industry and business. Especially in times like these, it is of the utmost importance that India is an anchor of stability in South Asia. The international rules-based order, which has come under massive pressure as a consequence of Russia's attack on Ukraine. Russia's war of aggression against Ukraine affects Germany and India in many ways. No one can close his or her eyes to the conflict and the impact it has on us. Therefore, I approve that India supports a lasting and just peace, and I am pleased about your readiness to make use of the reliable relations that you have developed to all parties to contribute to a political solution of the conflict.
Hang Seng, which is doing well, so that index is up almost 1%.
So jobs get created through the investment into the economy.
This is at 24,624 is the first level that the market needs to, the Nifty needs to take out.
Stronger dollar, higher bond yields, which have moved up very sharply recently.
What do you have? 24,370 on the Nifty. Bank Nifty is starting about 1/3% higher.
And 47,000 is the gross NPA, so 1.40 trillion. It is a gold mine for the Punjab National Bank.
Advances growth is, the engine is chugging along quite well.
150 points gone on the Nifty. The Sensex is down close to about 450 points.
And because of the RBI guidelines, the penal interest has been booked as a penal charges.
Some of our clinical trials for specific issues have been pushed ahead.
Yes, it's an all-time high of gold and silver prices this Dhanteras to you.
Swiggy India will be hitting the street on the 6th of November.
Sharpest strategies, top market trends, unmatched perspectives. The trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal Studios in Mumbai.
Good morning, good afternoon, And I should say good night, but I'll say good afternoon. You're with us here in Closing Bell. Markets are up nicely from the day's lowest point. This is Closing Bell. We're coming to you from the CNBC-TV18 News studios. You know, we're I think at the, not at the day's high, but about 20-30 points off the day's high, which means the Nifty has recovered 200 points from the day's low. The Nifty Bank, that number is close to 900 points. So it's a solid session. Guys, good afternoon.
Hi. Afternoon.
You want to say good morning? You can say good morning.
But it's a solid recovery, right? Like my screen is actually showing a 280-point recovery. The low on the Nifty today was 24,140 and now we're well above 24,400. And just that contribution plate, you know, HDFC Bank, ICICI Bank and State Bank of India, between the three, they're adding about 130 points to the Nifty.
Absolutely.
Absolutely. And, you know, what's happened is the Nifty Bank, with the kind of move that you've seen, has taken out the 20, the 50, as well as the 100 DMA, all of them in a single trading session. Oh. You know, and from the lows that we saw on Friday, from there, you've seen a recovery of close to around 2,000 points on the Nifty Bank. So that's clearly the one that's leading the way. And I think the only sore point in the last 90 minutes or so has been Maruti's numbers, which are disappointing. The stock is down close to around 5.5%. X of that, otherwise there's plenty of good news. The Nifty Bank is firing away. We had that flash on the screen with regard to some kind of stimulus that could come in for the Chinese property market. And the metal index was the other index that was down. That's cut its losses, actually. Stocks like Hindalco, you have Tata Steel as well. They've seen a good recovery from the low point of the day because of that flash that's up for you on the screen. So you had autos and metals that were down. Now, autos is still lower, but you have the metal index. Just pull up the index. That's cut its losses in the last few minutes. So let's see whether or not there is some clarity on Maruti's numbers, which were clearly disappointing. It was a miss on the operational performance.
Absolutely. I think we'll hear from the Maruti management in just a bit from now. The press conference of Bhargav and his team will be addressing the media and perhaps taking questions as well. But I think it's the Nifty Bank which is really charging ahead. And so it's trading above the 20-day moving average, which is 51,507. That is the Bank Nifty. It is now approaching the day's high is almost the 50% retracement of the fall from the all-time high, which is 54,467, to the low that we saw on the 7th of October, which is 50,194. So you take a 50% retracement, that number is 52,330, and the day's high today is 52,280. So just 50 points short of that 50% retracement. But the big one, of course, beyond this, if the market stays above the 20-day, then you're looking at the 61.8% retracement of the fall, which is 52,800. So hopefully, and not long from now, the market will look better and better. You know, I was same time yesterday hoping that maybe by the time you get the institutional flow numbers, things will be looking a little better. No luck. Although, you know, markets are looking better. So once again, we'll see the numbers which come through later today. And if there is a little bit of lower sell number from FIIs, I mean, I think that's the best we can hope for. A flattish kind of number on that front will be absolutely welcome. I think the broader markets are picking up pace as well. It was 1:1 for most part of the day. Look at the NSE advanced decline. But now it's about 1,500 stocks higher and about 1,200 stocks which are lower. This is the NSE, everything which is trading on the NSE. Rima.
Well, today is also the Nifty financial expiry, so keep your eye on that. It typically results in big movements seen in the financial space. But outside of Maruti, even the other automakers are struggling today. So the top three losers are Maruti, that's right, down 6%. But even Tata Motors, Hero MotoCorp under pressure. But the Bharti press conference is currently underway. It just started at 2:30, so let's cut across.
I will be stepping up to the role of Vice Chair and MD for the year, for this year 2025, and eventually as Executive Vice Chair for Bharti Airtel. My job will be focused on 4 areas. 1, to mentor and groom Shashwat so that he's fully ready to lead the India business in 14 months' time. 2nd, I will take on some of the roles that Sunil plays today across the group, specifically driving synergy on digital, procurement, talent, and network strategy. We believe this will add capacity to the group. 3rd, I will spend time scaling some of our incubation and growth areas, digital services, financial services, and data centers. Finally, I'll also provide broader oversight across our overseas operations. In addition to this, I've also agreed to continue as Vice Chair for GSMA as the nominee of Airtel for an additional 2 years, so that latest developments related to technology are assessed and relevant parts brought back to Airtel. I want to clarify that I'm fully committed to the Bharti Group and I have no intention of taking on anything outside the group. Let me now turn to the performance and update on our strategy. A quick background on ESG. In our ongoing commitment towards ESG initiatives, I'll share the latest progress. We solarized over 3,500 sites in the quarter and about 24,800 sites in the last 5 quarters. Our efforts to reduce environmental impact have led to a savings of over 2 million liters of diesel per month over the last 2 years, resulting in approximately 5.8 tons of carbon CO2 emissions eliminated monthly. This has been achieved with the deployment of lithium-ion and valve-regulating lead-acid batteries and other measures. We recently collaborated with Nokia for energy-efficient solutions and practices to Airtel's mobile network and expect to reduce Airtel's carbon emissions by an estimated 143,000 metric tons of CO2 annually.
Well, that's the big news from Bharti Airtel. While Q2 numbers were good, operationally in line, the reason why the stock is under pressure today, down 2%, is because of the leadership transition. Gopal Vittal, who's been instrumental in making Bharti the leader in the Indian telecom space, has announced that he will step down as the CEO and MD. He will take on a wider responsibility in the group as the vice chairperson, and he will handhold the current COO, Mr. Shashwat, who will take on the role of the CEO. But that transition is going to be very smooth and steady because the new CEO, Shashwat, who's the existing COO, takes on the job, the top position, only in January of 2026. So that's 1 year away. And Gopal Vittal clarifying and reaffirming that he is going to be still very much a part of the group. He will be, providing a broad oversight of the overall business. He will not be leaving the group. So yes, there is going to be a leadership transition, but in every group, in every company, you will always have that leadership transition. And this is going to be, spaced out over the next 1 year. But as I said, immediately there is still some skittishness because you don't know how the new CEO is going to perform, considering the exceptional performance showed by Gopal Vittal in navigating in what's been a very difficult time for the entire telecom, business with, with the competitive pressures, the kind of money that the outlay that they've spent on their spectrum, the returns have been poor. But yet, despite that, Gopal Vittal has, helped Bharti, become the top telecom company. So, the street is naturally a bit worried on how the next step is going to be for Bharti Airtel. But purely in terms of numbers, it's another very, very strong quarter. But let's get back to the markets. How should you position yourself in the last 1 hour of trade? We have with us Mitesh Thakkar now joining in. Mitesh, this is a solid recovery and it's all banks. What would you do?
So in fact, I've been advocating to trade on the long side and abandon short side of the trades of the markets, and I think we've had a bounce back. The bounce back actually started on Monday, and then we had the pullback. Today morning, and then we again picked up. So the important thing is that we've kind of held on to 24 150 170 zone, which is what I was looking at. We got a low of 24 140, and the first target of 24 350 has been met. The next comes in around 2400 and 500, which we are now approaching. And beyond that, I'm even looking at a test of 24 750. So I think pretty okay trade with some kind of a long bias, remain slightly positive, and find ideas when the stocks have declined a lot and possibly could give a reversal. In fact, I have Titan on my list, which is corrected from 38.50 to about 32.50, now trying to reverse. So we'll recommend a stop at about 32.30. Look for a first target of 33.70, 33.80 on the upside. And then the other one is a buy on Ultratech Cement with a stop below levels of 11,000 or targets of around 11,250.
Okay, all right. Thanks a lot for that, Mitesh. Well, let's get in Gurmeet Chadda as well, who joins us to help us out with some fundamental analysis. Hi, Gurmeet. Good afternoon. Happy Dhanteras, and thanks a lot for joining in today. Gurmeet, what's your view on Bharti Airtel? I think that's the one that you all have been quite confident on, and I think you all have been building a position as well. What's the view with this bit of a change in the leadership?
I think the results were, slightly better than estimates. I think it's, as you rightly said, with Mr. Vittal moving out, and he's been, has been a great role in how Bharti has turned around, I would say, in last 3 years as far as, stock performance goes. If you see, they are now actually generating 35,000-40,000 crores of cash flows, and the capex as well as the, the regulatory payments are about 22-23, which means, you have 15,000-20,000 crores of free cash flow. Industry leading ARPU, mobility business continues to do well quarter on quarter.
and the churn was also less despite slight tariff hikes. I think I'm interested in this restructuring plan they have from April 2025, where they are basically now splitting the entertainment business into two. One is connected homes, which is your broadband and other stuff, and then you have DTH. I think this will sharpen the focus. My personal view is broadband could be the next growth driver. I think we probably need a recharge or a Geo kind of a moment there, because number of households who take broadband are just 2 crores versus a target TAM of about 20 to 23 crore households, because the tariffs are still high. So I think that could be a big growth lever. And I think entire digital portfolio, other than mobility, I think will do well. So Bharti, we are still very constructive and adding on tips. And I think fact that Mr. Bill still stays with Bharti and not really moving to competition, and the new CEO coming in, I think should take care of a smooth transition in my
Gurmeet, just coming back to you about Maruti management is speaking on the numbers. Let's cut across.
Adding on, normally we expect to start production during the financial year, and we are at the stage of finalizing the next site where we are going to expand. I can't yet disclose to you where that site is, but we would be able to do that fairly soon, I hope, once we have all the deal finalized with the concerned state government. I think those are all the comments I want to make at this stage. We'll leave it open for questions now. So thank you very much. And I am now open, and the rest of my team is open for questions, unless anyone, Takuchi-san or anybody, wants to add anything to the remarks which I've made.
Thank you, Bhargav-san. I think it's quite well illustrated our current situation. So I think we can straight go to the Q&A session.
Okay, thank you.
Okay, sir. Thank you so much. Sir, our first question is from Leshamba-san from PTI. I request Leshamba-san to kindly go ahead and ask his question.
Good afternoon, sir. Thank you for this opportunity. Sir, I was looking at the wholesale numbers. Q2 it was slightly down and H1 also slightly down. But you said the retails are doing in the festive season. But overall, if we look at it, do you think that in the second half of the year you can catch up so that you can look at around 3 to 4%?
I would very carefully request you, please don't look at wholesale numbers. The performance of the car industry and the market is determined by the retail numbers, not by the wholesale numbers. We had a situation in the last month, 2 months, where industry as a whole had very large inventories available. Our dealers also had well over 30 days inventories. We have been systematically planning production to reduce the production to suit the market requirements and bring down inventories. We have actually reduced wholesale dispatches so that inventories can come down. The retail sales have been much higher than the wholesale figures, as you'll see. Our retail sales in this festival period, as I said, the festival period, we take it from the end of Navratri till the end of the till Diwali. Retail sales will be almost 3 lakhs of cars, far higher than the dispatches. And that is what we are doing to make sure that the inventories are at a reasonable level and there's no mismatch in terms of dealers having to hold and pay for large inventories.
Thank you, sir, for that clarification. And just another question about the Maruti Suzuki R&D contribution on the development of ICE vehicles going forward. So Maruti was supposed to take over most of the development programs for the new ICE vehicles, where the EVs are taken over by Suzuki. So I just wanted to understand on that front, how far has it progressed, and in terms of the new lineups that you have announced previously. So what is the update on that?
No, that's a program which is ongoing. There's nothing which is going to happen in a sudden, but gradually more and more work relating to the development of ICE vehicles is happening in India. We are expanding our R&D organization. We have taken over a new building for that, and we have constantly adding to the number of engineers in R&D. It's an ongoing process, Mr. Nishamba. It's not something which will be something sudden or a one-off or something. It's a continuing process.
Thank you, sir. I'll come back in the queue again. Thank you.
Thank you, sir. Thank you, Leshamba-san. Sir, our next question is from Sharmishta Mukherjee from Economic Times. Sharmishta-san, we request you to kindly switch on your video as well if possible.
Hello.
Yes.
Hi,
Yes,
hi,
Sharmishta-san.
Hi, Shana.
hi, sir. How are you?
All good. Carry. I can hear you.
Sir, I wanted to check. A lot of FMCG companies have been saying that there is pressure in urban markets. In that context, like what kind of impact are you seeing in demand for automobiles in rural versus urban markets? And given that, you know, a lot of purchases are made during the festive season, is there any uptick in demand for small cars that you're noticing right now?
As I said, the total retail sales have increased by about 14% compared to last year. I think Partho will give you the breakup between the urban and the rural markets. As far as small cars is concerned, I don't think there is any significant difference which will show that something is revived quickly. But again, that is something which Partho will be able to answer better. Go ahead, Partho.
Sir. Hi, good afternoon, sir, Mr. Shan.
Yes, good afternoon, Partho-san.
Yeah. So as I would like to share that rural market is doing pretty well. In H1, the rural market growth has been to the tune of 8%. Okay. But urban actually, as you rightly pointed out, there were reasons for it due to the elections. H1 was really bad, and then that monsoon which came, that also created a problem. So urban is under pressure. It was minus 2%. But rural, there was a very good traction. And as Chairman sir rightly said that this festival season, we are having a very good traction. We are going to sell most of the vehicles. Our network stock is going to come down. In smaller cars, we are seeing a good traction in the WagonR actually. Okay. So if you go to the market today, you won't find the WagonR so easily available. But yes, there are some models in which you can get the vehicle in the market. So we are seeing a good traction across all the variants.
Okay. Okay. Sir, and we have been seeing in the industry, we have been seeing a high level of discounts, and this had started since festive last year and it's gone on increasing. Now that with the festive season, some amount of inventory will come down in the channel. Can we expect similar levels of discount to continue in future, or do you see that tapering off?
I think
discounts are a function of the market condition and of what the company itself does in terms of scheduling its production to better suit the market requirements. If you create large inventories, you will have to give more discounts to clear them. If you get your inventories down to much more reasonable levels, the pressure to give discounts is not the same. So it'll vary from company to company. It may vary from market to market. But overall, I do not think that in the coming months, in the case of Maruti, our discount levels will be higher than what we've been giving so far, because we have better aligned our production with the market requirements.
Okay. Okay. Right, sir. Thank you so much, sir.
Thank you.
Thank you, Sharmishta-san. Thank you, sir. Sir, our next question is from Yatin Mota from CNBC. Yatin-san, please go ahead.
Good afternoon, Yatin Mota from CNBC Awaz. Sir, I just wanted to know the overall, things on the ground as to has the discounting, increased, because there were earlier news reports that, a lot of auto dealers are having higher inventories. Obviously, you said that post the festive season, the inventory levels are expected to come down. But has the discounted, increased? And in the presentation, I was looking at the promotional cost being higher for the quarter. So are they abnormally higher for the quarter, or is it like a normalized number?
No, I've just explained what has been happening about inventories and retail sales. And certainly the discounts in the last quarter were higher because inventories were higher. But as we have just said, retail sales in this festival period have been very good. They've increased by 14%. Our wholesale has actually not increased. It's gone down by, about 4%. And as a result, the inventory levels have come down sharply. So we don't have that same pressure now of high inventories as we had at the beginning of the quarter. So that itself will govern what happens in terms of discounts and promotions and things.
Right, sir. And has the discounting gone up, if somebody can help from the management?
Which discounting has gone up? From when? I just told you that as inventories come down, discounting also comes down.
Okay. Thank you.
Thank you, sir. Thank you, Yatin-san. Sir, our next question is from Pankaj Dowal-san from Times of India. Pankaj-san, could you also switch on your video, please?
Sorry, I'm joining you from a car, sir. First of all, wishing you all a happy Diwali.
Right, that's the Maruti management. Pretty confident and positive commentary. So 3 lakh units, 14% growth on the festive season, and no real reason why discounting should be higher than before from Maruti's side. In the small car portfolio, it's not really seeing a big recovery, but some models are doing well. Wagon-R, one of the gentlemen from Maruti said you can't really find Wagon-R that easily in showrooms. I mean, implication being that it's doing very well from the small car portfolio. So stocks recovered a full 3% from the day's lowest point. It was around 6%. And then look at what's happened now. So about 11,165 or so where we are trading at. Gurmeet is, of course, been waiting by. Gurmeet, thanks for the patience and good to see you in the festive attire. Thank you very much and season's greetings. So Maruti, if you want to take a shot at, please go ahead. But my question is, markets lots of stocks have corrected between 20 and 40%. Anything you've picked up, anything which looks interesting, has looked interesting or still is? Yeah.
So one is since we are on the auto, I think Tata Motors has corrected, Prashant, more than 30% from 1200 levels to almost 850 now. And I've been speaking to, obviously India JLR is not considered a big part, but I have clients who have agency for a lot of these OEMs. I think it's picking up now. It was a little slow in September, and inventory buildup happened. Plus, we saw margin pressure. The global commentary is that EV seeing moderation. There was news of Volkswagen and some German car makers, shutting down some plants. So I think it's been a bit of overall negative. So we are finding some bargains now in likes of, let's say, KPIT, which is again mostly auto embedded software. OEMs like Tata Motors, some of the ancillaries there. We've been adding banks. If you remember our last discussion, we were very constructive on Federal Bank. I think now you're seeing ROAs inching up gradually. And with the money coming, I think the deposit will also streamline because that's where, Federal Bank has been lagging some of the private banking peers. So if they can get the names up, get a little more granular on liability side, all those numbers will catch up. And net interest income was very impressive this quarter. So, and I think the stock still is 1.2, 1.3 times book. So we're adding some financials, use some of the weakness to add into some broking names when there was a lot of negative news on the derivative contracts coming down. And we are in general adding, buying on dips. Our strategy has been, bull market corrections are sharp. And I think the market has held well. I mean, you look at the kind of selling which has happened, I think the markets have really held well. Probably this correction has brought some sanity back, which a lot of us wanted as portfolio managers.
Okay, I think just coming back to you, but I think Parikshit is asking sort of the management of Maruti a question. I don't know if we have the feed on and we can sort of cut across to it. Okay, I think we'll go back to that in a bit from now. But why don't we take a quick commercial break? Gurmeet, thanks for that. We'll come back to you with more questions in just a bit from now. 24,450, which means we're up a full 110 points on the index at this stage. Stay with us. Jigar Mistry of Boyne Capital will also be with us. We're at the day's highest point now as we approach the last 30 minutes of trade.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC.
Okay, welcome back. You got markets up 114. So, well, we're going and going how? Nicely and almost a trending kind of recovery from the day's lowest point. Gurmeet, of course, is with us, but Jigar Mistry is also joining us from Boyne Capital. Jigar, good afternoon. Good to have you as well. And Gurmeet, thanks for waiting. Jigar, same question to you, what I asked Gurmeet. In this, 8-9% pullback from the highs, what has started to look attractive and what have you bought, if you can share with us?
Yes, good afternoon, Prashant. Season's greetings to you and your team. In the pullback, I think, I don't think, Prashant, we have pulled back enough yet. The last time we were discussing, we said that essentially over the past few months, the feeling has been that, this 30-40% annualized returns has become the norm. It's the new reality. If I take a slightly longer term period, say a 5-year or a 10-year rolling return, the average might surprise you. For the Nifty, the earnings growth has been 12% and index growth has been 14%. For the small cap, those respective numbers are 10 and 12%. The past 5 years, index growth has been 22% and it's been even stronger over the past 2 years. 50% of the total mutual fund investors have come only in the past 4 years. So post-COVID, and they've not really seen what a 20% sort of drawdown looks like. So essentially, we need to see whether sort of how the behavioral aspects change if we see a drawdown to that effect, number one. Number two, if your earnings per share and share price growth has always been correlated, and given that they have become dislocated over the past 2 years or so, because earnings have not been over the past 1 year, if I look at large caps, earnings growth has been 22%, index growth has been 31%. And for the small caps, those respective numbers are 17 and 50%. This is just before the current fall. So if they've become dislocated, then it stands to reason that either the earnings will go up quite dramatically, or the share prices need to correct for that relationship to be maintained. Now, given the slew of results that we are seeing in this season so far, it doesn't appear like the earnings is going to go up in a big way, which also sort of then implies that there's some correction that might be imminent, more so from a behavioral standpoint, that that proverbial towel has to be thrown in before we start seeing the next leg of growth, in my opinion.
So you're sitting on cash till then, till that, or you continue to invest, Jigar?
Not beyond the point, cash, Prashant, because see, what tends to happen is that the family offices we run money for largely will be managing cash at their end. So we are running a beta of the portfolio that is significantly below 1. Almost 40% of our fund is in BFSI. So those are sort of historically considered a reasonably low beta event. Cash doesn't really, in our opinion, help. Sitting on a large amount of cash, historically, you have had 0.2% of the days driving 60% of the index performance. If you miss the top 10 trading days in 20 years, your returns would have been lower by almost 60%. And missing 25 days, your returns would have been lower by 84%. So cash doesn't really help. Managing the beta of the portfolio certainly does. Post-COVID, we are almost at 1.4 times the beta. A few months back, we are down to 0.6, 0.7.
You said 45% of your portfolio is in BFSI. Any
40.
exposure? 40%. Okay. Any exposure to companies with MFIs where the stress has gone up considerably? Because I remember in the past you talking about Satin Credit Care. So do you own any such stocks, and what would you do with them now?
Not anymore, Rima, because see, these are sort of within the financials. You're looking at number of cycles playing out, right? So you have the sort of at the first end, your interest rate cycles, then NIM cycles, then asset quality cycles, and then the valuation cycle. So as a sector, these are considered cyclicals. Within that, the MFI is sort of the mother of all cycles, right? Because you might remember how SKS, the original sort of the father of MFI in India, from 2000 to 2010, they grew so well. And then in 2011, in the AP crisis, the amount they had to write down was 2 times the combined profitability of those 10 years. So clearly, there are businesses which you buy very cheap and sell cheap. In our opinion, MFI constitutes that. It's been a long time that we have sort of liquidated exposure to all of our MFIs, given that they had run up quite well. So yeah, no longer own any MFI players. What we do own are very large banks, largest sort of PSU bank as well, and the large private sector banks.
Hi, Jigar. Happy Dhanteras and good to see you. And after a while, Jigar, what about these new issues that have come off late? Ola Electric, you have Vare as well. Did you all participate in any of them? Ola Electric, someone who got in on early on, they should have rather booked out. The stock is almost half from the top. Your take?
Hi, Nigel. Happy Dhanteras to you as well. No, we don't sort of own any of them. The sort of, the broad-based thinking going into most initial public offerings is that the people selling have a disproportionate knowledge of the business compared to the people who come in new to buy those. So unless there is a very, very compelling case, which given the markets were when these companies were getting listed, was not really conducive to sort of people like us who would want to see a few years of listed entities history, also want to see, how the managements react when the first signs of trouble arise. No, we were not owning any of those names which you mentioned. I don't think Wari is listed just yet, but no, we're not even in the anchor positions for those names so far.
All right, Jigar, stay with us. Gurmeet, I want to come across to you and ask you, you track this Maruti very, very closely. I know you have gone to the dealers, you have the auto ancillaries, a good track on all of them as well. What's your view on Maruti's numbers? I'm seeing mixed signals there. They're saying they're not too optimistic about demand upswing, but they're also sounding fairly positive in, in various other segments as well. So what is your view on Maruti? And from the pack, what do you like? I think you mentioned Tata Motors, if I'm not mistaken, but what about Maruti?
So, one positive takeaway is that the rural demand is up. They spoke about 8% up. And I think, Nigel, the crop has been very good this time, thanks to good monsoon. And I think you will see with state elections, Maharashtra, etc., coming out of the way, more cash transfers by central and state governments in a lot of states. You will see a bit pickup in the rural economy, and that's positive for four-wheelers. So I'm not too perturbed. In fact, I was also speaking to some of my clients who have JLR agencies in Delhi NCR. So on the premium side, there hasn't been much letdown. Just that I think there was a period in between that where there was a lull, and Ganesh Utsav and Onams, etc., didn't really lead to too much uptake. We'll have to see how the festive season goes. So we are more adding ancillaries right now. So we have added Tata Motors, bit of M&M now post the fall, but we've added more likes of KPIT, Uno Minda. Sona had a very good number. Uno Minda is coming up with a new plant on airbags as well. So you got to see who's doing capex and who's contributing to more content per car when it comes to the auto ancillary space. So we are constructive there. I think the demand over 3-5 years is more structural. There will be down periods, and mind you, the Nifty Auto Index was 250% up in a year. Most of these stocks were 30-40 times, most OEMs. So some moderation, I think, is normal. We do not question when stocks go up 2-3 times. We rarely get very perturbed when they fell off, they take off 10-20%.
Gurmeet, you bought KPIT Tech after it fell post numbers?
Yes, I did. In fact, I've been adding that because, as I said, the software cost of the car, which is currently 26%, eventually will be 60%. So you can have some commentaries on, German car makers, etc., and there could be some near-term slowdown in deal conversions. But, I don't think so. I think electrification and, more importantly, CASE, which is connected autonomous shared electric as a platform, which makes the car more smarter, much more connected, capturing a lot of data analytics, it's here to stay. So after your sleep time and your screen time, the third biggest time is the time you spend inside the car.
That's well put, Gurmeet. But by the way, as your Twitter feed, Gurmeet, I was just thinking, if one word has to describe what you post, it has to be equanimity. I mean, don't get too happy and excited when stocks do well, and don't get too perturbed when stocks go down. And I think you've maintained that, and you kind of are, of course, imbibing some of that in the investing style, etc. as well. Jigar, talk about one or two ideas. You're a bottom-up guy, so and we've not talked stocks. There must be stuff which is looking attractive, Jigar. With the disclaimer that it's not a, it's not a. We're not asking viewers to buy. They should do their own research, but share some thoughts.
Right, Prashant. So I think a few businesses that did we discuss last time around. See, pharmaceuticals as a space and allied activities look reasonably good. Within that, I think the business we haven't yet spoken about is a business called Blue Jet. Now, as you said, pinch of salt, fistful of salt. People should view and decide. Our fund is exposed to that. But that's sort of one of those businesses where you have them sort of catering. What they manufacture is contrast media, and they're working with 4 of the top 5 industry players in terms of how they deliver this contrast media. There has been a reasonable expansion sort of that has been planned out, and they're going about executing them fairly well. So that's one sort of business that we have liked, and that's something that we find interesting. Besides that, it's not, from what it appears, it's not, Prashant, something where there's so much like a stock-driven, stock-specific call rather than, what you should own and should not be owning from a sectoral standpoint. So a lot of our time these days has been, going into selecting what sectors we should get positioned into and what are the sectors that you would want to sort of avoid in a big way.
All right. We'll leave it there, and good to get some ideas, Jigar. Thanks for sharing that. With, of course, the disclaimer, as I mentioned. Thank you for joining us, Jigar. Gurmeet, appreciate you being with us here as well. Season's greetings to both of you once again from all of us here at CNBC-TV18. 140 points, so we're actually almost at the day's highest level. We'll take a quick commercial break here. We're going to come back with some more ideas with our experts on the other side. Stay tuned.
We're going to win Arizona. We're going to defeat Kamala Harris.
It's the election verdict the world is watching. Will Donald Trump reclaim the White House and become the oldest president to be sworn in?
How will this US election impact global trade and inflation?
Will Kamala Harris make history, becoming the first woman president of the United States of America?
How will the next US president deal with geopolitical volatility? What next for the India-US relationship, the most defining partnership of the 21st century? What's CNBC-TV18 for the best newsmakers and the sharpest analysis?
We bring you all the action live right here on CNBC-TV18.
And CNBC-TV18.com. CNBC TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most.
Welcome back. Well, the Adani Group stocks that are part of the Nifty, they have actually spiked up. Adani Enterprises, the numbers were flashing for you on the screen, and prima facie, those numbers look quite good. So Adani Enterprises has moved up. Adani Ports as well is now at the high point of the day. And the big boy, Reliance Industries, remember on the day of its numbers, it went down to around 2,600 rupees, which an adjusted price will be around 1,300 rupees. It took some support to there, and from there it's moving up. So when that big boy wakes up, it's always good news. And the other big boy is HDFC Bank that's been taking support at lower levels. So the Nifty now at the high point of the day, the Nifty Bank up a whopping 1,000 points odd. Mitesh Thakkar is back with us. Mitesh, What's the trade? If someone had a long position, book it, sleep easy, take it easy, come back tomorrow and deal with the markets again? Or do you think partially book it and carry some for the next session?
I think my advice would be to carry the positions on the long side. As I said, I think this pullback can still go slightly higher to about 24,750 is my eventual target, given take 51. So I think we'll suggest holding on. A lot of stocks also reversing from lower levels, and some long positions can be explored there. Eicher Motors is something which has given a very good breakout today. So BTST here with the stop at 48.90, and look for a target of roughly around 49.60 or thereabouts. And the other one is a BTST on Vedanta with a stop at about 468.5 for targets of 480.
Thank you very much for that. By the way, Symphony is down close to about 8.5%. The Q2 numbers looked okay. 60% profit jump, more than a 500 basis points margin expansion, but the stock has taken a bit of a tumble. And Tata Tech, which was down nearly 2% as the management sounded cautious about the coming 2 quarters because of US election uncertainty, European OEMs, competition from Chinese EV, Tata Tech has recovered its losses and now is back in the green. The gains are not much, and Ami Organics is a big mover, 12% higher on the back of its numbers. But Federal Bank has also clocked in a good quarter. The gross NPAs have hit a 37-quarter low. Abhishek joins in with the fine print.
Well, it's the first quarter that Mr. Manian has taken over from Mr. Shyam Srinivasan, and looks like Shyam Srinivasan has bowed out on a high. Net interest margin has declined a bit to 3.12 versus 3.16%, and that is on account of the penal interest charges that have impacted by about 5 to 7 basis points on net interest margin. However, asset quality, that's pristine, one of the best that you are seeing in last 9 to 10 years for Federal Bank. Gross NPA ratio has come down to 2.09%. versus 2.11% in the previous quarter. In terms of absolute value, slippages have increased only by rupees 10 crore. So the annualized slippage ratio at about 0.75% is one of the lowest in the industry banking sector, as well as the fact that it's one of the lowest that you are seeing in last 15 quarters for Federal Bank. So operating profit growth is at 18.2% YOY, which is one of the best that you are seeing in last 5 quarters. And sequential, the growth is more than 4% for them. In terms of our poll, the PNL, the NI is largely in line with our poll. However, the PAT is higher by 6 to 7% than our poll. Brokerages remain bullish on the stock. Citi has a buy rating and a target price of 231 per share. They also have a 90 days positive catalyst watch, which is open for Federal Bank as well. Nomura also has a buy rating, target price of 240 per share. And then we have UBS, who has a buy recommendation and a target price of 250 per share on Federal Bank. Back to you.
All right, Abhishek, thank you very much for that. So those are financials in focus. Hoodco numbers, by the way, at the bottom of the screen. Profits are up 50%, revenues are up 35% coming through. Well, let's cut across to our special show from the National Stock Exchange, where the young guns of Dalal Street are talking about markets with our colleagues Mangalam and Surabhi. Listen in.
You identified trend, and when did you decide to, enter? What exactly was the story like?
So Mangalam, we're just looking at every company possible, we don't miss out all 5,000 companies. We don't miss out even one quarterly result. That's the first basic thing that we do. We keep looking and we divide industries, that who's in every industry, who's that player, who's the rock star of that industry. We had pain, and we have a 25 stock portfolio. So there is always 5-7 stocks in my portfolio who are struggling. Like today, I'm struggling in a airline company. I'm cutting some weight, down 20%, but it's okay. I'm buying something else 20% down. Everything is down 20% now. So if you're cutting something, you're also buying something down. You want at any point of time your portfolio to be the best performing companies, and you need visibility. See, I don't have a 10-year visibility. I have maximum 4 to 6 quarters of visibility, and I am only thinking, for me, terminal value is 6-8 quarters. Of course, I think about, because we buy market leaders and beyond, but we think that beyond that rate of
exact opposite to the person on your left.
No, of course. Right. We think long term, short term, medium term, everything. Because if
so he's a sprinter, jumper, and a marathoner. please tell us.
See, that's why we buy a D-Mart. You can have D-Mart for 20 years also. You can have D-Mart for 6 quarters also. But so we keep looking at options and available options, because we have to invest. And Trent. Yeah. We initially bought Trent pre-COVID, to be honest, at 600 rupees.
What did you see there?
that time we were seeing West Side had the highest like-to-like growth.
Okay.
We didn't know Zudio will come.
Yeah.
And then COVID happened. We sold Trent. We lost 20% and we bought some pharma stock.
Okay.
We made money in the pharma stock. I'm telling you the real story. Because we made money we were buying Dr. Lal and Metropolis because we could see tailwinds in Metropolis and Dr. Lal that time in COVID, and we couldn't see when the malls opened.
Yeah.
From 600, we bought Trent again at 1200 after 2-3 years. So we are unemotional towards our investments. We are just thinking that what next is going to have those tailwinds of high growth. We were selling DMart, emotional less. It was my first holding. It was the only stock we've held for 5 years in the fund.
You know, I would like to be on the road with him once, and when there are like those toll booths, there are 5 or 6 of them, I will ensure that his car is the one which goes through that toll booth first, or those airport queues as well, because he's just the one who's...
No, I think that's another very, very important lesson, being emotionless. Not letting your ego get in the way, or your attachment with one stock. Oh, I saw this story and I will see it through the end. So I think having a little bit of disengagement at a level, I think is also important. So we've taken that point on board. Now I want to come to Ravi. And Ravi, you made a really important point, right? So today, like if you ask me, it's a no-brainer. Of course, you have to be in stocks which are in renewables. Obviously, you have to play energy transition. Of course, you want to be in the semiconductor space. But that doesn't make me Ravi Dharamshi, right? The magic is in picking the companies within that space. So then explain to us, how do you do it? I mean, whether it was HAL in defense, whether you picked Hitachi, I think, to play this whole energy space. What goes into the tier 2, tier 3 filtering?
No, so let me just spend a couple of minutes explaining why energy transition. It's not like energy transition came about today. Humans have been going from one source of energy to another source of energy over a period of time. But this is the first time that we are moving away from all our sources of energy have been natural till now. We dig ground or we burn gas or whatever it is. But this is the first time that we are moving towards a manufactured source. Essentially, energy will be, of course, we are catching the energy from either from wind or from solar. But the industry that will benefit is the manufacturing industry over there. In 2019, we had COP 27, where till then there was no consensus in the world regarding whether there is global warming, what should we do about it. But that was the point at which 90% of the world agreed that we need to restrict the increase in temperatures to less than 1.5 degree by 2050. Now, if that is going to be the case, and finally we had regulators, governments, non-government, commercial enterprises, individuals, everyone aligned to the fact that we need to bring the greenhouse gas emissions down. Now, this is what gave the impetus, and this was the trigger that, okay, now a lot of money is going to flow in this direction. Which are the businesses that can benefit out of it? And if I were to lay out the energy transition, it's energy generation, transmission, and consumption. And on top of that, of course, there are finances and new technology that will develop. But in energy, there are sources like solar, wind, nuclear, biofuel. At the end, in the consumption, there is electrification of everything. We talk about EVs as a trend, but EVs, there is two-wheelers, CVs, three-wheelers, buses. There are many segments. In the power transmission, of course, it's like if you're going to start selling cars, you need to first have the roads in place. Unless we have our power transmission in place, we are not going to be able to transition away from fossil fuels, which is a much more stable source of energy, to renewables, which is far more variable and infrequent.
Sure.
So we need to have power transmission, which is a grid which is far more flexible, efficient, much larger and effective. So this is how we looked at the entire space. And when you saw that, what we realized is, as I mentioned, that a trend can play out over a 20-30 year period, but which is the immediate sector that will benefit. Correct. And that's where the power transmission fits in. That we need to build this power grids in the next 7, 8, 10 years.
From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest-running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
For next 6 months, the semi-urban and rural to have a better, stronger demand. We feel that there will be further improvement in our credit cost. We always have guided around 2. We should be able to maintain the current level or a little below that. And if you look at our gross take 3, that also has been coming down, both gross and net, from 5.39 to 5.32. There is a scope for further improvement and we'll definitely work on it.
Welcome back. Now it's more than 100 points up on the Nifty. Will we make a dash towards 24,500? Perhaps if we had a little more time. We have 3.5 minutes to go, but trend is now picking up. That's up nearly 2%. Reliance Industries is also back in the green, and that's up 0.5%. And your top Nifty gainer is State Bank of India. That's higher by 5%. Jay Bala is now with us of cashthechaos.com. Jay, 2 good days on the trot.
Yeah, hi Rima. This changes nothing for me. Just the character of the next decline is that one in question. Whether the market stops under 24,700 or comes to about 25,300, it won't change. That's the possibility for the market. But further declines are due for the market, and I remain unchanged. That what I said on the 1st of October, the markets are heading towards 21,280, and it's just how much the current bounce is going to happen. What's happened today? There's a structural breakdown for the bull market leaders, Nifty FMCG index and Nifty Auto index. So the momentum is saying that further lows are due for both these indices, and some of the mainline stocks like ITC, HUL, Britannia, Nestle, they're all pointing to a deep correction that's underway.
So the Nifty level is 21,000.
Yeah, 21,000. The June 4th low, 21,280.
21,280. What about the Nifty Bank? That could spoil the plan, Jay. It's suddenly coming back to life. It's heading into the resistance zone. I mean, in 2 sessions, it's up 1,600 points. Where is that one headed?
Yeah, the Nifty Bank is doing exactly what it should do. It's the complacency that's in the market is engendered so much that Nifty Bank is doing or furthering that. It could bounce to somewhere close to 24,475, maybe 52,475 to 52,950. and probably bounce back to that and then begin the next leg of the decline. So it's doing what is expected of the market. See, far too many times the markets have had very short dips and it's got a very quick bounce back. And this is slightly different because of the structural breakdown.
Any stocks you want to give us, Jay, for today? A couple of stocks, I believe. Silver is going up. There's only one way to play it, which is Hindustan Zinc. And since it's Diwali, a lot of sweets being consumed, you're going with the sugar stock. Tell us about the levels on both of them.
Yeah, that's right. Hindustan Zinc is probably a silver lining for in this dark cloud. It's got a very medium-term uptrend possibly going on, but you need to keep it reasonably small because we are in an overall corrective environment. This could outperform, but you need to be very careful. The levels are about 880 in the medium term, and the short term is about, I expect to in the short term to reach about 678 and then pull back and then proceed to the medium term. The stop loss is about 490. And Balram Puccini is again a play on sugar futures. Sugar futures decline of October is looking corrective. The similar structure is presented in Balram Puccini. So I'm anticipating sugar 11 futures of US to touch about 24 cents. I anticipate Balram Puccini to be the beneficiary of that. I'm anticipating it to touch somewhere about 700. Keep a stop about 590.
All right, Jay, stay with us. We're going to come back to you in just a bit. So 0.5% higher on the Nifty, about 100 plus points. 300 off the lows for the Nifty. The Nifty Bank ending 2% in the green. So that's a strong showing for the Nifty Bank. And guess what? It's the PSU Bank Index, which really shone through. The PSU Bank Index is up 3.5% today. It was up 4% yesterday. So that's in 2 sessions, 7.5% coming through on the PSU Bank Index. Earnings, I think, without a doubt, have been pretty strong, unlike private financials where they've been, much more mixed. The CPSE index was up about 1.6%. Private banks also not bad. I mean, 1.5% higher. Real estate 1.3, 1.4. Names like Loda, etc., came back after seeing a bit of a drubbing in the recent past. On the downside, autos, of course, clear cut. The top 3 Nifty losers are Hero, Tata Motors, and Maruti. So that says it all. Pharma and healthcare were the other 2 sectors which were under pressure, 1.25% and just under 1% respectively.
Well, SBI is your top gainer, 5% higher, and ICICI Bank has put on more than 6% in a span of 2 trading sessions. Life insurance companies like HDFC Life, SBI Life have had a good day today, 3.5% higher. BEL clocking in some good gains. Heavyweights like L&T also contributing on the way up. On the way down, outside of auto, some pharma names were on the back foot. So Dr. Reddy's, Sun Pharma and Cipla were down 1.5% to 2%. But it's a pretty good day for the mid-cap index too. The index ending up 1%.
Well, that's right. Both of you all are going to take markets forward ahead. I'm going to be heading to buy my 2 grams of gold since it's a Dante Rest. Well,
Nigel has become, in the morning, you said 1.
Yeah, 1, but 2 kids. 2 kids now. One will have to give the daughter-in-law, one the daughter later on in life. So now I'll have to increase it to 2.
I think by evening it'll get to 3.
No.
One for the wife.
No, BB doesn't get.
All right, you enjoy, Nigel, and we'll take you through markets forward. So we'll take that break. Stay with us. More coming up on the other side.
today with a message of hope for all Americans. With your vote in this election, I will end inflation. I will stop the invasion of criminals coming into our country. And I will bring back the American dream. We need the American dream to come back home. This will be America's new golden age. It's going to happen quickly, too, very quickly. Every problem facing us can be solved, but now the fate of our nation is in your hands. Next Tuesday, you have to stand up and you have to tell Kamala Harris that you've done a terrible job, that crooked Joe Biden has done a terrible job. You've destroyed our country. We're not going to take it anymore. Kamala, you're fired. Get out, get out. You're fired. And I'm announcing a new policy today that I will support a tax credit for family caregivers who take care of a parent or a loved one. It's about time that they were recognized, right? They add so much to our country.
Markets recover in afternoon session to end near the day's high. Big banks, SBI, ICICI Bank, HDFC Bank lead the Nifty gains. Real estate PSUs are big sectoral winners. Autos, healthcare and IT lag.
Maruti's second quarter performance disappoints Street, but the management commentary on festive demand is positive. The Street cheers Federal Bank's earnings as slippages dip to a 15-quarter low and asset quality improves. Bharti Airtel reports a better than expected second quarter, but leadership change announcement weighs on the stock.
The Secretary of Department of Economic Affairs tells CNBC-TV18 in an exclusive interview that 7% growth in FY25 is very doable with strong growth expected in the second half of the year. He also rules out any additional government borrowing this fiscal.
Hello and welcome to a fresh new edition of Markets Forward, your go-to program where we aim to get you everything you need to know as you look forward to the next trading session. If you're joining us for the first time here on the channel, from all of us here, wishing you, your families a very happy Dhanteras. I'm Prashant. With me, my colleague Reema Tendulkar. Reema, hi.
Hi, the last 2 days in the markets really felt, had that festive cheer going for themselves.
Oh, yeah, absolutely. And 0.5% today. And banks looking much stronger, 2%. Yeah. So that's actually, I think, the highlight. More than the Nifty, it is the Nifty Bank, which I think really needs to be called out. So the Nifty, by the way, from the day's low was up a solid 300 points. The Nifty Bank was up 1,000 points. I mean, even if you look at the adjusted close, which is not very different because the market was going from strength to strength, you did not see a sell-off or anything of that sort in the last 30 minutes of trade. So 300 and 1,000 respectively from the lows for the Nifty and the Nifty Bank. The Nifty itself was up about 0.5%, day on day. The next resistance comes through about 100 points higher at about 24,567. You've got 567. We left off at about 467 today. So exactly about 100 points away. The Nifty Bank ended above its 20-day moving average. That as of yesterday's close stands at about 51,507. So the 20-day is done. The next target is the 61.8% of the entire decline. The full fall that we've seen from the all-time highs to the recent low, that is at about 52,835. Above that, then you, I think, are just looking at the Bank Nifty potentially reclaiming the earlier highs. Could it be as fast? I think that's the question. Many would be surprised if that is the case. PSU Bank Index, I think that's been the stark outperformer this week, at least, just 2 days now, but 3.6% gains in the PSU Bank Index after yesterday's 4% rally. So for the week already, about an 8% pop coming in on this index. And of course, stocks have done much more and much better as compared to the index itself. We've been running through some of the individual results from the PSU side, and I think it's just earnings-related beats. PNB, for example, the management was with us today, and the numbers are in stark contrast to private financials, where the performance has been very mixed. Very few doing very well, but the bulk of it tepid or even slightly worse off. Rima.
So yesterday, Indian Bank, overnight PNB. Today, Canara Bank's numbers were also very strong, and that's the reason why State Bank of India was one of the big movers today. But on the way down, you had auto stocks sulking. So Maruti came out with a miss in their Q2 numbers. Margins came under pressure. The stock recovered, but still ending down nearly 4%. Tata Motors, Hero MotoCorp giving it company on the way down. And pharma names, Dr. Reddy's, Cipla, Sun Pharma, also on the back foot. But let's tell you what we have for you on our show today. We'll start with the top movers and shakers of the day with Vivek. The stock of the day is Maruti Suzuki, Federal Bank and JSW Infra on the back of their Q2 numbers. We'll get you a quick snapshot. And also we'll delve into the key market events to watch tomorrow. But as always, it's over to the big stock movers of the day. Vivek is at the big wall.
Well, thank you so much for that. What a recovery today that we've seen. Now, talking about the list of stocks that did very well in the session. First up, have a look at Bharat Electronics. Numbers came in day for yesterday. Yesterday evening, the company held an analyst call. Very strong guidance in terms of maintaining number one, the order inflow. The street was worried about that, and even the margins expected to remain quite strong. On the back of that, stock saw quite a bit of recovery, almost 5% higher today. SBI Life, in fact, at the first half of the trading session, the entire insurance pack was buzzing. SBI Life amongst them, almost 3.5% amongst the top gainers in the Nifty pack. When you're talking about from the broader end of the market, have a look at Syrma SGS. The stock actually moved higher, quite significant yesterday. Today up another 15%, and this was on the back of a very strong set of results. Brokerages upgraded the stock. Amongst them was CLSA upgrading the stock to an outperform rating. One stock, a bit of a surprise, JSW Infra. Remember, the management trimmed down the volume guidance to the lower end of the guided band, but the fact that the company actually saw third-party volumes surging better than the own group captive volumes, the stock ended higher by almost 10%. And SBI, one that you mentioned, the PSU banking stocks results so far have been quite good. SBI amongst the top Nifty gainers, almost 5% higher, but quite a few laggards as well. The first stock on the radar, Tata Motors. Clearly underperforming today. A lot of auto stocks, especially in the first half, quite a bit of selling pressure. Tata Motors down over 4%. First Source Solutions yesterday was amongst the top gainers. Today saw quite a bit of profit booking emerge, almost 8% lower. Suzlon, we told you in the morning that the margin band is something that will moderate going forward, down almost 3%. Indegene, a soft Q2 recent listing, the stock corrected quite significantly today as well. And lastly, Dabur, earnings tomorrow. Remember, the update was quite muted. Ahead of that, the stock ended lower by over 3% today.
All right. Thank you very much for that, Vivek. Appreciate it. So was up and down as far as specific stocks are concerned. Jay Bala is with us, and so is Gurmeet Chadda. Gentlemen, good to speak with both of you again. Thanks very much for your time here. Gurmeet, I can tell you, because we spoke with Jay earlier, Jay actually thinks this is exactly how the market should. It's in his framework, this rebound that we are seeing. But his framework is calling for lower levels. So Jay is smiling. I'll come to you, Jay. Gurmeet, what's your sense?
I think we haven't seen a correction for a long time. And I think that's why there's so much noise on social media. I think all of us have been in market for almost 2 decades. And I think virtually every year we've had a 10% correction. It's just that this particular cycle was too long. Even now, I think the domestic flows have cushioned the fall. The fall could have been much, much higher. I mean, $15 billion gone in 2 weeks is one of the highest absolute numbers. Now, even if you index it from COVID levels, when we were, let's say, 2 trillion and now we are, let's say, 5 trillion, the number is as big as the COVID outflow. So I think they weathered it well. And I think some correction in few pockets might still continue, especially in mid and small caps, because that index still is 30 times and the EPS growth will be single digit. But in lots of pockets of large cap, I think there is value. So got to be more focused on what you want to enter at. So let's say Reliance and HDFC, which is 20% of Nifty, technically is at 20,000, 21,000 index. Similarly, if you see Bank Nifty on a price to earning basis today is about 16, 17 times at let's say 52,000. And on a price to book basis, you would have never seen HDFC, Kotak or, most of the bank trade between 2 to 3 times book versus the historical averages. So I don't think so the entire market is expensive. Yes, there are pockets which are expensive, and that is how you got to, we have had a very beta rally. Almost everything went up in last 2 years. And now I think you probably will see some migration to quality, some migration to where there is, I think, earning support. And that's I think is your best hedge. In the near term, I think the bond yield is something I've been making this point. Whenever the 10-year bond yield in US moves up sharply, 40, 50, 60 basis points, it will create EM outflows. And most EMs have seen that. So near term, if that can settle, right, with Trump election, I'm not second guessing in terms of who to win. Post US election, if yields settle, I think in general may be positive for emerging markets.
Jay, but you believe that 10% correction, which hasn't happened so far, is coming. Your target is 21,300. Would you go short at these levels, or do you think just this pullback, rebound that we're seeing can extend itself? Where would you go short?
Yeah, the ideal place to go short is for some more bounce back to come through. But the market has been weaker than I have anticipated. And I would watch 24,700 as one decision point area. And the next one will probably be about 25,300. Because the very, very short term, the markets are deeply oversold. And, if the Dow Jones tonight is probably will have a counter-trend bounce somewhere close to 48,800. And if you look at the MAG 7 stocks, which are on the verge of announcing their results, most of them are pointing to limited upsides and possibly sizable downsides. So, even the global picture is turning. So, not ideal to go short at current levels. The other thing is the Nifty Bank were to make all-time highs. That will be really, really bearish because it's pointing to I am working with a medium-term correction and a return to record highs post the medium-term correction. If Bank Nifty were to go to record highs, that will probably bring about long-term tops. So I don't want to see record highs in the Nifty Bank. So be very careful about it. It's up for reassessment. But, I am anticipating the bull market to continue after a deep correction.
After a deeper correction. All right. Coming back to both of you in just a bit, let's talk about the first stock on our radar, Maruti. Right? The stock was down sharply but recovered from the day's absolute lows. Numbers have come in below street expectations and margins were at a 5-quarter low. The management commentary did help at the margin, as I said, with that recovery from the day's lows. But let's bring in Sudarshan to recap the results themselves. Sudarshan, over to you.
The biggest car maker of the country, Maruti Suzuki, has reported earnings for Q2, that is quarter ending September, and those earnings look largely below estimates. And after the earnings, we saw a sharp fall in the stock. It has fallen up to 6%, but made a huge recovery. It has recovered almost 3% from day's low after management commentary. But first, talking about the numbers, profit was impacted by indexation benefit withdrawal and LTC tax change that was announced in the budget. Revenue was dragged by below than expected volumes. EBITDA has come in at a 3-quarter low. Margin has slipped below 12% and it's at a 5-quarter low, impacted by flat realization and high promotion expense. Talking about some internals, volumes were down 2% year-on-year, while sequentially it was up 4%. Realization, again, it's flat sequentially, but year-on-year it's up more than 2%. Gross margin, though, sees a minor improvement. Now, talking about the commentary that company spoke after the earnings, and commentary regarding the demand was largely positive and it's taken positively by the investor, and that's the reason we saw a huge recovery in the stock. What does company say? It says focus of the investors should be on retail numbers and not the wholesales, and for the festive seasons that till Diwali, company is looking at the retail sales of almost 3 lakh units, resulting in a growth of almost 14%. Also, it has talked about discounts and it believes that it should not be more than the before that company has recorded in the past. And lastly, talking about the inventory, it expects inventory to come down to 30 days by the end of the month. So overall, Q2 earnings were largely below estimates, but commentary related to festive demand might be taken positively by investors.
Thank you for that explanation, Sudarshan. Jay, Maruti, that's nearly 19% off its recent highs.
Momentum says it's got further selling to come through. I anticipate Maruti to bounce back to somewhere about 11,500 and then resume its decline. It looks like a structural breakdown for Maruti Suzuki. I've been bullish on autos, 2-wheelers and 3-wheelers, more than the 4-wheelers. And even Bajaj Auto, where Rajiv Bajaj is anticipating 20,000 to come through in the long term, I think he'll have a better bargain when he waits for about 7,500. So, most of the pivotal auto names, they are undergoing a significant trend shift. I think it's just for the medium term, not for the long term. I expect the long-term bull market to come through. And autos are the barometer of the Indian economy. And the fact that there is a structural breakdown in the auto stocks, it's a big tell.
I mean, look at Hero, for example. High was 6,300. Stocks at about 4,800 now. By the way, we'll get monthly numbers, right, in 2 days. And I think that'll, that for some of them could be really market moving. We'll see, because it'll capture some of this festive season sales, etc. as well. Now, let's talk about the banking, right? Federal Bank was the star performer today, 8% rally. Abhishek is standing by with details. Abhishek, over to you.
Well, with new management at helm, Mr. Manian, this looks like to be a solid set of numbers that have come in for Federal Bank. So net interest margin is a 7-quarter low. They have a one-off over there. It's only declined by 4 basis points versus 10 to 11 basis point decline for other banks as well. Asset quality, that's the highlight of the result. The gross NP ratio is at 37-quarter low of 2.09% versus 2.11% in the previous quarter. In absolute figure, the slippages have increased only by rupees 10 crore on a sequential basis, while many other peers, are facing the heat on stress assets. That is slippages increasing on a sequential basis. So as a result, annualized slippage ratio is at 15-quarter low of 0.75%, which is one of the best in the banking sector per se, versus 0.77% in the previous quarter. Operating profit grew by more than 18% YOY, which is the best in last 5 quarters, and sequential growth was more than 4% quarter on quarter. With reference to the P&L to our poll, the NII was a slight miss. However, the PAT was 6 to 7% ahead of our poll. So Citi has a buy recommendation, target price of 231 per share. They say that there is still an open window for 90 days positive catalyst watch on Federal Bank that they continue to hold. Nomura has a buy recommendation and a target price of 240 per share, while UBS also has a buy recommendation and target price of 250 per share. Back to you.
Okay, Gurmeet, out of financials, you did mention HDFC Bank briefly, but what do you like in the space?
We've been invested in Federal Bank at around 100 levels, Shant. I think the conviction went up with Mr. Manian's appointment. Very good leader, I think. And I think one thing which will add to Federal is his experience in building the deposit base, the liability side, making it more granular. So if you see, for example, this quarter, the deposit growth is around 1% quarter on quarter. The CASA mix has improved. And so has the NR deposit, because Federal Bank is also has very strong presence in South, and now they're obviously increasing the print. So there is asset mix optimization and there is deposit mix optimization, which means the NIMs, which is lower for Federal compared to other private sector peers. If you want to compare them to ICICI, HDFC, where it's around 4 and 4 plus, these guys are around 3.15. So as the deposit base becomes more granular, the NIMs will also improve. Currently, also they are aided by treasury gains, so with leadership change, valuations being 1.2, 1.3 times, this looks good. We've added SBI and Bank of Baroda. That's more tactical because Bank of Baroda was below book. Excellent set of numbers, controlled slippages, and after a muted Q1, they reported slightly better numbers. Even the NII was better. So PSU banks tactically more for valuation. Federal Bank more for long-term and with leadership change. We've seen that what's happened with leadership change to the likes of ICICI and Axis a few years back.
Absolutely. Got that, Gurmeet. Now, JSW Infra was up nearly 10% after reporting a good set of numbers in the second quarter. Since the IPO, stocks not really done very much. Revenues were up 18%. Profits grew about 46%. Vivek is standing by with details. Vivek.
Well, that's right. Very intriguing given the fact that actually when you're talking about the numbers themselves, as you can see on your screen, one thing that clearly stands out is the EBITDA margin. EBITDA margin improvement of over 1,000 basis points is something that's come in very, very strong. Now, when you're talking about the numbers themselves and especially the volumes, cargo handle volumes came in at 27.5 million tons, which is up 16% on a year-on-year basis. The H1 cargo handle is up almost 13% on a year-on-year basis. But in the conference call, the management actually alluded to the fact that most likely as far as FY25 is concerned, the rise in cargo they're expecting only to be in the range of 10%, which is at the lower end of the guided band of 10 to 12%. What's worked for the company this time around is the fact that the third-party volumes, which are non-JSW group volumes, has actually picked up. And now as a total share of the revenue pie, it is almost at 46%. Earlier, it was just around 36%. And remember, at the time of the IPO, a lot of analysts had pointed out that there is a lot of dependence on the group cargo volumes. So that is something that's picked up. But JSW group volumes themselves are quite subdued. There have been at JSW Steel, there have been a couple of delays and maintenance shutdown. All of that have impacted the volumes. Despite that, very strong margin expansion, and the company also said very strong balance sheet. We are looking for inorganic growth. So all of this is something that the street will look forward to going ahead as well.
Thank you very much for that, Jay. A quick chart check on JSW Infra.
Yeah, it's a relatively new listing, and from the whatever the history that's available, it looks like it's going to need one more high above 364 for it to complete its short-term move. So further higher highs due for JSW Infra.
Okay, all right. Gentlemen, thank you very much for staying with us through the course of the show. Appreciate your time here. Gurmeet and Jay, thank you for being here on the program. It's time for a quick commercial break here. We're going to come back, get you the top corporate voices that you heard from on the channel through the course of the day. And of course, we'll tell you some of the events lined up tomorrow. Stay with us.
Of ever, but they're going to be spoken of now. Thank you all very much. The United States is now an occupied country, but it will soon be an occupied country no longer. Not going to be happening. Not going to be happening. November 5th, 2024, 9 days from now, will be Liberation Day in America. It's going to be Liberation Day. On day one, I will launch the largest deportation program in American history to get the criminals out.
Investing.
Welcome back. You're watching Markets Forward, and these are the top corporates that we spoke to through the day. So Tata Tech's management sounded cautious. They're seeing a decline in EV demand in US and Europe. So the reason for the decline in America is they're awaiting clarity from elections. So that's causing some uncertainty, while the European OEMs are seeking some regulatory protection. But the management anticipates that some clarity will emerge by year end, and they're forecasting the second half of the year will be better than the first half.
Suzlon says that deliverables for FY25 are expected to range between approximately 1.3 to 1.5 gigawatts, with a strong performance anticipated in H2, that is the second half. Blended margins are projected to remain in the low teens. The company is guiding for improved delivery in H2, while noting that margins will be in focus due to a changing revenue mix. We also had the management of Punjab National Bank, which guided for a net interest margin in the range of 2.9 to 3% for FY25, and they're targeting recoveries of 18,000 crore rupees for the full year.
And before we wrap, we will get you the key market events to watch out for. Sonal is joining in. Sonal.
Well, earnings, they will continue to trickle in. We do have some important ones tomorrow. Let me start with Biocon. A lot of focus on the pharma space, so watch out for that one. Dabur and its commentary will be very important. The big one, L&T, will also be reporting numbers tomorrow. The other one is Tata Power, that will be in focus on the back of earnings. In terms of global events, we do have a lot of macro data that will be out. From the European Union, we have the Q3 GDP data. There is Bank of Japan meeting as well, which is starting 30th and ends on 31st October. Very important commentary that we will be watching out from this one. And in the US, we'll have the Q3 GDP and pending home prices. So some of this macro data and the outlook on demand is something we'll be watching out for.
All right, Sonal, thank you very much for that. Well, it's a wrap on this edition of Markets Forward. Thank you very much for staying with us. More news and updates on the other side. Stay with us.
We are getting very good resolution. On the top of it is KSK Mahanadi, where we are expecting a recovery of more than 100% recovery of principal amount we are expecting, because the Swiss challenge process is on, and we are the rates that the bids that have come, it is indicating that our recovery is going to be more than 100%. Second case is that of Sinnar plant at Nasik. There also the initial bids have come, and the H1 bid is quite good. And third project is Hiranmaye project. There also the Swiss challenge process has just been completed, and the bids that we have received is quite encouraging.
I've known Michelle for years, and she is an inspiration. I know everybody here knows this. She is a truth teller, and she motivates us to get to work, especially when the stakes are high, because as she reminds us, as my mother taught me, don't just sit around and complain about injustice. And we will win because together, and this is about all of us, we are fighting for America's future.
There are good reasons why so many women and physicians are horrified by what's happened since Donald Trump's justices overturned Roe v. Wade. We're seeing women scrambling across state lines to get the care they need. So please, do not hand our fates over to the likes of Trump, who knows nothing about us. Vote for him is a vote against us, against our health, against our worth. Let me warn you, your rage does not exist in a vacuum. If we don't get this election right, your wife, your daughter, your mother, we as women will become collateral damage to your rage.
आज सुबह हमें जर्मनी के एशिया पैसिफिक बिजनेस जगत की कॉन्फ्रेंस को संबोधित करने का अवसर मिला। मेरे तीसरे कार्यकाल की पहली आईजीसी मीटिंग अभी कुछ देर पहले संपन्न हुई है। अभी हम सीईओ फोरम की बैठक से आ रहे हैं। इसी समय जर्मन नौसेना की शिप गोवा में
Hello and welcome to Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening: the Sensex and the Nifty ended the day's high after a late recovery. Bank stocks shine, mid-caps outperform. Gold prices remain near record highs on the occasion of Dhanteras. The Economic Affairs Secretary Ajay Sheth says 7% growth is very much doable in the current fiscal. Expects strong growth in Q3 and Q4. Also confident of meeting the FY25 capex target despite slower capital spends by some states. Women and children among 77 people killed in an Israeli airstrike on northern Gaza. The death toll in Gaza crosses 43,000. At least 60 more people killed in eastern Lebanon in Israeli strikes, taking the death toll in the country to more than 2,700. Maruti Suzuki misses estimates in Q2. Profit down 17%. Margins at a 5-quarter low. Positive commentary on festive demand helps the stock recoup some losses, but the management warns of weak demand after the festive season. Bharti Airtel reports a better than expected Q2, but leadership change announcement weighs on the stock. The Chief Operating Officer Shashwat Sharma will succeed Gopal Vittal as the MD and CEO starting January 2026. Vittal says he remains fully committed to the group and will take on some roles that Sunil Mittal looks at today. Market regulator SEBI poses 5 questions to Axis Bank and Max Financial over the terms of their merger. Asked if the discounted pricing was arrived at to benefit Axis Bank. Also asked why action should not be taken against the entities for hurting investor interests. That's an exclusive. The union government moots incentives for data centres under the revised policy. Sources say merely setting up a data centre is unlikely to be incentivised. Benefits will be linked to the compute power provided by data centres. Nagpur police identify a 35-year-old man as the person behind a series of hoax bomb threats to airlines. A special team has been formed to arrest him. More than 400 flights have been disrupted due to bomb hoaxes in the last 2 weeks. A 17-year-old from Chhattisgarh is the only suspect to be detained so far. Trump and Harris continue their campaigning in key swing states. Kamala Harris reaches out to young voters in Michigan, urges them to turn the page. Trump campaigns in Georgia, tells the crowd at a rally that he is the opposite of a Nazi amidst criticism of the Madison Square Garden event. Outgoing President Biden casts an early ballot in Delaware. Well, let's head straight to the market action of the day. The Wall Street made a smart recovery from intraday lows, ending at the day's high. The Nifty and the Sensex ended about 0.5% higher today, so 127 points higher. For the Nifty, the Sensex adding about 360 points. A 1,000-point jump there on the Nifty Bank. We saw strong numbers coming in for some of the banks. The Nifty Auto was down in the red, down by about 1.5%, and concerns there on demand clearly weighing on the stocks. As I pointed out, banks batting for the bulls and the Nifty Bank soaring 2% higher. PSU banks fared even better with the PSU Bank Index rallying 3% for the second day in a row. So that's the picture as far as the markets are concerned. But global gold prices lingering near record highs today, supported by uncertainty surrounding the upcoming US presidential election. Meanwhile, some profit-taking pushing silver prices marginally lower. This after hitting a 12-year high. Back home, the yellow metals prices hit record highs on the day of Dhanteras, with silver following suit. Manisha is here with more. Manisha, what's triggering the rally on Dhanteras?
Yes, it's an all-time high of gold and silver prices this Dhanteras to you. Well, remember, people buy on Dhanteras or they start something anew, believing that whatever you buy or start this day will multifold, manyfold going forward. And it has been a tradition for many, many years. But this time around, there's a bit of a dent here because you are looking at all-time high prices for gold and silver. In the international markets, we've seen gold prices trade above $27.50 an ounce. In the Indian markets, it's trading at 80,000 rupees at 10 grams on Dhanteras today, perhaps 81,000 as well if you add making charges to that. It's the same case for silver also, 12-year highs in the international markets, but the Indian prices are trading at 1 lakh rupees. Well, last year the prices were trading at around 70,000, so it has been a huge jump up that you've seen come in for silver prices. It has been strong gains across, and that is because we are looking at a lot of buying in the international markets because of the safe haven buying that gold sees. And this is happening even as there is some restraint that we've seen from Israel and Iran. So somewhat of a war premium seems to have gone down. And then apart from that, the Treasury yields are trading at a 3-month highs. The dollar index is headed for a best monthly gain since April 2022. Even with all of this, there is no decline or respite that you've seen for gold and silver. In fact, the traders are watching out the geopolitical tensions in the global markets. It is also about global central bank buying and a lot of uncertainty because of the US presidential elections as well. So you want to stay invested in tangible commodities, and what better than gold and silver there. I want to take you through prices on what the prices have been on Dhanteras in last many years. So if I can take you through that, in 2019, we were trading at prices of around 38,000 rupees. And then after 2 or 3 years, we've been trading between that 45 to 55,000 rupees. But it was last year that the prices were trading at 60,000 rupees on Dhanteras. And this time around, as you can see, we are at 80,000. So 20,000 rupees per 10 grams of a price rise in the matter of last 1 year. Also, silver has been rising as well. As I told you, last year was 70,000 rupees. This time is 1 lakh rupees. And this is what we've done in sense of silver imports into the country. It was at record in 2022, fell in the 2023 because we already had imported a lot of silver. And this year, until now, we've done 7,000 tons of imports already. This is a very interesting chart which tells you that on an average on Diwali Dhanteras week, we buy 20 to 25 tons of silver and 500 to 800 tons of silver as well. So between gold and silver, the markets do anticipate that this number could go higher in this year. 1, because the trust in gold and silver is high. 2, there are various ways of buying it. And 3, with the kind of returns that you have seen come in for gold and silver, markets believe that the returns could only go higher going forward.
Well, Manisha, many thanks for joining us. So record moves there for both gold and silver. And speaking of prices, Bitcoin prices have crossed the $70,000 mark for the first time since June. This is inflows into dedicated exchange-traded funds rose amid speculation about the results of the U.S. presidential elections next week. Experts say the market is pricing in a victory for Donald Trump, who has endorsed cryptocurrencies during his campaign. Now, tensions in West Asia remain one of our top stories. The Israeli parliament has passed a law banning the UN Relief and Works Agency for Palestine refugees from operating on Israeli territory and areas under its control. The ban will take effect in 90 days and will lead to the closure of the UN agency's premises in West Bank and Gaza. World leaders have denounced the ban and called the move intolerable and illegal. The UN agency has slammed the move as outrageous. An Israeli airstrike has also destroyed a 5-story residential building sheltering displaced families in Gaza. The attack has killed at least 65 Palestinians and wounded dozens. Meanwhile, Lebanon's health ministry has confirmed that at least 60 people have been killed after an Israeli attack on eastern Lebanon. In the oil market, crude oil prices inched up after tumbling nearly 6% in the previous session. This after U.S. plan to buy 3 million barrels of oil for its emergency reserve provided some support. However, larger concerns about weaker demand in the future have exerted more pressure as far as prices are concerned. Now, back home, Prime Minister Modi launched healthcare-related projects worth nearly 13,000 crore rupees today. The government's flagship insurance scheme, the Ayushman Bharat, was also extended to all senior citizens above the age of 70. The healthcare push was announced on the occasion of the 9th Ayurveda Day. The Prime Minister launched Phase 2 of the All India Institute of Ayurveda. He also launched drone services at 11 tertiary healthcare institutions. Well, joining me now to discuss the government's healthcare agenda and specifically its agenda as far as PLI schemes for pharma and the medtech sector is concerned is Arunish Chawla, the Secretary at the Department of Pharmaceuticals. Mr. Chawla, always a pleasure. Appreciate you joining us here on CNBC-TV18. We saw the Prime Minister this morning inaugurate some projects. Mr. Chawla, if I can start by asking you for a status check of the PLI schemes that have been in operation. What is the cumulative number in terms of investments so far? And if you can give us a status check on what has been operationalized so far. Mr. Chawla, can you hear me? We seem to be having some trouble there. We will re-establish contact with the Pharma Secretary in just a second. But let's move to the big newsmaker this evening. The Economic Affairs Secretary Ajay Sheth says that 7% growth is very much doable in the current FY25 capex target despite slower capital spends by some states. Listen in.
What is the government's thinking? Do you foresee that we will be able to achieve 7% growth target?
Certainly. These are the estimates and not just that RBI has estimated. Even if you look at what the IMF latest estimates are, they're also of the order of about 7% for the current financial year. So these are very much doable numbers, and one should not go by the first quarter number, which came at 6.7%.
Sure.
There are reasons behind it why those numbers were 6.7%, but we see that a very strong growth to come in the third quarter as well as in the fourth quarter. And of course, second quarter numbers will also be expect by 30th November. We'll have those numbers another month's time, and we do expect that overall year growth should be of the order of about.
Well, that is the Economic Affairs Secretary Ajay Sheth. Maruti Chairman R.C. Bhargav says the industry is not optimistic about the surge in demand after the festive season. Speaking to CNBC-TV18, Mr. Bhargav added that Maruti expects 14% growth in retail sales in the festive season till Diwali. Take a look.
In this festival season, we have seen a good traction in the market. The retail sales went up by 14%. The new bookings crossed 4 lakhs and about 16,000. So at the moment, the order book is quite healthy. We have yet to see what happens after the festival season ends with Diwali or a few days after Diwali. We don't know. But overall, we are not, the industry is not very optimistic that there's going to be a great upsurge in demand.
Well, that is RC Bhargan's quarterly profits grew 15% ahead of estimates. Revenue in line, rising by 6% compared to last year. Cipla said the growth in revenue was led by its businesses in South Africa and emerging markets. Adani Ports and Special Economic Zone saw its net profit jumping by 40% on a year-on-year basis in Q2. Revenue up 6% to 7,000 crore rupees. EBITDA margin up to 62%. The Adani Group company expects a revenue of 31,000 crore rupees in FY25. Canara Bank's second quarter numbers in line with street estimates. The bank's net profit rose 11.3%. Net interest income jumped 4.6% on an annual basis. Asset quality improved sequentially, reporting the best set of numbers in more than 37 quarters. Bharti Airtel reported a better-than-expected Q2. However, leadership change announcement has weighed on the stock. The company's CEO, Shashwat Sharma, will succeed the current CEO, Gopal Vittal, as the managing director and CEO starting January of 2026. In an earnings call, Vittal said that he remains fully committed to the group. Take a look.
Shashwat will be appointed CEO designate and will take over the role of MD and CEO on January 1, 2026. Shashwat joined us in 2018 from Hindustan Unilever. Over these last 6 years, he's been given a series of well-thought-through and planned experiences where he has created impact. I will be stepping up to the role of Vice Chair and MD for this year, 2025, and eventually as Executive Vice Chair for Bharti Airtel.
Well, that's Gopal Vittal on the leadership change announcement where he will hand over to Shashwat, the current CEO, in 2026. Now, joining me to discuss the government's healthcare agenda, specifically its plans for the PLI schemes that are currently underway, is Arunesh Chawla, the Secretary of the Department of Pharmaceuticals. Mr. Chawla, always a pleasure. Many thanks for joining us. We saw the Prime Minister inaugurating some projects today. Mr. Chawla, I want to understand from you, the pharma sector was the first sector to see the PLI schemes being rolled out and operationalized. If you can give us a status check of the quantum of investments made so far, as well as how many projects stand operational today.
Thank you very much. As you know, today is the Dhanvantri Divas, and we are celebrating it as the Health Day. And today the Honorable Prime Minister launched the PMJ, which is a very massive launch, a new initiative for the elderly citizens. And it will provide them free health care and free treatment. This is a very important and long-awaited initiative. In addition, to mark the Health Day and the Dhanvantri Divas, Honorable Prime Minister launched several health projects, including Jan Aushadhi Kendras, and he also launched the PLI, the major PLI projects. As you know, this is a very important component of Make in India initiative. And today, about 5 large PLI projects were selected, picked up for launch. And these projects are so massive that they will change the pharma and meditech landscape in the country. In these plants, they are all greenfield plants. They have come bottom up. And in these plants, coronary stents, heart valves, critical care equipment, body implants, they will all be manufactured within the country. And now they will meet our domestic demand, and they will also meet the export demand of other countries. This is a massive watershed moment. In addition to this, the Honorable Prime Minister also launched the penicillin and the clavulanic acid producing plants. As you know, these are basic molecules which are the basis of all popular antibiotics on the market, including ampicillin, amoxicillin, amoxiclav, augmentin. And when any industry matures to start making these basic molecules and fermentation product, it's a sign of great maturity. And that is what the Honorable Prime Minister launched today. And after, I would say, around 3 decades, these important molecules, this important industry, and the basis of pharma industry is now coming back to our shores. And we celebrated this today by encouraging everyone, and Make in India was at display, and with it, the pharma industry, the meditech industry,
which has now become the fourth largest export manufacturing industry for the country, it's a pride moment for all.
Right. Well, you know, lots to talk about, Mr. Chawla. Let's break this up. Let's pick up the pharma as well as the Meditech PLI projects that you spoke of. The launch that was announced today of 5 projects, what's the cumulative investments on account of these 5 projects that were launched today by the Prime Minister? Mr. Chawla? Mr. Chawla, can you hear me?
Yes.
Seem to have lost that line, but could you hear me, Mr. Chawla?
Yes, I can.
Yeah, I was asking you the 5 projects launched by the Prime Minister today. Could you give us the indicative number of what the investment entails?
The 5 projects launched today specifically involve a greenfield investment of 5,000 crores. But otherwise, in the PLI schemes put together, about 30 to 35,000 crores has already been invested. And this accounts for the 50 to 55 projects that have been launched so far. Another 30 in the pipeline. And more important than investment is what they have achieved. I mean, they have achieved Atmanirbharta for India. And they have achieved import substitution and saved us precious foreign exchange. And going forward, these industries are so competitive that they are now penetrating the export markets.
Mm-hmm. So if you can break up that for us in terms of the quantum of exports that we're now doing from India, what has been the incremental jump and what is the expectation over the next few years as more and more of these plants come on stream? And more importantly, in terms of import substitution, how much have we been able to curtail in terms of API imports?
As you know, for the pharma and meditech industry, this is a watershed moment. In the closing year, as per the data and the evidence that is available, half of India's pharma and biological output was exported. So in effect, as the moment we cross a 50% barrier, the industry officially becomes an export-oriented industry. In addition to that, we broke a very important stereotype, and that is that India is no more just an importer of bulk drugs. Last year, India exported as many bulk drugs as it imported. So we achieved for the first time in the closing year trade balance between imports and exports as far as bulk drugs are concerned. Going forward, there are 4 structural changes that are coming about in the industry. The industry is maturing fast, and the pharma industry is now moving upstream. There is a clear evidence of backward induction and backward integration with bulk drugs, drug intermediates, and starting materials, and so many PLI plants going live and producing APIs in the country. Parallelly, a biological and biosimilar ecosystem is now fast growing in the country. And if growth numbers are any evidence, then the biosimilars and the biological segment is now outpacing the growth in generics. And if I can give you some numbers, then already 100 biosimilars and complex generic molecules have been approved in our country. And 40 plus of them are in clinical development. This is among the highest anywhere in the world. In addition to this, a very rich and comprehensive CRDMO ecosystem is now developing in the country. CRDMO, as you know, stands for Contract Research Development Manufacturing Organization. This is a basic R&D industry which employs a large number of our graduates, large number of our engineers and technicians. And this industry is growing breakneck. As far as the latest data is that we have analyzed, the CRDMO industry in our country is now growing at 12 to 14%. And if you see the collateral evidence, see evidence of this in the markets abroad, in the closing year, 1/3 of abbreviated new drug applications in the US FDA, they came from the Indian sites, the Indian sources, and the Indian CRDMO industry. If you put all this together, pharma and meditech, which is presently around 70 billion, is poised to almost double by 2030. And going forward, the future is even brighter.
Right, Mr. Chawla, we will leave it there. Appreciate you joining us here on CNBC TV18. That is the Pharma Secretary Arunesh Chawla there on a status check of the PLI schemes as well as what they hold for the future. Up next, Nagpur police identify a 35-year-old man as the person behind a series of hoax bomb threats to airlines. A special team has been formed to arrest him, but no arrest has been made so far. That and more when we return.
कर रही है रक्षा और सुरक्षा क्षेत्रों में बढ़ता सहयोग हमारे गहरे आपसी विश्वास का प्रतीक है। क्लासिफाइड इंफॉर्मेशन के एक्सचेंज पर बनी सहमति इस दिशा में एक नया कदम है। आज संपन्न की गई म्यूचुअल लीगल असिस्टेंस ट्रीटी से आतंकवाद और अलगाववादी तत्वों से निपटने में हमारे साझा प्रयास सशक्त होंगे। यूक्रेन और पश्चिम एशिया में चल रहे संघर्ष हम दोनों के लिए चिंता के विषय है। भारत का हमेशा मत रहा है कि युद्ध से समस्याओं का समाधान नहीं हो सकता और शांति की बहाली के लिए भारत हर संभव योगदान देने के लिए तैयार है। एक्सेलेंसी, आपकी भारत यात्रा से हमारी पार्टनरशिप को नई गति, ऊर्जा और उत्साह मिला है। मैं कह सकता हूं कि हमारी पार्टनरशिप में क्लैरिटी है और इसका भविष्य उज्जवल है। जर्मन भाषा में कहूं तो आलेस क्लार, आलेस गुड। बहुत बहुत धन्यवाद।
Germany has become India's most important trading partner in the European Union, and I'm determined to further strengthen and build on this link and cooperation. I have with me, as members of my delegation, a high-level business delegation that has seized the opportunity to engage bilaterally with India, its industry and business. Especially in times like these, it is of the utmost importance that India is an anchor of stability in South Asia. The international rules-based order, which has come under massive pressure as a consequence of Russia's attack on Ukraine. Russia's war of aggression against Ukraine affects Germany and India in many ways. No one can close his or her eyes to the conflict and the impact it has on us. Therefore, I approve that India supports a lasting and just peace, and I am pleased about your readiness to make use of the reliable relations that you have developed to all parties to contribute to a political solution of the conflict.
The Nagpur police has identified a 35-year-old man as the person behind a series of hoax bomb threats to airlines. Remember, the aviation sector has received over 400 hoax bomb threats in the last 14 days. Madiha standing by with the details. Madiha, what are you picking up? This individual has not been apprehended by the police so far.
Well, the special branch of Nagpur police has identified this man with the name Jagdish Uke. He's 35 years old and an official told CNBC-TV18 that he's the man who sent several hoax bomb threats to various airlines. He's currently on the run after the bomb threats were traced back to him. The police have formed a special team to arrest this perpetrator. There's limited information about him at the moment, but what we have been told is that this man has a history of such mischiefs, and he was also arrested in 2021 in some case. He also authored a book on terrorism. It will be a major breakthrough if the police manages to arrest this man and proves that he is indeed the one behind the hoax bomb threats. If not all, then at least some of them. Now, this has been a never-seen-before situation in India's aviation history. Over 400 flights, as you mentioned, received bomb threats, mostly online in the last 14 days. And there has been limited clue on the motive and the hands behind these threat messages.
Well, that is right. Only one arrest has been made so far in this matter of a minor from Chhattisgarh. And even as Madhya was pointing out, while the police believe that they have traced the suspect, but they have not apprehended him yet. With that, it is time for us to wrap up this edition of Business 360. The news will continue. Stay right here on CNBC-TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBC-TV18.com. CNBC TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence and in-depth reporting that makes CNBC-TV18 India's #1 business news brand. Foreseeing change, growth and transformation for over a quarter of a century. Trendsetters crafting innovative content for
Hello and welcome to this Dhanteras special. I'm Anisha Gupta. Well, the Diwali celebrations have kicked off across India with Dhanteras. For many Indians, this day is considered to be auspicious to buy gold and silver. Hence, it leads to a huge retail demand for jewelers. This time as well, a lot of people have flocked to various markets, including Mumbai's Zaveri Bazaar, to buy silver. We did see those very long queues to buy those metals there. The metal has, remember, outperformed all other metals with this year. The prices have hit all-time highs of ₹1 lakh a kg in India. Even in the global market, silver is trading at a 12-year highs. However, the love for yellow metal also continues to remain intact, even as gold prices have hit a string of highs in this year. Gold hit an all-time highs in October. Globally, it is hovering around $2,600 an ounce, and in the Indian markets at 80,000 rupees per 10 grams. Joining me is now the experts in the market to talk to us and take us through on what really is expected of this Dhanteras and Diwali as a season. Remember, this is the most important quarter when it goes to buying the precious metals, because this is a time that it's about festivities, New Year, and then, of course, wedding season begins as well. Almost 40 lakh weddings are slated between November to Feb, and that is the demand that also seems to be coming in at this point in time. Joining me now on the show is Vikas Singh. He's Managing Director and CEO at MMTC PAMP. Sachin Jain is India Head of World Gold Council. Suvankar Sen is Executive Director at Senco Gold, and Neerav Bhansali is Convener at GJPC. Gentlemen, hi, thank you so much for joining us, and very many happy Dhanteras to all of you. I'll start with you first, Vikas, and I can see you sitting outside your store, and I can see all of that crowd there as well. And I don't forget that view because I've seen it in Delhi once as well. So even at these all-time highs, are you looking at good crowd, good pickup?
Yeah, hi again, Manisha. Thank you for having me on your show. And it's exactly almost a year since we spoke last, possibly
Yes.
same time, same place. As you can see, we are at our store in Noida, Sector 18. It is completely full up. We've had constant traffic from the morning, early morning, almost about 9:30 a.m. And we would expect this to carry on till almost about 10, 11 p.m. As best as we can handle. To your points, I think very, very important. Yes, gold is almost 35% higher this year as compared to same time last year. Silver even at a higher level. We had a relatively slower start to the season, and we were wondering if the price is likely to depress demand. But interestingly, India always goes for what's auspicious and what it loves, which is gold and silver. And we have seen a very sharp jump up in volumes over the last month, and especially today. We were pulling out invoicing data for today, till date, the day till date as compared to last year. The number of invoices raised are significantly higher than last year. So hopefully, I think the buoyancy is good, should play well for the industry and the sector. And yeah, that's the way we see it.
All right. Well, that's an amazing view to look at and to begin the show with as well, because it's bright, glittering behind you. And yes, we can see those crowds as well. Sachin, what's your sense? So the start was slightly slow, and that really was a bit of a concern. But that's exactly not the scene that we're looking at right now. I mean, the week has been good, and Dhanteras today, I mean, we have had various reporters and stringers in various cities and states and all of those Sarafa and Zaveri Bazaars. And we've seen pictures of people queuing up to buy gold, and more than gold, perhaps silver coins as well. What has been your sense?
So, Manisha, first and foremost, thanks for getting me on the show. To you and to your viewers, a very happy Dhanteras. Lots of abundance, lots of joy and prosperity. I completely second Vikas's view. It's been an extremely exciting time. And 20 days back, when for the first time we crossed the 80,000 mark in India, there's a lot of apprehension as to whether the consumer is going to come out and whether we'll see buoyancy and action on the floor. What we see now is actually what we've seen through the year. When we had, presumptions of when the stock market goes up, gold goes down. When gold goes down, stock market goes up. A lot of things have been new and for the first. And this too is the first. And 20 days back, the less confidence that we had that consumers might not come. Last 1 week, I've been on the floor and we've been seeing extreme buoyancy, extreme excitement from the consumers coming back around yellow metal, around the confidence on gold as a subject. Our last quarter numbers have been very strong as well. But this continued into the floors. And what we're seeing today is a lot of action on the floor. And I think we will take up from other sectors like electronics and so on and so forth. So it's going to be the year for gold. It has been the year for gold, and it's going to be the season for gold.
All right, this has been a year for gold. It's going to be a season for gold. And Nirav, coming to you then, and what would you say has changed? I do understand that in the last 1 year, we've seen a lot of transparency come into the markets, more IPOs, more stores opening. There's a big number that the street is still anticipating on the kind of numbers that we could see in sense of new entrants in the space by next year. But when it comes to Dhanteras, and yes, we've seen bars and coins do very well. How is it doing with jewelry? How is diamonds doing right now? The other entrant into this market this year, and very strongly so, has been lab-grown as well. How are you looking at all of these markets?
So, firstly, thank you, Manisha. It's always nice to be on your show. And like you mentioned, there have been a lot of euphoria last year with all-time high prices in silver and gold. A lot of IPOs, new entrants, Aditya Birla making a splash into this space, and like other categories also. So I am currently sitting in our city mall, Ghatkopar, and there are around 15 jewelers right here. Aditya Birla just opened the Indriya store over here, and the euphoria is amazing. There is a continuous crowd of people into every store. I am right now sitting in a lab-grown store, and there have been a lot of inquiries, a lot of interest in lab-grown space also. Natural diamond is also doing very well. So I think the entire jewelry space, Dhanteras definitely for gold and silver is unbelievably good. But looking at the consumers' interest in this mall right now and what I saw with Vikas, behind Vikas and the numbers that they are clocking, I think it's going to be a very good season for all the categories, especially gold and silver, but across the spectrum, including diamonds, lab-grown, and all other categories.
Oh, well, absolutely. People do have a lot of option right now on plate. And yes, they're making complete use of that, because I must say that you've absolutely aced your frame with the kind of background that you are making us see right now. But tell us, as you're all saying that you're all slightly surprised that at these all-time highs as well, we are looking at strong demand coming in and we are looking at people flocking in. How is the ticket size looking like? People are buying. Is it like more a token buying? Is it an investment that it seems to you? What really is the token size that you're looking at?
So Manisha, interestingly, the buoyancy in the sector always remains high. I think the question that everyone is always asking, and please don't ask me for the answer, is where is it going next? What's the price really going to be at? At the end of the day, gold, silver, and other metals are a finite commodity. So, at the end of the day, there's only so much available, from a consumer demand point of view or an investment demand point of view. Increasingly with market volatility, it's come back in again, in the form of all the, geopolitical unrest that we have around us. Gold and silver continues to be the safe haven. And that's really where the governments and individuals are investing. So, from a points and bars point of view, we are seeing, very good demand. Over the course of the last year, we've also got voted as the purest gold and silver in the country. So that's a very, very big recognition for us. And we've also got voted the most trusted brand, one of the most trusted brands in the country. So I think, as these recognitions keep coming in, and we have a portfolio which is, crafted very uniquely and, appeals, to our customers. We've got new designs in the market. So, we've got a coin which was launched in gold and silver on Ayodhya with Ramlalla, and shank-shaped coins, etc. All of these have led to a very, very sharp surge in terms of demand. As a matter of fact, we have the usual unfortunate situation that we are unable to fulfill the demand for some of these products. Lastly, urban or rural, the buoyancy remains as high. So I think it's important for us to keep, expanding our footprint and getting to this demand. And we don't see any slowdown in the near future.
All right. I mean, that's a very, very bullish statement coming in there. And I absolutely get your point. I mean, with the kind of, customization that you really seem to be doing on what people want to see on that gold coin as well. So, Subankar, coming to you then, and I walked into a jewelry shop recently and somebody was asking for a Lakshmi Ji picture on a coin. Somebody asked for their own name initial on a coin. So, well, yes, there's a lot that people are asking for. They do want to buy that gold and silver, but a very customized, way of doing it. How are you looking at the markets today? How has it been for Senco in sense of Dhanteras until now?
See, from the morning, seeing steady footfall, and it's a weekday. So as the evening is progressing, we are seeing more and more footfall coming in. But the morning itself was very good, and what we saw is that over the past 3-4 days itself, consumers who are there, a lot of wedding buyers were the ones who were utilizing the offers and the schemes and the new designs and collections that we launched on Friday, Saturday, Sunday. And the good part about today is that we are seeing a lot of small ticket buyers, which they were missing over the last 3-4 days. There were more of bigger size ticket buyers over the last 3-4 days, but today, earrings, rings, either in gold, diamond, platinum. I think that people are utilizing this auspicious day like the old times and buying jewelry, whatever money they have as per their budget, and buying something for their home, which is the best part about it. So, yes, the quantity, as we see, because the gold price are close to all-time high, the quantities have taken a hit. We are seeing a 10-15% dip in terms of kgs of gold to be sold. But in terms of value, if you look at it, the gold price is up by 25-30% year on year. So we are seeing a value increase of 12-15%. And, right now I'm in a little bit of a suburban market of Calcutta. And, we could see that people from whichever part, even I can see that in the smaller towns, the rural markets, people are celebrating Dhanteras. The agricultural income has been pretty good. So whatever money they have, they are buying. And the best part, one thing is that the whole gold exchange, that has been a great savior for the industry. A lot of people are coming with their old gold jewelry, exchanging it for new jewelry. And that is also helping in the footfalls and the conversion.
Oh, well, absolutely. We do see that crowd behind you in that Calcutta shop as well. But coming to you, Sachin, what is the exchange numbers that World Gold Council has seen until now for the last, let's say, 2 or 3 months? What are those numbers there? And the second thing is, how are you looking at, because I remember this conversation with you last time, that it's not just about tier 1, tier 2, it's also about tier 3, tier 4. Even rural India seems to be buying, something that Subankar also is alluding to.
So I'll answer your second question first, Manisha. So, you talk about tier 3, tier 4, tier 5 markets and also the rural India. And we need to acknowledge the fact that a large part of consumption of gold happens in the smaller markets and rural India. We've just come out of one of the best monsoons that India has seen. And also we need to recognize that mentally, while in urban markets, we talk about investment, in the rural markets, it's called saving. And in some sense, they are price agnostic. And the reports that we've been getting on the consumption at rural India has been rock solid with pure, additional and outside of a great monsoon, people are willing to outgo and invest more in saving and increase their savings. And that's happening through gold. So that's one part. So completely agree. And I second the point on the fact that it's continued great performances from the tier 3, tier 4 markets, but substantial improvements in the rural markets. That's one. Now, on the consumption side of what we saw in the last 2 or 3 months, one, we've seen the surge of the jewelry demand. Now, that is something in Q2, which is April, May, June, we saw a dip. So after the changes by our respectable finance minister on the 22nd of July, with the custom duty change, we saw a great surge of consumers coming to buy jewelry in August. And from Subankar's store and from other partners that I picked up, a lot of preponement of buying of gold was happening. So if you had for example, a wedding in the family, there was a bit of preponement in that time. So that's what we saw quite up. And as we got into later part of, let's say, August, September, that's when the demand for bars and coins, which is investment demand, went up. So, and I'm presuming that this up, while it's going to be hugely up in tonnage, and hence also in the value. So last quarter has been up both on jewelry demand, and hence consumer coming in, the affinity for gold jewelry as consumption has gotten amplified, but also very categorically, the investment demand for gold has been up from the entire last 3 quarters. And that's been quite a substantial reason of the growth. And the reason of that is primarily the returns of gold that people have been getting. And it's been performing as one of the best asset classes that we've seen.
All right. Well, that's a very, very bullish note coming in across our panelists there. But with that, we'll go for a very short break. When we come back, we will try to understand from our experts on what really is changing in this industry, the kind of buying that we are seeing even at these higher levels, one. And second is with the kind of expansions, explosions, new entrants coming into the market, all believing that the double-digit growth here can continue. What really has led to that? After this very short break.
And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC-TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21.
Welcome back. We are in conversation with our guests here talking about Dhanteras, the kind of trends that is and what really seems to be looking now going forward in future. Vikas, let me begin with you. And yes, it's a time that we've seen real estate gain. We've seen equity markets run up. We've seen gold and silver do quite well. I understand we are in a world of uncertainty and perhaps tangible commodity like gold and silver, especially something where we're talking about de-dollarization or we're talking about global central banks buying at record levels as well. All of that really seems to be supportive. But going forward, what would you say has changed per se in India, where you have all age levels actually buying into gold and silver? And what's your outlook now until next Diwali?
So Manisha, I'll take it on 2 counts. I think the one big change which has happened after almost a couple of years of conversations with the government is a reduction in customs duty earlier this year. I think what the government has done is really path-breaking. We never anticipated customs duty coming down from 15% to 6%. That is like phenomenal. Now, with a decision as bold as that, in one stroke, I think the entire menace of the grey market has got addressed. And that informal demand has come into the formal sector, which is a benefit for the national exchequer. So I think that's one thing really, from a regulation point of view, has been a big shot in the arm for the sector. I think the other piece that we would look forward to, and that's a conversation we've had, multiple times in the past, is if the government at some stage opens up, the export of 24-karat gold, if that can happen, then India truly becomes a precious metals hub, which is truly the vision that everyone carries within the government and also within the sector. So I think this can make a big change. Besides this, which is the other side, which is more from a behavioral side, is, the realization that it have a diversified portfolio. I think since COVID, there has been a constant advice that you need to bring in at least a 10% commodities exposure, which is precious metals exposure into your portfolio. We now see that materializing, and which is where, therefore, the so-called young adults, millennials, Gen Z, as you would like to describe them, are actually actively, buying gold and silver. If you see the crowd behind me just now, you will actually see the profile is what you were speaking about, Manisha. So it's good to see that this, this habit to invest, in a diversified way and also specifically precious metals is coming in well. And we think this bodes well from a demand in the future point of view also.
Oh, well, absolutely. Sachin, what's your sense? What really needs to change even from here on? We are very bullish. The way the markets really seem to be opening up, the government has been supportive. So has been the case with rules and regulations as well. But when you look at the next 1 year until next Diwali, where do you see these markets?
I think, Manisha, over the last few years, and not just the last few months, the steps that the industry has taken and along with the government, of course, there was a custom duty reduction that Vikas touched upon, but also very fundamental changes like hallmarking are showing results now. The deficit that the consumer had on trust with our industry is reducing, and hence the confidence is much higher. There's also a surge of organized play that's coming in. So all these things are current. Now, what I see into the future is also more financialization, and I think on all the consumer surveys that we do, the younger audience, and while on one side we talk about their lifestyles are changing and hence accessorizations are changing and so on and so forth, but also there are a bunch of a cohort which is very financially savvy. And I foresee that in the coming time, the jewelry and the financial side will merge a little bit in some ways. But I also foresee that the sheer fact that the way gold is performed has also acted upon how they're consuming gold. And I foresee that again into the coming years, more digitalization, more reach and talking their language in their sense will help. I also foresee that products like ETFs, which are phenomenal products, because not everybody like on the street knows that when you buy an ETF for let's say 1 gram, it's stored back or physically backed by the same weight of gold. I think those things, as they get popular, will only intensify the consumption, or at least the openness to consume gold, not as a traditional asset, but really as a current, contemporary, I would even say cool asset to have. And I think that's what we all have to do.
Oh, absolutely. Nirav, I want to come back to you and talk to you about jewelry yet again here, because we have seen industry change. And as Sachin just said, there's been hallmarking, there's been certification, there's a lot of self-purchase now. And when people are buying it for themselves, they buy the best. And that really has changed the market, and you want to buy different things. You want to buy designs that haven't been worn before. How have you seen that? And would you say going forward, it really is going to be about designs, consumer, on how the consumer is treated, the whole experience? That also is something that seems to be getting up.
So over the past few years, the industry has really transformed. It's really matured, and there are so many different things that have come, like hallmarking, which Sachin mentioned. There is so much emphasis on good designs, more organized players coming into the space, the trust and transparency that we are offering to the end consumer. So it's really been transformational. And this has brought about a real confidence into this product. Along with that, the gold prices and silver prices, which have been really rocking over the past few years. So the consumers, be it any age, young millennial, Gen Z, or even the older bracket, they're all looking at this industry in a very different light. And because of that, I'm seeing a very different euphoria into this industry from the supplier side, the organized player side, as well as the consumer side. And I see very good times ahead for this industry going forward. All the type
Nirav,
of jewelry
let me ask you, Nirav, if you were planning your next year, what is in Nirav's notebook? What are you planning for the next year?
So we are really planning to expand our manufacturing capabilities to catch up with the supply, the demand that is there, and to match that in our supply. So we are very bullish on our space.
And what are you pushing forth with, Nirav? Is it gold jewelry? Is it silver jewelry? Is it diamonds? Is it lab grown? What is on priority?
So we are into diamond jewelry, and we are very bullish in diamond jewelry space also in India, because there's so many new stores opening up. The organized players are really ramping up their capacities very fast. I think at least 1,000 to 1,500 new shops, new jewelry stores are opening every year. And that is really a massive demand that is there. And I'm sure they are all selling very well. That's why they have such robust plans to open more and more stores.
Yes, everybody I speak to has big plans going forward, increasing their footfall. I mean, increasing their the whole works really. This one is to you, Suvankar. What is your plan now going forward with the way the market really seems to be expanding, with the way you're looking at so many buyers coming in, and what are you looking to plan now for the next 1 year?
So see, our store openings that have been scheduled, after the Dhanteras season is over, we will have 7-8 stores in the pipeline. So that should be one of our plans. The expansion into the smaller towns and cities through the franchising model, because there are a lot of potential investors who are willing to take a franchisee, be a part of the brand, of the journey, and take the product and designs forward to the consumer. So that is one part of the plan. We focus on everyday wear, lightweight jewelry, and especially diamond jewelry. I think that is very, very important with the gold prices going up. And I think World Gold Council had predicted it much before that it will be on the upside. So therefore, 14 carat, 18 carat, government is thinking of 9 carat jewelry as well. So 9-carat jewelry with diamonds and other precious, semi-precious stones. I think those will be very important. Design and innovation, continuously coming up with new ideas. I think that will be something that we need to continue to keep the new generation attracted to the industry.
Oh, well, absolutely. There was a time we would say that youngsters do not buy gold and silver. They would rather buy gadgets or go for vacations. But that clearly seems to have changed in the last 1 year. We have seen all age groups actually come in and start investing in gold and silver and various forms of it, by the way. And there's digital and ETF and bars and coins and jewelry of various kinds as well. So we look forward to all of that. Thank you, gentlemen, so much for joining us. With that, it's a wrap on this Dhanteras special. We wish you a very, very happy Dhanteras and Diwali and festivities going forward. Thank you so much for watching, and we wish you all a very happy Diwali as well.
Years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
For next 6 months, the semi-urban and rural to have a better, stronger demand. We feel that there will be further improvement in our credit cost. We always have guided around 2. We should be able to maintain the current level or a little below that. And if you look at our gross stage 3, that also has been coming down, both gross and net, from 5.39 to 5.32. There is a scope for further improvement, and we'll definitely work on it.
Hello, welcome to News Centre. I'm Parikshit Luthra. The nomination filing deadline for the Maharashtra Assembly election officially comes to an end this evening. However, the suspense over seat sharing across both camps continues, from BJP leaders contesting on a Sena ticket to leaders switching camps in the 11th hour to last-minute changes in candidates. Maharashtra election season continues to be an unpredictable one as ever. As expected, the BJP is contesting over 50% of the seats, leaving the remaining for its allies, the Shiv Sena and Ajit Pawar's NCP. Congress has clearly emerged as a big brother when it comes to ticket distribution in the opposition camp. Remember, Congress had the highest seat tally in the state in the Lok Sabha election. Uddhav Thakere's Shiv Sena and Sharad Pawar's NCP are contesting an equal number of seats. From what we know so far, talks are still on for a couple of seats. Joining us right now to discuss the seat sharing in Maharashtra and the trouble within the two camps are senior journalists Ninad Seth and Sanjay Jog. Sanjay Jog, if I can begin with you, clearly all is not well in the BJP camp. There are rebels, there are people who have gotten angry like Gopal Shetty, who feel that outsiders have been planted to fight elections. Then you've got Ajit Pawar, NCP, who have gone ahead and nominated Nawab Malik for a certain seat despite opposition from the BJP. Things are not looking very good, and it seems that the BJP is trying to keep the flock together. What's your view?
100%. Parikshit, initially when the talks were on, both sides were claiming that they will be able to arrive at seat sharing before Diwali or before Dasara. Nothing happened. Till today, there are about 10 to 18 seats on which both the sides are locked in in a hard negotiation. Of course, there have been sent messages from both the camps to file the nomination, being today is the last day. Very interestingly, as usual, BJP has stolen the show in the sense as they would like to be projected themselves as a big brother. So they have got about 148 seats. The candidates they have officially announced, and 4 they have allocated to smaller parties which they claim as an allies. So total is about 152 by BJP. Then comes basically Shiv Sena. Mr. Eknath Shinde was not at all ready to get below 80 seats. So he has stuck to his guns and he has managed to get about 80 odd seats. So also, Ajit Pawar, he started with 90 seats, but now zeroed down below that because there was no other go but to sacrifice himself, and he has managed to get out 51 seats. Same scenario continues with basically the Mahavikas Aghadi. There was much of, enthusiasm after Mahavikas Aghadi backed 30 odd seats in Lok Sabha elections, and as the talk within the Mahavikas Aghadi was that it is just a kind of a formal, just a mere formality to elections to take place, and they are going to swear in. But nothing happened. There have been so many contradictions, particularly between the Congress and the Shiv Sena, but ultimately Congress has stuck to its guns and managed to emerge as a big brother. So they have got about 103 odd seats. Then comes, of course, Shiv Sena, around 85 seats, and so also 83 seats by Sharad Pawar led basically NCP. Just to put you in perspective, both are definitely quite desperate to get the power. Mahayuti is going much of on the development cards with that 1 lakh crore freebies. On the other hand, Mahavikas Aghadi is definitely there to checkmate about the issue of corruption, the splashing of money at the cost of the fiscal management and prudence. And there are a couple of inside stories which are emerging about the contradictions within.
All right, let me go across to Ninad Seth. Ninad Seth, Ashish Shelar of the BJP was very clear that they do not want Nawab Malik to be contesting on a ticket from the alliance. Now, Ajit Pawar's NCP has gone ahead and nominated him. Why do you think this has happened despite opposition from the BJP? And what does this show in terms of the consensus and both the allies, the Ajit Pawar NCP faction and the BJP being on the same page, and also the Shinde Sena?
See, Parikshit, what it shows is the following. This is a very sad perversion, actually, of the democratic process. Here we have 40 or 60 families which are coming together and fighting for their own power, masquerading as political parties. And therefore, you are seeing all these kind of shifts and shifting sand and shifting people just before the elections. This is not a dance of democracy, but democratic warlords, if you like, going to war. And here the most interesting thing is the death of ideology. And like you said, in any ordinary circumstance, BJP would have had a very big problem with Nawab Malik's nomination. But since ideology is taking a backseat for political convenience and what I personally perceive as family fiefdoms fighting as an aggregate masquerading as political party, Maharashtra becomes very, very odd in that sense for Indian democracy. Having said that, there's an irony, I think, which is underplay here. When the two camps fight, if you like, on the battlefield, the two weaklings, the Ajit Pawar NCP in the ruling alliance and the NCP in the opposition alliance, how badly they perform respectively will probably determine the outcome. One interesting other thing I would like to say is that there is, if you were on the ground, which I was, last week in Maharashtra, the RSS, ironically, in a fight where ideology is taking a backseat, is becoming very active and could be very interesting for BJP going forward.
Right. Let me go back to Sanjay Jog. Sanjay Jog, if we speak about the Congress, today Nana Patole, the chief of the Maharashtra Congress, went on record to diffuse some tensions. He was responding to questions about trouble between the Congress and the Uddhav Bal Thackeray Sena. Are there real signs of trouble between the two allies? We've also seen Congress replacing candidates at least 3 times in Maharashtra.
Absolutely, Parikshit. Since the talks had begun, the initial problem was just restricted to Congress and Uddhav Balasaheb Thackeray Sena. NCP, led by Sharad Pawar, had no issue. They had also clarified that they are not at all interested in the chief minister's post, but the real, kind of tug of war which was going on was between Congress and Uddhav Balasaheb Thackeray Sena, which continued even yesterday. Yesterday also, Nana Patole had to tell officially on record to Sanjay Raut that if we are going to fight and we are fighting against Mahayuti, so there needs to be some kind of, a cohesive approach. So let's discuss and arrive at a kind of a formula which will be acceptable to both. This is very quite interesting, which is happening in Mahavikas Aghadi. Congress initially went on, announcing a couple of seats, but they had to backtrack because of a strong opposition from local Karyakartas. Today also in Nashik, more than 65 office bearers have just now resigned, protesting against one of the nominees, which was, announced in the list. So also in Shiv Sena, Uddhav Thackeray had to take a serious note and just simply remove 3 of its district unit chief because of a likelihood of a rebellion and intra-party feud. So I think all is not well in Mahavikas Aghadi, so also in Mahayuti. Look at Gopal Shetty, a 2-time MP, basically a very, quite a sensitive and alert kind of a representative of people. He was denied the Lok Sabha seat for Piyush Goyal. He sat quiet after Devendra Fadnavis pacified him. This time round, he was quite interested. He had a series of meetings saying that he is definitely like to contest from Borivali, but which was denied. And that's why he came out very angrily that Borivali is not the Dharamshala where anyone can come and fight the election. So also with Atul Shah,
right.
I've seen him, working with Gopinath Munde, Pramod Mahajan, Jayanti Ben Mehta. He is a resident of Mumbai, Mumba Devi. He also took an objection saying that election is not like a musical chair. So I think there is a rebellion which is growing despite Amit Shah during the last week meeting, the 3 of the leaders had held with him in Delhi has categorically said, please focus on major thing that there should not be any rebellion, basically to puncture the prospect. And I think both the sides definitely going to have a tough time to cool down because 4th is the, a withdrawal day for the nominations.
All right. Let me go across now to Ninad Seth. Ninad, if we were to ask you, who do you think holds the edge at this point? Clearly, there is some trouble in both the camps, both the alliances, which are fighting for the Maharashtra Assembly election. Who do you think has a bigger advantage at this point?
I think that BJP has been smart in terms of its coalition. It has given more seats than one expected to some of the coalition partners. If the coalition post the election stays intact, that will give BJP a greater, more flexible, political space. A. B. The Maratha vote, which has gone away from the BJP during Lok Sabha, it will be interesting to see whether the outreach by the RSS and the others brings that vote back to the BJP or part of that vote back to the BJP, or does BJP do a radical Haryana kind of coalition of castes where, the number of other castes, the OBCs, come together to marginalize or make less relevant the Maratha vote. At the minute, I would still say that if you add Prime Minister Modi's residual charisma, which you can never, in my opinion, underestimate in any election, then currently the BJP coalition seems to have the upper hand.
So you're saying the BJP coalition has the upper hand, and we have been seeing Amit Shah hold direct meetings with Devendra Fadnavis, with Eknath Shinde and Ajit Pawar as well. Sanjay Jog, what do you think? Do you think BJP, Amit Shah, the Prime Minister, will be able to quell all rebellion within the party ranks? We had also seen the Mahayuti attaining a low tally in the Lok Sabha elections, something that doesn't augur well. But since then, we've seen them working hard in Haryana. We've seen the RSS also coming together. Do you think putting all of the organizational might of the BJP and the RSS, the BJP would have an edge in this election, or the Congress?
Parikshit, I will not say BJP has got an edge, but certainly RSS and its parivar, there are a couple of organizations, I count about 36 odd. They are already, in fact, are on an action mode, working from, in Maharashtra, there are a lack of booths. So the RSS entire network is, integrated with the local leadership of the BJP, working quite hard, learning lessons from the Lok Sabha debacle. And, they would definitely like the voters to come in a big way to support not just the BJP, but the ally. So certainly they are definitely making all effort. But, there is another point which needs to be taken into account, the OBC consolidation. OBC, that is what is known as a Madhav factor. Mali, Dhangar and Vanzari have always been a supporter of BJP. But because of the recent protest between the Marathas and the OBC, there has been a huge division and a divided kind of a house. So how BJP and the RSS parivar try to have a kind of a Haryana, experiment in Maharashtra, that needs to be watched. And the another factor is the manner in which Mr. Sharad Pawar has also tried and had gone for a micromanagement, bringing all the sections together. So also, just to tell you that Congress is basically, although maybe a kind of a divided house, Rahul Gandhi is going to come out for a 7-day long Bharat Jodo Yatra again during the election campaign. And that will be focused on basically Marathwada, 46 seats and 62 seats, which earlier used to be the Congress's bastion. But from 2014, BJP has made sufficient inroad. So, there is going to be an interesting kind of a shape-up which is happening from both sides. It will be, to be watched who will have an edge in the days to come as the campaigning picks up from 4th of November.
Phone pe connect kar de aapko. Okay. Ninath Seth, my final question to you would be, what are the issues you think will really matter in the election now in the next 1 month or so?
This is a very interesting election because it is more a transactional election rather than a transformational election for India's richest state. And I think that itself is slightly sad. 3 issues stand out. There is a very long pending problem of agricultural, backwardness. I mean, there is also a lot of stress for a lot of farmers. I personally think that agricultural outreach is a very important issue. An understated issue is also the issue of creating non-agricultural, non-farm jobs. There is a perception that Gujarat and Karnataka and other states are getting those factories, whereas Maharashtra is losing out. And I think that's going to be a very important election issue in many of the constituencies. Lastly, I would say that, the inflation, especially food inflation, which we do not usually report, it's very surprising that we don't report food inflation. But food inflation, at least when I traveled last week in Maharashtra on the ground, in the rural and semi-rural places, there seems to be some kind of an anger against food inflation. I believe that, growth, in other words, in Maharashtra is going to be one of the deciding factors. Who does the voter trust to bring growth back, to let growth be sustainable? I think it's going to be very interesting for a big industrial state like Maharashtra.
All right. On that note, we take a short break. But Ninath Seth, Sanjay Jog, thank you very much for joining us on the program on News Center, telling us what's at stake for the battle in Maharashtra. We are taking a short break right now, but when we return, we'll get you lots more news from across the country. Don't go anywhere.
here today with a message of hope for all Americans. With your vote in this election, I will end inflation. I will stop the invasion of criminals coming into our country, and I will bring back the American dream. We need the American dream to come back home. This will be America's new golden age. It's going to happen quickly, too, very quickly. Every problem facing us can be solved, but now the fate of our nation is in your hands. Next Tuesday, you have to stand up and you have to tell Kamala Harris that you've done a terrible job, that crooked Joe Biden has done a terrible job. You've destroyed our country. We're not going to take it anymore. Kamala, you're fired. Get out, get out. You're fired. And I'm announcing a new policy today that I will support a tax credit for family caregivers who take care of a parent or a loved one. It's about time that they were recognized, right? They add so much to our country and are never spoken of, ever, 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 but they're going to be spoken of now. Thank you all very much. The United States is now an occupied country, but it will soon be an occupied country no longer. Not going to be happening. Not going to be happening.
Welcome back. You're watching News Center. India's leading passenger car maker Maruti Suzuki has warned of weak demand after the festive season. The car maker, which came out with its second quarter numbers, saw its margin slip to a 5-quarter low. This was largely impacted by low volumes. Sudarshan Kumar joins us now with the details. Sudarshan, run us through the numbers.
The biggest car maker of the country, Maruti Suzuki, has reported earnings for Q2, that is quarter ending September, and those earnings look largely below estimates. And after the earnings, we saw a sharp fall in the stock. It has fallen up to 6%, but made a huge recovery. It has recovered almost 3% from day's low after management commentary. But first, talking about the numbers, profit was impacted by indexation benefit withdrawal and LTC tax change that was announced in the budget. Revenue was dragged by below than expected volumes. EBITDA has come in at a 3-quarter low. Margin has slipped below 12%, and it's at a 5-quarter low, impacted by flat realization and high promotion expense. Talking about some internals, volumes were down 2% year-on-year, while sequentially it was up 4%. Realization, again, it's flat sequentially, but year-on-year it's up more than 2%. Gross margin, though, sees a minor improvement. Now, talking about the commentary that company spoke after the earnings, and commentary regarding the demand was largely positive, and it's taken positively by the investor, and that's the reason we saw a huge recovery in the stock. What does company say? It says focus of the investors should be on retail numbers and not the wholesales, and for the festive seasons, that till Diwali, company is looking at the retail sales of almost 3 lakh units, resulting in a growth of almost 14%. Also, it has talked about discounts, and it believes that it should not be more than the before that company has recorded in the past. And lastly, talking about the inventory, it expects inventory to come down to 30 days by the end of the month. So overall, Q2 earnings were largely below estimates, but commentary related to festive demand might be taken positively by investors.
In this festival season, we have seen a good traction in the market. The retail sales went up by 14%. The new bookings crossed 4 lakhs and about 16,000. So at the moment, the order book is quite healthy. We have yet to see what happens after the festival season ends with Diwali or few days after Diwali. We don't know. But overall, we are not, the industry is not very optimistic that there's going to be a great upsurge in demand.
And speaking of the festive season, hotels are starting to see strong demand. Speaking to Madhiya Mujawar, Hyatt India MD Sanjay Sharma said that the demand is largely driven by domestic customers. He added that social events and weddings have also had a higher share in the group's revenue.
As India is concerned, the sentiment is very, very good based on the the infrastructure, the environment, the initiatives of the government, and also based on the kind of domestic demand we are getting from our own people in India. how they are traveling, how their mindset has changed for travel, how their mindset has changed to spend more time with the family, and also going to new destinations and exploring what is available there. It's like Dekho Apna Desh kind of a thing. There's so much to see in our country that we have not really unraveled.
So if you could give us a sense of how the growth trajectory has been in the last few years and what you're expecting this year as well, that if you could add.
Sure. So let's go back to 22, 23. So in 23 that we saw that our RevPAR grew by 33%. 33% is a number which is phenomenal. And on top of that, when we look at 24, we are growing in double digits. And the year is going like that. And if you look at socials, events, because that are also the pulse of the general, mindset of people there, even that has grown by 25%. So our contribution from social and weddings has also grown by 25%.
So what would be the holiday season advance bookings be like?
The pace is very good. The other good part is that the pace of bookings has actually, the window has shortened. So even if, earlier the pace was far lengthier, but now we see that the pace is even better than previous years. And on top of that, you are also getting bookings in shorter pace. So it is like kind of a double effect in today's time. So, so very healthy season coming up. And the other good part is that if you look at the Indian holidays, they are finishing within this month, within October. And Diwali is on the 1st of November. So from that onwards, we get a pure business
a busy period for hotels.
And we are so thankful for that.
Are people ready to spend on a particular price, or the price doesn't matter now?
So see, people are looking at time together. Now there is a price to it, and it's also what it's about value you give to the price. It's about experiences. People are paying for experiences. People are paying for togetherness. People are paying for differentiation.
And staying with the festive centimeter, India's alcohol and beverage industry is pulling out all stops this festive season. This includes, among others, launching new premium editions and banking on record sales. Shivani Bajaj joins us now. Shivani, what's keeping the alcohol beverage makers' spirits high?
Well, cheers to the festive season that's raising the bar literally. India's alcobev makers are toasting to the record sales and new launches, hoping to make this the most spirited quarter yet. This quarter alone typically brings in about 30% of the year's volume in the prestige and above category, fueled by celebrations like Diwali and New Year. Let's start with Radico Khaitan, which has seen steady growth in its premium segment during the festive months, marking a 15 to 20% volume increase year on year over the last few years. Meanwhile, Amrut Distilleries is also celebrating success both at home and abroad after 5 years of 30% festive season growth. This season, Radico Khaitan is launching the gold edition of Jaisalmer Indian Craft Gin, aiming to capture the high spirits of the festivities with a product as luxurious as its audience. Amrut is also making headlines with its limited 2 Indies rum, which is premium blend, is specifically crafted to appeal to India's growing taste for luxury spirits while enhancing Amrut's profile on the global stage as well. Now, Indri is also making waves, winning a prestigious gold medal at the Whiskies of the World Award for its Diwali Collector's Edition 2024. The award not only underscores India's presence in the world of fine whiskies, but also highlights the trend towards premiumization, one that is sweeping the industry. Now let's zoom out to the broader industry trends. Last year, festive season saw a 12% spike in premium and luxury spirit sales, according to CIABC data. With consumer spending high, 2024 is poised to outdo that with even more new launches and robust demand. Many in the industry are leaning into the premiumization strategy, hoping that these high-end products will help offset inflationary costs that have been cutting into the margins. Back to you.
With that, it's a wrap on this edition of News Center. More news and updates continue right here.
November 5th, 2024, 9 days from now, will be Liberation Day in America. It's going to be Liberation Day. On day one, I will launch the largest deportation program in American history to get the criminals out.
we are getting very good resolution. On the top of it is KSK Mahanadi, where we are expecting recovery of more than 100% recovery of principal amount we are expecting, because the Swiss challenge process is on, and we are the rates that the bids that have come, it is indicating that our recovery is going to be more than 100%. Second case is that of Sinnar plant at Nasik. There also the initial bids have come, and the H1 bid is quite good. And third project is Hiranmaye project. There also the Swiss challenge process has just been completed, and the bids that we have received is quite encouraging.
I've known Michelle for years, and she is an inspiration. I know everybody here knows this. She is a truth teller, and she motivates us to get to work, especially when the stakes are high, because as she reminds us, as my mother taught me, don't just sit around and complain about injustice. And we will win because together, and this is about all of us, we are fighting for America's future.
There are good reasons why so many women and physicians are horrified by what's happened since Donald Trump's justices overturned Roe v. Wade. We're seeing...
I was told that this is the third time that this conference has actually made its way to India, and I would imagine that Roland has pretty much been a part of each one of them. So it would be instructive to get a sense from him on how much has actually changed in terms of the business landscape, the economic landscape, the regulatory environment that everyone was just sort of polling on as well. Roshni, of course, will give us an indication of where things stand as far as India's booming offshoring industry is concerned. The IT services sector has, of course, been one of post-liberalization India's biggest success story, but it is a challenging and a volatile environment, and one that Roshni and many of her tech peers do need to navigate through. And of course, the idea of innovating together, collaborating together, especially in an AI era, the opportunities, the challenges, the perils, the pitfalls, all of that up for discussion. I was also just going back in time, Shivani mentioned that you started your career, Roland, at Siemens as in product, and of course today you're as at the helm of the company as CEO, but you've done pretty much everything in between minus CFO.
Yeah, exactly. I had all roles, maybe except CFO, and I don't want to touch that one.
Well, that's not a conversation that we will get into, but what I do want to start with the both of you before we talk about tech specifically. Roland, I'll start with you. We're at the end of the conference today, and going back in time to the experience that you've had personally with Siemens in India, but more importantly, as a German business looking at India as an opportunity, where would you say things stand today? How much has changed? What is the complexity? What is the opportunity that you see today with respect to India?
I mean, it changed tremendously. You even cannot compare to the past. I mean, when I was running the automotive business for Asia, and 2005, 6, 7, and also in India, we started off just producing kind of components locally, electronics as well, and this was a focus on automotive industry, but the rest was really somehow small. Subsized, so that means, and by the way, we are in this country since, I don't know, more than 160 years. The last 5+ years, the market completely changed. If you look at our markets, This is, we're talking now about growth rates of 8, 9, and 10%, knowing that the GDP is growing a little bit slower, but our markets grow by almost 10%, which is unseen of in our strategy discussions which we have. Size-wise, still a gap to the big markets, United States and China, but really catching up. And this is thanks to a massive investment in infrastructure, energy. I'm always saying that it comes in waves: energy, infrastructure, and then comes industry and higher education or healthcare. And we see that this is now really taking place massively. And this is thanks to a good strategy of the government. At the same time, we talk about regulations and the ease of doing business. This improved quite a bit as well. So therefore, for me, if I look at India, the Indian market in particular, it really is a tremendous pickup. Talk very briefly about Asia as well. A little bit the same, because we see that the whole idea of increasing resilience and diversity, Asia sits on or Indo-Pacific sits on the receiving end.
I will come to what that means in terms of supply chain diversification and how this region is likely to be a big beneficiary of that. But I want to labor on India for just a second longer because we are here in India. What's the outlook now? And I know you're in your silent period, so I'm not asking you to forecast or guide us for the next quarter, but I do want to understand, in terms of global revenue, in terms of contribution to global revenue, India is still fairly small in comparison to the aspiration, the promise, and the potential. What could it look like over the next 5 to 10 years?
So no, this is a budget discussion between Sunil and myself on stage. It's very helpful. No, I mean, just to give you an idea, we have 320,000 people worldwide, 30,000 in India, so it's a little bit shy of 10%. The revenue contribution from India is roughly 3%. So it's underrepresented, but this is picking up. We won a huge order for locomotives, for example, a 3 billion order. This was awarded, by the way, in 6 months. This is unheard of, how fast the government is deciding. And so we are picking up volume, and I can imagine that in no time we can reach a level of 5%. And I'm always saying, I can also imagine that India in a certain period of time gets to 10%. I don't mention the year yet, so this is always interesting. And then Sunil is going to figure that out.
Well, no pressure on Sunil for figuring that out, at least not here publicly anyway. But Roshni, let me come to you now, and let's talk about where things currently stand. I mean, HCL Tech has grown ahead of industry, so congratulations on that. But as you look at where the world finds itself today, Roshni, the volatility that we've been seeing in the US market, in Europe. Europe accounts for almost, 29% of HCL Tech's revenue. Give me a sense of the global outlook before we talk about the road ahead.
So I think if you talk about the tech industry, the biggest inflection point was probably pre-COVID and post-COVID. And I think COVID set many industries all over the world on this hyper, digitization of their journey and what they needed to do, because it was just, you just had to change your operating models if you needed to survive for a lot of industries. And I think only now, I would say in the last quarter or two, despite geopolitics remains a real threat. So I think that that's something that we need to recognize. Not so much in terms of delivery and what we do in business, but I often say that it drives sentiment across various countries. And some of those sentiments is what is actually playing out in macroeconomics. Because I think over the last 1 year, we've had these conversations. Is there going to be recession? Is there not going to be recession? Inflation, supply chain disruptions. There was a reality of what was on the ground, and then there was also what sentiment was driving. And I think that is what has played out for at least an industry like ours in terms of decision making and delayed decision making. The good news is, I think technology and digital transformation is a necessary for every industry, every company. So it will be a necessary spend. And it will be, actually a spend is the wrong word. I would say it's a necessary investment for everybody. It is a necessary investment. So that's the good news. I think going back to regulation and the first point, I think that's top of mind for a lot of countries. That's top of mind certainly for Europe as well. We have 220,000 people, 180,000 deliver from India.
Yeah.
But the number that actually for our global delivery is probably growing. And it's because of this regulatory environment. You can't just data privacy.
Yeah.
And a lot of these issues which are top of mind, you know, cause us to want to actually expand a lot more, even though we're global, locally. So I was just reflecting on Germany, and we started our business in Germany in 2001 with actually a carve out of, at that time, a GCC in India.
Okay.
It was tiny. And that's what gave us an entry into one of, you know, the largest financial services organizations in Germany. And today in Germany, we have 3,500 people. And since then, we've done 6 acquisitions in Germany, including ASAP Engineering, which we just did last year, or earlier this year. So it's also growing, growing locally in countries all around the world is almost an imperative. You know,
so it's changing the offshore model and the offshore style of doing business that this industry has actually relied on for a good part of 4 decades now.
Collaborating with industries across geographies. Also, again, you know, for example, for HCL, maybe in comparison to some of our peers, sub 2% of revenue is what we actually do in India.
Yeah.
For being an Indian headquartered company. So I think that we've always been export oriented. That is the way we've grown. I also find HCL's journey is very interesting because when we started in 1976 and we used to manufacture computers for India and we built the tech hardware industry, we only did India. And then, you know, one day we just said close and just completely pivot. So I think that it's also interesting to see what's happening in India and how we can play domestically. I think our models have been built as such that it's from a profitability point of view, not so much growth. I think growth you can get in India.
Profitable growth is the
profitable
challenge.
Growth.
As far as IT services is concerned.
Absolutely.
At least at this point in time.
Absolutely.
But, you know, Roland, let's talk about tech because that is what we're here to do. And you wrote a piece, you know, a couple of days ago where you said that AI from India is going to perhaps be something that the world should get ready for. We've also just had Jensen Huang of NVIDIA, the CEO here in India, talking about how he believes that India is going to be a leader in an AI era. Mukesh Ambani, the chairman of Reliance Industries, says that he believes that India will do to AI what it did to data, which is make it accessible and affordable. So I want to understand from you, what's your bull case on India in an AI era?
So let me start with our strategy. We talk, our strategy is in one sentence. We combine the real and the digital worlds. Sounds easy, it's very complicated. So it's about really getting software to enable hardware in a much better way, shortening development times, cycle times, making our assets more available in the shop, on the ground. Ultimately, what we talk about building, and this is what Jensen and myself are really pushing for, building the industrial metaverse, which is a real-time, photorealistic, physics-based representation of the real world in the digital space. And you can then really simulate everything physics-based and make it then happen in the real world. This is the biggest lever. Why is Jensen behind it? Because I do believe that currently he's surfing a wave of delivering any kind of silicon to data centers for AI. But at the end of the day, this will move to the edge. We have much more edge processing and then also more heavy lifting edge processing, and that makes a big difference. You need that if you want to build this industrial metaverse. So this brings me to the whole discussion about AI, because it's all about data, how you get data into your system, how you fuse data. By the way, AI doesn't respect data silos. This is a completely new way of looking at markets, because the markets are currently, they're siloed, and in the future, it will be really a holistic view. Same holds for sustainability. You cannot optimize sustainability in a silo. So that brings then data and AI together. And since we have such a huge amount of talented people which are working on software and the way how you use software in India, I do believe this is really part of the equation of how to build this industrial metaverse as a synonym for where we want to go for. And therefore, this is a contribution which India can do.
Across state lines to get the care they need. So please, please do not hand our fates over to the likes of Trump, who knows nothing about us. Vote for him is a vote against us, against our health, against our worth. Let me warn you, your rage does not exist in a vacuum. If we don't get this election right, your wife, your daughter, your mother, we as women will become collateral damage to your rage.
आज सुबह हमें जर्मनी के एशिया पैसिफिक बिजनेस जगत की कॉन्फ्रेंस को संबोधित करने का अवसर मिला। मेरे तीसरे कार्यकाल की पहली आईजीसी मीटिंग अभी कुछ देर पहले संपन्न हुई है। अभी हम सीईओ फोरम की बैठक से आ रहे हैं। इसी समय जर्मन नौसेना की शिप गोवा में पोर्ट कॉल कर रही है। रक्षा और सुरक्षा क्षेत्रों में बढ़ता सहयोग हमारे गहरे आपसी विश्वास का प्रतीक है। क्लासिफाइड इंफॉर्मेशन के एक्सचेंज पर बनी सहमति इस दिशा में एक नया कदम है। आज संपन्न की गई म्यूचुअल लीगल असिस्टेंस ट्रीटी से आतंकवाद और अलगाववादी तत्वों से निपटने में हमारे साझा प्रयास सशक्त होंगे। यूक्रेन और पश्चिम एशिया में चल रहे संघर्ष हम दोनों के लिए चिंता के विषय है। भारत का हमेशा मत रहा है कि युद्ध से समस्याओं का समाधान नहीं हो सकता और शांति की बहाली के लिए भारत हर संभव योगदान देने के लिए तैयार है। एक्सेलेंसी, आपकी भारत यात्रा से हमारी पार्टनरशिप को नई गति, ऊर्जा और उत्साह मिला है। मैं कह सकता हूं कि हमारी पार्टनरशिप में क्लैरिटी है और इसका भविष्य उज्जवल है। जर्मन भाषा में कहूं तो आलेस क्लार, आलेस गुड। बहुत बहुत धन्यवाद। Danke schön.
Germany has become India's most important trading partner in the European Union, and I'm determined to further strengthen and build on this link and cooperation. I have with me as
Roshni, let's address this issue of AI because, you know, there isn't a conversation that happens today without the mention of the word AI. But I want to understand from you, specifically from an HCL Tech perspective and then from an India perspective. HCL Tech has also started its AI journey, not just today, but many years ago. In fact, you've got, what, about 200 plus Gen AI pilots running at this point in time. What's the aspiration? What is the opportunity that you foresee today?
So I think it's very important to acknowledge that AI, the journey of AI and different customers, there's a lot of change management that needs to take place. So, you know, as Roland mentioned, the conversations that one has with customers is to get the best out of AI, Gen AI. You have to have your data strategy right. You have to have your cloud strategy right. You have to reflect on your cognitive infrastructure. You have to think about modernization of your environment. So AI is almost like a horizontal But the solution is very verticalized because it's very important to get use cases for each industry. So, for example, at HCL, we have our AI Force, which is like a service transformation platform where we are, running POCs, but also recognizing solutions which can be horizontal as well as industry-wise, vertical, very specific. That's very important. I think the piece that is extremely important in the AI journey is, I think, there's a lot of discussion of the investment which is going in. We're trying to focus, I think each organization is trying to focus on the actual return on the investment, which is still, an area which is slower. And that's because change management takes time. Actually, technology, adoption of technology and the impact that it can create in an organization does take time.
Let me quickly echo what you said, because you mentioned a couple of good points. You said it starts with a data strategy. This is what people forget. There's no AI strategy without a proper data strategy. Secondly, you talked about the technology stack, which has horizontals, where you can leverage, and it starts on the lower end. But then the applications are extremely vertical specific, where you look into and see what you can do. And build this platform is the most complicated thing you can do, because if you build it too thick, then it's an animal nobody can use. If it's too thin, you cannot leverage your scale. And that's the smart way of doing it, and this is exactly the way how I do see technology developing in the future.
And also the last piece is that, which we were discussing earlier, is skill required. And this is not skill which is taught. This is not skill which is like engineering which you can get from universities. Now, as long as India is the talent hub of the world, I think this is one of those opportunities that organizations such as ours, it's really learning by doing. There is no template. So when I think of POCs or I think of the platforms we're creating, they're also for learning. And that's extremely important. I think the players that will eventually stand out are the ones that how much of your people weren't you not only able to upskill, but you were actually able to put to use cases which were then able to deliver value to your customer. I think that is critical. We could be having conversations about AI till kingdom come home.
You're right in pointing that out, and many important issues that both of you mentioned there, the lag between adoption and actual return on investment, and I think that is something that we're still seeing, the use cases, and I think everyone's still figuring out the use cases at this point in time, and of course doing this at scale is going to be crucial. But let's address the people issue, because at the end of the day, it is about people. And ladies and gentlemen, if you do have questions related to AI adoption, the role that India can play, the region can play, for either Roshni or Roland, please do send them in to us. We would appreciate you engaging in this conversation as well. Let's talk about the people aspect. And I'm going back to Jensen, because the question was asked that, look, what is AI going to do to jobs? And this is the number one question that's asked here specifically in India, given the young population that we have and the jobs that we need to create. And his point was, AI is not going to take away jobs. People skilled well with AI will take away the jobs. How do you look at this, Roland, and what is it going to mean in terms of jobs, in terms of skills, in terms of people?
So I fully agree with that. Number one is India, with the exception of India and maybe Indonesia and some other places, we are living in aging societies. So it's really about how to get enough people on the ground in order to sustain our growth going forward. This is a big challenge, and for Germany in particular. So there's a reason why we need immigration. We don't have enough people. So fearing that AI is taking jobs away is completely odd. So, but the point is that technology, it's AI technology and any kind of related technology does change the requirements. So it starts with what kind of expectations do we have from students when they come from universities. It's changing. The way what they learn and what they need to know when they start is completely different. Secondly is, I do believe we are going to, and since technology is changing so fast, and this is just about to start, I think we have to go away from a model where you go to university, you study, and then you work, and that what you learned you can use for the rest of your life. I think you have to study, you work, and then you study again, and do that all over and all over again, because it's changing so fast. So therefore, education and training is very important. But one thing you mentioned is also interesting, this proof of concept thing. The beauty about applications and software and doing AI applications is that whereas if I want to make a proof of concept for a new hardware, a new PLC, a controller, this is really a lot of money I have to spend. Yeah. It takes a long time. But for AI, you can put a bunch of people together, give them a task to write an app, and throw everything on the wall, whatever sticks you can use. So you can be extremely fast and train the people on the jobs, kind of, which is, I find, really exciting. And if you do it right, then the people are excited as well.
Let me get wrap-up comments from each of you, because we are pretty much at the end of our time. And Roshni, let me start by talking to you about the opportunity. Where you believe HCL is today, and what do you foresee as the next 5 or 10 years, not just with the focus on what's happening in the US and Europe, but also with the focus on what's happening in this region as it gains significance and importance. I mean, India is one of the fastest growing economies today, less than 1% or about 1% of your revenue today, but you know, potentially this could change over the years. So 5-10 year outlook for you.
So I think in our industry, 5 to 10 years is a very long time. But I think, where I do think there are opportunities more than IT services for HCL is probably in software. In fact, in this last quarter, we've had our fastest growing year-on-year quarter growth in software, and I think that growing HCL software within India in that market is extremely important. I think it's also important to change the rhetoric written a little bit. When it comes to technology in India, I love the word access. I don't always love the word affordable because I think affordable alludes itself to be cheaper, or there is a cost arbitrage. And I think the talent of India certainly, lends itself to command a certain premium. And I think that's very important. And then just lastly, coming back to this particular conference, I think for both our countries, just to be, there will always be regulatory hurdles, but I think the organizations that have been around for a very long time understand that the only way to grow is actually through partnerships. Yeah. So I think between both the countries, between companies, having those many more JVs, and not just looking at India as a tech center, but of course, as Siemens is, which is R&D and AI, but also taking it back. So when I reflect on HCL and reflect on the fact that we have historically, even today, continue to grow through M&A in different countries, what it's adding is capability, but more importantly, what it's adding is cultural DNA. Yeah. And I think that is very critical.
No, and that's the perfect note to close this conversation on collaboration. We had both leaders here talking about the promise and the potential of the bilateral partnership, of the bilateral engagement. We've got a room full of CEOs here representing German business interests looking at India. And I think it's very, very clear that over the last few years, there's been a significant increase in the interest and confidence in wanting to do business with India. So Roland, as we close out, the points of focus, the areas you believe both sides now need to prioritize to ensure that this relationship does live up to its promise and potential.
Yeah, and I believe if you really want to win in this market and really take advantage out of it, but also shaping it together for the future, and we talk really about a sustainable growth going forward, I think you have to embed yourself in the market, you have to collaborate, really bring the forces together. We always talk about working in ecosystems. It's not necessarily a joint venture with equity, it can be, but it's really an ecosystem, platform-based ecosystem. You talk about technology. The more partners you have, the more you're adding, and you're increasing the pie rather than having the same one sharing it with more. And the key point is, I do believe that there will be a different kind of innovation happening in India because of the difference in the market requirements, and it's not cheap. It's different. There will be also thanks to software, there will be no compromise on functionality, but still there will be absolutely they have to be affordable. But this combination of without compromising on functionality, but still make it work, that's something you can make only if you scale. And India is a country and an economy where you can scale.
Well, scale and innovate at the same time. That is the hope and that is the promise. Where is the next conference going to be, Roland? Can I eke that out of you as we close?
I think this is my closing remark. We'll disclose where the next one will be. This is maybe the idea to make many people stay.
Thank you very, very much. Roland, thank you very much for joining us today.
A high-level business delegation that has seized the opportunity to engage bilaterally with India's industry and business. Especially in times like these, it is of the utmost importance that India is an anchor of stability in South Asia. The international rules-based order, which has come under massive pressure as a consequence of Russia's attack on Ukraine. Russia's war of aggression against Ukraine affects Germany and India in many ways. No one can close his or her eyes to the conflict and the impact it has on us. Therefore, I approve that India supports a lasting and just peace, and I am pleased about your readiness to make use of the reliable relations that you have developed to all parties to contribute to a political solution of the conflict.
If Kamala gets 4 more years, the entire country will be turned into a migrant camp, and that's what's happening. Millions and millions of people. When I win on November 5th, the migrant invasion ends and the restoration of our country begins.
Well, that was Donald Trump saying that he will end what he refers to as migration invasion if elected to power. Trump plans to double down on the anti-immigration rhetoric that was at the center of his first term as US president. He has pledged to conduct the largest deportation program in American history and to introduce a new ideological screening to bar quote-unquote dangerous lunatics. Not just that, he may also seek to end automatic citizenship for children born to immigrants living illegally in the country. His rival, Democratic candidate Kamala Harris, has largely been silent on the illegal immigration issue. When pressed about the matter in a recent interview with Fox News, Harris said the country has a broken immigration system that needs to be fixed. Earlier this year, she had also criticized Trump for telling congressional Republicans to block a bipartisan border measure. Another issue that Trump recently faced criticism for was his comments in an interview to Fox News. Trump suggested using the military to handle the enemy from within on Election Day. He referred to Democrats Nancy Pelosi and Adam Schiff as examples of enemy from within. Later, his running mate, J.D. Vance, clarified that Trump's comments were not directed at the Democratic Party leaders, but at dissenting Americans he described as far-left lunatics. Hello and welcome to our special programming on the US presidential election. I'm Parikshit Luthra, and joining us now to discuss all of this is Ambassador Anil Trigunath, former Indian envoy to Libya and Jordan, also a distinguished fellow at the Vivekananda International Foundation. Also with us is Azi Bebara, journalist with the Washington Post, and Mitchell Brown, professor of political science at US Auburn University. Thank you very much, ladies and gentlemen, for joining us. Azi, if I could begin with you, the campaign now in the final lap, everything is heating up in those 7 battleground states. How's Kamala Harris's approach different from Donald Trump here?
So Kamala Harris has been trying to not only call Donald Trump a fascist and warn about the dangers that he could pose to democracy, she's trying to make that point explicit about how it relates to voters, saying that this is not just like a theoretical argument. She's saying that this affects individual voters in the way that they go about conducting their lives every day. And she's trying to make also the broader point that Donald Trump is more focused on his enemies and getting retribution for perceived slights, rather than focusing on issues like the economy or helping people find jobs or lower the cost of healthcare and everyday goods. So she's trying to make the point that Donald Trump has his own agenda and his own perceived issues, and that voters would be better served by electing her.
Right. Professor Brown, if I were to ask you about the political exploitation of immigration-related fears. Now, this is not new to American politics. It has happened in the early 90s as well. But where have we come in terms of American politics? Yes, there is a shift towards the right globally, but when it comes to taking a hard line on immigration, how do you see the two parties really different at this point and the two candidates?
The United States is certainly a country of immigrants, and both of the candidates are trying to use the immigration discussion to bolster their base and to turn out voters. Trump is obviously using it in a way to stir fear among his voters and to say he's going to be the person who's tough on immigration, tying immigration and illegal immigration to crime where he can. The Harris campaign has a gentler approach to immigration than the Trump campaign does, because they are trying, in fact, to appeal to their base there as well.
Right. Ambassador Trigunath, give us a sense of how you expect the United States to crack down on immigration, illegal migration to the United States after this election. Looking at the kind of words that have been used, the sharp rhetoric that has been used in this election, we've got Trump going to say that there are immigrants who are actually cutting your throats. He's accused immigrants of poisoning the blood of our country. Harris has pledged a tough stance and warned of consequences of illegal immigration as well. How do you expect the United States to act against illegal immigration, children of illegal migrants? For example, how do you expect Donald Trump to act?
Well, I think, Parikshit, Donald Trump's policies have been very clear from the very beginning that he has this anti-immigrant issues, and he's been trying to even create a wall along the Mexican border, being very harsh, deportations, not allowing the children to be, even those who were born in this, of the illegal immigrants, to be given the rights. So at the moment, I think that the Trump has this very hard line. He's trying to encash it while he's talking of making USA great again. What now do you think has come? Then he is also looking at the possibility and his Midwest belt of people that these foreigners who are coming in here are taking away jobs. He might even be asking more and more companies, like he did last time, to come and invest in the US, create jobs there, and try to reduce the unemployment, number one, and the immigration as a firewall, basically. That's what he precisely intends to create. But at this moment, what I see is it's very difficult to say how none of them is very clear exactly, except we know their insinuations and the kind of things they do. But they have a reality to contend with. And that reality is in most of the Western countries, the population growth is minimal, essentially, or even negative. And they are all facing graying countries. They do need illegal immigration. So illegal immigration, nobody can support really. That it should be allowed to continue or whatever it is. So as long as they do not try to restrict more the visas like H-1B visas and others, countries like India are unlikely to be suffering much more against this. We had this problem last time. Prime Minister Modi had discussed with President Trump on this issue. But this election, what one sees more is basically too much of sleaze, too much of toxicity and personal vendetta that you're looking at it. It is not any visionary kind of a thing. So virtually one is choosing out of the worst positions. That is what is currently that one is looking at. My fear is whatever happens, because it's currently they both are pitted against one another in a very tight race. So the outcome of this election is going to be a very, very difficult outcome if it is very close. And if Trump loses, you might have a problem of transition, as we have seen it. So that is something that needs to be watched rather than how the election is going to play out, because US and of course these polls and all, after seeing what happened in India, also in our state, Haryana here, I tell you, I mean, I have begun to not believe in these polls, basically.
Okay, so you don't believe in these polls, but of course, currently Kamala Harris has a slight edge, maybe by 2 percentage points or 3 percentage points in some of the opinion polls, but it's within the margin of error. So you can't really say that she has a clear advantage. Ozzy, if I can come back to you right now, as we were discussing the issue of immigration, do you think Kamala Harris and the Democrats find it hard to keep themselves out of the immigration rhetoric within the United States? And how much time are both the candidates practically giving to this one issue in their campaign speeches wherever they go?
So Donald Trump focuses a lot of his campaign efforts talking about immigration. If you ask, how are you going to help Americans find better housing? He says, well, I'll help reduce the cost of housing by deporting illegal immigrants. If you ask about inflation, if you ask about anything with the economy, Donald Trump always seems to bring an answer back to saying that he's going to deport large numbers of undocumented and illegal immigrants from the United States. A lot of economists and experts who look at this don't really see exactly how those two issues connect. But when Donald Trump is speaking to his supporters, when he's speaking to voters at these large rallies, he gets a lot of applause. And polling has shown that he is neck and neck with Kamala Harris. This is what he's putting out to voters. When Kamala Harris speaks about the border and immigration, she speaks about needing to improve security along the border and to help people vet their claims for seeking asylum. People come to the United States because of its freedom and its guarantees of protection. And Kamala Harris is saying that people need to have a more orderly process to put those claims forward and have them vetted before people can stay with legal guarantees. Donald Trump is stressing a different point. He's saying his emphasis is on removing people from the United States. When Kamala Harris talks about immigration, at times it can be defensive because she is the sitting vice president. And at one point, President Joe Biden had asked her to communicate with Central American countries to figure out why exactly are so many people leaving that part of the world and coming to the southern border. Donald Trump has labeled her the border czar, which is not quite an accurate description of what she was asked to do, but that's the argument he's presenting to voters.
Right. Let me go across to Professor Brown once again. Professor Brown, what is this election and also the elections that we've seen in America since 2016, since we had Donald Trump winning the election? Even in 2020, when he lost and Joe Biden won, he had a considerable vote bank to himself. Now, what does this election and the mood of the United States and the average citizen of the United States does to government policy making in the days to come? Do we expect United States to become more inward-looking? As we've seen with the Inflation Reduction Act, one of the objectives was to make sure that more companies, US companies, move out of China or set up more manufacturing within the United States. So do you expect, irrespective of who wins the US election, come the 5th of November, do you expect the policy making towards jobs, towards the economy, to become more inward-looking, looking at the debate over immigration right now?
Well, what I expect on November 5th is that we won't be focused much on those issues. Instead, what we'll be focused on is who's actually won this election. I think the American public and their attention will be drawn to the court cases that will inevitably follow this election to try and determine who the actual winner is. We will revert more to an inward focus on the economy, but it is clear that our economic strength is also dependent on our relation with other countries around the world. And the focus of the American people, though, will be on what the new presidency will do for them as people, as families, and their communities. But the immediate attention, I think, will be on who the actual president's going to be. We might see a number the day after the election, but I don't expect that the election will be over then.
All right. 5th of November. Azi, the question that many people are asking, looking at the polls which are so close right now, is it possible that we may not have a election result by late 5th evening? What's going to happen then?
If I knew what was going to happen. Most people that I have spoken to are expecting election night to be a long night, and that even the following morning, it may not be clear who is winning. And also, just as the professor said, many people are expecting legal challenges. In the United States, elections are run by local officials. It is not run by the federal government. So the kind of rules that you have in a battleground state like North Carolina or Georgia are different than the rules you might have in other important states like Michigan. So what we've seen in the past are some people who believe that there were election fraud or things that were irregular and want to challenge the results of the election. The Congress has the job of counting the certified results that the states send to Washington, D.C. after the election. Some people are bracing for a number of legal challenges that could extend the process well past election night.
Right. Yes, that is an outcome we're also preparing for, but we'll take a break at this point. We request all our guests to stay with us. We'll be right back after a short commercial break.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC-TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC-TV18, your trusted partner and investment ally.
What does it take to build India's largest startup?
Welcome back to the special coverage on the US election. Ali Peybara, Mitchell Brown and Anil Trigunayat still with us. Ambassador Trigunayat, coming to you, give us a sense of how you expect Kamala Harris to approach the relationship with India. A relationship which is definitely a defining partnership of the 21st century, has huge potential, can only grow higher from here.
Well, I think as far as India is concerned, very often people say that it was better during the Republican times or Democrats. But if you were to see the fact check, then you would find that we have had our challenges under each presidency and we have had our windfalls under each presidency, be it the Democrats or the Republicans. Because India today has become a strategic pivot for the US foreign policy, essentially, due to their focus on China and the Indo-Pacific. And therefore, there is a bipartisan support, I would say, to further enrich ties between India, and how these global comprehensive strategic partnership that we have with the United States really becomes a better partnership in action. That is more important. And I think that irrespective of whoever comes to power, whether it is Kamala Harris or President Trump, we have seen Trump's time. There are going to be challenges and there are going to be opportunities. I think for them also, it is very similar. We would expect them to understand. And I think since USA is also very widely run by the deep state and the lobbying system, as we all know. So therefore, I don't see much of a change, whichever government comes into power. If it is Kamala Harris, we'll see more of the continuation of the Biden policies to a great regard as far as their foreign policy is concerned. If Trump comes, then we might see those three issues coming to the fore, which is trade, technology, and Taiwan. And he said that he'll close this, shut this war down of Russia, but we might see a little bit of a conflagration in the Middle East. And so each of them have their own nuances, but the President Trump is a bit unpredictable to some extent. Hopefully, if he comes in the second term, that might be a more stabilizing force and he'll listen to more its officials.
All right, let's take final comments from Professor Brown and Azi. Professor Brown, now in these final 10 days or so that are left now in the US election, who do you expect both the presidential candidates to really focus on? Now, it's only about the undecided voters in about 7 states in the United States. So who are the key groups that both candidates would be trying to woo?
Well, what we should see is that both of the campaigns will focus almost exclusively on those swing states, because the way our electoral college is set up, those are the states at this point that really matter in terms of what the outcome is. We will continue to see Trump doubling down on the danger that Harris plays for the United States and our stability long term. We will continue to see rhetoric from the Trump campaign about the far left, that they're evil, that they're a danger to our stability, that Kamala Harris is a communist, and the other kinds of things that he's accused her of. We will see the exact same thing from the Harris campaign, but directed at Trump, that he is a danger to the United States. We'll specifically see her trying to get women out. We have a clear gender gap in elections generally, but with abortion on the table this year in a way that it hasn't been in presidential elections in a long time, we should expect to continue to see a push to get more women to the polls, specifically in those swing states. And I expect we'll continue to see a lot more of the really negative rhetoric and the attacks both campaigns have been doing on each other.
Absolutely. And Azi, what do you expect Kamala Harris and Donald Trump to do in terms of bringing out support for the campaign? Any surprises that you expect?
One of the things that we're seeing the campaigns do is interviews with media personalities that do not normally talk about politics. Right now, there's a focus on undecided voters. There is also a focus on getting the attention of people who aren't paying attention to politics, to people that are busy raising their kids, people that are working multiple jobs, or people that just do not like politics and are more interested in the World Series that's happening right now or the latest TV shows. What the candidates are trying to do are bring conversations about politics into spaces and to get in front of people who aren't necessarily looking for those kind of topics. You see them talking to celebrities and people that host podcasts on a whole wide range of topics. The idea is that each campaign is trying to reach people who might otherwise sit at home and not vote. And that's one of the things that we're seeing in these last final days, is the candidates speaking not only to the reporters who are following them on the campaign trail, but popping up in venues that conversations about politics don't normally take place in.
All right, we've run out of time, but thank you very much, Master Trigunath, Azi, and Professor Brown for joining us on our election special. Let's see what happens in the days to come. That's all we have time for on this special edition on CNBC-TV18. Thank you for watching. Goodbye.
It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest-running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros, and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV 18 weeknights at 7 p.m.